Dow Jones jumped close to 300 points, closing above the mark of 41,300. For the week, all the three indices posted a winning streak ahead of the crucial Fed policy decision. CNBC's Steve Kovac gets us a wrap of all the action on Wall Street.
U.S. markets were higher across the major indexes in Friday's session as Wall Street wraps up a winning week ahead of next week's central bank decision on interest rates. The Dow is up 297 points, the S&P 500 up by 30 points, and that tech-heavy NASDAQ, it was up 114 points. More than 30,000 Boeing factory workers walked off the job overnight, halting production on planes after they rejected a new labor contract. The machinist union members voted nearly 95% against the offer, which included a 25% wage increase over the next 4 years, plus improvements in health care and retirement benefits. The union was looking for a 40% wage increase. The White House urged both sides to keep negotiating in good faith. Boeing workers last went on strike in 2008, and it lasted 2 months. And Sony Music is reportedly in talks to buy the rights to Pink Floyd's catalog for about $500 million. That's according to the Financial Times. The band's back catalog includes some of the best-selling hits of the past 50 years, including Another Brick in the Wall and Wish You Were Here. Sony is also reportedly in talks to buy the rights to Queen's music for about $1 billion. It also bought Bruce Springsteen's catalog for a reported $550 million back in 2021. That's what's happening here in the U.S. Back to you, Mumbai.
Well, it's a big week for central banks as all eyes are on the US Fed, which meets on the 17th and 18th. While how much they will ease back on interest rates remains an open question, the broad consensus is that of a 25 basis point rate cut. Here's a word from Wharton School's Jeremy Siegel, who is also of the opinion that aggressive cuts need to be made, but paced cuts would eventually lead to a soft landing. Listen.
I agree. As you know, I've been for these aggressive cuts, but the deliberateness of Jay Powell is 25 basis points. You know, one interesting thing, it is almost incredible. The Fed funds futures that reflects the June meeting next year, June 2025, is now trading at 3%. And what's interesting about that is there are exactly 7 more meetings between next week and the June meeting of 2025. So actually a 25 basis point cut in each and every meeting would actually, you know, bring us down to around 3.5 and 3 3/4. And, you know, I've said that's where the funds rate should be. It should be between 3.5 and 4%. Because they know that if bad news comes in, the Fed will start lowering by 50, maybe 75, and I want to take a position in that. So really, the reason why those, all of us all calculate probabilities. It says 50, 40% of this rate cut and 60% of this rate cut. The truth of the matter is Fed funds futures are biased downward. They're biased towards more cuts because people hold those, because if bad news does come, then they're going to score big on those contracts.
Now, a former Fed economist and creator of the economic rule of thumb, the SAM, affirms that the U.S. economy is not in recession despite some of pockets of depression in the labor market. Listen in.
And the U.S. economy is not in a recession right now. Now, the SAM rule, using the increased unemployment rate, is picking up on a cooling, a weakening in the labor market, but that's not all that's there. We do have a still very disrupted labor market. We have a lot of labor supply coming in, new workers, whether it's immigrants or people coming off the sidelines, because we've had a great labor market. So that's a good thing, but it takes time for them to get work. And right now the hiring rate has fallen back, and so it started showing up in unemployment, and that is a problem, but it's not a recession problem.
That's all we have on the overnight global market action. But how will all of this impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that you need to keep an eye out this morning. First up, Vamakshi is joining in to get us all the market cues we need to watch out for today. Vamakshi, good morning. How's the setup looking like after the week we had?
Well, good morning, Hormaz. When we look at last week, the last week started off on a very cautious note, testing levels of 24,750. But a big surprise came in on Thursday, where Nifty made a fresh record high, gaining somewhere around 400 points in the last 2 hours of trade. Nifty overall ended the week stronger with gains of around 2% plus. 43 out of 50 Nifty stocks saw buying. Bajaj Auto, Divis Labs as well as Bharti Airtel were some of the top gainers, while on the flip side, ONGC, Tata Motors and HDFC Life were some of the top losers on the Nifty index. But apart from that, when we look at the broader indices, the mid-cap index saw an outperformance, gaining by somewhere over 2.5%. Majority of mid-cap stocks too ended with gains. Jubilant Pharmova, Century Textile as well as Suzlon were some of the top gainers on the mid-cap index. As far as some sectoral indices are concerned, Nifty FMCG was the top gainer this time around with 3% gains last week. Nifty Bank, Nifty IT were some of the gainers as well. Nifty Oil and Gas, on the other hand, slipped by almost 2.5% in the last week. US markets, however, also were quite strong. S&P 500 and Nasdaq Composite, in fact, posted their strongest week of 2024. Nasdaq Composite gained by almost 6%. S&P was up nearly 4%. Overall, it was a good market as far as the Indian as well as the global setup is concerned. But coming to this week, it is expected to be an action-packed week, and that is because we have 3 interest rate decisions coming in. First one will be from the Fed. We'll also be watching out for Bank of England and Bank of Japan's interest rate decision. US retail sales, initial jobless claims are some other factors that we will be watching out for. And as far as the domestic cues are concerned, we will be keeping an eye out on the trade balance as well as WPI data as well. Today, we will be keeping an eye out on some aviation stocks. The market share data has come out, so watch out for Indigo and SpiceJet. Overall, keeping all of these cues in mind, the GIFT Nifty is indicating a positive start.
Actually, thanks a lot for that. GIFT Nifty suggesting a positive start for our own markets. Over to Winnie now, who would list out the stocks you need to watch out for today. Winnie, good morning. What's on your list?
Good morning. And first, let's start with an aviation name. We have SpiceJet that's going to be in focus, as the board members have actually approved in a special resolution some fundraising plan that the company will see. So yes, surely something that they require is funds in the recent time, and that is surely a positive one coming in for SpiceJet. Moving on, Thermax, a repeat order coming in from a repeat client, 516 crore order. This is for setting up 300 megawatt of energy project from Jindal Energy. So keep an eye on that one. Adani Power, Adani Green, that's in focus because Maharashtra Discom has given a letter of intent to both these companies for the companies to supply around 6,600 megawatt of hybrid solar as well as thermal power by these companies. So focus on these two as well. Zydus Life, the arm has its wholly owned subsidiary or an arm has signed an exclusive licensing as well as supply agreement with the US-based Vivid Pharmaceuticals. So keep an eye on that. These injections that they've gotten an approval for are going to be in the US market. Laurus Labs, also in the pharma side, is going to be in focus. They've concluded a successful US FDA audit for its API manufacturing facility in Hyderabad. So positive one there. 0 observations for this one in its Form 483. Dixon Tech, that's in focus also because the company's arm, Padgett Electronics, has signed an MOU with ASUS to manufacture notebooks in India. So keep an eye out on that.
Plenty of stocks to watch out for as always, Winnie. Thanks a lot for that. Time for a short break. Up next, we get to excerpts from CNBC's exclusive conversation with RBI Governor Shaktikanta Das. Stay tuned. Back on the other side.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for Phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month.
Welcome back. Now on to a CNBC exclusive. The RBI Governor Shaktikanta Das says he doesn't see any downside risks to growth in India. Here's what he had to say when asked how sustainable is the growth the Indian economy is witnessing right now. Listen in.
Not at all. The first quarter growth of 6.7%, if you disaggregate the data, you will find that consumption is 7% plus, I think 7.4% or so. Compared to the previous years, this first quarter, it was around 4.5% or so. So consumption has picked up. Consumption, investment, industries, services, all sectors are growing at more than 7%. Agriculture, the growth was about 2.2% or so in the first quarter, but that was the, we were going into the monsoon. There was slightly delayed start of the monsoon. Monsoon has been very good. Agriculture will pick up. Construction sector has recorded a growth of 10% plus.
Yeah.
So therefore, all segments, all components of GDP growth are, the momentum is very strong. The only element, the only component which slowed down was government expenditure, both state, central government expenditure as well as expenditure of the state governments. Perhaps due to the fact that that was the election season in India. So going forward, I would expect the budgeted amounts will be spent by the central and the state governments, and then they will be able to catch up. So we are quite confident about the 7.2% growth which we have projected in our current year's assessment. And interestingly, international agencies like the IMF and the World Bank, which had earlier projected, they have upgraded. They are all at 7%. So they have now increased it to 7%, and we have given 7.2. So we are reasonably confident that the 7.2% growth will be achieved.
You said India's long-term potential is 7.5% or more. I wanted to understand that a little bit more from you, Governor, because, China at its peak was going at a run rate of 10% for many years. What is a sustainable, healthy, consistent growth rate for India over the next 5 to 10 years, let's say?
You see, difficult to say at this moment. 10 years, I will not like to venture into that. But I think in the medium term or in the next few years, India's growth rate, as I said, it's 7.5% with upside possibilities. Some more reforms which I think one expects them to be undertaken, and I think that is already a work in progress. And I said 7.5% earlier today, on a conservative basis as India's potential growth. So I think a 7.5 to 8% growth will not pose sustainability concerns. I think it can be sustainable. But if you are looking at 10 plus growth, that one has to really, before I venture into that, I have to really do my homework much more. Today, based on the fact,
8% job creation would be adequate.
It should. I mean, it should. Job creation has been happening. It's not as if jobs are not being created. Again, that is one big debate. I don't want to enter into that now. And but today, 7.5% is potential growth. It is a sustainable growth. It can be between 7.5 to 8%, I would like to say, but on a conservative basis, 7.5.
Words from the RBI governor. Now on to some corporate commentary then. Honasa Consumers co-founder Varun Alagh is optimistic on the festive season and is targeting 20% value growth in the next quarter, led by festive and wedding season sales. Listen into a slice of that conversation.
Honestly, because these are not one-off events, right? Yeah. Festive was there last year as well as it's here, right? So from a growth YOY perspective, it is there in the base as well. And hence our overall goal of ensuring we're able to deliver, a high double-digit, close to 20% value growth in the next quarter is going to continue to be there. And that's what we're going to try and make sure that we deliver. In half two, and some of our core categories which are non-seasonal, like shampoo and face washes, continue to perform as is. And the category that does see seasonality is moisturization, which is body creams, face creams and body lotions. And So those are the categories which actually spike as we get into second half. Outside of the one quarter, we will do the inventory transition and where we might have primary impacts, which is most likely this quarter. And all the other 3 quarters, we are confident that we will be in those range from both top line and bottom line improvement perspective.
Well, time for a short break now. Up next, we get to cues from the commodities market. Stay tuned. We'll be right back.
Repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars, or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
Welcome back. Manisha Gupta now joins us with all the updates from the commodity space. Manisha, good morning. It's all about gold today.
It's an all-time high yet again, and that too in the Asian markets right now. You know, it is going to be an important week, this one, because you have the US Fed meeting, but that's not all. You also have monetary policy meetings from the Bank of Japan, Bank of England, China as well, and all the central banks are expected to cut rates, and that clearly seems to be supporting the gold prices. Also, when you look at the markets itself, the U.S. inflation is easing, the U.S. unemployment claims have been on a rise, the dollar index has seen a decline, central bank buying, global ETF demand, all of that is surging. So, well, yes, gold does seem like one of those commodities or asset classes right now where everybody wants to have it in your portfolio, and that has been supportive. Also, when you look at the price outlook, whether it's Goldman Sachs, UBS, Citi, JP Morgan, Bank of America, everybody is talking about $2,700 to $3,000 an ounce by 2025. Well, so if you haven't bought it yet, even now is a good time.
Indeed, almost at 2,600 now is gold. But Manisha, stay on because the government has also notified some changes in the export and import policies of agricultural goods. Tell us more on that.
Oh, well, absolutely, Harmad. It was a busy Friday evening for the government when you had notifications coming one after the other. I'll start with basmati rice, where the minimum export price of $950 a ton has now been removed. So this is a market that clearly seems to be opening up. The other one is yellow peas, and this has seen duty-free imports since the time of December 2023. This is now extended till 2024 December. The third notification came in for edible oil, where the duty has been hiked for imports by 20%. So this is done ahead of the Kharif crop coming in, and this would be positive for farmers and the Indian industry. The fourth notification was onion. Here as well, the minimum export price has been removed, and the export duty has been cut from 40 to 20%. The fifth notification came in for wheat, and the stock limits have been lowered. Here as well, this tells you that the private trade now can buy from the market and keep longer as in sense of their stocks, and this is ahead of the festival season. So clearly a lot of supportive notifications in sense of farming as a community and industry as well.
It was a busy Friday evening for you guys as well. Manisha, thanks a lot for bringing us all of those updates. Now on to some international news. A man was arrested in Florida following an apparent assassination attempt on Donald Trump at his golf course in Palm Beach on Sunday. According to the police, the suspect was armed with an AK-style rifle and was spotted by a Secret Service agent near the fence of the Trump International Golf Club. The agent opened fire, prompting the suspect to flee, and was later intercepted by the Martin County Sheriff's Office. The FBI has labeled the incident as a potential assassination attempt. No injuries were reported, and Trump was safely escorted from the golf course to his residence. On to some political updates now. Only days after being released on bail in the Delhi excise policy case, Chief Minister Arvind Kejriwal has said that he will be resigning from his post tomorrow. He has also appealed for polls to be called in November instead of February next year, saying that he will not sit on the chair of the Chief Minister until the people give him a certificate of honesty. And as we wrap on this edition of Power Breakfast, we leave you with some visuals of the Onam celebrations across the country. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.
Does the low-cost positioning then change as well as you move towards international travel, as you move towards adding things like business class and loyalty programs? Does that cost position at the back end start to change as well?
Well, it depends a bit, Shireen. What is your definition of low-cost position? We are determined to keep our cost leadership. And, you know, 2 days from now, flying to a city is still 3,000 rupees. So for that, we need to keep that cost leadership out there. And we're not making any changes on that product, on that setting. But on top of that, we start to build what we are doing. So if you see our business class, which we are going to introduce, we do that in what we call the nation's busiest and business routes. 20 a day between Delhi and Mumbai, 14 a day between Delhi and Bangalore, 13 a day between Delhi and Hyderabad.
You said that these decisions are taken when you believe that the revenue advantage outweighs the incremental costs that you will have to take. Can you give me a ballpark estimate of what, for instance, the business class introduction is going to mean as far as revenue impact is concerned when you see a full rollout across the 12 routes that you spoke of? What is the international expansion going to result in terms of a revenue bump up as well going forward?
So the business class will be introduced in November of this year. It will start on Delhi-Mumbai. Of course, we get one plane. It will start as we fly 20 a day. One plane is not enough. So by the end of this calendar year, the entire Delhi-Mumbai operation will be fully business class equipped. So all our 20 flights a day, maybe one or two, but all the 20 flights is our ambition. The objective clearly is we start in November of 24, and by the end of 25, all these 12 routes, all these 40 plus planes which will operate this route are in operation.
I got asked right after the debate, you know, do you think we should do another one? And I said, hell, every day we should do another one. Of course. Well, it's not going to happen because Donald Trump confirmed today he's not doing another one. So give him a little break. That one left a mark. He said a lot of weird stuff too. So I'm just going to say that. And that was you tell me you had this on your bingo card. And they're eating cats. And they're eating cats. He refused to condemn the January 6 criminals who attacked the U.S. capitals and our democracy. But in the anger that he got into as the poise and dignity and the sharp retorts from Vice President Harris, he lost some of that composure in there. And when he was referring to those rioters, and you go back and make sure you'll see this again, I'm sure, he said, "We didn't."
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's an important week. It's the week where we perhaps begin the rate cutting cycle, the global rate cutting cycle led by, of course, the US Federal Reserve. I'm Prashant. We'll talk about that and more in just a bit from now. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi guys, good morning.
Morning.
Just to put the record straight, there might be markets in the debt segment. There might be holidays in the debt segment, holidays in Asia. No holidays for us. We're trading 5 days a week, right?
The holiday, by the way, Surabhi, is moved. The
Yes,
holiday is
Wednesday
moved
now.
to Wednesday,
Yeah.
but I mean, we're trading.
None for us. None for the equity segment.
None for us.
Just
I think
saying it out
the
there.
next holiday is only the 2nd of October.
Yeah.
I don't think we have a holiday before that.
Yeah, holidays aside, but happy Onam, Prashant.
Oh yes,
Hope you had a
how were
good
the
festival
festivities,
yesterday.
Prashant?
I mean, they were good food.
Yeah, good food. Yeah.
So, yeah, absolutely. And I think, festivities will continue all the way into the end of the year, early, sort of next year, Diwali, and et cetera, et cetera. So this is that time of the year. So absolutely. Well, let's just quickly start talking about the market, because I think there is a lot too. And I want to just pull back a little bit and look at the bigger picture today and not look at what happened on Friday straight up. So look at this. The Nifty last week rallied 2% and hit a new all-time high. I mean, amidst all the noise and talk about rate cuts and this and that and whether it'll happen or not happen, 25-50, the market here has moved up. And by the way, which means that the Nifty, with its near 17% year-to-date gains, is now the second best performing market in the Asia-Pacific region after Taiwan, only after Taiwan. I mean, Taiwan is up 21%. The market here is up about 17% or so. So this is, the strength of the market. The domestic institutional freight train, and I'm calling it that purposely because it is a freight train, it's unstoppable, right? It's sort of showing no signs of slowing down at all. Mutual funds, for example, have attracted about $35 billion of equity inflows in 2024 so far. If you look at what's happened after general elections, monthly inflows used to be about $2 billion. That has gone up to being $4 billion now. I mean, we're getting $4 billion into equity mutual funds regularly, on a regular basis. This has been absolutely astounding. And what I'm coming to now is interesting. All of this has transpired without any real sort of leadership or participation from foreign investors at all. I think this is the point at the point of contention and the argument whether this will change as we get into this rate cutting cycle. At the margin, it looks like some of this is changing, that FI activity is getting better. So, for example, if you just look at the month of September, they've bought about $2.2 billion, that is FIIs. If you look at the month of August, it was $1.4 billion or so. So is the pace picking up a little bit as we get into that rate cutting cycle? I mean, I think that is a point of contention. Because FIs have stayed out so much, their positioning is extremely light. I mean, actually, it's very, very light. And there is enough and more room for them to actually come in. I mean, the only place positioning is light for foreign investors, apart from India, for a large market is perhaps China. That's the only market which is worse in terms of positioning. Now we get to the Fed rate cutting cycle, right? I mean, so they're expected to cut on Wednesday, a 25 basis point cut. Remember, even 2-3 days back, consensus was 25. But then two articles came out late Thursday night. One was from the FT, the other was the Wall Street Journal. And suddenly, 50 basis points, not 25, is back on the table. So if you look at the sort of Fed funds probability, it was about 18% two or 3 days back for a 50 basis point rate cut. As of Friday's close, it's a 50% probability that you get a 50 basis point rate cut. That's how the odds have really jumped in that sense. We get just one more data point, which is the retail sales number. I mean, we'll get the data point when the Fed meeting has already started on the day one of Fed meeting, and perhaps that will go into the mix in terms of the decision. So the only thing which people are arguing about is the depth of the first cut, whether it's going to be 25 or whether it's going to be 50. Remember, Asian markets, India included, historically has outperformed much of the rest of emerging markets during Fed rate cutting cycles, but they've got to be non-recessionary. So a rate cutting cycle not accompanied and not needed because global economic growth or US economic growth is weakening substantially. That is the ideal mix which the market right now is working with. Now I'll get to the levels very quickly because I think we've put this up on Friday as well. On the index, the Nifty needs to take out 25,433, which is the high made on Thursday. This is the new all-time high, exactly about 100 points away from the previous one. Supports come in at the 20-day moving average, a fair bit of gap. 25,027 is the 20-day moving average for the Nifty. The Bank Nifty on Friday closed around the 61.8% retracement of the fall, which is 51,943. And here you get a close above that, as a decisive close above it. We're almost there. And then you basically target 52,565. That is a 78% retracement, 61.8 and then 78%. And then, of course, you basically target all-time high. Supports here are the 40-day exponential, which is 51,115, a few percentage points away from where we left off. GIFT Nifty will come up on your screens, about 65 points higher once again. I mean, it just makes you wonder whether this is the beginning of a fresh up, of altogether a fresh thrust higher, a fresh up move, or this is going to be a bit more incremental, at least in the very near term, because the market's done a fair bit of heavy lifting over the last couple of weeks. I mean, just look at what's happened from the 5th of August lows when global markets were a little nervous and things sold off. We've done very, very well indeed. Surabhi.
Oh, absolutely, yeah. But it's been really the rise and rise of India, right?
Yeah.
And September so far has not been bad at all. Just to put things in context, like I was saying, lots of holidays across the region today and tomorrow for some markets. So just to sound you out, China is closed today and tomorrow for the Mid-Autumn Festival. That also is the reason why South Korea is closed today. There's Japan, which is shut down because of the respect for the Aged Day holiday. So basically, short point, Hong Kong is the only major market that's trading in the region. And it is reacting to weak data that came out from China over the weekend. So that whole picture is not really changing. All these are August numbers that I'm talking about. Industrial output, the growth rate is 4.5% versus 5.1% in July. So that's the extent of the deceleration, and it's a 5-month low for the industrial output numbers in China. The retail sales data also lower than expectations at 2.1% versus 2.7% growth in July. And if you look at the fixed asset investment growth, then that has come in at 3.5%. This is the entire period, January to July period, where the number is 3.5%, and it's also below expectations. So really no great shakes from the numbers out there in terms of macros. Let's come back home, and here the India shining story really continues, like Prashant also mentioned. I mean, we put on about 2% last week itself, and the market's done pretty okay so far for itself, and we are barely, 70 to 75 points away from the all-time high levels that were hit last week. So the market has digested and kept that gain in check. Another interesting facet was the fall in the India VIX. Over the last several days, the VIX continues to cool off. In fact, in the last week, VIX was down almost 15 to 16%. And now the India VIX is somewhere around between 12 to 12.5. Historically, the band this year, the low has been around 10.5 on the VIX, and the high around the election period volatility was 26, 27. So the VIX in general is trending at the lower end of the band so far in 2024. The change is the sector rotation that's playing out. It's defensives in and momentum out. That's what last week tells us. So just to put the tally on the table, the outperforming sectors of last week: consumer durables, consumption, FMCG. The FMCG index was up close to 3% as well. IT continues to see a lot of traction with some big moves on Friday, so 2.5% up there. Banks are finding favor again. And what's moving out? It is the PSU space. So the PSC index was down about 1.3%. On the fund flows, no problem whatsoever. So just adding to the tally, yesterday again, FIIs were net buyers along with domestic institutions. FIIs on Friday bought to the extent of 2,300 odd crores. Domestic institutions bought to the extent of about 2,500 odd crores. So no problems with the fund flows whatsoever. And finally, today is a big day while we talk about the big global headline being the Fed. Today, it's going to be all about the Bajaj Home Finance IPO. And if you go by all the reports and all the buzz around, the expectation is a whole 100% pop. The issue price, remember, was 70 rupees. And the total size was, about 6,560 crores, roughly split between OFS and the amount of money that's going into the company. The buzz is that you'll get a 100% pop at the open. The valuations could be touching almost 6 times. What happens from there is the question, and we'll ask our experts as we get started. So, plenty to keep us excited and busy this morning, Nigel.
Well, that's right. The uptrend is pretty much intact as the global markets, well, they're bracing for those rate cuts, and Indian markets as well, they have been looking up. Last week, what really stood out was the Nifty Bank, after a while, has started outperforming what the Nifty is doing. And we had pointed this out last week, that the Nifty Bank actually has been a relative underperformer if you look at it in the last 12 months or so. But if that could get its mojo back, valuations in favor, and the FI flows as well are turning around. So if that's the case, then the largest constituent of the Nifty will do well. And I see that as a very, very heartening sign. Moving to a Friday's trading session, we ended mildly lower, but the India VIX cooled off as well. And that's normally a bullish sign. So you normally have an inverse relation between the Nifty as well as the India VIX. This time they moved in the same direction. Cooling of the India VIX is a bullish sign. The other technical indicators, the PCRO is moving to the upper end of the band. It moved to around 1.4, which tells you that the options data is getting a little bit too easy. Writing puts, it's getting too easy. Well, that's cooled off back to around 1. So that's a good point as well, because that's bang in the middle of that range. Moving to the options data, then 2 strikes are quite active. The 25,400 call, 16 lakh shares getting added there, premium at around 100 rupees or thereabouts. And the 25,200 put as well, it added 15 lakh shares, and the premium has come down to around 75 rupees on. So it gives you a broad range. The Nifty appears to be in the near-term band of around 25,000 on the downside, which incidentally is where the 20 DME is at. And on the upside, going by the options data, you have the 25,500 odd. And if you pull up a chart, you'll see that the 20 DMA, that becomes the first reference point, which is around that 25,000 odd mark. Moving to the Nifty Bank, now that's got its mojo back, as I was mentioning, and that's the one that could lead from here on as well. You have the 20 DMA, which has support, around 800 points lower, and that 50,800 was a bit of a resistance mark. That becomes a support. So this is the crucial support that you're looking at on the Nifty Bank. The bulls will want that to hold out. 2 sections of stock that I'm looking at today. One is because of the Bajaj housing finance listing. Well, the other house finance companies as well will be in focus, because it's expected to be a bumper listing. And if you look at it on expanded capital, it could trade at a price to book value of around 4.5 to around 5 times, with an ROA of around 2.5%. Some of the peer groups should come up for you on the screen, which also have ROAs in that vicinity of around 2 to 2.5% odd, but trade at a sharp discount. So mind you, these stocks have already seen a big run, but there could be more in store going by the listing if it's a bumper listing. And the other one I'm looking at is the technical indicator. One of the stocks, ABFRL, coming out of the FNO ban. That's normally a stock that you should keep on your radar, because it could swing either which direction. So keep an eye out on both these two. The housing finance stocks, and maybe this one as well, should be on your radar.
All right, Nigel, thank you very much for that. So that's basically the big listing today, which is going to be Bajaj Housing. And indeed, it's going to be a doubler right at the word go. Large housing finance name addition to the listed universe. Rajiv Agarwal is managing partner and fund manager at Doordarshi India Fund. Rajiv, good to have you with us here. Thank you very much for your time. Good to see you again. Just a quick word, Rajiv, on this Bajaj Housing sort of IPO. Demand was so strong that whoever got allotment, of course, would have wished perhaps they'd have gotten more. If you were in their shoes, would you line up to buy 100% higher, or do you think it's better to wait, maybe buy some of the others, which are, if you really want exposure to the housing finance theme, which are much lower if you look at price to book, and they're large names as well. Go on.
Yeah, no, I think we typically avoid IPOs just because it's very difficult to get any allotment. That's the first issue we see. And clearly, there is a huge demand in this particular case. So I think there are possibly better values out there. I think Bajaj as a name is obviously well recognized in the market, and they have delivered for the shareholder. So there is no surprise why there would be so much demand and the valuations being where they are.
Rajiv, hi, good morning. I remember when you were with us in person earlier this month, we were discussing the rate cut expectations, right? And here we are. This is Fed week. And I remember you saying that you are in the 25 basis points camp. So, if we go with that expectation that indeed it's a measured 25 basis points rate cut, I mean, what does that mean for the market? Does it mean that the trajectory just keeps going higher and higher, or do you think it's already in the price? So it becomes a bit of a non-event and maybe a bit of a sell-on news?
Yeah, I mean, it is actually very surprising till last week, as Prashant was mentioning earlier, that 25 basis point was a done deal, and suddenly in the last few days things have changed, where 50 basis points is now also on the cards. I still would assume that it will be more of a 25 basis points, and it will be a measured cut. And I believe that, really, whether it's a 25 or a 50 basis points, in fact, my opinion is that if it is a 50 basis points cut, it may indicate to the market that something is not right, and it might actually spook the market more if there is a bigger cut, just because people would assume that if Fed is cutting in a bigger manner, there is something that they don't know. So I would assume that Fed will want to keep it steady, but let's see.
Rajiv, you briefly mentioned about the point that if Bajaj Housing lists at that premium, it becomes extremely expensive, but there could be opportunities in the housing finance space itself. What do you like? I just put up on the screen 3 or 4 companies, LIC Housing Finance, PNB, Canfin Homes as well. They have similar ROAs of around 2.5%, and they're trading at much cheaper valuations. You like any of them?
Yeah, so I mean, we have been looking. We don't own any of these names, but I think there's definitely some value. Canfin Homes has done pretty reasonably well for the shareholders in the past, and PNB Housing has actually turned around. So I think the names definitely have value. We don't own any of this right now, but we are definitely looking at this particular sector and seeing where we can understand the business and have sort of a view a few years out.
Okay, that's on housing finance. Just very quickly, Rajiv, before we let you go, I believe you also like the gold financing guys, the financiers, right? Companies like Manappuram and Muthoot, and we're seeing the headlines on gold. So what's the bull case here?
So we do own Manappuram, as we have mentioned on your program, and I think really the gold prices have gone up quite a bit. That ultimately allows these gold finance companies to be able to take advantage and give a higher amount of loans. So that is an advantage, that is a tailwind that they have, which they are possibly participating in. And I think that possibly, as long as it plays out, I'm sure these guys are going to take advantage of that. And we have seen that in the numbers in Q1. So I think that case continues. How long will the gold run continue is an open question, though.
Sure. Absolutely. We have one of the companies today, so we'll get chatting. We'll figure out if they're more bullish about the business or not. We'll be speaking with Muthoot a little later on the show. Thank you very much for joining in. Good to have you on, and you have a good rest of the week. Let's move on then to the equity call of the morning. Chetan Sheth of Nomura says that they think a scenario of a Harris win might be a relatively better outcome for Asia ex-Japan stocks relative to a Trump win. They position that this might imply less risk of trade-related tariffs, tensions under Harris, and thus better global growth inflation dynamics and a greater likelihood of faster policy action from China amidst a weak growth backdrop. He says a Harris win might imply the Fed rate cut theme will likely carry on. That will support local Asia forex and, in general, EM equities. He says it could also imply scope for greater allocation of capital flows into Asia. Chetan says a Harris win might imply support from lighter global investor positioning, better relative valuations, and higher earnings growth prospects for Asian equities.
Okay, this is Mahesh Nandurkar of Jefferies who is weighing in. He says that in line with their near-term cautious view on markets, small and mid-caps, industrials and global cyclicals amidst green shoots and consumption, they reduced weight on Reliance, Amber Enterprises and replaced L&T with Siemens with a lower weight, making industrials neutral and energy underweight. He says they add Emcure Pharma and Interglobe in the model portfolio, increased weight on HDFC Bank as they believe banking stocks are near an inflection point. He says their overweight stance on telecom, auto staples and power remains intact.
Well, we've got a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. We're looking at GMR reports, Zydus Life, RPG Life, Thermax, Adani Power, Adani Green, Lumax Autotech. All of them will be reacting to positive news flow. While on the flip side, you have Adani Wilmar, Marico and Patanjali Foods that will be reacting to negative news flow. Well, I'll tell you what, we'll slip into a short break. You come back, we'll get into further detail on all these top 10 stocks. Don't go anywhere.
He didn't say they, he said we.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
The market may have had a very topsy-turvy ride through this year en route to record high levels, but for the IPO market it has been smooth as a highway. Now that's because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57, but the differentiating factor as of today is the fact that the IPOs of 2024 have raised more money than all of 2023 put together. Now according to this data from Prime Database, the IPOs of 2024 have so far raised almost 62,650 crore. That is well above the 49,400 crore that companies raised in the primary markets last year. Now this list includes IPOs that were opened for subscription but have not listed yet as well. Now September traditionally has been a good month for IPOs, and the 7 issues so far have already raked in over 9,000 crore rupees. But August has been the best month of the year so far in terms of funds raised, as over 17,000 crore rupees have been raised by 10 IPOs that month. Now how have these IPOs fared? Now 5 of these issues have returned 100% and more from their IPO price. Now 30 of them have gained anywhere between 25% to 99%, and only 7 such IPOs are currently trading below their IPO price. It shows you the kind of market that we have been in. Now unlike 2021 and 2022, there have been no giant sized IPOs this year. While 2021 had Paytm, which looked to raise over 18,000 crore, LIC surpassed that in 22 with a 21,000 crore issue. Now Bajaj Housing Finance, which has now become the talk of the town for the bids it received, is the largest IPO of the year with around 6,500 crores, followed by names like Ola Electric, Bharti Hexacom, and of course Brainbees. Now 45 IPOs this year have delivered positive returns to shareholders. Now among them, Jyoti CNC is the top performer, with the stock more than tripling from its IPO price. The recent listings like Unicommerce and Premier Energies also find a mention, considering the strong moves they have seen just a few days after they listed. Now among the few IPOs that have delivered negative returns so far include Capital Small Finance Bank, Popular Vehicles, among other such names. However, none of these names have any substantial downside from their IPO price, such as a 50% or more from their IPO price. It's been a big
Welcome back. You're with us on Bazaar Morning Call, and as always, it's time to talk stocks, all the important ones that you need to watch out for this Monday morning. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Hi guys, good Monday to all of you. So let's start with Mangalam, who's watching out for the edible oil producers. What's the news here, Mangalam?
Well, the news is that, over the weekend, the Indian government has notified that there is an increase in basic import duty on edible oils by 20 percentage points. In fact, import duty on crude palm, soya bean and sunflower oil will see an increase from 0% all the way up to 20%. And on refined palm, soya bean, sunflower oil, the increase will be from 12.5% to 32.5%. Remember, palm oil prices, edible prices over the last 6 months have been on a bit of a downtrend. So as a result of which, I see a sentiment impact, a negative one, on Patanjali Foods, Adani Wilmar and Marico. Why is it just a sentiment impact and not more than that? Because one, palm oil prices have been on a downtrend, like I said. So even if you increase the duty over last year, it is lower year on year. So that will not impact their margins as much. Secondly, typically what happens is that India is a large importer. Every time there is an increase in the duties, there is a concomitant decrease in the prices of oil by these exporting countries as well. So the net impact is very minimal. And thirdly, we've all been talking about how demand has been extremely strong. So even if these companies do have to take some price hikes and see, no impact, there would be good demand as well. So at best, there would be a negative, sentiment negative impact on all the companies that I just mentioned.
Got it, Mangalam. Thanks a lot for explaining all of that to us. But let's hop across to Vivek. He's got a few more stocks on his radar. Morning, Vivek.
Well, good morning. A few stocks on the radar on the back of operational as well as news updates. First on the list is GMR Airports. The company has given an operational update for the month of August. Passenger traffic at 1.09 crores as far as number of packs are concerned is up 9% on a year-on-year basis, largely flat on a month-on-month basis. Domestic passenger traffic is up almost 7.5% and international passenger traffic better at 12.9%. Aircraft movement too up almost 8% on a year-on-year basis. Zydus Life Sciences, the other stock on the radar, which is in focus. The company has signed an exclusive licensing as well as supply agreement for 2 gadolinium-based mRNA injectables contrast agents as far as the US market is concerned. These are 2 agents. The market size of gadolinium is estimated at close to $120 million and the other agent is estimated at close to $117 million. And lastly, RPG Life Sciences also in focus. The company has signed a binding agreement with Krishna Dynasty. This particular agreement indicates that the company will assign surplus vacant leasehold land of the company in Navi Mumbai for a total consideration of close to 145 crore rupees.
Vivek, thank you very much for that. Well, let's talk about some more stocks with news flow. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. Let me first start off with Thermax. The stock will be in focus on the back of an order win. Its arm, Thermax, Babcock and Wilcox Energy has received a repeat order worth 516 crores. This is for supply of another 300 megawatt energy project from an industrial conglomerate in Botswana, South Africa. So given that, going with the green for Thermax. But apart from that, also watch out for Adani Power and Adani Green Energy Solutions. Both these companies have received an LOI, that is a letter of intent from Maharashtra State Discom. This is for supply of 6,600 megawatt of hybrid power from the Adani Group entities. Adani Green Energy Solutions will be supplying 5 gigawatt of solar power from Khavda, while Adani Power will be supplying 1,496 megawatt of thermal power. Both of these companies will be signing separate contracts with Maharashtra State Electricity Distribution Company for respective supply components as permitted under the tender conditions. So given this development, going with a green for both of these counters. Lastly, let's also focus in on Lumax Auto Tech. They will be acquiring 60% stake in Green Fuel Energy Solutions for 133 crores. This will mark the first step in the company's foray in a green as well as alternate fuel segment. Keep in mind that Green Fuel is a supplier to key OEMs like Maruti Suzuki, Tata Motors and VECV among others, and they say that this acquisition will be EPS as well as ROCE accretive to the company. So given those factors, going with the green for Lumax Auto as well.
All right, Mama actually got it. Thank you very much for all the details over there. So let's quickly recap our list of stocks to watch today. The ones that have positive news flow around them are GMR Airports, Zydus Life, RPG Life, Thermax, Adani Power, Adani Green and Lumax Auto Tech. The ones with negative news flow around them are Adani Wilmar, Marico and Patanjali Foods because of the 20% import duty on edible oils. All right, well, that's the stock list. Now let's talk about commodities that are in focus. Manisha is joining in with a roundup of all the action. Manisha, good morning and happy Monday to you.
To you too, Sylvia. Well, as we start a new week, we're looking at a new all-time highs in case of gold prices. 25.80 has now been broken on the higher side. With this, we are 3% up on in the past week, and the gold prices have gained up by 23% in this year. Now, one of the best performing asset classes, really. And if you look at this year itself, we saw a low of $1990 an ounce. From there, at 25.86 of an all-time high does mean that we've gained more than $500, almost $600 actually in the matter of from its lows. Well, the U.S. inflation easing, U.S. unemployment claims rising, dollar index has seen a decline, central bank buying, various factors which have been supportive for gold. But for this week, it really is going to be about the U.S. Fed meeting. And not just that, you also have monetary policy meetings from Bank of Japan, Bank of England, China. So there's plenty to watch out for in this week.
Right, Manisha, thank you very much for that. So that's basically gold, which continues to rise and sort of making newer and fresher highs. We'll take a quick commercial break here. We're going to come back. Prakash Diwan is going to be with us for some fundamental stock talk. We'll talk individual names with him in just a bit. Stay with us.
IPOs and we still have 3.5 months left. Now at this pace, it will not be a surprise if by the end of the year, we end up doing a story saying IPOs have raised 1 lakh crore so far this year.
I want to draw you into what's happening on the technology side and link this to what we just saw with the CrowdStrike outage, and that basically brought the aviation industry globally to its knees on that particular day. And 48 hours were mayhem, I would imagine, for you and your team. What's been the big learning from that experience, and how much is tech being prioritized now as you position yourself as a global airline?
No, what happened here is indeed a global outage in one of the systems. Yeah, it's my first word I learned in Hindi. We have this beautiful jugaad in order to deal with some of these challenges.
What does jugaad mean to you, by the way?
No, in this case it meant that people moving from a check-in through machines to a manual check-in. I will make sure that out of the 3 lakh customers which were supposed to fly in the day, 240,000 people have been flying. And I was writing not precisely, but I was writing 240,000 manual.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
So Nazara is focusing on its for FY25 its growth primarily through gaming. So what are the plans for the next few months or next quarter?
As you know, core gaming has been an important focus for us. Recently, we acquired 100% stake in Kidopia. We also acquired a studio in the UK called Fusebox. So I think we are very rapidly expanding our core gaming business. It should also be a high margin business for us, generate strong cash flows that we can keep redeploying in the years to come.
So talking about Fusebox, so Nazara recently acquired Fusebox and Paperboat apps. So what was the idea behind acquiring these two companies?
I think wherever there is core gaming IP, which we can kind of acquire and own, then we can evolve this IP over a long period of time. So Fusebox is...
Welcome back. Hope you're having a good Monday morning. Well, we've listed out all the stocks and we've stated the news pieces on all these top 10 stocks. But let's get in Prakash Diban to help us out with some more fundamental analysis. Hi, Prakash. Good morning and good to see you in as always. Prakash, I wanted to ask you about the big listing that we'll be having in the next 90 minutes from now on. Bajaj Housing. What's your view on it? You know, the grey market premium suggests that it could list at 4.5 to around 5 times price to book at least. What's your view on, on the stock? If someone got allotted, what should they do? And do you think it's a positive rub-off on other names as well?
Good morning, Nigel. So, it's quite a million-dollar question of sorts in terms of whether to continue holding. But that's the easier one. The tougher one is whether to buy after it gets listed. And my sense is, it's going to be a tightrope for most investors to figure out what's the elevated price to book multiples that you could live with. If it gets listed at the premium that the market's kind of indicating, or let's not go into that, but I'm saying anything above 5.5 starts getting into a little bit of a expensive territory. But given the momentum, liquidity-driven momentum, the fancy for quality names, Nigel, I wouldn't be surprised if there is momentum after the post-listing profit booking session is over. So you will have some momentum in this, which could last a week or whatever. But because long-term investors would want it in the portfolio, given the superior metrics that it has. So we'll of course evaluate it once it gets listed. But I would personally buy it at too elevated a price to book of 5.5, 6 beyond that. But profit booking is something which will definitely be very evident for different types of investors. There are different bands, different risk tolerance. On the rub-off effect, I think that's kind of done with. You'll probably not see much beyond that because all the money will go into Bajaj Housing itself rather than supporting some of the other names which have done very well in the last 2 weeks. But I would believe Bajaj will get that kind of a response, but with a little bit of a lag. So after a week or so, you'll see the momentum build up again. Till then, you'll probably have to just sit and wait out to see how the market gives it some realistic valuations.
Okay, all right. Let's see how this goes. The buzz is that straight away a doubler, at least at open. Prakash, hi, morning. Good to have you on. I remember, a couple of weeks back, I think it was a Friday, we were discussing sugar stocks and the move that they've now allowed cane again for, the production of ethanol. Now, over the weekend, they did expand that to ENA. Remember, we were having this discussion that extra neutral alcohol is a different variety. So now cane as well as B-heavy molasses can be used to produce ENA. Any thoughts? I mean, whether that could have any favorable rub-off on either sugar stocks or any of the distillery players, any of the listed alcohol plays that you would look at?
No, absolutely. Good morning, Subhi. No, I think when the announcement came for this relaxation coming in, and of course that was the first leg of the announcement towards relaxation, the sugar stocks just had a couple of good days. But if you evaluate those from a slightly medium-term perspective, and when I say medium-term, it's about a year, 18 months kind, you'll probably start seeing some of them are offering very good opportunities to get re-rated because the earnings growth will again get into a little bit of an accelerated phase. And if you stick to the larger ones, the smaller ones, of course, start smartening up when there is news flow. But without the news flow, if you were to look at and with ethanol giving that the wings to the plans in terms of the investment that they made, getting back the return ratios in place, you'll have an EID Parry or probably a Balrampur do very well. So I think it's as a sector, it's turning into a favorable zone, and it could give you a very decent upside. And sugar cycles usually give you that 18-24 month kind of a run. So I wouldn't be averse to adding more if I have, and if I don't, probably some allocation, maybe not, given that the sector is very small on the overall market cap, you probably add a bit of it to the portfolio. But EID Parry has a very well diversified portfolio. It's got products which are more FMCG, it's got sugar derivatives, of course, ethanol, and then the Coromandel holding that as well. So play safe, but do participate in the rally that's anticipated beyond it.
All right, Prakash, stay with us. We're going to just sort of invite management to join us, talk about this, and we'll come back to you because there is so much else to discuss because you had many movers on Friday and we want to understand whether there is some follow-through which is going to happen as we move forward. So Orient Technologies is the company that we're talking about. It's a recent listing, and they reported their first quarter numbers last week. Revenues have come off about 17% sequentially, but they're up 27% on a year-on-year basis. Mr. Ajay Sawant is Managing Director at Orient Technologies. He's joining us right now. Now, let me just quickly tell you, for the uninitiated, Mr. Sawant, good morning, sir. Thank you for joining us. So it's an IT infrastructure data center solutions company. It offers servers, storage, active and passive networking components, sort of collaboration solutions, and et cetera, et cetera. I mean, it's got all the right words in it in terms of what's doing well and what the future is going to look like. So, Mr. Sawant, why don't you? I think it's the first time we are talking on the channel. At least I'm speaking with you. Before we get into the quarterly numbers, tell us a little bit about yourself, the company. I mean, the big dominant drivers for the company in terms of the areas you're in, the end-use markets, et cetera. Go on.
Morning, and thank you for having me on the CNBC. Let me start with the Orient journey. We started way back in 1997. Orient Technologies was formed way back in 1997. And last 27 years that we have been in this industry, we take care of end-to-end IT products, technology, and services. Our dominant piece is more to do with the services perspective. We give on-premise as well as services on cloud. So cloud and data management is something which we are focusing more and more, and the services is our masterpiece. So that's where our USP stands for.
So what kind of services, Mr. Sawant? And go on.
So mainly on the data center services that we are pioneered on. Plus, we take care of end user computing. Plus, we take care of the cloud servicing, and of course, the analytics and mobility services that we take care of.
All of your revenue, so there is data center capacity in India is in a very nascent stage, right? I mean, what, 1,500 megawatt capacity, right? I mean, the defined by
and it's
power
growing
usage.
rapidly.
It's growing rapidly and projections are very high. So all of your revenues are dependent on data centers?
Either on the data center or on cloud. So we, as I said, we give services both on-premise, hosted, as well as on the cloud itself. So all the services that we provide on the AWS or Microsoft Azure. And
So your revenue, got it. Your revenues are a sort of one-off. You sell, it's not a product that you're selling, right? I mean, it's an annuity kind of a business?
Absolutely. So our 35% of the revenue comes as a ARR revenue, which we call it as annual recurring revenue. 45% of the revenue comes from solutions, which we provide on-premise, which is on the data center or on the end user computing. So 45% of the revenue comes from the solutions perspective, but main coming from the services, which gives us a healthy margins.
Sir, just to push that point forward to get an exact breakup of the revenue pie, Mr. Sawant, if you could break it down into how much is coming from, let's say, cloud, how much is coming from data centers, and you also have things like facilities management, which I don't think, I mean, typically when we talk about IT services companies, I mean, facilities management is a very different aspect of it. Then you're, I think, also looking at getting into something known as DaaS, our colleague Rima tells us, which is devices as a service. Yeah. So again, what is the contribution here? What is the whole revenue pie?
Okay. So let me divide the entire business into three different line of businesses. First, we already discussed IT solutions perspective. So where we give you more of end user computing and data center solution, which I said the contribute to 45%. The 35% comes from my IT enabled services, where facility management services, multi-vendor services, renewal services, sustainable services, and subscription-based services, which we come from, where we dominantly focus onto the managed services, which are shared services, which we deliver through our NOC. We are building our SOC also. We are already acquiring space in MAPE to build our SOC. The new services that we are talking about, for which we have raised the IPO proceeds, which will be used for this services, which is called DaaS, which we call it as a device as a services. So most of the customers are buying IT equipment as a capex, and they see it as a, it's an investment in the business, and they see it as a, more and more capital intensive revenue. To facilitate them, we are trying to move from those capex investment into a opex investment, which we call in our organization as a consumption-based services. And that's where the DaaS will play a major role, so that rather than putting it into assets coming into your books, it will be more of expenses coming into your books. And that's where the customer will feel more comfortable to use more and more IT products. And that is the idea of getting into the DaaS services.
Got it. All right. Hi, Ajay. Good morning. And thanks a lot for neatly outlining your entire business for us. Let's get to a couple of numbers then. I'm looking at it in the last couple of years. You've been growing at low to mid-teens in terms of growth. You've started the year with a year-on-year growth of in excess of 25%. Do you think that you can keep up this sort of a momentum? What kind of a guidance could you give us for FY25? Point number one. And margins have been in the vicinity of high single digits, around 9% or thereabouts. What's the guidance on that front as well? Two numbers.
Perfect. So if you see our quarterly numbers, which are just published on Friday evening, if you see the overall revenue perspective, we moved from 116.9 CR to 148.84 CR. So that's a huge jump of around 27.32% in terms of revenue. From an EBITDA perspective, if you would have seen, we have grown from 10.61 CR to 13.65 CR, which is approximately 28.56 perspective. And if you see our PAT, which has been grown from 7.13 crore perspective from to 9.28 crore perspective, which is a 30.21% jump in the PAT.
Ajay, sorry to come in, Ajay. Ajay, we have these numbers, what you reported in the past. Now we want to understand what's the way ahead. For the year, what can you do? The start has been great on a year-on-year basis. What's the outlook for the year? Two numbers, revenue growth and margin outlook.
So, so far we have not declared our advanced numbers, but let me tell you Q2 numbers, which we are at the end of the Q2, it will be far, far better than the Q1. Okay, so we are expecting around more than 40% jump in the revenue in Q2 vis-a-vis the year-on-year revenue we are talking about, and even EBITDA perspective, there will be a huge growth. So after the IPO, we are very bullish about the business. India is growing and we are trying to capitalize on that.
All right, so for the year, we'll expect at least a growth of around 30% going by the blockbuster start that you've had to the year. 25% and 40% is what you're talking about. So in the vicinity of 30% growth for the year, 25 to 30%, should we take that as an aspiration with margins in those high single digits?
30% year-on-year growth, you can take it. EBITDA will be in the double-digit percentage.
Double digit. Appreciate you joining in, Ajay. Thanks a lot for giving us color on your business, how you see things shaping up, and also giving us a couple of numbers to work with for the year as well.
Absolutely. And, as I said, it's a right cohort of businesses, data centers and everything associated with it has been booming. And this is a very, very small company right now, with, of course, big aspirations, naturally. Let's take a quick commercial break here. Prakash is still with us. We're going to sort of discuss a few more stocks with him. We also will have Mitesh and Sudarshan join in with some technical trading ideas. That's coming up. Stay with us.
Kidopia is already a very well-established IP in the world of kids. I think our objective is to acquire assets which have gaming IPs and then keep building and monetizing them.
So the news came out that Nodwin has recently also acquired Comic Con. So with that, what can the comic fans in India expect from the next edition of the Comic Con now that Nodwin has acquired a complete stake?
Look, the attention of the youth is a very valuable commodity, and Nodwin's focus on esports and anything else that the youth is interested in becomes very relevant, which is why they acquired Comic Con. I think today Nodwin is focusing a lot on expanding Comic Con to many more cities and doing it on a much larger scale, and they will make announcements around that very soon.
It's a kind of a record year, so to speak, in terms of the stake sale that the promoters and PEs have done this year so far. Okay, this is the big number that we're talking about. 4.75 lakh crore is the total amount of stake sale which has been done, promoters, PEs as well as non-promoters. When I say non-promoters, someone like BAT gets included, where they sold 4% stake in ITC this year. So this has been the trend. In the last 3 years, it's been around 3.2 lakh crores. This year, Y2D, it's still 3 months are left, and we've already crossed 4.7 lakh crores. So maybe by end of the year, we'll be crossing 5 lakh crores in terms of the total stake sale which has been done by promoters, PEs, as well as institutional investors. So that's the kind of trend we've seen. Now, the big deals which have happened this year, of course, Interglobe Aviation tops the list. There were 2 large blocks by the Ganwal family. They've raised close to 17,000, almost 18,000 crores. Indus Tower was another large block. Vodafone sold a big stake and raised 9,000 crores in a single day. Emphasis, big block by the PE investor, and they raised close to 7,000 crores. And even in Bharti Airtel, the PE sold close to stake worth 5,800 crores. So these were the large deals which have happened this year. Vedanta, Ambuja Cements. Whirlpool was interesting. The parent sold a big chunk, 24% stake in Whirlpool India, and they rose close to 3,800 crores. So these were the top 10 deals in terms of size that I'm talking about, which has happened this year in terms of the promoters and PE stake sale. It's been a record year in terms of OFS and IPOs as well. I'll talk about the OFS first. In the OFS list, of course, the government, government companies top the list. Hindustan Zinc, there was a large OFS of 3,000 crores. NHPC and NLC India were the other 2 PSUs where the government sold via OFS, and they raised close to 2,400 crores. Aditya Birla Sun Life was another company where the promoter sold via OFS. They raised close to 1,500 crores, and Glenmark was another deal. So these were the few large OFSs. Now let's come to the IPOs. It was a record year for IPOs as well. 15,000 crores plus, and we are still...
Welcome back. Well, the GIFT Nifty suggesting that we're going to be opening up with a gap up of close to around 70 to around 80 points the last time I checked. And those markets in Asia that are opened, well, they have opened up in the green. So I think, now they've dipped into the red. You have Hang Seng that's down close to around 0.5%, and the Taiwanese index as flat as can be. But the GIFT Nifty suggesting, I think, a 60 to 70 point uptick. Let's just pull that up and, hope I'm getting that right. Yes, a 70 point uptick is what it's suggesting. But a good time to get in trade setup from Anuj, who joins us. Hi, Anuj. Good morning. How are you reading things?
Morning, Nigel. Well, the trend has been super strong, right? The market last week needed just one day to get back 6 days of correction. That was a Thursday, of course. And this week's big cue is the Fed outcome, which happens on Wednesday. My sense is the market might see some profit booking on Thursday, second half, regardless of what the Fed does. But till then, perhaps the mid and small cap space is the space to be in. That's where I think there could be big outperformance. The other big story of last week was the breakout in the Bank Nifty, which was due. And we saw the Bank Nifty outperform last week. It still needs 2.7% rally to hit its previous all-time high. And of course, there's Bajaj Finance, Housing Finance IPO, which lists today. And it is expected to double on listing. So that would be the other big story. The other thing which happened on Friday was a lot of short covering from FIs in index futures. Almost 16,000 short contracts were cut. And what that has done is over the 2 days, from 1.5 lakh contracts, we have now moved to, again, 2 lakh 4,000. Next plate, please. Net long from the FI side. The India VIX was down 5% and the put call ratio was 1.33 versus 1.44. Coming to levels now, on the Nifty, the first resistance I'm watching out for is 25,400 to 25,467 and then 25,500 to 25,567. Support comes in at 25,250 to 25,300 and then 25,150 to 25,200. On the Bank Nifty, which is now one shade stronger than the Nifty, which was not the case till about 2 weeks back, the resistance 52,200 to 52,250 and then 52,400 to 52,600. If you cross that, expect a move towards all-time high. The support comes in at 51,600 to 51,700 and then 51,250 to 51,400. I leave you with the quote of the day. And, there's an interesting one which comes up. There are 3 ways to ultimate success. The first is to be kind, the second is to be kind, and the third one is to be kind.
All right.
Be kind.
No, that's absolutely good advice. Anuj, thank you very much for that. That's the quote of the day and, of course, a quick setup. What is an important week with the Fed starting to cut interest rates. The only question is the depth of the cut, the first cut, that is. Mitesh is with us and so is Sudarshan with what they'd want you to do as far as specific trades are concerned. Gentlemen, great to have both of you here. Thanks very much. Mitesh, let me start with you. What's the sense and how would you go about trading the index now? We've done very well, 2% last week itself on the Nifty. Go on.
Good morning, Prashant. So the sense is that there could be continuation of what happened in the market in the last 2-3 days. We saw a big movement happen on Thursday and then Friday was more of consolidation. Today, I think could be continuation of that up move which started on Thursday. Also is the fact that last 2 days I've talked about the financials and Bank Nifty and banking stocks coming into focus. I think that idea might continue today. So we'll keep focused on financials. On the Nifty, I'm looking at targets of 25,500 and then 25,650. But a more bullish setup is already there on Bank Nifty, which has met the first target of second target of 51,800. Now looking at extended targets of 52,250 or even 52,600. So quite positive on both the indices with a slight bias towards the financial names.
Sudarshan, what about you? Good morning. How would you trade things? Do you think this push higher, that massive move on Thursday, we pick up from there despite Friday's hesitation?
Yeah, good morning. Well, yes, what happens is after that very extremely large move, the markets will consolidate. So that Friday was simply a process of consolidation rather than anything else. Today also, while the overall scenario is to be a buy on dips trader, it is possible that we may consolidate in a narrow range. That would continue till the market is willing to go significantly higher. It is quite likely that we will cross 26,000 sooner or later. So that should be the view in mind. Every small dip in the day is a buying opportunity. Keep a 100-point stop. The market should not turn back. But with that, stay long, or if you're not long, be a buyer.
Right. All right. Good morning, gentlemen. Good to see you, Ben. Let's focus on individual stocks. Sudarshan, you go first. What's on your radar?
Well, there are a lot of mid caps which are giving buying opportunities. Bharat Forge is a buy with a stop under 1585. The stop has consolidated, made a bullish pattern, is on the verge of breaking on the upside. Grasim is another buy which has broken out of a bullish pattern, but there is potential on the upside. Buy with a stop under 2750. Just to balance it, I have one intraday short, that is Colgate. Sell with a stop above 3670. And finally, even though the banks have not yet put their act together, Kotak Mahindra is an outperformer. So Kotak Bank is a buy with a stop under 1800.
Okay, all right. Thanks for that, Sudarshan. Mitesh, what about you?
I've got all buy names and actually two of them from the finance side. Bajaj Finserv, it's been a buy earlier as well. Yesterday it broke out, or rather on Friday it broke out of a sideways consolidation of the last 8-9 sessions. So keep a stop below 1870. Look for a target of around 1950-60 to begin with. City Union Bank is also a buy. It's a conditional buy. It's just trading near the earlier pivots of 172, 173. So let it cross 173. Then take a stop at 169. Look for a target of 184. A buy on Birla Soft with a stop at 640 for targets of 700. And Oberoi Realty, I would recommend a buy, making a disclaimer that I have some options positions over here. So there's vested interest. Oberoi Realty is a buy with a stop at 1784 for targets of 1890.
Okay, all right. Thanks a lot for that, gentlemen. We'll come back to you all for the 9-10 call later on in the show. But a good time to get in Chandan Taparia as well, derivative and technical analyst, Motilal Oswal Financial Services, who joins us on the show. Hi, Chandan. Good morning. Good to see you in. Hope you had a good weekend. Tell us, Chandan, what's on your radar and what are the strategies you have for us?
Good morning, Nigel. Thanks for having me. And really had a good weekend and is still continuing the momentum. But talking about the market first, Nifty witnessed a fantastic recovery in the last week. It recovered well from 24,752 all the way to 25,433 by hitting the new lifetime high. However, on Friday, it remained consolidative, but major trend of the market is positive and every small decline is the buying opportunity. Looking at the data setup, we have seen a surge in put-call ratio and the volatility index is now below 13 marks. So stability in the global and the Indian equity market and positive data setup indicate that bullish stance could continue. Overall, till Nifty holds about 25,000, we are expecting this run-up to extend towards 25,750 to 26,000. But for immediate point of view, one need to look at support at 25,200 to look for a fresh lifetime high in the market. Looking at the Bank Nifty index, it witnessed recovery in last 2 days. And on Friday, it formed a small-bodied candle with long lower shadow, which clearly indicates the declines are being bought. So with immediate support, Bank Nifty also can see some recovery of 400 to 500 points on immediate basis. Now looking at the stock specific, on weekend we have done an extensive study on the relative rotation graph by looking at the sector which can do the outperformance, can turn from improving to the leading quadrant as per the relative rotation graph theory. So accordingly, we have positive view on the IT, FMCG and the pharma. And now the major run could be there in the new sector, which may be the financials. So these are the couple of sectors where we have bullish stance in the market for next couple of weeks to couple of months. Now talking about the stock specific idea. First is buy on Bajaj Finserv. Bajaj Finserv has recently given a classical breakout on the monthly and the weekly chart with the formation of triangle, which clearly indicates the bullish stance could continue. And the implication of the price pattern indicate 15 to 20% really cannot be ruled out for positional, but on immediate basis, the stock has been making higher top, higher bottom, given a consolidation breakout on the daily. So recommending to buy with support of 1865. And this stock can head towards 1970 level. Second trading idea, there is buy on Grasim, holding the support of 2680 zone. Momentum is seen with open interest activity. Some follow-up could lead the short covering as well. So one can buy with support of 2725. And we have target till 2019 in the Grasim industry. Last trading idea, there is buy on Oracle Finance. OFSS, Oracle Finance, has given a major price pattern on the last trading session with built up a long position. Strong bullish candle on the daily and the weekly chart after the multiple doses clearly indicates that now momentum is on worse for the next leg of rally. Already it has been making higher top, higher bottom with long built up. So one can buy with support of 12,000 and this IT name can head towards 12,850 to 13,000 marks.
Okay, all right, Chandan, great to get all of your calls. Thank you so much for joining in and you have a good trading session going ahead. We need to take a break on that note, come back on the other side and we'll have the pre-opening rates and also we will get chatting with Peter Maguire of XM Australia. Gold prices continue to soar. So what is the outlook ahead?
This year, Hexacom was the biggest IPO for this year. In April, they raised close to 4,200 crores. Other housing, Go Digit, Medi Assist, Eco Mobility. There were a lot of smaller companies as well, which have raised between 600 to 1,000 crores or 1,500 crores in this year. Gopal Snacks, Entero Health, Allied Blenders. The list just goes on. I've just picked up above 500 crore fundraising in the IPOs as well. So, as I said, it's been a record year as far as the Ps and promoter stake sale. Almost at 5 lakh crores is what we've reached. Y2D this year, and it's been a record year. So,
how about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
At least currently is what's happening as far as crude prices are concerned. Now trading below $70 a barrel, and that's great news for airlines like yourself. And the ATF tailwind, I mean, how much do you factor in on account of that as far as margins are concerned now, given where we are?
The fuel prices, if you would have asked me the very same question 2 months ago, you
would have been
said,
different.
They jump up, what are you going to do and what's happening? So I think that's always the moment of the day, and today they're trending in this direction. That could change again tomorrow.
But what's your own expectation on where they could be?
I say that I'm in the aviation business now for the last 32 years. If I were to be able to predict the direction of the price of fuel, I would not be an airline CEO, but I would sit somewhere totally else. So that I would not be able to predict that. When it comes to ATF, I think we see some different dynamics. Some states have really reduced it. That has really had very positive effects.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube.
Welcome back. Well, we'll start getting the pre-open rates any minute now. Like we've been pointing out, the cues from Asia are pretty thin because a lot of regional markets are closed. The one that's open, Hong Kong, is showing a bit of a negative cut at this point in time, down about 0.3% in the Hong Kong market. So expecting a slightly cautious start as the big Fed week is upon us. We still have Prakash Diwan now with us in the studios. Prakash, we were reviewing trade from last week as well. And one thing is very clear, that there is a bit of sector rotation that's playing out. And some of the, erstwhile, unloved sectors, they're getting the money now. For instance, consumer, FMCG. There's money going back in some of the banks as well. IT, of course, continues to do well. So you give us, one or two stocks, fresh ideas that you're still comfortable buying with the market at an all-time high.
So that's, I do agree. Some of these sectors have seen some revival of interest. I would focus largely on consumption. Very clearly, there is a underlying thesis that's working in their favor. That is that while their prices haven't moved, they've actually improved in terms of performance metrics. Whether it's the staples, whether it's discretionary. So let me leave you with a very well discovered name, but where things are looking very positive, and that's United Spirits, Survi. Why I'm talking about United Spirits is that you can imagine in the last 2 quarters, the current one and the previous one, whatever I've seen on the ground, these are dull quarters, whereas the good quarters are yet to come. And they've been able to do so much of rationalization in the distribution network, which leaves them with very, very decent margins. Premiumization is already in place. So I don't see any reason why a Radico Khaitan and a United Spirits won't do well. In fact, that's the pocket of consumption that probably will see a very, very significant re-rating. So good earnings, good growth guidance from both of them. But I believe United Spirits is the one which in the next 3 years could probably surprise all of us on the upside in a major way.
You know, I just want to quickly highlight, just check the rates on some of these stocks. So let's look at IIFL Limited. That went up sharply in the last 30-40 minutes of trade on Friday. I think it ended about 10% higher. I don't know if there is any follow-through this morning on your screen. So IIFL Limited, the NBFC, not the broking company. So we'll put that up. We'll look at Edelweiss, which was locked up on upper circuit, 10% on Friday, but from the word go. And it ended up 10% higher. It's up another 6% this morning, 6.5% in the pre-open, and decent-sized volumes for this point in the day. And of course, I mean, these jewelers all went berserk. Not just this last Friday, but through the course of the last 5 days, right? Tribhuvan Das was up 20%, TBZ that is. There was Senco, which went up sharply, and Tangamail participated as well. So these were some of the other names which we discussed quite a bit last week and on Friday as well. So it's got momentum, certainly got momentum. Prakash, out of these names, I mean, jewelers, I think we've spoken, but any of these names from the financials, IIFL, Edelweiss, any thoughts at all?
So I think Edelweiss definitely seems to be like a value play at work in that sense. After they've had the demerger, some of the core businesses that they sit on could still fetch a lot of value, which I don't think the market's kind of attributed yet to the stock. So at this 130, 135 odd, you probably have a very decent optionality that could play out. But, I would still focus on the jewelers where TBC and all seem to be still from a longer term perspective. I don't know what happens today or this week, but the re-rating seems to be valid, and that could, it's part of consumption, which Sudhir was talking about. From that perspective, the festive season could actually be one of the best that they look ahead. So I would look at some of these select names, but be picky still, Prashant. While the sectors are getting rotated, new sectors are coming to the fore, you still have to have a very clear bottom-up eye on most of these to really make money.
Okay. All right, Prakash, thanks very much for all the inputs this morning. Appreciate you being with us. You have a good day. Well, let's put the spotlight on the one thing that has been sparkling bright this year, and especially in the last couple of weeks. And of course, I am talking about the yellow metal, which is gold. We're looking at spot prices trading above $2,600 at this point in time. So what is the trajectory going forward, and what do these rate cuts from the Federal Reserve, if they start kicking in this week, as planned, and what do they mean for the precious metals space? Well, we have with us an expert to answer that. Peter Maguire of XM Australia is joining in. Peter, great to have you on the show this morning. Thanks for being with us. That's really the question. So gold moving higher as we're expecting these rate cuts to kick in. What are the market dynamics that you see immediately ahead?
Sure, Boy. I mean, you can't deny what's happened over the last, 11 to 12 months. We were at a low of 1,800 odd early October, and here we are mid-September through 26. So the momentum has just been extraordinary, and I feel as though that is going to increase possibly in the run-up to, New Year, quite simply because rate cuts, what's happening geopolitically, and naturally the overall momentum of central bank buying has been very strong, and I feel as though the US dollar will come under more pressure to the downside. So it's going to be, I think, one-way traffic for the yellow metal as it roars into 2025.
So that's, I guess that's a little bit of the trading momentum that kicks in as money gets cheaper when the rate cuts come in. What about actual, demand and supply in the market and the way it's playing out, demand from India as we get into the festive season? Does that look supportive?
Well, I think so. I feel as though that will only increase, and I think the appetite globally across retail investors has been very strong, not only for the paper market, of course, but for physical. So there's the first side. I feel as though that India will continue its upward lift. And, your central bank has been very, very strong as far as buying, along with Turkey and the likes of Russia, and many of the, major nations, and China are buying at record levels. So I feel as though that will continue. And as we, I think, ingest or digest the situation, it's pretty hard not to be long gold and long physical gold. So that seems to be the trade, and it hasn't denied anyone this year because it's just been extraordinary over the last 11 and a half months.
Hi, Peter. Good morning. Good to see you in. So gold, you're sounding fairly optimistic. What about silver? We know that one could buck the trend and sometimes outpace what gold does. What's the view at, on silver at around this $30-31 odd?
Well, Nigel, good to see you. And I think a couple of things. First off, the gold to silver ratio, I think, is very, very lean at the moment. I feel as though that will compress. So if it does compress and you come back, you're now running at about 83 to 1. That's 83 ounces of silver equals 1 ounce of gold approximate. I feel as though that'll narrow and it'll really start to compress over the next matter of months. And there's been underinvestment in the silver market for the best part of a decade or two. So that seems to be a real big push. And once it starts to gain momentum, I think it's going to be onward and upward. I wouldn't be surprised to take $35 out or higher by end of year. Let's just see where it all rolls, because we've got a lot of big themes about to be played out across the economic landscape, unwinding as far as policy from many central banks, and of course what's happening with US elections and the overall momentum.
Okay, absolutely. Just to get the levels and the targets again, Peter. So gold, what's the next stop that you forecast?
Well, Surabhi, it's pretty hard. I mean, it's just been bouncing so heavily and so dramatic. So everyone was 26 to 2,700, spanked through 26. So 27, 27.50. I wouldn't be surprised if it hit 27 by end of month. That's just as momentum. I'm talking in the futures market. Then the next part, I think silver, it's got to be a $32 to $34 play. And if it really goes through that with momentum, then, $35, $36 it's capable of. Many analysts are out there saying 3,000 or 3,000 plus. And, I remember having these conversations this time last year and people saying 2,500, it won't happen. Well, here we are. And you've got 3.5 months to run till the end of the year. And it just seems to be, very giddy up. It's galloping away.
Peter, just one question on this, because there's so much debate about what the cut will be, right? As you said, 25 or 50. Even earlier last week, the general thinking was if it's going to be 50, perhaps it'll cause a little bit of worry because markets may assume that the Fed knows more than the market. So maybe 25 is preferable. I'm not so sure anymore. And I don't know if you agree, because there were 2 articles in the Wall Street Journal and the FT. And if they indeed were... yeah, exactly. And if they indeed were not plants, but basically leaks to condition the market towards a 50, now actually, if you don't get a 50, is that going to be a negative? What's your sense?
Couple of things, Prashant. First off, I feel, and it's really just started to squeeze and compress in the last couple of days, you're running at around about a 15 or 17% chance on Thursday. Then it really changed the whole footprint on Friday, and it's now at around about 52 on the CME. It's 52% probability of a 25 basis point, 48% for 50 basis points. I'm erring the other side on 50. I'll tell you why. They'll front load this because they need to get around about 115 basis points of cuts, and that's why I think that they'll hit it hard. They probably, as you said, there's probably structural weakness in the US economy from the labour market perspective, and they're keeping a very close eye on it. So this is a real concern. So let's just see how this rolls out. But I feel 50, and they'll probably hit 115 basis points, and that's what they're calling by December 31. So there's a lot of movement for yields, and certainly for Fed policy over the next couple of months to be, hit us between the eyes.
And then therefore, those calls of 3,000 on gold, perhaps that's how they kind of, add up and maybe even make some sense if you're looking at these really massive rate cuts coming in. Markets get a little spooked, perhaps about, the extent of the underlying economic sluggishness. Thank you very much, Peter. Great conversation with you. You have a good rest of the day and a good week as well. Well, with that, let's get back to some of the calls. Mitesh is with us. So, Mitesh, at least in the pre-open, it seems the market might manage a little bit of a gain once again. What's the sense and what's the call that you'll go with?
So as I said, I think the sense is on the positive side, bias towards financial names, and the call which I would suggest is a buy in Bajaj Finserv for target 290.
Okay, all right. Sudarshan, what about you? Okay, all right. Thanks for that, Mitesh. Well, let's focus on a couple of other stocks. Manglam joins us to tell us about the import duty on edible oils and the impact on various stocks. Morning, Manglam.
Good morning. So, the government of India has notified that there would be an increase in basic import duty on edible oils, imported edible oils by 20 percentage points. So, for import duty on, something like a crude palm, soya bean and sunflower oil will increase from what is 0 right now to 20%. And on refined palm and soya bean along with sunflower oil, the increase will be from 12.5% to 32.5%. But remember, palm oil prices and all the edible oil prices after the big surge post the Russia-Ukraine war in the last couple of years have been on a big downtrend in the last 6 months or so itself. So to protect domestic producers from that, there has been an increase in the duty. It is a mild sentiment negative for players like Patanjali Foods, Adani Wilmar, Marico, and all the other FMCG companies who use imported edible oil and imported refined oil for their inputs as well. Why is this a sentiment negative? One, because prices have been on a downtrend over the last 6 to 8 months. Secondly, demand has been good. And typically, India is a strong importer from all these countries which export. So every time there is an increase in duty, there is a concomitant decrease in the prices of these commodities itself, making the net impact minimal. And as a result of which, the sentiment impact would be marginally negative. And we may see the dips on FMCG and all these players being bought today.
Okay, all right, got it. Manglam, thanks very much for that. So we will watch out for all the edible oil manufacturers. We have Hormaz now joining in. He's watching out for a couple of interesting brokerage notes. Hormaz, morning. Which ones make the cut for you?
Morning, Surabhi, and some initiations coming in. This time, one for Macrotech, which Nomura has initiated coverage, a 1600 rupee price target with a buy recommendation, almost a 30% potential upside. They say that there are visible re-rating triggers for the company because of their strong earnings visibility and their right capital allocation strategy as well. They're seeing pre-sales growth CAGR of around 20% for FY25 and 26, and a slowdown in the residential market and a delay in infrastructure upgrades around Palava are some of the key risks that they are citing. Shilpa Medicare is the other one. Antique has initiated 1300 rupee target. They're saying that they're taking giant strides in their new drug delivery system or the NDDS-led formulation pipeline. Then their growth story has entered a new phase backed by sustainable revenue growth, and they are seeing a 34% revenue CAGR as well. And lastly, MK has initiated on Stovecraft with a 1350 rupee price target, a buy rating there as well. They're saying that the potential mass consumer demand cycle is recovering after 2 tough years, and as a result, they're expecting a revenue and EPS CAGR of 15 and 33% over financial year 24 to 27, and their valuations are also attractive. So some interesting stocks to watch out for before market open.
All right, we will. Thank you very much, Hormaz, for that. And the number of initiations and that activity stays absolutely extremely exciting and elevated. So lots of new stuff coming within the institutional coverage sort of framework. Well, we got the market open coming up in a few seconds now, and I think it's going to be a higher start. And we'll see if we are able to build on it in any substantial form. I think about 50 points higher is where the Nifty is left off at the pre-open, and the opening rates on the indices will come up. So Sensex was showing a 100-point pop in the pre-open. It's up 60 now, so fast-changing rates there. And I think you've got the Nifty, which is up about 35 points. 25,383 is where this one is trading at. What else? The Nifty Bank is absolutely flat. It's got about 60 points, which basically means we're up about 0.15%. That's it. Nothing more. And maybe we can sort of straight away look at a few names and a few stocks here which are moving around. Put up Adani Power if we can. So it's got a 4% pop right now. So 660 on Adani Power. On your screen right now. There is Bombay Stock Exchange, but that will be on the NSE. It's up 3%. It's got large volumes. Edelweiss is up about 7%. And we were talking about this in the morning. 134. It's one of the biggest volume-led gainers right now to start the day. And there is EPAC and a few others which are kicking off trade today as well. But, I mean, it's a quieter kind of a start overall. But we'll talk about more stocks as we go along. Surabhi.
Okay, so, starting off, some of the metal names, they have a little bit of green around them. So Hindalco, Tata Steel, these are the early movers on the way up. ONGC is managing about a 1% up move for itself as well. And you have Kotak Mahindra Bank, which is the best performer in the banking pack. Bajaj Finance, which is going to be in focus with the housing finance subsidiary listing today. That stock's up about 0.5%. Bajaj Finserv is managing about 0.5% as well for the time being. Reliance is quiet. about 0.5% of an up move on RIL. On the weaker side, the FMCG space, which saw a lot of buying last week, that's where there's a little bit of profit taking this Monday morning. So Lever is down 2.5%, Britannia, Nestle, these are the stocks on the way down. By the way, the life insurance stocks, they had a weak close on Friday, and some of them like SBI Life are starting on the cautious side as well. So fairly quiet with the news that the banks are not doing too much. It's some of the commodity names that are rising, and FMCG is cooling off.
Well, that's right. Vedanta, that's the stock to track from here on. It has a bit of silver exposure as well via Hindustan Zinc, and it's got this entire commodity basket with it. Keep in mind, it's been a relative underperformer. In May, it was a 500 rupee stock plus. It's gone through a series of underperformance, even taking into account the 24 rupees dividend that they've paid. For the time being, the stock is opening higher with strong volume, so keep an eye out on that one. And that's a stock in focus since we're going to be bracing for rate cuts. So that's one name. The other one that we're looking at is Deccan Gold. I'm just looking at the BSE release. They've said that they've shipped the first batch of lithium to China from Mozambique. So, that's one name that's moving higher on very, very large volumes. Keep an eye out on Deccan Gold. We normally don't talk about that. But initial volumes very, very high even on the BSE. Lumax Auto, they're going to be acquiring 60% stake in Green Fuel Energy Solutions for around 133 crores. The street likes this theme, right? Anything to do with green fuel, energy and the likes. The volume's low on the BSE, but the stock has moved up close to around 7% or thereabouts. So it's a good start to trade. We're trading mildly in the green. The Nifty Bank has breached that 52,000 odd mark. Who would have thought? It went through a series of underperformance, but the Nifty Bank is now getting its mojo back. And if the FI flows are going to come in, valuations as well looking fairly attractive, that could be the one that leads us higher from here on.
Word on some of the sugar names. Remember, we were discussing this with Prakash as well, that now cane and molasses, B-heavy molasses, can be used for making extra neutral alcohol. So more favorable policy action, basically, and more relaxations coming through for the sugar space. And some of those stocks are starting off on a sweet note. Bajaj Hindustan, a couple of others, Dhampur, Balrampur, most of them on the upside. Triveni Engineering, which obviously has a huge distillery operation, is up about 2% as well. Some of the initiations, the notes that Hormaz was talking about, Stovecraft up about 5%. The Shilpa Medicare, different brokers, MK and Antique, have written on these companies, and the stocks are reacting quite positively.
No, it's a good-looking screen. The jewelers as well, right? So Tribhuvan Das is up 6.5%, 7% actually. So that's another space, and I can only spot one. But you should keep an eye out on some of the smaller ones as well. So TBZ was up 20 on Friday. I mean, Tangamail and Senco and Kalyan, all these stocks have been buzzing. I mean, they're all, I think, up about 30-35% more over the course of the last 5 or 6 trading sessions. So that's that. EPAC Durables has been on a re-rating spree. Very, very fast move. Another 5% on EPACs, 363 on this one. Bombay Burma is up about 4% to 2,800. Is where that is now trading at, and I mean it's looking good. These rice stocks, I'm not sure if you guys mentioned, KRBL is up 6% and LT Foods is up about 7%. Actually, these two names, small names, right? But they are some of the biggest volume-led gainers on the NSE on the NSE and the BSE. I'm assuming both this morning. KRBL and LT Foods 6 and 7.5%. At this point.
And just one more stock. We do talk about it on a day-to-day basis because it's making the moves Edelweiss, but I've just looked at the move in totality. Yeah. The stock has doubled in the last, I think, 5 weeks alone. Yeah. It used to be a 62 rupee stock not too long ago in early August. Now 135 on a day-on-day basis. We're seeing huge volume and price action on Edelweiss. So quite a stunner.
It's number one on the volume, volume and price action perspective. Tahir Badshah is now with us. He's a market master today, Chief Investment Officer, Invesco Mutual Fund. Tahir, good to have you with us here. Thanks for your time. I think let's start. Let me preface my question with a global aspect, which is this is the week where we get the start of the Fed rate cutting cycle and probably a global easing cycle, right? We went from 0 to 5%, and now maybe we start the journey maybe a little lower, not all the way to 0. Hopefully not, but maybe 2-3%. What does it mean for Indian equities? And in this kind of a scenario, which sectors will do well? And just a condition, I mean, let's just assume for now that this easing is going to happen in a non-recessionary environment. So it's not very weak data which will necessitate these rate cuts. It'll be okay on that front. So in that context, here in India, which sectors stand to do the best? Go on, Tahir.
Yeah, like as I said, Prashant, we are more or less on the cusp of the long-awaited rate cutting cycle, and probably it will start this week in the US, and probably will follow through in India as well. Hopefully, given our inflation data has also been kind of reasonably supportive. Now, up until now, we've had largely value-oriented sectors which are generally associated with the rising rate curve, rate cycle are doing well, especially industrials, manufacturing, infrastructure-related ideas, which have obviously performed well, and those probably continue to benefit from the fact that government policies are supportive and the growth cycle is still reasonably in place. Although valuations in there have moved up, perhaps ahead of fundamentals, at least on a shorter-term basis. What we are likely to now witness going forward as we enter into the rate cut cycle, phase is probably the recovery in growth-oriented stocks, and not necessarily from the point of view of immediately earnings following through very strongly, but clearly here what we will see is valuations ticking up, which we normally do, especially for sectors such as technology or consumption, value retail. All these are probably parts of the market which have kind of somewhat languished, maybe have underperformed the market, and those are generally reasonably sensitive to a falling interest rate cycle. So I think that's what probably looks like happening. What therefore might probably see is a confluence where both sides of the market perhaps might run together. That happens in the later parts of a strong market cycle where we see probably more broad-based performance. So value industrials, those parts continue to probably remain buoyant on the back of earnings visibility. On the other side, you probably see the growth-oriented pockets at least start responding to the rate cuts, and probably earnings therein follow up later.
Okay, Tahir, hi, great to have you on. So, the question is now, what do you do from here? Because the market keeps moving higher. And as Prashant used, we try to come up with new adjectives to describe it. Freight train, right? A freight train of domestic liquidity, which is a fast-moving one, hitting the market on a month-on-month basis.
It is an unstoppable frame.
Unstoppable freight train.
It used to be, I looked at the data, before the elections in June, it was around $2 billion a month.
Yeah.
It's now, on a regular, casual basis, it's $4 billion of money is coming in.
40,000 crores, right? Yeah.
So, so for people, those who are waiting on the sidelines, expecting a correction, every month you look at the data.
Yeah.
I think we start every month with about 1 lakh crores which mutual funds are sitting on, which they want to deploy.
Yeah.
So
actually, let's Tahir, I'll come to my sectoral questions later. Just come in on this issue of the money flow. And this seems to be an irreversible trend, right? This is not a cyclical, but a structural change, perhaps, that's been put in motion. So how do you deal with this? And, what are the cash levels that you're comfortable holding in terms of, additional deployment? And then therein the question as well, actually, that I was going to come to, that where are the opportunities now? There's some sector rotation happening. People are going back to FMCG, banks, IT. How are you navigating it?
Probably you said it. I think that is the best way to do things in such kind of a market. You don't really have a control on flows on both sides. This time around, we are probably not only seeing, obviously, domestic liquidity has been strong all throughout, but I think the foreign money also has started to kind of gather momentum in the last some days, especially given that we are seeing, once again, India benefit out of the fact that the Chinese economy is not doing as well. And there is clearly a case for market reallocation, which is showing up in the intensity of the flows. So I think the good part, at least as far as we are concerned from a fund manager's perspective, is that the markets are broadening. There are relatively newer ideas which are coming into play where we can probably see some incremental deployment. We have to be obviously cautious of valuations. Now this comes actually free. So we have to kind of, balance out things out there. But at the same time, I think it's giving us a little bit of width in terms of operating portfolios. Not all of it, but a fair bit of it. We can absorb liquidity in sectors which have probably underperformed or let's say, like as I said, some of these growth parts of the market which have not done as well. So you named a few: financials, technology, some of the other sections of the market, even banks for that matter. Private banks and public sector banks to some extent. All of these are places where we can probably absorb a little bit of further liquidity that we are seeing into our funds. So I think at a portfolio level, the strategy is to essentially just follow a barbell approach. You do continue with some of the higher growth pockets of the market, which currently have earnings momentum on this side. At certain points in time when you see corrections. For example, we've seen some correction in some of the PSU names, especially on the industrial side, the defense side. Maybe incrementally, those are places where we might probably want to, start exploring. We were a little cautious some time back, given those hefty valuations which were there. Not that they've become very cheap, but clearly they are providing certain attractive entry points once again. So I think that's so by rotation, I think the market does keep giving you opportunities, and some of the newer stuff which comes through IPOs, etc., is also, and newer ideas which are emerging from the old set also is providing that extra width for us to operate.
Okay, all right. Hi, Tahir. Good morning and good to see you. When talking about some underperformers, two private sector banks, they have been the big underperformers, HDFC Bank and Kotak Mahindra Bank, trading at around 2 times price to book, roughly. Underperformed, valuations are still pretty much okay. And if the FIs are going to be showing us some money, then it could be allocated to some of these banking and financial names. Give and take everything, would you prefer some of these large private sector banks in comparison to the PSUs and other parts? If you look at the financials as well, we're going to have a new listing which probably could list at around 4.5 to 5 times the housing finance company, Bajaj. Your view on both these two names in particular, HDFC Bank and Kotak Mahindra Bank?
So without getting into specific names, but Nigel, it is difficult for us as investment managers to actually do anything on the basis of flows, whether they're going to come, not come. I think that is not the premise on the basis of which we can work. Yes, obviously, if that is something which is a latent proposition, maybe it might probably turn out. But we have to essentially work our way up in terms of where do we see value. And I think clearly this space has been value for a very long period of time. We still see the possibility of book value compounding in some of these names anywhere between 10 and 13, 10 and 15% and I think they are at valuations which are not very demanding for sure. So if you're looking at that rate of compounding, then these are clearly opportunities at this stage. But obviously the market to some extent is spoiled by the fact that we are seeing very strong returns in other pockets of the market which are strong not only by quantum, but even in terms of the time frame in which those returns are achieved. So I think we have to be patient with some of these, some of the macro elements which is holding some of these sectors back. Banks, for example, be it deposit liquidity or probably be it in terms of compression of NIMs. I think as they start reversing, or probably even some of the regulatory harshness which we have probably seen in some time. I think if it starts to kind of reverse, that will draw excitement. I think over the last some days when we've seen foreign flows, to your question, I think we have seen that momentum come back into some of the larger cap names, not only the large private sector and banks, but even some of the other parts of the market. One day, I think I saw almost every stock in the Nifty being in the green. So those are typically places where we would expect probably foreign flows to dominate.
Okay, all right, got it. Tahir, I wanted your view on the other space, the aviation pack. There's only one way to play it, Interglobe Aviation. They've been increasing their market share. You have a tailwind because ADA prices are down by close to 5%. And we're getting into the seasonally stronger period, which is the second half of the year. The stock has already run up considerably. Now suddenly there's hope that maybe the other player will survive. That's SpiceJet, which is a risky one because they've been losing market share as it is. What's your view on this theme? Stick to the leader?
Well, I think obviously this is another sector which has been developing or benefiting out of tailwinds, both on account of traffic, on account of the fact that physical infrastructure supporting air traffic is getting better. I think some of the issues which were related to aircrafts, etc., has also kind of been resolved. And last but not the least, obviously, oil prices, the way they've been trending, and probably they look like remaining in a soft zone for some time. So I think demand as well as supply is starting to kind of become favorable. And while of course this sector has been dominated by one large player holding a very large market share. But I think some of the other players also have their own niches. They have been constrained by a few factors of their own, which as and when they are resolved, I think they can probably also start benefiting out of some of the structural tailwinds which the sector is enjoying. So I think it's in the interest of the consumer as well that we have a few strong airline organizations operating in the country, and especially at the current stage of the India aviation cycle, where we are probably going to see demand being reasonably strong. So it's a good time. Probably we are still a reasonably consolidated industry in this segment with probably about 3 or 4 odd players operating. So I think there is probably some room for growth for different players, especially if they don't kind of intervene on each other's space or each other's territory.
Okay, well, we hope that we do have a bustling aviation sector, and also for the sake of all the flyers and the passengers out there, that we quickly get more capacity addition in. Tahir, it's been a pleasure speaking with you this morning. Thank you so much for joining in, and we look forward to the next conversation as well. That's a word from Tahir Badshah. Back to the screen for a bit, and the market's actually cruising along quite nice and easy. The Nifty is managing about a 50-point gain, and the Bank Nifty is actually not playing spoil sport for a change. It's also managing a bit of green today. But speaking of green, nothing, as we were just discussing earlier, nothing has been shining as bright as gold, perhaps. Remember, spot prices in the US, COMEX gold prices have cruised past the $2,600 an ounce mark as well. So what does this mean for the gold financing business here in India? Well, Muthoot Finance is the company in focus. Those prices have been running at record levels. So what happens in an environment like this? Is it business positive? Let's ask Mr. George Alexander Muthoot, MD at Muthoot Finance. Sir, thank you so much for joining in. Maybe your smile is saying it all. We had an analyst on the show just before you joined, and a lot of the traders in the market are calling for 3,000 on spot gold in US terms. But to understand the business dynamics, typically in a period when gold prices start moving higher, the value of gold you're holding, that's gone up substantially. What does that mean for business? Are you able to lend more? What is the loan to value general level that you like to hold vis-a-vis the prescribed regulatory norms? Just take us through the dynamics.
Thank you. Good morning. And happy Onam to all of you. We are just
happy Onam to you as well, sir.
Holidays now.
Yes, so to you and to all your customers, and of course to all our viewers as well.
Thank you. The Onam is great. So, as you were saying, the gold price has been going up. If you look at the dollar price, it was about 1,650 exactly 2 years back. Today it is 2,600. It's almost a 60% gain from what we had 2 years back. So I think all the people who have gold with them are quite happy to see the value of their ornaments going up 60% in the last 2 years. That apart, as far as gold loan companies are concerned, of course, as usual, we finance only gold ornaments. We don't finance bullion, etc. But then all the customers who have been taking gold from us now, as you said, can get more for the same value. So if they were getting 100 rupees earlier, they can get 160 rupees today, because the loan to value is 75% is the max. But at any given point of time, people don't take all the 75. Our average loan to value disbursal at any point of time would be in the range of 68 or less than 70% only. We see actually a good uptick in the market demand for gold loans. See, the sense we are getting from the market, from all our 6,000 branches all over the country, is that in the last 5-6 months, demand for gold loan is definitely picking up. And last quarter, we were able to do well. And we continue to have good growth momentum from the branches for the gold loan growth. I would say this is one reason for that could be the last 3-4 months. Unsecured loans have been little difficult to come by for people, whether be it personal loan or the SME unsecured loan, etc. Not that easy today, because banks and NBFCs are going a little slow on that. So that keeps the demand for gold loans or loan against gold on an uptick. That is why I see we see good demand here. And as usual, the focused players, the players who are focused on gold loans, have always had a good time, as a gold got a good run. And as I've been saying, it's a quite secured loan, and customers are also quite happy to get loans without much delay. And that is why the gold loan sector is doing well, and I'm sure it will continue to do well in the days to come also.
Sir, just to go back to the LTV point, so are you saying that not just the industry but you as well, at Muthoot also you're maintaining an LTV of roughly around 70, just under 70. So there's anywhere 5%, an elbow room that you have, and then with the appreciation in the price, what is the additional lending you can do? I think in our last interaction, you mentioned that you're looking at 15% AUM growth. You were anyway going to revisit that by the end of the second quarter. And now you have this huge tailwind in the form of, higher gold prices. Plus, like you're saying, there's lesser competition. People are not getting personal loans, unsecured loans that easily. So now what is the AUM growth that you can forecast?
I think let us wait for the next result, wait for a month when we are coming out with the results. I think the board will take a decision on the revision in the guidance. Today the guidance stands at 50. I'm sure, as you know, we have been doing well in the first quarter. Probably we will think of a guidance revision after the first quarter results are there. But as you said, people everybody does not need the whole 75%. Some people take only 65%, some people take 60%, some people take all the 75%. But the fact is that since gold prices are hitting astronomical levels, people are looking at gold as something which of more value today and a more value on which they can borrow. That is what is the big thing, what we are seeing now. They are seeing news about gold price, etc. every day in the newspaper. So everybody has some gold. So they are quite happy to see that their value of their ornaments is going up. And then with the players like Muthoot and the banks here who can, from whom they can borrow money easily, I think it's a win-win for the customer also.
Muthoot, hi, good morning. Prashant here, and happy Onam to you, sir, and to your family. Hope you had a wonderful Onam and a wonderful Onam Sadhya. So just to go on, to shift the focus slightly, we're talking about AUM growth. What about on the liability side? We are, as we were discussing earlier, the cusp of interest rates starting to come off in the US. Expectations are that this year in the US, there'll be at least 125 basis points worth of rate cuts. Here in India, also, we may see a rate cutting cycle slowly manifest itself, maybe not to the same quantum. Could you tell us what proportion of your liabilities book what's the maturity profile of the liabilities book? And if rates were to come off sharply, what does it do to your net interest margin, sir? Go on.
Sir, we have always been maintaining our net interest margin in the range of about 10 plus or minus 50 basis points. We're always maintaining that. When there was a slight rise in the borrowing cost for us, we try to absorb it ourselves. But when it is beyond our control, we pass it on to customers. But still, we try to maintain the 10% NIM. If, as we all know, also you all feel that the interest rates in US is also coming down by 125 basis points, and there is going to be a ripple effect of that in India also. When our borrowing cost comes down, it's not that our profits will go up. We will pass on a good part of that to the customer. That has been what we have been doing. We try to maintain our NIM. If the borrowing cost comes down, we reduce our yield rates also.
All right. Hi, Mr. Muthoot. Good morning and good to see you. And happy Onam. And hopefully, the time to come, Prashant has been telling us as well about Onam. Maybe we share a meal on that leaf. I'm looking forward. But let's focus on the business then, sir. A couple of points here. First quarter, you have grown by 10% on a quarter-to-quarter basis. So I think definitely that 15% will have to get revised upwards. The quantum is debatable. But as you told us, at the end of quarter two, we'll wait by for that. On the cost of borrowings, irrespective of when that rate cut comes about, the GSEC yields has already cooled off considerably. So could you tell us what is the average cost of borrowing? And as of now, how much has it come down?
See, in the last, it has not started coming down, definitely. It is almost, I should say, it is plateaued. It is on the top now. Maybe the cost of borrowing should be in the range of about little less than 9. 8.75 to 9 is the cost of borrowing today. I think it has gone to its peak now. If you see about a year back, it was 100 basis points, 125 basis points lower. So it is, I should say, it has almost reached its peak, and we should see the rates coming down in the days to come.
Just to go back to the point, sir, what is the liability, maturity profile? Is 50% of your liability book, under say 6 months maturity? Give us a sense of that. How quickly will you be able to, as rates come off, what will happen? Yeah.
I think our maturity profile is about 50% is in the bank. Banks, actually, it is linked to these rates. So if the rates come down, if the rates goes up, we don't have a big advantage. It's only 3 months and 6 months where they reset the rates. So just because the rates have come down or goes up, there is no liabilities which is fixed. It is always fixed to the, that's a banks. But for NCDs, we will taken 3 years, 4 years, etc. Yes, for that, what we have already borrowed will be fixed. So that should be about 20 to 25% of our book would be in the NCD, which is usually in the range of 3 years, 2.5 years, 3 years, 4 years, etc. Which is all the rates are fixed. Unlike the banks, where they have an option to reset after every 6 months or so.
Okay. All right. Final question, sir. Before we let you go, give us a guidance on Belstar MFI. You told us that maybe in the next 1 year or so we could see the listing. But what is the growth you're guiding for out there? And also on your home finance division, growth on both these two.
Okay. The home finance division has been actually doing well. We are actually focusing very great on that. The AUM is around 2,500 crores now. I think we should see good growth in the home finance, where it is it's a very secure loan book. As far as the microfinance is concerned, as you all know, it is an unsecured book, but definitely it is certainly a big service which the microfinance industry is doing to the customers by putting purchasing power in their hands. I think the growth there, the microfinance is about 30% or 25% growth guidance is what I'm not very sure that the company has given. And regarding the IPO, I think we have got the green signal from the SEBI. So we'll wait for a good opportune time, probably in the next 1 year, to go to the market for the IPO for the Belstar also.
All right, Mr. Muthoot, pleasure speaking with you, sir. As always, thank you very much. Happy Onam again. And, we'll speak again post the earnings which come out. And probably there'll be a revision there as well. We'll take a break. We are back. The big listing, of course, is going to be next on our radar. We'll take that break and come back with that in a bit.
Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand.
Okay, welcome back. Vamakshi is now joining in on the Bajaj housing listing. I mean, it's going to happen in a couple of minutes from now. But, and of course, as widely expected, is to be a doubler. But where does it leave valuations for it and other peers, etc.? Vamakshi's got the lowdown. Vamakshi, over to you.
Well, absolutely. This is one of the most sought out IPO in recent times. In fact, the company raised 6,560 crores but received bids worth over 3 lakh crores, setting a new record for any IPO. Now, the company does have a very strong franchise. They've got very strong brand recognition as well. They're AAA rated, and they also have access to cost-effective borrowing sources. As far as risk is concerned, it has been well maintained over the last couple of years, and risk-weight assets to AUM ratio has ranged anywhere between 62% to 66%. The company too has been very consistent as far as its performance is concerned, and the stability has in turn led to better return ratios for the company. Now, when we compare the company as in terms of its peers, the company does have a best-in-class asset quality with a GNPA of 0.28% and an NNPA of 0.11%. A coverage ratio too is the best amongst peers. It also has the lowest credit cost in the entire sector. The company scores over peers like LIC Housing Finance, PNB Housing Finance and Canfin Home over return ratios like NIMS as well as ROA. NIMS for Bajaj Finance, Bajaj Housing Finance rather, stands at 3.9% and ROA at 2.3%. The company also commands a premium valuation over peers, and rightly so given how it is placed in the sector. But nevertheless, that said, the company's NIMS have been declining in the last few quarters, and that is mainly on account of the rising cost of funds despite increase in higher yielding portfolio share. The company also is very regionally concentrated. In fact, the top 3 states contribute to nearly 70% of its AUM. Now, let's also look at the listing scenarios. If the company, say at the issue price, the price to book would be at 3.19 times. But, given how the grey market premium for the company is shaping up, if it lists at 100% premium at 140 per share, the price to book could actually jump up to almost 6.4 times. And assuming that the company does manage to hit that upper circuit of around 160 per share, the price to book would then rise up to almost 7.3 times. Overall, it is expected to be a bumper listing given how the IPO received the subscription bids.
Okay, all right, Vamakshi. In a few minutes from now, we'll have those rates up for you on the screen. Thanks a lot for joining in and making sense of that particular listing. Well, let's put the spotlight on financials. Goldman Sachs has a buy rating on Chola, AU Small Finance Bank, SBI Cards, while they have a sell rating on SBI and Avas Financiers. To discuss this, the trends ahead, we have with us Mr. Rahul Jain, the co-head of Asia Financials and head of India Equity Research, Global Investment Research at Goldman Sachs, who joins in. Hi, Rahul. Good morning and good to see you in. Well, I like some of these contra calls, and the one that I picked out is SBI Cards. That's been a bit of an underperformer, but you have turned things around from a sell rating, you have a buy rating. Give us your rationale for that.
Good morning, Nigel, and good to be on your show. Just before get into the specific question that you've asked, let me just take a step back and paint the broader picture that we have for the whole sector. So we clearly remain cautious on the sector. Earlier in the year, we downgraded the sector, calling out that the Goldilocks period is over because of 3 main factors. One was, of course, the deposit rates were looking to move up higher. Second one was the concern on asset quality was surfacing. And third was the slowing loan growth. Clearly, the view on the sector hasn't really changed much. The earnings headwinds continue to remain thick and heavy for the sector. Now, clearly, I mean, within the broader space, you always have certain themes emerge. What we are noticing is that in the unsecured space, the growth has slowed down dramatically. And clearly, this is the starting point for any future asset quality improvement that you will likely to see. So rather than commenting on the specific company, I would say that the credit card space, which has gone through over the last couple of years, over the last couple of quarters, some headwinds on asset quality should start to recede in the next couple of quarters, because this is a shorter duration product and always the first one to go under in a down cycle and the first one to recover in an up cycle.
Oh, got that. Rahul, hi, good morning. I was just thinking, we just had the management of Muthoot earlier, so Gold NBFC, and we've got, there's a Bajaj housing listing. So 2 segments, right? Housing finance and gold finance were probably the safest segments in that sense. I don't know if you agree. But if you have a view on the housing finance segment, we'll get to some of the other calls of yours as well. Broadly on the sector, I mean, do you think this is a good space that investors must have exposure to? I'm asking, of course, also in the context of the Bajaj housing listing.
Great. Thanks, Prashant. So, of course, when the asset quality concerns emerge, and I'm linking it back to what I just said a while back, the money always moves to these safer asset classes. And in that context, housing finance is one such asset class where the investors have shown preference in our meetings with them, in our discussions with them. So clearly, I think the drift of the discussion or the positivity seems to be heading towards the secured and the predictable sub-segments of the financials, and housing clearly forms part of it. The growth has been healthy. And clearly, with liquidity becoming more benign in the system, and the expectation of a rate cut in the next couple of months, investors are preferring some of these segments where the asset quality concerns won't be as significant as what you're seeing in the unsecured space. So definitely, housing is definitely getting more traction with our investors.
So, hi, great to have you on the show today. Thanks for joining in. So just to expand on that point, on housing finance itself, Rahul, I mean, there's so much excitement. Again, we're not getting into today's specific listing, but I guess it's also a case of the market looking for ideas and the sector rotation that we're talking about. While the concerns you laid out, asset quality, slowing growth, those are very real and very fundamental in nature. In the face of the kind of liquidity and the sector rotation that we're seeing, do you see higher multiples for the so-called safe zones like housing finance? Just trying to understand the kind of multiples that people are talking about given today's expectations of the bumper listing.
Yeah. Thanks, Urvi. So look, I mean, I'll bring it down to fundamentals on the earnings growth. Wherever the visibility of earnings growth is higher, whether it's relative or absolute, the money ends up chasing those stories and the valuation multiples tend to expand. Yes, we do get into the relative debate as well, depending on which company is trading at what multiples. And it essentially boils down to how do you see the earnings momentum playing out for those companies. So as I said earlier, that housing does look a decent space, at least in the near term to medium term, given the growth potential, given the asset quality has been benign, rates on the margin is expected to cut off, and the liquidity has been benign. The investors are willing to pay up higher valuation multiples for owning some of those names.
Okay. Fair point. Right, now let's come to the original question that Nigel started off with. I think that's the call that really caught everybody's attention in the market and ours. SBI Card, a lot of concern and caution around the company and the stock because of the go slow approach on unsecured lending. But you've turned bullish. So let's get to the rationale here.
Look, I mean, the overarching view hasn't changed. I think the unsecured space has seen significant growth over the last couple of years with heavy participation from different forces of markets across different subsegments. But like I said, every product segment goes through its own cycle. Credit cards, which is a fundamental payments product, is always the first one to experience any downturn in asset quality. And likewise, is always the first one to see bottoming out of asset quality concerns. So without specifically commenting on SBI Card, our view is that, given that the growth has slowed down in unsecured thanks to the actions taken by the RBI, sooner or later, the asset quality concern should start to peak in the next couple of quarters. And the credit card space, should be the first one to come out of it. It's inherently a pretty decent product, strong customer traction, and healthy margin in the returns profile. So this product should see the emergence as and when the asset quality concerns fully play out, which in our view should be in the next couple of quarters.
Rahul, I'm looking at the call on SBI, which has been a big outperformer actually year to date as well as in the last 1 year or so, and you've downgraded that name. But how are you viewing some of these private sector banks, that have been rank underperformers in comparison to a lot of these PSUs, and valuations? Well, they're pretty much still, digestible. Your take?
Sure. I think, look, I mean, generally, broadly speaking, on the PSU banks, there were two ways of looking at the valuation re-rating. And clearly, as the PSU banks in general have performed reasonably well in terms of fundamentals, be it asset quality or be it the improvement in the return on assets over the last couple of years post-COVID. So the first stage is always the asset quality, which has been pretty decent for this pack. And second is the return on assets, where we see headwinds increase. The headwinds is going to increase, like I said, across all the 2 or 3 parameters. One is the deposit rates, which seems to remain elevated given the market share loss for PSUs have been for real. And the second is, the asset quality, where in certain segments we are seeing increased delinquencies. And as these delinquencies translate into credit cost, the best of the credit cost period would be behind us. and this would put a pressure on the return on assets. In that context, we felt that the risk reward would be turning unfavorable. On top of it, you've seen a loan growth slow down for the whole sector. And like I said, if deposits is going to be harder to get through, I think there's a lot of work to be done over there first, then pay up the multiples for the growth. And hence the call on the SOEs with regards to the risk reward turning unfavorable.
But Rahul, isn't a lot of that already in the price? That's the question. All your concerns are, taken on board. We fully understand them. But that's the reason why these stocks haven't moved while the rest of the market has galloped away in the last 1 year, right? So isn't a lot of this already in the price?
Fair point. But if you see the ROA trajectory, and that's what the market always pays for, markets pays for the incremental change in your profitability or in your growth dynamics. And like I laid out earlier, if the return on assets are going to be facing pressure downwards, and growth is not going to be something which you would pay a superior multiples for, then clearly the derating or the risk reward, would start turning unfavorable. It's a combination of both the factors.
Okay. Rahul, I don't know, I think you've addressed it in, somewhat, but on the microfinance side, how much distance have we covered in terms of this down cycle that we're seeing? Are we halfway through? Are we only in the initial phases? What's your sense?
So in our conversation, clearly microfinance has been coming up with investors given the increased delinquencies over the last 2 quarters, predominantly because of higher leverage across the customer segment, and so much so that there has been an overlap with retail lending as well. But given the fact that this space has seen growth pick up only in the last 1.5 years or so, it has not been very deep. And therefore, in our view, the cycle should be relatively shorter. So hopefully in fiscal 25 itself, we should see the pain in the MFI space peak out. And then from next year, we start off on a clean base. What we are hearing from the industry is also that there is some self-imposed discipline they are applying. And clearly the growth over there is also consolidating, which is always a healthy sign. You try and fix where you've gone wrong, and then you start growing again. And therefore, in our view, I think this year you should see the pain out there to bottom out.
Pain to bottom out. I got that. I don't know if you can quickly put up the Bajaj Housing Finance sort of rate in the pre-open. It'll give you a sense of where we are starting.
150.
150, yeah. So it's a doubler, as was widely expected. There you go. That's essentially what we are. I think the team is all around it. I can see Mr. Sanjeev Bajaj are sort of there, and next to the bell, we've got Ashish Kumar Chauhan, the CEO, MD and NSC. And I think the operational team at Bajaj Housing is also very much there, sort of getting ready to bring in sort of a new player in the listed space that is Bajaj Housing Finance. Almost 1 lakh crore in terms of assets under management, has been growing at a very fast clip even at that base. And it's a segment which is, I think, we've been discussing here, is very well liked as far as the market is concerned. I mean, the product itself is generally very well liked. Long runway of growth. I mean, the other thing, of course, from a market perspective, but this is sort of intricacies, etc. The new PMAY details are still awaited, right? And there's been a lot of chatter around it in terms of how that is going to get structured. So that is something incrementally, which I think most housing finance companies will keep a close eye on. Because the first rates anytime now, look at the volumes already. 9 million shares. There you go. First rates, what do we have? 154. 155 is where we are starting. That's 120% on top of what they sold stock at. So that's an 84 rupee again, straight up. 12 million shares, 12.5 million shares. The question for many, of course, has been, what to do after it's listed, because now it's coming to you at almost 5.6 times price to book, depending on how you look at it. That's what Abhishek, a colleague, was telling us on Friday. So it's, of course, it's going to be the most expensive NBFC. That era of very high price, 5-6 times price to book multiples for NBFCs, I think, is kind of has been long gone. But this one, of course, now trades at those multiples. So can it sustain it is the question. 156 now on Bajaj Housing and Finance coming through. Rahul, just a quick word without talking about this one in particular, if you will, on exactly what that point. What kind of price to book multiples? I mean, we used to look at 5, 6, 7 times, 8 times for lots of players, right? A few years before, I think, up till COVID. Not anymore. Do you think these stocks from the NBFC space can still trade at those kind of multiples? Actually, we do have maybe a Home First or a Aptus, etc., which have been the most expensive. Now, of course, I think Bajaj Housing is perhaps the most expensive. What's your sense, Rahul?
Great. Prashant, it boils down to the predictability of the returns. If you think that the returns is going to be sustainable at where the companies are operating, plus if the growth is going to be stronger, then also bring in the relative theory into the picture. We have seen in the past these stocks do tend to overshoot the valuation range. I would also say, drawing upon my experience, that it also depends on how comfortable you are in terms of the number of years of earnings growth the company can deliver. So if the visibility out there remains strong, the market would always tend to pay a superior multiple for those franchisees, irrespective of which segment they would be operating in.
The one name which continues to re-rate is PNB Housing.
Absolutely.
If we can have that up. It's moved up from 800 levels all the way to about, it was around the 1100 rupee mark, but it's moved up another 3.5% this morning.
Yeah.
It's about 1180. I don't think the others are moving in with such gusto. Canfin and LIC Housing Finance, they all moved up a little bit on Friday, but I don't think this morning there's anything. A lot of it has, of course, already happened. Home First was a big mover on Friday. That's a private housing finance company, very sort of fast growth rates, but on your screen now, 2% more on Home First this morning, 1228.
On PNB Housing Finance, Prashant, around 6 or 7 years ago, the stock was a 1400 rupee stock. Yeah. And then, in fact, it corrected from there. So, yes, it's seen a bit of a re-rating, but it's still been a big underperformer if you compare it to the levels of 2017. And a couple of points on the valuation parameter. Bajaj Housing Finance has an ROE of around 2.5%. You have PNB Housing Finance, it's at around 2.4%. And on valuations, post this listing, Bajaj Housing Finance trades at around 4.5 to around 5.5 times price to book, depending on what you're considering out there. That's on 2026. PNB Housing, well, it's trading at around 1.4 times, give and take everything. So I think that's the reason why the street particularly is drawing comparisons out there. And on PNB Housing Finance, it's a AAA rated, similar to Bajaj Housing Finance. So it's seen a big run. It continues to see interest. I guess valuations in favor, AAA rated, and as has been a big underperformer, it had two large blocks that took place in the last 60 days where demand outweighed supply. So I guess put all that together, the street continues to like it.
Absolutely. It's been great talking to you, Rahul. Thank you very much for joining us and running us through all of that, a lot about financials, and we look forward to our next chat. Thank you very much for being here on CNBC-TV18. Rahul Jain, co-head of Asia Financials at Goldman Sachs. Well, let's bring in our technical experts as well. Mitesh Thakkar is with us. Mitesh, sort of back to you as far as price action is concerned. 65 points here, 25,420. What would you do?
Morning, Prashant. We'll keep exploring long ideas, and I think the Nifty metal pack is looking very good. We've seen some good rally happening in the steel stocks, particularly like JSW Steel, Jindal Steel, etc. I have a buy on NMDC right now. Keep a stop below levels of 215 half, 216, and look for a target of around 231 to begin with. The other stock is also from the middle pack, that's National Aluminum, which I would recommend buying with a stop at about 180 for targets of 185.
Okay, that's as far as some of those stocks are concerned. Just before we let you go, Mitesh, since we're discussing the housing finance segment and there's so much buzz around it thanks to this big mega listing, right? Any other trades, whether it is a PNB or some of the smaller names, Aptus, or maybe your Canfin Homes, LIC Housing, anything in housing finance that you would look at?
I discussed earlier that I have Awas in my portfolio. That about, I think Repco Home Finance is also giving a good breakout today. The earliest swing highs were made in June, July, which were around levels of 550, and the stock has now cleared those levels. So it's now trading comfortably above those levels. I think keeping today's lowest stop loss, I would recommend a buy here for targets around 610 to begin with, and even 635 on the upside is possible. So that apart, I think PNB Housing Finance, while the chart is very good, very strong, it doesn't give you a fresh entry point at the moment. So that is why I would avoid it. But on any declines, I think this will be on the list to accumulate at lower levels.
Okay. All right. Got it, Mitesh. Thanks very much for joining in with some of those trading calls. Back to the screen right now, just to view what's going on. We have outperformance from the Bank Nifty actually for the time being. So it's looking good, almost 200 points up on the Nifty Bank, while the Nifty is up about 60 odd points. And if we talk about some of the major movers and shakers, Kotak Mahindra Bank is actually leading from the front, about 1.5% up over there. There's Axis Bank, which is up about 0.5% as well. So that's contributing. Let's check out ICICI, minor contribution, 0.3%, sort of an up move. And actually, SBI is very, very flat. So SBI is the one that's not really performing that well. Some of the private sector names are having a better session. And also from the broader markets, one more trend to point out, some of these stocks like Radico Khaitan and a much smaller name like Global Spirits, so some of the spirit manufacturers, they are up and about in today's trading action, 5% higher. Not quite sure if there's a direct link with the fact that sugar companies have been allowed to make, ENA from cane and from B-heavy molasses. But anyway, they're up and about. But back to Bajaj Finance, I think the management is addressing the press now.
Sparkling numbers on subscription side. I have a couple of questions. The first one, your book is very close to that 1 lakh crore mark, about 97,000 crore. 3-year CAGR 31%, 5-year CAGR 29%, much higher than what your peers have been doing. What I want to understand is that till when do you expect this kind of strong growth to continue? That is upwards of about 28 to about 31%. When does the growth start normalizing slightly? Or do you think this is the normalized growth for the business that you've been doing? And can you double that book in the next 4 years, just going by the growth that you've been doing so far? Next question is on the NIM outlook. I just want to understand what kind of margins do you foresee yourself? Now that you're listed, you'll be able to share some numbers on that front. And as banks are seeing a drop in their CASA ratio, down the line, do you expect that impact to come on your NIMs also, because it'll become costlier for you to raise funds from the banks also? In that case, what are the alternate measures in terms of the tweak to your borrowing mix that you're looking at? Final question, 7 years we've had Bajaj Finance, Housing Finance listed. I understand there was certain amount of, input that came from the regulator as well. You have another 2 subsidiaries, the life insurance, general insurance arm. The regulator there has been saying that companies which complete 10 years should look at listing. Which one out of those 2 and by when could we see, them getting listed, them coming public as well? Thank you so much.
Let me just start first by thanking our shareholders, our investors, and everyone that's contributed for this listing today of Bajaj Housing Finance. We are truly overwhelmed by the response that we are seeing over the last couple of minutes. I'll take the question on growth, and then Atul will take the question on margins. Those are the 2 relevant ones. We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry. And on the back of that, we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort. Atul will take the margin question.
See, we are a variable rate company. On our asset side, our assets are variable, which are largely linked to a floating rate, which is linked to our cost of funds, and the liabilities are also largely variable. So on a steady state basis, through the cycles, mortgage companies generally have a steady state margin. So we do not expect any impact on margins from the listing, whether positive or negative, because that was from a cost of fund perspective, because we had already been a highest rated domestic rated company, and our cost of funds are relatively quite competitive compared to the market. And with a variable rate asset size, the NIMs are likely to remain stable, like in case of all variable asset companies. We do not see the credit deposit ratios, what the question you called out on, if they are deteriorating further in terms of a mix. We have a healthy mix of bank borrowings and the money market in our book, and we expect it to continue.
And on the last question, if
yeah, we are talking about Bajaj Housing Finance. We'll take that another time.
Thank you so much.
Hi, sir. Ankur Mishra from ET Now. First question to you, Mr. Bajaj, and come for the second question later. I want to ask that now that shareholders, the prospective shareholders have become shareholders now, and they have rewarded with you with a bumper listing. Now for them, what should they expect in next 1 to 2 years from Bajaj Housing Finance? Is there going to be any kind of a dividend? What kind of promises do you want to make for shareholders?
Well, we've just listed the company, as you said correctly, a few minutes ago, and we are thrilled with where we are. Shareholders should expect a business that grows with high quality, a high level of corporate governance, that brings the right blend of technology in this particular business, and sustained growth with high focus on quality of the business and a diversified book is what we look forward to building.
To you, Mr. Jan, I want to understand, you mentioned about the borrowing mix. It is from banks as well as other options. But with the kind of scrutiny and the new norms which is coming from Reserve Bank of India, can we expect some kind of change in terms of ratios, how you will be borrowing?
See, we borrow at a particular point of a time looking at the market availability and also optimization of our ALM and optimization of our cost of funds. So there is no standard at a point of a time what happens. So the calls are taken by the treasury team on the market scenario. Like I called out to the earlier question, we do not envisage, given our rating and given the confidence of the lenders, which whether in the money market or in the banking space have on the overall Bajaj and Bajaj Housing Finance there, we do not expect the challenges to be there in raising the money, because regulators' requirement had been towards increasing risk weight to other category of companies, not the housing finance companies. So we don't expect a challenge in terms of maintaining the balance.
Thank you.
Firstly, I want to congratulate Bajaj for the listing. My question to you is, Sanjeev, that how do you assess the demand for affordable housing going, because it has been lacking with respect to the premium housing, and do you see the rate cuts will have an effect on this? And also what is the plan for the promoter holding, the long-term view? And my last question is that the merger of HDFC Limited and HDFC Bank, has it reduced the competition intensity on ground?
So I'll have Atul answer some of the operational questions, but let me say, as promoters and as promoter group, we are strongly supportive and highly confident on this business and this company. We know, as per listing requirements, within 3 years, promoter shareholding has to come down to 75%, and that is something that we will look to doing in the coming years. Atul, over to you.
On affordable, your question, see, given India, in recent parts, it is correct what you have called out, the premium housing growth had been higher than the affordable housing. But given very strong government focus on housing for all, very strong schemes, what we have seen from the budget, what have come, and on the ground demand from aspiring India, we believe affordable housing finance or affordable housing demand would be far more in the coming years as we go from here. That is where on affordable we are based. So rate cuts do not necessarily tickle the demand up, like we have not seen rate increases trickle down the demand. That's what we saw, because again, it being a variable rate business, I think the borrowers and the people, when they decide to buy a house, they know that the rates are subject to going up and down, because in India it's a full variable or a floating rate mortgage is what we run. So it's a part of the cycle. Generally, decision for buying a house is not deferred or not preponed because of the pricing in our observation.
And about the merchant bit, has it reduced the competition on ground?
HDFC still is present in the mortgage space. So from they have changed the corporate entity from an HDFC Limited. Now they do the mortgage business in HDFC Bank. So the situation remains there, and they remain one of the largest players in the mortgage industry even today.
सर नमस्कार, मैं सौरभ पांडे जी बिजनेस मुंबई से। सबसे पहले आपको ढेरों शुभकामनाएं आपकी कंपनी की शानदार लिस्टिंग पर। मेरा सवाल मिस्टर बजाज से, सर आगे बढ़ते हुए अगर कंपनी की ग्रोथ की बात की जाए, किस तरह से आप जो है कंपनी का ग्रोथ देख पा रहे हैं, और जिस तरह से आपने अपने स्टेटमेंट में कहा कि सभी को अपना घर मिलने का पूरा अधिकार है, कैसा विजन आप आगे बढ़ते हुए देख पा रहे हैं?
सेक्टर की जो ग्रोथ रही है और जो हम कमिंग ईयर्स में देखते हैं, तो दिस इज लाइकली टू बी 12 to 15%, विच इटसेल्फ इज वेरी स्ट्रांग. हमारी ग्रोथ रही है हायर देन दैट इन द लास्ट फ्यू ईयर्स. इसकी कारण ये है, वन, इट्स अ कॉम्बिनेशन ऑफ ए डिवर्सिफाइड book that we have built across multiple customer segments. Second, it is the way we leverage technology and data for a seamless customer experience in taking on a home loan. And Third is the focus of the management to build a good quality long-term business. So हमारे हिसाब से these are all ingredients that continue to be there.
अतुल जी, मेरा अगला सवाल आपसे है कि अगर बात की जाए कैटेगरी चेंज की, तो हम होम लोन से अब डेवलपर लोन पर भी फोकस रखना है, तो किस सेगमेंट में सबसे ज्यादा ग्रोथ देखने की उम्मीद कर पा रहे हैं?
देखिए, हम चारों सेगमेंट जो मॉर्गेज के बड़े सेगमेंट हैं, चाहे वो होम लोन है या डेवलपर फाइनेंस है या लीज रेंटल डिस्काउंट या लोन अगेंस्ट प्रॉपर्टी, हम शुरू से ही सब सेगमेंट्स में रहे हैं। और जो क्योंकि हम हाउसिंग फाइनेंस कंपनी के तौर पर रजिस्टर्ड हैं, हमारा डोमिनेंट पोर्शन ऑफ बुक एज अ रेगुलेशन will be home loan and continues to be home. Is still also home loan and will continue to be home.
नमस्ते, मैं अनुराग सर। मेरा सवाल सर, जो करोड़ों रिटेल निवेशक हैं जिन्होंने आपके आईपीओ में सब्सक्राइब करा और उनको रिवॉर्ड भी मिला, तो उनसे जुड़ा हुआ होगा सर, उनको किस तरह का आप भविष्य से जुड़ा हुआ आश्वासन दे रहे हैं? और आईपीओ के दौरान सर आपके द्वारा एक जो बात कही गई थी वो काफी लोगों ने पसंद की, रिटेल निवेशकों ने भी पसंद की कि भविष्य की आप एचडीएफसी बनाना चाहते हैं बजाज हाउसिंग फाइनेंस को। तो सर उस लक्ष्य के लिए जो ग्रोथ के टारगेट है आपके किस तरह के होंगे, किस रफ्तार से आप बढ़ेंगे? और दूसरा सवाल सर इस जवाब के बाद।
तो उसमें मैं यही बोलूंगा कि जो रिटेल शेयर होल्डर्स आए हैं, वी आर वेरी ग्रेटफुल टू देम, एंड हमारी कोशिश यही रही है टू बिल्ड ए हाई क्वालिटी बिजनेस गोइंग फॉरवर्ड, एंड वी लुक फॉरवर्ड टू हैविंग यू विद अस एज लॉन्ग टर्म शेयर होल्डर्स लाइक यू हैव बीन इन सो मेनी ऑफ अदर कंपनीज.
Okay, well, it's the same question in different formats and different languages. What is the growth rate that Bajaj Housing Finance can deliver? Well, we don't have very straightforward answers in terms of numbers and numerics from Mr. Sanjeev Bajaj, but it's been a phenomenal listing, 122% on the upside, and a promise that the business will continue to grow at a steady clip. We'll have to take a break on that note, come back on the other side, and all the commodity market action coming up with Manisha Gupta.
Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for Phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month.
Welcome back. So let's shift the focus now on the commodity markets. We have Manisha with us. Manisha, so what commodity do you have your eye on now?
Well, I'm looking at agriculture as a space, Surbi, because the weekend has been quite busy with the industry trying to sense the impact of the government notifications, and there was a barrage of that on Friday evening. The various Twitter messages from ministry officials suggest that these notifications that have come in for export and import rules are being done so that to ensure availability, especially ahead of the festival season, also support farmers going forward, and to ensure that there is easy price and availability also as the new Kharif harvest starts coming into the market. Well, that will start happening from the third week of September. I'll take it one by one, and I'll start with basmati rice. Well, remember last year, $1,200 a ton of MEP was put in case of basmati. That is when the government realized perhaps a lot of illegal other rice was also going as basmati. That was cut to $950 per ton, and that has been completely done away with right now. The industry has been waiting on the non-basmati rice. If there are any changes onto that one, that is still awaited. But at this point in time, good news for the basmati exporter companies there. The one thing that continues to say is that APEDA will continue to monitor the export contracts of non-realistic prices therein. If you look at the overall exports as well in sense of basmati, we have seen an year-on-year increase onto that. 5.9 billion in the previous year as compared to 4.8 billion is the reason the government had to take that action. And the next one is the pulses prices, where you have seen most of the pulses trade above MSP. Here as well, the yellow pea import that we usually do from Canada and Australia has been continued without duty. This was first started in December 2023. It was until March, and then another quarter and another quarter. And the latest extension really comes in until December 2024. When it comes to pulses, well, India has seen higher prices. The last season wasn't so great. And when you look at the production consumption numbers, that will show you a deficit and the reason that we continue to see higher prices. So 27 million tons of consumption is what we have, vis-a-vis 24.5 million tons of production that India sees. Edible oil clearly is a big sector, and this has been a long-standing demand from the industry to the government as well. In the last few days, we've seen government actually say that they will continue to buy soybean on the MSP in states like Maharashtra, MP and Karnataka. And this is the latest step now coming in from the government, where the edible oil duty has been hiked by 20% for the crude and refined oil as well. Now, with this change coming in, when you look at the crude oils, the duty hike, of course, has led to the hike in prices. But when you look at the final numbers there, the crude oils will attract a duty of around 27.5%. This was 5.5% earlier. And the refined edible oils will attract a duty of 35.75%. This was 13.75% earlier. Another notification came in from onion, where the minimum export price of onion has now been done away with, and the export duty cut from 40 to 20%. Wheat was another one. Remember earlier, the wheat stocks that were with retail, wholesale traders was at a very stringent low. That also has been eased off now, and this is ahead of the festival. So many of these retail companies, FMCG companies, wholesale processing companies can hold on to wheat. This is ahead of the festival season and ensuring that there is enough inventory and stock as well.
All right, Manisha, thank you very much for that. So that's commodities in focus. We slip into a break. We are back with Get You More on Markets. Specific stock action in just a bit on the other side. Stay with us.
To repay loans, and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
So does the look
cost positioning then change as well as you move towards international travel, as you move towards adding things like business class and loyalty programs? Does that cost position at the back end start to change as well?
Well, it depends a bit, Shireen. What is your definition of low-cost position? We are determined to keep our cost leadership. And, you know, 2 days from now, flying to a city is still 3,000 rupees. So for that, we need to keep that cost leadership out there. And we're not making any changes on that.
Investing.
Okay, welcome back. 50 points on the Nifty is what we have. I just want to highlight a few names here. BSE is now moved to the top of the volume leaderboard. It's up 7%. So 3,117 on the BSE. And that's a big mover. The Adani Group stocks, Adani Power and Adani Green, both are up 6.5% each. 674 on Power and 1,900 plus on Adani Green. Edelweiss is still up. It's not up 8-9, it's up 6 now, but still huge volumes, 133 on Edelweiss. There's been a large block which has happened earlier this morning. Global Spirits is up 6%. That's another sort of big mover. No doubt the volume-led movers. Thermax is up 5.5%. We had the Thermax management with us on Friday morning, and that's at about 49.86 right now. GM Breweries is another one. So some of these alcohol companies, 8% on GM Breweries, stocks at about 965 as well. So, that's basically a little bit on what's happening in the broader space. Market breadth is positive, 1,400 up, but you got 1,150 stocks down as well. So it's not all completely one way. It's more two-way kind of price action. So 50 points higher on the Nifty, 25,400 plus. It's a wrap on this edition of Bazaar. We're going to take your leave from Surabhi, me, everyone on the team is goodbye. Chartbusters will come up next. Stay tuned.
But on top of that, we start to build what we are doing. So if you see our business class, which we are going to introduce, we do that in what we call the nation's busiest and business routes. 20 a day between Delhi and Mumbai, 14 a day between Delhi and Bangalore, 13 a day between Delhi and Hyderabad.
You said that these decisions are taken when you believe that the revenue advantage outweighs the incremental cost that you will have to take. Can you give me a ballpark estimate of what, for instance, the business class introduction is going to mean as far as revenue impact is concerned when you see a full rollout across the 12 routes that you spoke of? What is the international expansion going to result in terms of a revenue bump up as well going forward?
So the business class will be introduced in November of this year. It will start on Delhi-Mumbai. Of course, we get one plane. It will start as we fly 20 a day. One plane is not enough. So by the end of this calendar year, the entire Delhi-Mumbai operation will be fully business class equipped. So all our 20 flights a day, maybe one or two, but all the 20 flights is our ambition. The objective clearly is we start in November of 24, and by the end of 25, all these 12 routes, all these 40 plus planes which will operate this route are in operation.
I got asked right after the debate, do you think we should do another one? And I said, hell, every day we should do another one. Of course. Well, it's not going to happen because Donald Trump confirmed today he's not doing another one. So give him a little break. That one left a mark. He said a lot of weird stuff too. So I'm just going to say that. And that was you tell me you had this on your bingo card. And they're eating cats. He refused to condemn the January 6 criminals who attacked the U.S. capitals and our democracy. But
The Street opens at a record high following positive global cues as investors await key rate decisions from the Fed this week. The Nifty trades around 25,400. Banking and mid-cap stocks relatively outperformed the mid-cap index, sitting with a gain of 0.33%.
The new kid on the block, Bajaj Housing Finance, sees a stellar debut on the exchanges. Lists at a premium of 110% at around 150 rupees per share in comparison to its issue price of around 70 rupees a share.
Other stocks that make their debut on D Street today, we have trailer axles and suspensions manufacturer Cross listing at 240 rupees, while Tollins Tires lists at 228 rupees versus the issue price of 296 rupees. In fact, shortly we'll have the management of Cross joining in to discuss their post-listing strategies.
Jewelry stocks Senco Gold and TBC continue to rally as gold hits another record high on hopes of a rate cut from the US Central Bank in the next week.
And another stock which is buzzing around today is Aditya Birla Fashion, climbs nearly 1% after the stock comes out of F&O ban.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. With me as always is Mangala Malu, and as you can see to the top of the screen, all the frontline indices are trading well in the green. And the key one to note today is Bajaj Housing Finance. Beautiful listing. It doubles your money if you're one of the lucky ones that got allotted. Hey, Mangalam.
One of the lucky ones being the core word out here, because not a lot of people who applied did get allotment into that, and the ones who didn't may look at this 100% listing and feel a little jittery about entering afresh. But be that as it may, we do have a few ideas for profit coming for you, some from our colleagues from Money Control Pro. And today we have Jitendra Gupta, who joins in with a stock that he's been tracking. Jitendra, what do you have on your list today?
Let us focus on Indian Energy Exchange. Last year, IEX stock had hit a low for rupees 115 a share. Investors were concerned about lower volumes and potential competition, which made the outlook seems little shaky. But here is what happened. The company did not panic. They focused on diversifying and growing businesses, and that is started to pay off. IEX has since demonstrated resilience, achieving a 19% growth in revenue during the first quarter of 2024, driven by almost an 11% increase in India's power demand. In August 24, the company recorded close to 36% year-on-year growth in total volumes. Volumes of renewable energy certificates surged by an impressive 737% on a year-on-year basis. This tells us that IEX is benefiting from the long-term trend in the renewable energy. IEX has indicated its ability to maintain 17 to 18% volume growth in the future. That is driven by renewable energy and favorable regulations. They are also rolling out new products like green real-time market. They are expanding into gas, carbon exchange, coal exchange. So there is a lot of potential value there. Meanwhile, stock is trading at around rupees 220, which reflect improved market confidence. Even at current market price at 34 times its FY27 estimated earnings, it offers reasonable value.
All right, while we're talking about Bajaj Housing Finance, remember there are other couple of listings today as well. Tollins Tires was one of them. The other one was Cross, a manufacturer of and supplier of trailer axles and suspensions, had a decentish debut on the exchanges. So Cross listed with a mild premium, and now that is expanded to about 10% as well. 3.5–4% seen for Tollins as well, currently now trading at a 5% premium to its issue price. So let's talk about Cross itself. We have the management of the company joining in. We have Kunal Rai, the executive director, and the CFO of the company joining in. Thanks a lot, Kunal, for joining in. The last time we spoke, you did speak about, the 70 crore capex that would yield the next 250 crores of revenues for you, and the debt repayment, which would aid your net profit margins by about 1.5% on account of reduction in finance costs. Let's talk about growth from here on as well. With the capex and with your organic growth plans, at what rate can your top line compound from current levels over the next 3 to 4 years? And what are the expected margins?
Hi, good morning. Thanks for having us. So, the last 3 years, we've grown at a CAGR of approximately 44%. Our top line has grown from 300 odd crores to 620 crores in FY24. And going forward, we plan to be doing a capex of approximately 70 crores. The allocation of this would be, the first one would be on our axle beam extrusion plant. The last 3 years, we've done very well in our trailer axle and suspension segment, from just 12% contribution to our revenue. That's grown to 44%, and we're one of the largest players and the fastest growing players in this segment. So we're going in for a new technology of the axle beam, which is currently being done in a fabricated design. We're going for an extrusion, which is a single piece construction, and we feel that is going to be a game changer in this industry. And the growth should be similar going ahead. Our component business with our OEMs has also grown, even after the MNHCV segment not expanding very much. And the new focus of the company would be on the export horizons. We've been a domestic player up to now. We've got two great customers whom we are working with, and we see a lot of developments there.
All right. Hi, Kunal. Good morning and congratulations first on a solid listing. This is Nigel on this side. Welcome to the stock markets. We'll be looking forward to interacting with you more often. And it's a bumper listing. The stock up 10%. Let's get a little bit more into detail then. Last year you were in that vicinity of around 620 crores. Now you have capex, which is value addition as you are explaining to us. And it could also give you a fairly good asset turnover. So by FY26, do you see yourself in the vicinity of around 950 to 1,000 crores? Is that possible? And also you briefly mentioned, since we're focusing on the top line, that exports as well, there's an opportunity out there. How much could exports contribute as a percentage of your mix, say in the next 2 to around 3 years?
So on the export front, the journey has just started. It was just 1% to our revenue in FY24. But we were working with a company based out of Sweden. They make propeller shafts for the European OEMs, that's LEX. And we've got close to 5 to 6 product families that we've developed for them. And that mass production has already commenced. The other company which we are working with is in Japan, and they're as well a MNHCV manufacturer. So with these two companies, we are looking at good growth from them in the next 2 years. We expect double-digit contribution from our exports to our revenue. These are confirmed orders backed by purchase orders and development costs.
Double digit by when?
And in the next couple of years or so. And also from our issue size, we are looking at investing in machining equipment so that we can ramp up to the volumes which have been laid out by them.
All right, and
as well on our
Kunal, 1,000 crores by FY26, doable? 950 to 1,000 crores. Let's give you a little bit of a leeway.
We'll work our best towards growing the similar way we have grown. That's important. As we said, the MNHCV space isn't doing well, but we're in the trailer axle segment, and the prime mover, or you could say the tractor trailer segment within the MNHCV space, is growing close to 20-25% every year. So that's going to be a great portion from where our growth would be generating.
If you're growing at the rate that you are growing at in the past as well, I mean, that 1,000 crore number could come in 2 years instead of 3, as we were talking about it, and 25% plus as well. You double your revenue in about 3 years. What the street wants to know is on your margins as well. On your EBITDA front, you've improved your margins from sub 10%, say 9.9% in FY22 to about 13% in FY24, with increased exports coming in, increased proportion of value-added products coming in. Where do we see margins headed? Should we see them around 15-16%? If yes, by when?
So, we're a company which has always believed in backward integration. We do everything ourselves, right from the machining to the forging. And for our axle business, we even set up our foundry for our own captive requirement to manufacture brake drums and hubs. And that's how our margins have increased from 10% to 13% EBITDA in FY24. PAT has also gone up from 4.5 to 7.2%. In a span of 3 years, and with the axle beam extrusion coming in, that's a single piece beam. It's lighter, it's more cost effective, and also a shift to the exports. Our margins are going to get better as well.
How much better, Kunal? You're doing some backward integration. You have your change in your revenue mix as well. Do you see yourself get to the mid-teens, maybe 15% odd?
Yeah, we'll obviously target. We'll always target that kind of EBITDA margins in the couple of years with our beam extrusion and the exports ramping up.
All right. You said that your current capex, the last time you joined us, of about 70 crores could yield revenue of 250 crores. That is still, taking care of growth for just the next couple of years, given by the growth rate that you're targeting. Are you looking at capex beyond this 70 crores, say, over the next couple of years as well? If you could give us a sense of, at peak, what your revenue could be, largely because the rate at which you're growing, do you have enough capacity?
So on the utilization front, we are working currently at 70%. Utilization. From capacity point of view, the heavy investments which mainly go into the forging and the foundry equipments have to be planned well in advance. And from the 70 crores that we're doing, we're investing in more forging presses and a new line in our foundry as well, which would be suffice for our next 3 to 4 year growth plan. And as far as machining equipment is concerned, that can be planned in a shorter term as well. A CNC machine or something can be available in 60 or 90 days time. So that's how we look at managing our capacities. And yes, we've laid out a 70 crore plan, which would be suffice for our targets that we have for the next 2 to 3 years.
So at current reckoning, you can do about 1100 to 1200 crores of revenue, including the 70 crore that you're doing?
Let's see, we really focus on our efficiencies. We've got a great gross fixed assets turnover times that's around 3.6x. We believe to do more with what we have. So we again, on the growth way, we look at growing in the similar fashion that we have in the past.
All right, Kunal, wishing you well, all the best. We're going to hold you to these numbers. Enjoy the day. Welcome to the stock market. It's been a good listing for you as well as your team. Well, on that note, though, we'll slip into a short break. When you come back, we'll continue our focus on the markets. We'll get a technical check. Shivangi is waiting for us on the other side.
Anger that he got into as the poise and dignity and the sharp retorts from Vice President Harris, he lost some of that composure in there. And when he was referring to those rioters, and go back and make sure you'll see this again, I'm sure, he said, we did nothing wrong. He didn't say they, he said we.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com.
The market may have had a very topsy-turvy ride through this year en route to record high levels, but for the IPO market it has been smooth as a highway. Now that's because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57, but the differentiating factor as of today is the fact that the IPOs of 2024 have raised more money than all of 2023 put together. Now according to this data from Prime Database, the IPOs of 2024 have so far raised almost 62,650 crore. That is well above the 49,400 crore that companies raised in the primary markets last year. Now this list includes IPOs that were opened for subscription but have not listed yet as well. Now September traditionally has been a good month.
Welcome back. Just keep an eye out on a couple of these stocks from the broader markets. They're spiking and how right now. Dixon Tech is one of them, up around 4% has moved to the high point of trade. The other couple of stocks which are doing well, we have United Breweries, which too has spiked, currently moving towards the high end of today's trading range, along with India Cements and Marico. Remember, on Marico and all the other edible oil companies, we made this point earlier that the downtick would only be sentiment negative, because as we speak, they have been reductions in palm oil prices from the exporting countries itself, rendering the 20% jump in duty itself slightly less feeble as compared to what was expected earlier. So we'll just keep an eye out on this and this space on the whole. But good time to get in a quick technical check. Shivangi Sada of Motilal Oswal joins in now. Shivangi, we've hit yet another record high today. The Nifty is holding with gains of about 50 odd points. The Nifty Bank doing a tad better. What is your call on the index?
Good morning, Nigel and Mangalam. Thank you for having me. So we've seen a full comeback of the bulls last week towards the end, and the put call ratio has improved above 1.4 levels, which clearly indicates that put writers have made a very strong base here. Now, India VIX has also cooled off, which clearly indicates that bulls are comfortable at these levels. Even at these levels, we are witnessing that follow-up action is visible over here. Stocks are doing good, sectors are performing. Overall, buy on decline to continue here in both the indices. So definitely we are expecting 25,550 immediately, and then 25,750 marks on the index, while supports can be seen shifting higher to 25,350 marks. So this will be crucial to watch out for. Now, of course, we've seen a good rally in Nifty, and we've seen this sustained move from the last few odd months. We've seen this continuous rally in the last 3-4 months. But the surprising bit is the bank Nifty, which has started moving after a series of underperformance and now holding well above 52,000 levels. So definitely this one will be interesting to watch out. Now the heavyweights have started performing because of the strong FIIs buying which is coming in. So some of the heavyweight banking stocks to be looked out for. Now levels per se, we are expecting 52,750 marks for bank Nifty with a support of 51,850 levels.
Got it. All right. Hi, Shivangi. Good morning. Always good to see you in. Tell us about individual stocks.
So Nigel, individual stocks on my radar firstly is Bharti Airtel. This stock has consistently performed, and we've seen that it is moving in a rising trend line from the last 18 months. We have seen good follow-up action with any declines being bought up. Overall, if we see the derivatives data structure also, there is good amount of longs which is being added at these levels, and this stock is getting ready for the next trigger, next rally to trade in a fresh territory. So recommending a buy here for a target of 1720 levels and a stop of 1620 zones. And the second pick is from the IT space, which is buzzing in momentum from the last few weeks, and good amount of recovery can be seen. Now, IT pack this time, what is interesting is that the heavyweights and the mid cap both are moving, which is kind of giving a tailwind to the entire sector. Now, this stock is surpassing its previous hurdle zones, previous you could say conjuncture levels, and the RSI is also showing positive signs of divergence here. Stock has exactly touched its 50 daily exponential moving average and moved higher with a good support here. So definitely, there is a good amount of base that has been formed here. Now, derivative-wise, also we are seeing that good, data can be added up over here. Volumes are adding up consistently from the last 1 week. So definitely, stock is getting ready for a good up move. 14 1,100 levels is the target that we're seeing for this stock, and 13,290 would be the stop loss to watch out.
All right, can you repeat the stock once again?
Dixon is what I'm talking about.
All right, Dixon is what you're talking about. Would you have a view on United Breweries? We're seeing some traction out there as well. Let's move to the high point.
Definitely, this entire space is, moving for that matter. Even if you look at Radico, both these stocks, in fact, this entire space is moving a lot in momentum. And seasonality-wise, Manglam, we have seen that these stocks tend to do good in these quarters to come, of course, with this festivity also kicking in. So definitely, these two stocks would be on radar. Conviction is slightly more on the Radico front, and 2,200 is what I'm looking at next year.
Got it. Okay, all right, Shivangi, thanks a lot for joining in and giving us your take on the markets. By the way, just keep an eye out on some of these housing finance companies. They have been rallying in anticipation of the valuation catch-up with Bajaj Housing. For the time being, they're selling off, though. You have LIC Housing Finance that's moved to the low point of the day. PNB as well was sitting with strong gains. That as well has slipped a little bit. And Canfin Homes as well. All those three names, they have valuation comfort. But for the time being, the street seems that it wants to stick to Bajaj Housing. Though, in fact, it'll be interesting to see in the next few days because there is good amount of valuation headroom. So let's see whether or not that can get bridged a little bit. Time to slip into a short break. Come back, continue to focus on markets and on stock-specific action.
7 issues so far have already raked in over 9,000 crore rupees. But August has been the best month of the year so far in terms of funds raised, as over 17,000 crore rupees have been raised by 10 IPOs that month. Now, how have these IPOs fared? Now, 5 of these issues have returned 100% and more from their IPO price. Now, 30 of them have gained anywhere between 25% to 99%, and only 7 such IPOs are currently trading below their IPO price. It shows you the kind of market that we have been in. Now, unlike 2021 and 2022, there have been no giant-sized IPOs this year. While 2021 had Paytm, which looked to raise over 18,000 crore, LIC surpassed that in 22 with a 21,000 crore issue. Now, Bajaj Housing Finance, which has now become the talk of the town for the bids it received, is the largest IPO of the year with around 6,500 crores, followed by names like Ola Electric, Bharti Hexacom, and of course Brainbees. Now, 45 IPOs this year have delivered positive returns to shareholders. Now, among them, Jyoti CNC is the top performer, with the stock more than tripling from its IPO price. The recent listings like Unicommerce and Premier Energies also find a mention, considering the strong moves they have seen just a few days after they listed. Now, among the few IPOs that have delivered negative returns so far include Capital Small Finance Bank, Popular Vehicles, among other such names. However, none of these names have any substantial downside from their IPO price, such as a 50% or more from their IPO price. It's been a big year already for IPOs, and we still have 3.5 months left. Now, at this pace, it will not be a surprise if by the end of the year, we end up doing a story saying IPOs have raised 1 lakh crore so far this year.
I want to draw you into what's happening on the technology side and link this to what we just saw with the CrowdStrike outage, and that basically brought the aviation industry globally to its knees on that particular day. And 48 hours were mayhem, I would imagine, for you and your team. What's been the big learning from that experience, and how much is tech being prioritized now as you position yourself as a global airline?
No, what happened here is indeed a global outage in one of the systems. Yeah, it's my first word I learned in Hindi. We have this beautiful jugaad in order to deal with some of these challenges.
What does jugaad mean to you, by the way?
No, in this case it meant that people moving from a check-in through machines to a manual check-in. I will make sure that out of the 3 lakh customers which were supposed to fly in the day, 240,000 people have been flying. And I was writing not precisely, but I was writing 240,000 manual.
Welcome back. Well, let's get you some corporate commentary then. Honasa Consumers co-founder Varun Alagh is optimistic on festive season and is targeting 20% value growth in the next quarter that will be led by festive and wedding season. Let's hear him out.
Honestly, because these are not one-off events, right? Yeah. Festive was there last year as well as it's here, right? So from a growth YOY perspective, it is there in the base as well. And hence our overall goal of ensuring we're able to deliver, a high double-digit, close to 20% value growth in the next quarter is going to continue to be there. And that's what we're going to try and make sure that we deliver. In half two, and some of our core categories which are non-seasonal like shampoo and face washes continue to perform as is. And the category that does see seasonality is moisturization, which is body creams, face creams and body lotions. And, so those are the categories which actually spike as we get into second half. Outside of the one quarter, we will do the inventory transition where we might have primary impacts, which is most likely this quarter. And all the other 3 quarters, we are confident that we will be in those range from both top line and bottom line improvement perspective.
All right, interesting commentary coming in out there from the management of Honasa, Mamaearth. That is, with that, we wrap up on this edition of Chartbusters. Thank you for joining in. Stay tuned to CNBC-TV18 as Trading Hour comes up next.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
So Nazara is focusing on its for FY25 its growth primarily through gaming. So what are the plans for the next few months or next quarter?
As you know, core gaming has been an important focus for us. Recently we acquired 100% stake in Kidopia. We also acquired a studio in the UK called Fusebox. So I think we are very rapidly expanding our core gaming business, which should also be a high margin business for us, generate strong cash flows that we can keep redeploying in the years to come.
So talking about Fusebox, so Nazara recently acquired Fusebox and Paperboat apps. So what was the idea behind acquiring these two companies?
I think wherever there is core gaming IP, which we can kind of acquire and own, then we can evolve this IP over a long period of time. So Fusebox is building IP-based games. Kidopia is already a very well-established IP in the world of kids. I think our objective is to acquire assets which have gaming IPs and then keep building and monetizing them.
So the news came out that Nodwin has recently also acquired Comic-Con. So with that, what can the comic fans in India expect from the next edition of the Comic-Con now that Nodwin has acquired a complete...
Look, the attention of the youth is a very valuable commodity, and Nodwin's focus on esports and anything else that the youth is interested in becomes very relevant, which is why they acquired Comic-Con. I think today Nodwin is focusing a lot on expanding Comic-Con to many more cities and doing it on a much larger scale, and they will make announcements around that very soon.
It's a kind of a record year, so to speak, in terms of the stake sale that the promoters and PEs have done this year so far. Okay, this is the big number that we are talking about. 4.75 lakh crore is the total amount of stake sale which has been done, promoters, PEs as well as non-promoters. When I say non-promoters, someone like BAT gets included, where they sold 4% stake in ITC this year. So this has been the trend. In the last 3 years, it's been around 3.2 lakh crores. This year, Y2D, it's still 3 months are left, and we've already crossed 4.7 lakh crores. So maybe by end of the year, we'll be crossing 5 lakh crores in terms of the total stake sale which has been done by promoters, PEs, as well as institutional investors. So that's the kind of trend we've seen. Now, the big deals which have happened this year, of course, Interglobe Aviation tops the list. There were 2 large blocks by the Ganwal family. They've raised close to 17,000, almost 18,000 crores. Indus Tower was another large block. Vodafone sold a big stake and raised 9,000 crores in a single day. Emphasis, big.
Good morning. Welcome to Trading Hour. It's a brand new week of Trading Hour. I am Reema Tendulkar and with me is Sonal Bhutra. And the Nifty is just about hovering around the 25,400 mark. But this morning we did scale new peaks. So the new peak on the Nifty is 25,445. We're holding up in the green, but the gains are modest now on all the benchmark indices. So up close to about 0.1, 0.2%. But in the last 1 hour, we have come off from that peak of 25,445. We've lost about 55, 66 points. Remember, most of Asia is shut today, whether it's China, Japan, or even South Korea. But the markets which are trading, Hang Seng and even Straits Time, they have a minor red tick going for themselves, though the handover from US was positive on Friday. So we're holding up in the green, and that's what we're going to take.
And it was a stellar week for the US markets last week, right? The S&P, NASDAQ, the best week that they've seen in a long time. But yes, it was expected to be a strong day for us today. As you said, we have seen some new levels. We've come off from those highs. And if we talk about the mid caps, they are the ones which are outperforming today. Of course, banking index also is doing that. But the small cap index, that is the one which is not doing as well. It is in the red right now. So that is at the day's low, in fact. So while we are seeing a lot of buying come by in the mid caps, that is not the case in small cap index right now. In terms of sectoral movers, we have the Nifty realty space, which is doing well, Nifty infra doing well. But again, we've come up from the highs. We'll have to see whether we sustain these levels, we build onto those or not. But banking, that has made a comeback today. And other than that, it's actually getting off the highs that we've seen earlier.
Okay, we've got a Power Pack show in the next 1 hour. So let's tell you what all we'll be discussing. Bajaj Housing Finance has got a blockbuster debut, dream debut on the Lal Street. We'll get you the key highlights from the management commentary and how it compares with the other peers. But not just Bajaj Housing Finance. Today, we've had listings from Cross and Tollin Tires too.
And the management of Route Mobile will also join us to discuss the OFS and the business outlook going forward.
Santosh Singh from Motilal Oswal Asset Management will also join in to talk about the markets.
All this and much more in the next 60 minutes, which are the details are coming up for you. But of course, the big listing today, and we have to talk about it, it's Bajaj Housing Finance. Makes a stellar debut on the exchanges, has listed at a whopping 114% premium to its issue price. Vamakshi is joining us with how this housing finance major stacks up against the peers. Vamakshi.
Well, absolutely. Like you rightly pointed out, it's a stellar debut for Bajaj Housing Finance, and rightly so, given the company boasts of a very strong franchise, has a very strong brand recognition, and is AAA rated. When we look at the fundamentals of the company as compared to some of its peers, nothing to complain here, and that is because the company boasts of the best-in-class asset quality with the gross NPA at 0.28% and the net NPA at 0.11%. The coverage ratio too is one of the best amongst peers, the lowest credit cost in the sector. And even despite this, the company scores over some of its peers like LIC Housing Finance, PNB Housing Finance and Canfin Homes over return ratios like net interest margin as well as return on asset. The company boasts of a NIM of 3.9% and return on asset at around 2.3%. But that said, a concern is around the NIMs. They have been declining in the last few quarters due to rising cost of funds, and this is despite the increase in the higher yielding portfolios share. The company also has a very strong regional concentration. In fact, top 3 states contribute to nearly 70% of its AUM. That said, let's also look at how the company's valuations stack up against some of its peers. At the current price, there is no doubt that the company trades as a significant premium as compared to some of its peers, which trade anywhere between 1.7 to 4.2 times. The stock listed at a premium of nearly 115% at 150 rupees per share. With that, the price to book stood at 6.84 times, and if we consider that the stock could possibly hit an upper circuit of around 165 per share, at the upper circuit the price to book will then stand at almost 7.5 times, which is again at a significant premium to some of its peers. So that said, overall it's a very fundamentally strong company, but the valuations are something that we will have to watch out for.
Okay, and I think the question now, because very few people would have got allotment in Bajaj Housing Finance given the subscription, so what should you do? Everything is great. It's a pedigree brand. But can you go out and buy at these current levels? But this morning, the peers are seeing some profit booking. So LIC Housing Finance is down 5%, 5.5%. PNB Housing Finance, Canfin Homes. So across the board, these stocks, after a little bit of a re-rating in the prior 2 weeks, there is some profit booking visible here. And even Bajaj Finance and Finserv, the other two from the Bajaj Group, are under pressure. But thank you, Vamakshi, for that. Let's also listen into what Sanjeev Bajaj, CMD of Bajaj Finserv, and Atul Jain, the MD of Bajaj Housing Finance, had to say. When we spoke to them on the listing, we quizzed them on whether this 30% growth that they've seen for the last couple of years, is it sustainable? What is the outlook on margins? Listen in.
Relevant ones. We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry. And on the back of that, we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort.
We are a variable rate company. On a asset side, our assets are variable, which are largely linked to a floating rate, which is linked to our cost of funds, and the liabilities are also largely variable. So on a steady state basis, through the cycles, mortgage companies generally have a steady state margin. So we do not expect any impact on margins from the listing, whether positive or negative, because that was from a cost of fund perspective, because we had already been a highest rated domestic rated company, and our cost of funds are relatively quite competitive compared to the market. And with a variable rate asset size, the NIMs are likely to remain stable, like in case of all variable asset companies.
And while Bajaj Finance had a stellar opening, Cross and Tollens Tyres had a flat listing. Let's talk about these two new kids on the block as well. Vinny is joining us with more details on the valuations, what do these companies do, and a lot more. Vinny.
Yes, both these companies are mainly auto ancillary side. So let me start with Cross. Now, when you look at it, Cross actually listed at a bit of a discount, then managed to pick up a bit of a pace. So yes, overall as of now, it's up almost 8 to 9%, 12% as of now is what we can see on the screens as well. So yes, market cap is around somewhere 1,500 crores is what we could say for Cross. So yes, the PE is at around 16 times, which is still at a discount versus its peers, whether you compare it in terms of an RK Forging or even a Jamna Auto, it's still at a discount versus that. So it's going to be interesting to see how they move up, because the management, when they spoke to us also, they highlighted that the 44% CAGR growth which they managed to see in the last couple of years, that may continue going forward. They're expecting EBITDA margins in the next couple of years at around 15%. So positive commentary surely coming in from the management the last time we today when we spoke to them as well. So yes, interesting to watch out for Cross Limited. Other than that, Tollens Tyres, that's mainly into the business of they have two segments, tire as well as street tire, and exports also is something that they're focusing on. 40 nations is what they export to currently. Listing has been a bit of a muted set that one has seen coming in for Tollens as well. Not much of an excitement there, but yes, versus peers in terms of the performance, they still have a long way to go. The market share in street tires is around 2.6%, and in tires is only minimal 0.06%. This is according to the RHP that we're seeing. And most of the revenue comes in from street tires, so that is something we'll watch out for in terms of how they actually manage to see more gains going forward here. Versus its peers, revenue is also still quite less. Tollens has a revenue of only 227 crores as of FY24, while TVS Sri Chakra had 2,000 crores, 2,900 crores approximately. LG also had around 386 crores. So will be interesting to see how this plays out, though it's a smaller company in terms of market cap versus its peers as well.
Thank you very much for that. The subscription was pretty solid. I think it was close to about 23, 24 times thereabout. But the debut has been a bit subdued, but in the green now, still up close to about 5%. Sonal, there is this real estate company, Arcade. It's a, I think, Mumbai-based real estate company.
Yes, and the IPO is opening today. So there's no dearth of IPOs now in the market. And real estate, we are getting an IPO after a long time. It's been really long that we did that. So the IPO opens today and it shuts, of course, on 19 September. It is, the price band is around 121 to 128 rupees a share. It's a decent size IPO. The issue size is 410 crore rupees. There is no offer for sale by the promoters. And post-listing, the market capitalization is expected between 2,300 to 2,400 crore rupees. The current promoter holding is around 80.1%. 66.17%. So post-listing, the promoter holding will come down to 66.3%. So it's largely the promoters who will be seeing some decline in their holding as well. The usage of proceeds, they'll be developing ongoing and upcoming projects, there'll be general corporate purposes and funding acquisition for future real estate projects as well. Now about the company, as you pointed out, it is a Mumbai-based real estate player and they're both into development of fresh projects and redevelopment as well. So redevelopment continues to be the big theme for Mumbai-based real estate players as well. I think they get it in equal amounts, both from fresh projects and redevelopment projects. Now, the ticket size per unit for them on an average, they have just given a data here. It increased to around 2 crore rupees versus 1.7 crore rupees that we saw in FY22. That's the average that they've seen. And they mostly cater to suburbs, that is the Eastern MMR and the Western MMR region, where Western MMR is around 89% of their sales. Eastern is very less, it's around 11%. But do remember, a lot of redevelopment opportunities coming in the Eastern side as well. In terms of their financials, they have done volumes of around 0.19 million square feet, which is much lower than the peers that Mumbai real estate sees. Collections at 258 crore rupees. The total units sold has been 258. That has been a sizable jump from FY22 levels. The balance sheet now, the operating cash flows have been lower, though the cash flow from all the activities has been in the positive, but operating cash flows have been negative in FY23. They have reduced in terms of losses from FY22, but this is something that you should keep an eye out on, that the operating cash flows have been in the negative. In terms of NAV, if we compare it with other real estate companies, because that's the best way to compare a real estate company, not via PE, because the PNL is very lumpy. The company has the lower NAV on the lower side, 21 rupees, that is the net asset value per share. Its Keystone is 157. Godrej Properties has it very high. Of course, it's a stock which trades at rich valuations, where Macrotech at 180 and Suraj Estate at 148. Risks now. Now remember, the construction costs are around 78% of their total revenues, and they have no long-term agreements with any of their labor and key materials. So any fluctuation there, any delay there is something that could increase their cost. They've already seen that increase in FY23 versus around 40% earlier. There's reliance on third-party contractors for construction of projects, which they do not control directly. So there could be some delay as well. So yes, it's a decent sized project, but we'll have to see the execution because the size is very small here. But since they're catering both to redevelopment and development, there could be a potential of a bigger land bank and a bigger pipeline as well for the company.
Okay, its market capitalization will be 2,400 crore rupees. So much smaller than, say, even a Keystone Realtors, whose market cap now stands at closer to 8,900 crore rupees. So a Mumbai-based real estate company up for grabs in terms of opening up IPO. We'll slip into a break on that note. We'll come back and discuss commodities. Manisha Gupta joins in on the other side.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for Phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars, or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, we have a lot of action which is happening in the commodity space. Let's shift focus to that. Manisha is joining us today. And today we are focusing on gold again. Manisha, what's happening here?
Well, another day and another all-time high is what we are working with in case of gold prices. So, interestingly, all time zones seem to be buying. Asia today started with buying, and we've seen that happen in the various previous days and weeks as well. So, 25.88. Well, as we're talking, that's an all-time high on your screens right there. So, not too far away from that $2,600 an ounce mark. The support in case of gold seems to be coming in from global central bank buying. And this is going to be an important week because the US Fed meeting is something that the street is watching out for. And then apart from that, you have Bank of Japan, Bank of England, China. All of these monetary policy meetings also happening within this week itself. Well, we have seen the gold prices gain up by 3% in the previous week. Prices are up 24% in this year until now and a good 35% in the last 1 year. With the kind of gains that we've seen in this year for gold prices, it actually has outperformed various other asset classes, including Nifty and Sensex as well, by the way. Well, going forward, the expectation is that you could be looking at further higher highs in case of gold prices. That is what we've done in sense of is in this year. So from the lows of this year, we've gained up by $600, and from the starting price of this year, we are up by $500 an ounce in case of gold prices. But $2,700 an ounce is a possibility, is what Goldman Sachs reports suggest in 2025. UBS talks about 2,700 as well. Citi says that for the near term, 2,600 is what they're looking at as a target. And for the longer term in next year, $3,000 an ounce is on the charts as well. JP Morgan talks about on average 2,500. Bank of America, Macquarie talk about $3,000 an ounce as a possibility in the next year. And then there are various reports like Exum Australia, Wisdom Tree, Prime XZBT, RJO Futures, Zener Metals. They all talk about levels anywhere between $2,700 to $3,000 an ounce by the mid of 2025. So clearly very, very bullish moves continuing here.
Yes, that we can see just going up, up and away. Thank you so much, Manisha, for joining us with all those details. Let's slip into a break. When we come back, we'll discuss market technicals with Soni Patnaik of JM Financial Services and also the top trading bets.
Portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
Does the low-cost positioning then change as well as you move towards international travel, as you move towards adding things like business class and loyalty programs? Does that cost position at the back end start to change as well?
Well, it depends a bit, Shireen. What is your definition of low-cost position? We are determined to keep our cost leadership. And, 2 days from now, flying to a city is still 3,000 rupees. So for that, we need to keep that cost leadership out there. And we're not making any changes on that product, on that setting. But on top of that, we start to build what we are doing. So if you see our business class, which we are going to introduce, we do that in what we call the nation's busiest and business routes. 20 a day between Delhi and Mumbai, 14 a day between Delhi and Bangalore, 13 a day between Delhi and Hyderabad.
You said that these decisions are taken when you believe that the revenue advantage outweighs the incremental cost that you will have to take. Can you give me a ballpark estimate of what, for instance, the business class introduction is going to mean as far as revenue impact is concerned when you see a full rollout across the 12 routes that you spoke of? What is the international expansion going to result in terms of a revenue bump up as well going forward?
So the business class will be introduced in November of this year. It will start on Delhi, Mumbai. Of course, we get one plane. It will start as we fly 20 a day, one plane is not enough. So by the end of this calendar year, the entire Delhi-Mumbai operation will be fully business class equipped. So all our 20 flights a day, maybe one or two, but all the 20 flights is our ambition. The objective clearly is we start in November of 24, and by the end of 25, all these 12 routes, all these 40 plus planes which will operate this route are in operation.
Modest morning of gains so far. So let's find out a few technical trading ideas. Soni Patnaik from JM Financial is now with us. Soni, what would be your top stock trades?
Good morning, Rima. Thank you for having me on the show. I think Nifty is holding quite strongly above the 25,300 mark. From here, it can test 25,500 to 25,800 on a positional basis. So the top stock trading bets would also be on the long side. We can see very strong movement coming in the capital goods space today. Stocks like Dixon, Larsen and Toubro, ABB are seeing very strong move. The first pick comes in with Larsen and Toubro. Futures one can buy around 36.50, 36.60. One can buy in that level, keeping a stop loss of 36.20. First target of 3700 to 37.30 can be seen. So Larsen and Toubro is seeing very strong short covering move today, and the stock is looking quite positive to test and break above the hurdle of 3700, above which it can test 3730 plus levels. The second pick again from the capital space one can see is ABB, which is witnessing fresh long build-up position. So in ABB futures, one can buy around 78.20, keeping a stop loss of 77.70 and a target of 79.50. Above that, a second target of 8,000 can also be witnessed. The third pick for the day would be in IT space, Naukri Info Edge, which is looking quite strong with a fresh breakout on charts today. So one can buy Naukri in futures around 78.80, 78.60, keeping a stop loss of 7,800 and a positional long target of 8,000 can be seen.
Okay, Soni, thank you so much for joining us with those details. Let's move on now. Adani Power and Adani Green, these stocks are surging in trade today on the back of an MK note. Vivek is joining us with all those details. Vivek.
Well, that's right. So an important development that's actually come in over the weekend as far as both of these companies are concerned, Adani Power as well as Adani Green. So what's actually happened is that Maharashtra State Discom has actually gone ahead and issued a letter of intent to go ahead and procure energy from these Adani Group entities. So 6.6 gigawatt or 6,600 megawatt is the kind of power that both of these companies are expected to supply. Adani Green Energy will supply close to 5 gigawatt, and they will be evacuating power from the Khavda facility. And Adani Power will be supplying close to 1.4, close to 1.5 gigawatt of thermal power from the 1600 megawatt capacity, that is 2 into 800 megawatt that the company actually enjoys. This is a hybrid win as far as these companies are concerned, and these wins were actually received for the company via the open bidding process. Now, when you're talking about Adani Power, they will enter into a 25-year power supply agreement with the Maharashtra State Discom, for the supply of close to 1.5 gigawatt. And Adani Energy Solution, after this particular PPA, capacity jumps up to almost 26 gigawatt at 2.7 rupees per kilowatt hour is the kind of tariff that they will enjoy. MK has gone ahead and written on both of these companies post this particular order win. On Adani Green Energy, they reiterate buy. They have a target price of close to 25.50 a share. They're saying that the development is quite positive. Secured PPA capacity is now at 26 gigawatt, and a flat rate of 2.7 rupees per kilowatt hour is quite attractive. They're saying that along with that, Adani Power has quoted close to 4.08 rupees per kilowatt hour, and that also is viewed quite favorably. Expect staggered project development over 3 years, as well as connection to the interstate transmission system. Overall, a positive development, and both of the Adani Group stocks are doing quite well in the session today.
Thank you for explaining that. Get into a break. On the other side, we'll talk more about the market. Santosh Singh from Motilal Oswal Asset Management joins in next.
I got asked right after the debate, you know, do you think we should do another one? And I said, hell, every day we should do another one. Of course. Well, it's not going to happen because Donald Trump confirmed today he's not doing another one. So give him a little break. That one left a mark. He said a lot of weird stuff too. So I'm just going to say that. And that was you tell me you had this on your bingo card. And they're eating cats. And they're eating cats. He refused to condemn the January 6 criminals who attacked the U.S. Capitals and our democracy. But in the anger that he got into as the poise and dignity and the sharp retorts from Vice President Harris, he lost some of that composure in there. And when he was referring to those rioters, and go back and make sure you'll see this again, I'm sure, he said, we did nothing wrong. He didn't say they, he said we.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs.
Okay, 25 points higher on the Nifty. We stay where we were earlier as well. The outperformance from Bank Nifty continues. In the Nifty pack, we have a couple of these movers in last couple of minutes. So Eicher Motors, that should come up for you on the screen. Sun Pharma is the one which is at the day's high right now. Divi's Labs as well. So some of these pharma names, they are at the day's high right now as we speak. Tech Mahindra is the other one which also is doing well. So a couple of these names, just keep them on your radar. Let's move on and talk about market fundamentals now. Santosh Singh, fund manager at Motilal Oswal Asset Management, is joining us now to discuss that. Santosh, good morning. Thank you so much for joining in. Well, I have to ask you, because there's so much happening and we have the big Fed event which is going to happen this week as well. What is the expectation, and do you think that could be the next big trigger if there is a rate cut, and what if there is no rate cut this time as well?
See, so this rate cut expectation is going on for such a long period of time, right? And every time we are getting into this particular event, and we have been talking about rate cuts. So what we have seen is that actually it's have not been impacting the market that much. Specifically, the Indian market, it has not been impacting that much. But I would expect that if there is a rate cut and if there is a dovish stance going forward as well, we might see certain segments of the market doing well, which might be good for the headline sort of index. So I think IT might do particularly. IT could be one segment which might do particularly well.
Santosh, wanted to get your thoughts. You manage the focused fund. You're the lead CIO for that, and your top holding is Religare Enterprises with about a 10% weightage. Now we know that the company day after day makes headlines. It's embroiled in this battle between Rashmi Saluja and the Burman. So from a shareholder point of view, how are you reading all this in terms of news flow, and what are the fundamentals of this company?
So see, we bought it long back, right? Not after the open offer. We bought it long before the open offer. So one of the reasons we bought it is that actually I am quite positive on health insurance space. That's one. I'm quite positive on that space, given it's growing at around 20% and it's a total B2C business, right? And Religare owns almost majority stake in Care Health Insurance, and I think that would be the reason why there is so much of fight between the promoters, the incoming promoters and the outgoing management, or whatever could be the scenario. But there is so much fight because of that. But it's an extremely sort of interesting company where they hold this majority stake in the second largest health insurer in India, right? Which means and which is growing in excess of 30% for multiple years now. It's one of the fundamental, if you look at the overall fundamentals of that company, I think what we are looking at is that this is a sub 100% combined ratio company. So all in all, the company is doing very, very well. The news flow around what's happening on the open offer is all across, and I think they should settle down really fast, because I think it's all about how the regulators now take it forward. It should settle down very fast. But if that were to happen, I find it a really, really attractive sort of company to be.
Okay. The other name, interesting name in the list is Paytm, Santosh. I just want to understand what's the rationale here, because there have been a lot of on and off on Paytm as well. What are the future triggers that you are looking at the stock that makes you bullish here?
So see, firstly, the space I am quite bullish on, right? It's if you, I think you're going through the sort of all my holdings, and what you could see is that interestingly, there is no bank there, right? And the entire banking, no lending bank there. And the entire lending bank has been made up by the insurers or the payment providers. So if I look at the financial space, some of the spaces I'm very positive on is one, the health insurance we discussed. Second is the payment space. Because clearly the payment space is growing at, and digitization of payments is happening at a very fast pace. That's a really, really large space. If you look at the volumes which are happening in that space, it's really big. Growth is really good. And the other part of the equation is this is all happening when the UPI NDR is nothing, right? They are still not getting paid for it. And all of it is happening despite not getting paid for it. So one is the growth in that space, and second is the regulatory. At a lot of places, there are regulatory negatives. There could be a regulatory positive here on the MDR front, which actually I'm not. When I bought it today, I'm not sort of priced in my base case scenario. So that's clearly one of the thinking process which is there. Paytm is the market leader. If I'm talking about not per se the UPI space, but the space in which you're talking about it's a vendor payments, right? It's one of the leaders in that space, and it's an Indian company there are certain regulations. There is some thought process also on payments where the foreign sort of restrictions have been talked about. So it's in a very interesting space. Yes, again. There has been on and off with the regulators. Although we were lucky, we have not invested it at such high prices where we could have had trouble. So I find it really interesting space to be in.
Okay, we've got many more questions. Even wanted to get your thoughts in on L&T Technology Services, because the numbers, I look at the company closely, the numbers have disappointed for the last couple of quarters, and some of the peers have actually done better than it in ER&D. But I think that conversation's for another time. Thank you, Santosh, for joining in. Get into a break. On the other side, we'll invite Gautam Badalia from Root Mobile to talk about the way forward for the company. Remember, just last week, the promoters pared down their stake to 75% via an offer for sale.
From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
The market may have had a very topsy-turvy ride through this year en route to record high levels, but for the IPO market it has been smooth as a highway. Now that's because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57, but the differentiating factor as of today is the fact that the IPOs of 2024 have raised more money than all of 2023 put together. Now according to this data from Prime Database, the IPOs of 2024 have so far raised almost 62,650 crore. That is well above the 49,400 crore that companies raised in the primary markets last year. Now this list includes IPOs that were open for subscription but have not listed yet as well. Now September traditionally has been a good month for IPOs, and the 7 issues so far have already raked in over 9,000 crore rupees. But August has been the best month of the year so far in terms of funds raised, as over 17,000 crore rupees have been raised by 10 IPOs that month. Now, how have these IPOs fared? Now, 5 of these issues have returned 100% and more from their IPO price. Now, 30 of them have gained anywhere between 25% to 99%, and only 7 such IPOs are currently trading below their IPO price. It shows you the kind of market that we have been in. Now, unlike 2021 and 2022, there have been no giant-sized IPOs this year. While 2021 had Paytm, which looked to raise over 18,000 crore, LIC surpassed that in 22 with a 21,000 crore issue. Now, Bajaj Housing Finance, which has now become the talk of the town for the bids it received, is the largest IPO of the year with around 6,500 crores, followed by names like Ola Electric, Bharti Hexacom, and of course Brainbees. Now, 45 IPOs this year have delivered positive returns to shareholders. Now, among them, Jyoti CNC is the top performer, with the stock more than tripling from its IPO price. Now, recent listings like Unicommerce and Premier Energies also find a mention, considering the strong moves they have seen just a few days after they listed. Now, among the few IPOs that have delivered negative returns so far include Capital Small Finance Bank, Popular Vehicles, among other such names. However, none of these names have any substantial downside from their IPO price, such as a 50% or more from their IPO price. It's been a big year already for IPOs, and we still have 3.5 months left. Now, at this pace, it will not be a surprise.
Welcome back. Here is a CNBC-TV18 exclusive. Now, the executive chairperson of Religare Enterprises is embroiled in a takeover battle of the company with the Berman brothers. And she sat down with CNBC-TV18's Ashmit Kumar for an extensive interview. We are talking about Rashmi Saluja from Religare Enterprises. Remember, the Enforcement Directorate has filed a case against Rashmi Saluja alleging illegal gains from ESOPs. Ms. Saluja, of course, has denied the charges and questioned why the issue is being flagged after the open offer made by the Bermans to take over Religare. She also defended the decision to delay the open offer, citing concerns on fit and proper status of the Bermans. Ms. Saluja also asserted that she will not resign from the company.
Religare had many phases before. It had a Singh Brothers phase, then it had us, and then now it is, as you say, is a battle-drawn kind of a situation. You generally only speak when there is a reason where your actions, which you've done extremely good, the hard work that you have put on, is actually taken a back seat. And then certain other things which need not to be discussed or talked about. So at times, you know, you have to make certain clarification, and that's the reason, unfortunately, not here to talk good about myself or the work that the whole management has done, that spoke. And the reason when we did such a great work, and maybe that's the reason why people got interested in taking or acquiring the company. So I'm not too sure doing a good work is a good idea or not, but definitely very challenging. So that's the reason I thought that it's time that a lot of allegations that you've been hearing about, or I'm hearing about, it is totally unsubstantiated, and maybe you would like to know it more closely.
Absolutely. Let's in fact dive straight in. One aspect that made headlines a couple of days back has been the ED FIR. What the ED, broadly, for the benefit of our viewers, if I can just summarize what it says, is that there's one gentleman by the name of Vaibhav Goli, that he acted at your behest, is what the ED says, that he went ahead, he filed an FIR against the Berman family, making allegations, but he was acting on your instructions. The ED says that his actions were motivated, were done at your instructions, that he got some 65,000 rupees from you for filing that FIR. And finally, the ED concludes by saying that it's being done to obfuscate, quote unquote, obfuscate the detection of illegal gains via ESOPs. How would you respond to these charges?
When was this FIR filed?
We've come to know about it only more recently.
But I'm sure you must have done your own digging. When was this FIR filed?
It goes back a long time, so that's the question that's...
So, first of all, this matter is sub judice, in the sense it is in the court or it is with the ED, and investigations are going to be there. I'll be very happy if the investigations will, of course, the truth will prevail upon it. We have no motive to do it. We have already spoken, and we have given the clarification in the stock exchanges that there has got nothing to do with me or any of our employees at all. And we will cooperate fully to actually get the truth out. But as I read of the FIR, it was done in November, and the open offer had come in September. And there was already a committee of independent directors in October where whatever the addresses and the concerns were there, they were already addressed. So there is actually no motive behind it. And that's something which is a matter of complete surprise to us. And we have already spoken about it in the all the legitimate areas where we need to. And as and when, wherever there is going to be an investigation, we will fully cooperate and we will ensure that the truth prevails on it.
Let's begin by asking some of the aspects. You correct, it goes back all the way to November 2023. So let me begin by asking you a supplementary question. Why do you think it's coming to attention now? And how would you respond to some of the concerns raised, especially on the ESOP front, saying that what the ED is saying, the long and short is that you as the executive chairperson of REL, you're giving yourself those ESOPs and therefore pointing at what the ED believes is an obvious case of conflict.
So I'm not going to be commenting on how ED is thinking about it or what they have said. I will tell you as a corporate, how the ESOPs, what are the ESOPs? It is basically an incentivization to the employees. Is it the first ever any corporate people or the employees have got the ESOP? When and how the incentivization of the ESOPs take place? When I joined the company, the share price was close to 17 bucks, right? And as it is, did I get ESOP after the open offer? Did I get ESOP after September? Did any of the employee, did they get ESOP after in REL? No. All those ESOPs that we are talking about until now have already been given, distributed only as per the company policies. Those company policies which have been around, which have been, revising as per the requirement always. So this is something which is done for any company to incentivize all the employees, and that is how it has been given not only to me but all to REL employees, to the subsidiary employees. The monies, in fact, where it has been exercised, the monies have come to the company for the growth of the company. So we are as much, we participate in the growth of the company by putting our own money, which generally the excise value comes after a complete, formula, how it is done, what it is done. So there is nothing, in fact, I really feel that by this particular instance or incident, the corporates should not be taken aback that, your salary, your hard work should not be questioned in a way that I'm not talking about ED, but before the ED, I was talking about the acquirers. Did acquirer talk about it? Why are they here talking about my ESOPs today or my employees' ESOPs or our colleagues' ESOP today? In fact, nothing has happened after the open offer. It has all been done before the open offer, 6 years. And they have voted. REL is a listed company. Nothing can happen without an AGM. Nothing can happen. Every time the proposed acquirers voted for it, I'm very thankful about it because they realized our good work. Every shareholder realized the good work, and that good work was incentivized and rewarded. Also at the time when nobody was ready to touch this company at all, 6 years, all the employees stuck to it. They completely turned around the company. And I really thought they turned around the company. They got the incentives for it. They put their own money for actually exercising, and then they put it back in the company.
All right, that's a CNBC-TV18 exclusive. We'll keep getting you more excerpts of that exclusive conversation, but it's time for a short break now. Gautam Badalia from Root Mobile joins us now to discuss their business outlook and the way forward for the company. Stay tuned for that conversation.
We end up doing a story saying IPOs have raised 1 lakh crore so far this year.
I want to draw you into what's happening on the technology side and link this to what we just saw with the CrowdStrike outage, and that basically brought the aviation industry globally to its knees on that particular day. And 48 hours were mayhem, I would imagine, for you and your team. What's been the big learning from that experience, and how much is tech being prioritized now as you position yourself as a global airline?
No, what happened here is indeed a global outage in one of the systems. Yeah, it's my first word I learned in Hindi. We have this beautiful jugaad in order to deal with some of these challenges.
What does jugaad mean to you, by the way?
No, in this case, it meant that people moving from a check-in through machines to a manual check-in. I will make sure that out of the 3 lakh customers which were supposed to fly in the day, 240,000 people have been flying. And I was writing not precisely, but I was writing 240,000 manual.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
So Nazara is focusing on its for FY25 its growth primarily through gaming. So what are the plans for the next few months or next quarter?
As you know, core gaming has been an important focus for us. Recently, we acquired 100% stake in Kidopia. We also acquired a studio in the UK called Fusebox. So I think we are very rapidly expanding our core gaming business, which should also be a high margin business for us, generate strong cash flows, and we can keep redeploying in the years to come.
So talking about Fusebox, so Nazara recently acquired Fusebox and Paperboat apps. So what was the idea behind acquiring these two companies?
I think wherever there is
now.
Markets have dipped in the red now. It's 23,350 from the day's high. It's been a slip of about 95 points. Look at the way Titan is, come under profit bookings. So Titan, Britannia, some of these FMCG names are losing ground right now. But let's, as promised, talk to the management of Route Mobile. Remember, just earlier this last week, the company announced a strategic collaboration with Infosys to unlock new business opportunities. Not just that, even the promoters did an offer for sale of about 6%, which brought down their stake to 75%, SEBI's mandatory requirement. So to talk about all that and how business is shaping up, we have Gautam Badalia. He's the Group Chief Strategy Officer, and he's with us in the studio now.
Thanks.
Gautam, great to have you on the show. So first, let's talk about that offer for sale, right? So promoter stake is now down to 75%?
That's correct. It's below 75 now.
Okay, so it was a 6% offer for sale.
Yes.
And it was open to retail shareholders, etc. But was there any institutional investor who bought any stake?
Yeah, so good thing is I think when we started marketing it and the kind of growth that we demonstrated and the guidance that we have given everything for the full year and the next 3 years, we were able to kind of get a lot of interest from large long-only funds. I mean, some of the largest MFs in the country. So they participated in it and they took the lion's share. So it's already there in the public. So SBI Mutual Fund took a lion's share of the entire OFS stake.
5.3%, right?
Yeah, so they took over 5% stake in the OFS.
Okay, so this is about the OFS, back to the SEBI's mandatory requirements now. Let's talk about your strategic collaboration with Infosys, where you have spoken about unlocking new business opportunities. Can you explain what is it all about? How big would this opportunity be for you? And what is the financial impact of this on your P&L?
Yeah, so I mean, Infosys is again kind of an enabler and a validation of the guidance that we have given. I mean, we were already kind of working on some of the group synergies as part of the Proximus vendors. So this Infosys tie-up per se will help us accelerate our sales cycle with all the deployments that Infosys has globally. Today, if you look at Route Mobile, I mean, Route Mobile plus Telesign, BICS, I mean, the entire Proximus group, we are the largest in terms of our geographical reach. And if we can leverage some of these strengths to work with partners like Infosys and a few large CRM partners, we could really accelerate our growth. So essentially what this Infosys deal will entail for us is, it will help Infosys offer these solutions to their enterprises, and it will significantly reduce our sales lead cycle.
So it reduces your sales lead cycle. How does it impact the financials? Like, do you have already considered it in the guidance that you've given? Does it kickstart right away?
Yeah, so I mean, as I said, I think we demonstrated kind of a 14% growth last quarter, YOY basis. We have talked about a 18 to 22% growth for the year. So a lot of these growths, I mean, we are talking about a growth rate which is greater than the industry growth rate per se. So some of these were already part of the guidances that we had kind of envisaged for the year.
So 18 to 22% revenue guidance for this year still stands?
Yes, that's correct.
And how has Q2 shaped up vis-a-vis Q1?
So Q2 has historically been a little muted to Q1. I mean, it's been kind of flattish to Q1. And we're seeing decent amount of growth even happening in Q2. And I think with the festive season coming, I mean, in Q3, we should see a significant amount of acceleration and throughput increasing multifold times on the platform.
Q2 revenue growth should be about 5-10% better than Q1? I mean,
yeah, I would not want to kind of commit.
But better than Q1?
Yeah.
And what about exports? Because in the past, you were facing some challenges on the export front.
So as I said, I think ILDO revenues, I think, were impacted last year during H2. Essentially, I mean, if you remember, I mean, there were a lot of artificial bot traffic, I mean, hitting a lot of platforms. But good thing now is, I think that's already in the base. Most enterprises have taken corrective action to kind of eliminate some of those artificial bot traffics. So now we are seeing good revenue traction growth coming back on ILD as well.
Okay, and what has been the volume growth in communication, say, was via SMS versus WhatsApp versus enterprise communications? How does that differ for you? And is it expected to improve now that we have Q3 coming up with so many festivals, sales coming up?
So SMS, I mean, because of the scale at which it operates, it's growing at a lesser growth rate than some of the newer channels. I mean, where the base is kind of pretty low, but some of the newer channels, I mean, we are witnessing almost 60-70% kind of growth rate.
And SMS would be?
SMS would be, I mean, between 10 to 15% kind of a growth rate that we are looking at.
And that is expected to improve coming in Q3, the growth rates across segments.
That's correct. So, I mean, we maintain, I think we should be able to kind of demonstrate, I mean, be in that 18-22% kind of a growth overall, yeah.
So your new products, which is basically communication via WhatsApp, RCS, etc., email, is about 7% of your overall revenues.
Yeah,
today.
at present, yes.
Okay. Now, considering it's growing much faster, what do you think this number could be, say, by the end of FY25 or FY26 end?
Yeah, so 3 year, I think it should be about 15% of our revenue pie. And within that, I mean, if you look at RCS today, I mean, till about the Apple event, I mean, RCS was only powered over Android. Now with iOS kind of opening up the interoperability for RCS, it could again be a game changer for the communications industry.
And how does the pricing differ between the export business and the Indian business? Are you able to take on more price changes regularly? When was the last one that you took?
So in terms of, I think the price changes are pretty, I mean, so there are more, from a domestic standpoint, I mean, it's more inflationary kind of an increase. On the international ILD price changes, some of them were kind of very rampant, I mean, in the last 4 or 5 years, but now things have steadied a bit. And especially, I mean, considering the headwind that we have witnessed during H2, we don't envisage any significant price increase coming, I mean, for the ILD business per se.
And for the domestic as well?
Domestic also, I mean, it's pretty steady, it's steady right now.
Okay. I remember a couple of quarters back, you know, the competitive intensity in your industry became a hot topic of discussion when one of the, you know, I think telecom companies bid very aggressively, etc., for a large, you know, PSU bank. So can you tell us how is competitive intensity? Because realizations have been a bit muted.
Right. I mean, so I actually have a little different perspective to this whole thing. I mean, so if you look at any global company, right, and global technology company, they are not constrained by geographies. They would have subscribers across the globe. You talk about a Meta, you talk about a Google. And with this partnership with Proximus today, I mean, we have also embarked on that path where we have pretty much the globe as our TAM, our target addressable market. So to that extent, I mean, that one particular operator, I mean, while they, created a little bit of a price war, but I think things have stabilized a lot. And
so, so now when you get new, you know, when you go out and bid and get new clients, is the pricing same as it was 6 months back, or is it progressively?
So competitive intensity is there, but having said that, today if you look at it, it's only a handful of large global CPaaS players, I mean, who are competing for that pie. So like if you look were to kind of anecdotally compare this with the payments industry, you have large payment aggregators. Likewise, I mean, we believe in CPaaS also in 3-5 years time frame, you will only have large CPaaS players kind of catering to the global wallet.
Okay. Last question, and we don't have much time, Gautam. So you'd guided for synergies of around $100 million. This is between Proximus, Telesign and Route Mobile. How much is realized so far, and when do you achieve the full synergy?
Yeah, so I think as we speak, I think we've been working on the synergies and the realization of those synergies. And on a quarterly basis, I think some of these numbers will kind of come through. A good thing is I think we've already created the wireframe and kind of now working on those trajectories right now.
Any ballpark number, 40%, 50% of that $100 million that you've achieved already?
Honestly, it is too early to kind of comment on that. But I think we are treading the right path, and hopefully I think we should be able to come and in 3 years' time talk about that $100 million of synergies being realized.
Gautam, great chatting with you. I think the market also likes what you've been saying because Route Mobile stock has reacted positively. So some key takeaways are that there is no more supply overhang. The promoter stake is now down to 75%. So that is out of the way. Secondly, SBI Mutual Fund has picked up a lot more than 5% in the offer for sale. Q2 has shaped up better than Q1 so far, though they're not committing to any number and how much better. But things are improving. And fourthly, the company is committed to maintaining that FY25 revenue guidance of 18 to 22%. Well, with that, from the entire team, it's a thank you for watching Trading Hour. Stay tuned. Halftime Report is up next.
Which we can kind of acquire and own. Then we can evolve this IP over a long period of time. So Fusebox is building IP-based games. Kidopia is already a very well-established IP in the world of kids. I think our objective is to acquire assets which have gaming IPs and then keep building and monetizing them.
So the news came out that Nordwin has recently also acquired Comic Con. So with that, what can the comic fans in India expect from the next edition of the Comic Con now that Nordwin has acquired a complete stake?
Look, the attention of the youth is a very valuable commodity. And Nordwin's focus on esports and anything else that the youth is interested in becomes very relevant, which is why they acquired Comic Con. I think today Nordwin is focusing a lot on expanding Comic Con to many more cities and doing it on a much larger scale, and they will make announcements around that very soon.
It's a kind of a record year, so to speak, in terms of the stake sale that the promoters and PEs have done this year so far. Okay, this is the big number that we are talking about. 4.75 lakh crore is the total amount of stake sale which has been done, promoters, PEs as well as non-promoters. When I say non-promoters, someone like BAT gets included, where they sold 4% stake in ITC this year. So this has been the trend. In the last 3 years, it's been around 3.2 lakh crores. This year, Y2D, it's still 3 months are left, and we've already crossed 4.7 lakh crores. So maybe by end of the year, we'll be crossing 5 lakh crores in terms of the total stake sale which has been done by promoters, PEs, as well as institutional investors. So that's the kind of trend we've seen. Now, the big deals which have happened this year, of course, Interglobe Aviation tops the list. There were 2 large blocks by the Ganwal family. They've raised close to 17,000, almost 18,000 crores. Indus Tower was another large block. Vodafone sold a big stake and raised 9,000 crores in a single day. Emphasis, big block by the PE investor, and they raised close to 7,000 crores. And even in Bharti Airtel, the PE sold close to stake worth 5,800 crores. So these were the large deals which have happened this year. Vedanta, Ambuja Cements. Whirlpool was interesting. The parent sold a big chunk, 24% stake in Whirlpool India, and they rose close to 3,800 crores. So these were the top 10 deals in terms of size that I'm talking about, which has happened this year in terms of the promoters and PE stake sale. It's been a record year in terms of OFS and IPOs as well. I'll talk about the OFS first. In the OFS list, of course, the government, government companies top the list. Hindustan Zinc, there was a large OFS of 3,000 crores. NHPC and NNC India were the other 2 PSUs where the government sold via OFS, and they raised close to 2,400 crores. Aditya Birla Sun Life was another company where the promoter sold via OFS. They raised close to 1,500 crores, and Glenmark was another deal. So these were the few large OFSs. Now let's come to the IPOs. It was a record year for IPOs as well. 15,000 crores plus, and we are still counting in for this year. Hexacom was the biggest IPO for this year. In April, they raised close to 4,200 crores. Aadhar Housing, Go Digit, MediAssist, eco-mobility. There were a lot of smaller companies as well, which have raised between 600 to 1,000 crores or 1,500 crores in this year. Gopal Snacks, Entero Health, Allied Blenders. The list just goes on. I've just picked up above 500 crore fundraising in the IPOs as well. So, as I said, it's been a record year as far as the Ps and promoter stake sale. Almost at 5 lakh crores is what we've reached Y2D this year, and it's been a record year. So,
how about listening to global market maestros before crafting your investment strategy?
Stocks see some broad-based gains ahead of the US Fed interest rate decision this week, but off their opening highs, power and realty stocks are the big gainers, even as IT and FMCG drag.
Bajaj Housing Finance lists at a price of 150. That's a gain of nearly 115% over its offer price of around 70 odd rupees. Chairman Sanjeev Bajaj says he expects the industry to grow at a healthy 12 to 15% a year.
SEBI has disposed of the NSE co-location matter on grounds that there was not enough evidence to support collusion or fraud by the NSE officials, even though it notes failures on the part of the exchange on co-location itself.
Gold looks headed towards $2,600 an ounce, with the yellow metal already scaling to a high of around $2,585 an ounce. Experts believe high interest in the physical market should keep the precious metal well bid ahead of the Fed meet.
The government has removed the minimum export price for basmati rice, allowed sugar mills and distilleries to make ethanol from sugarcane juice and bee molasses, and upped the import duty on edible oil. Stock swing to Qs.
Hello and welcome to a halftime report. I'm Ekta Batra. With me is Mangalam Malu. Well, we are off the highs, but nonetheless, we're still sitting at record highs in today's trading session. So we did hit levels of around 25,445 odd for the Nifty, but just about flattened out at this point in time. We have the mid-cap index also, which is just about marginally high by around 0.2%. Want to point out that maybe there is some amount of, cautiousness ahead of that Fed meet, which is on the 17th and 18th, so it kicks off tomorrow. And the Indian equities will really be reacting to it come Thursday. So that's probably one of the bigger cues to watch out for in for the entire week. But separately, just want to point out that there are also a lot of stocks and especially primary market action that we should be highlighting. So Bajaj Housing Finance, the stellar listing that we've seen with that issue price of around 70 odd rupees, you can see over 100% in terms of gains for that particular counter, and likes of Cross as well as Stolen Tires. Both those stocks have debuted with gains of around 5 to 6 odd percent. Hi, Mangalam.
Hi, Ekta. Absolutely. A big gain in terms of Bajaj Housing Finance. Cross and Stolen Tires are gaining, but in comparison to the kind of listing that we've had for Bajaj Housing Finance, the street may ignore or look at these as being overshadowed by the big listing as well. No real problems with the market despite it having come off highs, maybe some routine profit taking at around 25,400 levels, and the decline has been led by a couple of these financials itself. So you have Bajaj Finserv, which is currently at the low point of trade. Maybe the street is factoring in some sort of holding company discount coming in on Bajaj Finserv, because remember, this is the holding company of Bajaj Finance, which in turn is the holding company of Bajaj Housing Finance itself. We're seeing some profit taking in FMCG. That sector had been a strong performer all of last week. So pull up something like HUL down about 2.6%, Britannia down by about 1% as well. So that's another thing that is taking its toll on the frontline indices. And apart from that, from the broader markets, Dixon Tech is the one that really stands out in terms of an up move. It's up nearly 6% and doing extremely well. The only thing I'll be watching out for in the second half of trade in particular is how the advanced decline pans out, largely because you have the advanced decline stocks largely in split right down the middle. So you have those lines having intersected each other, and typically once they do intersect with the red line going above the green line in the second half, we can't rule out some more profit taking as well. But let's get you some equity calls as well.
Yes, absolutely. We have Mahesh Nandurkar of Jefferies, who says that in line with their near-term cautious view on the markets, small and mid-caps, industrials and global cyclicals, and amidst green shoots on consumption, they reduce weight on Reliance, Amber Enterprises, and replace L&T with Siemens with a lower weight. making industrials neutral and energy underweight, he says. They've added Emcure Pharma and Interglobe in their model portfolio. They've increased weight on HDFC Bank as they believe banking stocks are near an inflection point. He says their overweight on telecom, auto, staples and power remains. So some amount of equity perspective that we've got.
Absolutely, equity perspective is what we've got. But let's get you some excerpts from CNBC's exclusive conversation with the RBI governor as well. Shaktikanta Das in that conversation said that India's growth story is intact. Added that interest rate decision will be based on future trajectory and inflation and growth. Obviously, the two parameters which determine the course of interest rates which the RBI will take. It's an exclusive conversation with a lot of nuggets. Hear it out.
At the moment, obviously, we have maintained status quo in our rate cycle so far. After our rates, we increased it up to 6.5. After that, for the last 2 years or so, we have maintained status quo with regard to the rates and with regard to the monetary policy stance. The latest inflation print for August has come out yesterday. So next monetary policy meeting will be held in first week of October. So the Monetary Policy Committee will take a decision. But having said that, let me say that, we have to really see how the outlook is. It's not a question of that in the, in the current context, in the, like in July, the inflation came to about 3.6. That is the revised number now. Yeah, 3.6. And August has come at 3.7. So it's not so much how the inflation is now. We have to look at for the next 6 months, for the next 1 year, what is the outlook on inflation. So therefore, I would like to sort of step back and look at more carefully what is the future trajectory of inflation and growth, and based on that we will take a decision.
And we'll talk about inflation outlook and growth outlook for the long term, but I do want to understand from you, as we speak, is the MPC at the RBI actively considering a rate cut, and will that happen in the October meeting?
No, I can't say that. First, in October we have a new MPC in the sense that the external members will be new, because the current external members, their tenure, 4 years tenure has ended. So there will be new members, external members, 3 members who will be inducted into the MPC. So we will discuss and decide in the MPC. But so far as growth inflation dynamics is concerned, 2 things I would like to say. One, the growth momentum continues to be good. India's growth story is intact. And so far as the inflation outlook is concerned, we have to look at the momentum, the month-on-month momentum, and what is the momentum of inflation, build up or moderation, either way. So what is the momentum of inflation trajectory in the coming months? So the outlook we have to look at. It has to be a forward-looking approach. So based on that, we will take a decision.
Many analysts and economists believe that the RBI doesn't give forward guidance on rate cuts or policy direction, decisions. And so I wonder, why does the RBI not do that? So why don't you prepare the markets ahead of time on a policy pivot?
It can be very risky because it applies both ways. So if you give forward guidance, sometimes, given the uncertainty that surrounds us in the world, and today it's a fast changing world. The day before the Ukraine war started, nobody thought that a war of this magnitude and this length will happen. The conflict in the Middle East came suddenly. The IT outage which, confronted all of us some 2 or 3 months ago on a global scale, that also came suddenly. Geopolitical events are happening with suddenness which we have not seen before. Climate-related developments, weather-related developments are also coming with the kind of suddenness which we have not seen before. So with so much uncertainty, and the monetary policy between the countries are now also diverging. Growth scenarios are also diverging. So it's so much of uncertainty around us. If you give a forward guidance, you will be sort of leading the market in one direction. And if something happens the other way, something goes wrong, and you will not be able to keep up to your forward guidance, then you would have unnecessarily, without any outcome, without any consequence, without any positive impact for anyone, you would have probably encouraged the market to board the wrong bus or the wrong train. So you would have directed the market in one particular direction. So therefore, we do not give forward guidance in terms of when I am going to increase the rate, how much we will increase. We don't give forward guidance in that manner. But we do give forward guidance because we always give our inflation projections, our growth projections for the current year, and as we move forward to begin with the first quarter of the next financial year and then take it to the next quarter. So in terms of growth numbers, quarter to quarter, and in terms of inflation numbers, we are giving the figure. So to that extent, RBI gives forward guidance. But yes, we have our reasons, as I explained, not to give, not to be so explicit to say that we are going to increase or not increase, that we will go for this, 25 or 50. I think that can sometimes be counterproductive.
Okay, so that's the RBI governor. We'll keep getting you excerpts of that conversation, but as of now, we need to take a break with the news that the Nifty is just about slipped into the red and the mid-cap index just about holding with a gain of around 65 odd points. We'll get you more on the markets and lots more probably on the macros on the other side as well. Stay tuned.
How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
At least currently is what's happening as far as crude prices are concerned. Now trading below $70 a barrel, and that's great news for airlines like yourself. And the ATF tailwind, I mean, how much do you factor in on account of that as far as margins are concerned now, given where we are?
You know, the fuel prices, if you would have asked me the very same question 2 months ago, you
would have been
said,
different.
They jump up, what are you going to do and what's happening? So I think that's always the moment of the day, and today they're trending in this direction. That could change again tomorrow.
But what's your own expectation on where they could be?
You know, I say that I'm in the aviation business now for the last 32 years. If I were to be able to predict the direction of the price of fuel, I would not be an airline CEO, but I would sit somewhere totally else. So that I would not be able to predict that. When it comes to ATF, I think we see some different dynamics. Some states have really reduced it. That has really had very positive effects.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest
Welcome back. As we speak, the Nifty is now moved into the red, just marginally so, and as has the Sensex, the mid-cap index holding in the green with just about 20 points. So just keep an eye out on that development. The Nifty Bank is outperforming, so it's about 2.5–3% away from its record high, even as the frontline indices hit a fresh record high this morning itself. Second half become extremely crucial, and more so ahead of the big global events that are lined up. And in the middle of this week, the outcome of the Fed would be extremely crucial to track. In the meanwhile, we are seeing some traction in a couple of these names in the broader markets itself. Info Edge, for instance, has now moved higher, and alongside that, we're consistently seeing some traction in jewelry stocks building up. We have, TBZ, which is up around 7-8% odd, and we've seen some traction in something like Senco as well. But we've been discussing macros. Just before going into break, we were hearing out comments coming in from the RBI governor to an exclusive interview with CNBC. And now, in a special edition of Indianomics, Lata today caught up with T.T. Ram Mohan, former professor of finance and economics at IIM Ahmedabad, B. Prasanna of ICICI Bank, and Samiran Chakrabarti of Citi, along with Ashish Gupta of Axis Mutual Fund, and discussed the deposit rates, if a CRR cut is likely, and more on that as well. Let's hear out a slice of that conversation.
Two things are happening. One is the government is actually building down the WMA balances. So to that extent, that's a release of money back into the system. And the second thing is, as you all know, there is a likelihood of a gradual change in the monetary policy cycle over the next 2 to 3 months. And that is kind of likely to, bring a little bit of liquidity back into the system as we go ahead. But the real issue is on the banking system deposits. And from that perspective, I would say that because of a lot of things we have discussed about how mutual funds are garnering money and so on and so forth. Bear in mind that while they don't affect the aggregate deposits in the banking system, they do affect the color of money that comes to the banks in terms of both the duration and in terms of the type of entity which deposits. It actually shifts from households into wholesale, which all requires a higher runoff factor. And you know about the new LCR guidelines. So all in all, I think from a deposit rate perspective, I think the pressure on mobilizing new deposits are likely to continue. And while the general rates in the system and the general liquidity is likely to ease.
Okay. I want to bring in an altogether different point. See, we have seen many periods, and in fact, we have been running the credit and deposit percentages from 2014 onwards, or even 2010 onwards. There are many periods when credit growth is a little faster than deposit growth, and periods when deposit growth is faster than credit growth. But is this period more sticky because there is one second largest bank, HDFC, which is hungry for deposits? 2, the 2,000 rupee notes were withdrawn last year. And 3, RBI went on a fairly serious tightening spree last year, same time, in August, September, October. They were not creating enough money because they were worried about inflation. So do you think this period is likely to be more sticky and will remain sticky till all this HDFC Bank issue is sorted out?
So, Lata, if you look at the last 25 years credit deposit growth profile, this is the 4th instance where there's been substantial gap between credit and deposit growth. The main hypothesis out here is that credit creates its own deposits and not vice versa, where the traditional thought process has been that deposits create credit. Now, if you believe in this credit creates its own deposits and try to test it with Indian data, you actually find that to be true. The causality runs from credit growth to deposit growth and not vice versa. And if you take that analysis further forward, and just an econometric exercise shows that it takes about 40 odd months for the credit deposit growth to converge. That has been the traditional pattern. So from that perspective, this cycle is halfway through. We are about 2 years into this credit deposit growth divergence. And that's why I don't think it's necessarily very different from the earlier cycles that we have seen. Yes, the HDFC issue might be creating a bit of a short-term problem, but that's not the critical challenge. And it's also true that when this credit deposit growth diverges, there are options available to banks to fill this gap, as we are seeing that the short-term borrowing through CDs, etc., of the banks have significantly gone up. There's been some equity dilution also to bridge this gap. So in my view, it's possible that if we are patient enough, we will automatically see this getting converged. And I would agree with the other panelists here that the composition of the deposit matter, our econometric analysis shows that as well. that if the proportion of term deposits are relatively higher, then in the subsequent years, the credit growth also picks up. So in this cycle, what we are seeing is actually now the term deposits have started moving up a bit, and that probably should lead to a convergence. And the last point is that if you look at deposit growth in isolation, it's still running ahead of nominal GDP growth.
Yeah.
So we can't really say that deposit growth is too low in the country.
Okay, so that's a macro perspective. That's a slice of the conversation, but don't forget to tune into the full show at 4:30 p.m. this evening. All right, time for a quick break now, but Sudeep Shah of SBI Securities will join in with some trading calls on the other side. Stay tuned.
Exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for Phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is...
Welcome back. You're watching us here on Halftime Report. It's midday, perfect to tell you about the market setup, especially from the F&O angle. And as we speak, Bajaj Housing Finance has actually hit upper circuit on debut itself. The frontline indices, the Nifty and the Sensex, marginally in the red right now. Even the mid-cap index is off highs, but they hit record highs earlier in the morning. The one index that did not hit a record high was the Nifty Bank, which is still about 2.5% away from a record high. And that's something we'll be watching out for going forward, because all of last week it did outperform. And today as well, it is outperforming. For the Nifty itself, there are a couple of active options, but the 2 indices that we'll be tracking ahead of the Fed action on the outcome of the Fed action on September 18th will be the metals and the IT index. Typically move positively if there is hope of a rate cut as well and global recovery. So those are a couple of sectors that we will be tracking very closely over the next couple of trading sessions. For the Nifty, the 25,000 mark seems like an important support. The 25,000 put writers pretty active for a premium of 23-24 odd rupees. There are 60 lakh shares in the open interest, and remember the expiry is on Thursday itself. On the way up, 25,500 to 25,550 seems like a bit of a supply zone. Why do I say that? Because 25,400 call writers, pretty active, premium near 100 rupees out there, 84 lakh shares written already, and the 25,500 call as well, nearly 58 lakh shares written out there for a premium of 58 rupees. Again, reiterating the supply zone of 25,500 to 25,550. But at the lower level, because we are off highs, just remember the 20-day moving average will be a key support area to watch out for, which is close to 25,027 itself. A bunch of other stocks that will be on our radar today, of which LIC Housing Finance is prime, largely because of the open interest build-up that we're seeing. The stock down almost 5%. It may enter F&O ban, so keep an eye out on this one.
Okay, all right, Mangalam, thanks very much for that. So those are the stocks in focus on account of the F&O update. We do have Sudeep Shah of SBI Securities who's with us to tell us what he's tracking on the technicals. Sudeep, hi, welcome to the show. Well, it's a market which is just about consolidating now, but remember we're still sitting at record highs. So give us a sense in terms of how you would approach today.
Good afternoon, Ekta, and good afternoon, Mangalam. Ekta, see, index is witnessing this consolidation at higher levels after post that strong move in the last week. So I feel ahead of the Fed policy, which is due in the next couple of days, markets could continue consolidating between 25,200 and 25,500, and I guess dips to 25,200, 25,250 should be used to go long positionally with all these spaces, banking, IT, as well as capital goods. They are looking very good from the current levels also. So I guess all these sectors would support Nifty. Even on a dip, these stocks from these spaces should be used to go long. And I feel overall 25,200 should hold in the current setup. And on the upside, we could see levels of 25,550, 25,650 that can be witnessed in the next 3 to 5 sessions post the Fed meet.
Okay, all right. What about stocks, Sudeep?
From the stocks space, I feel MCX has given one more breakout on the upside. The stock was in an uptrend since last several weeks. In the last 1 week itself, for 4 or 5 trading sessions, the stock was consolidating between 5,200 and 5350. And today we have seen a big breakout with volumes on the upside. So I feel the continuation pattern here, if we look at that, the stock could head up to 5650, 5700 in the next few weeks. And on the downside, support zone would be closer to 5350. So this can be bought with a stop loss of 5350 for a target of 5650 and 5700. The another stock which I like is Eicher Motors. Now, this stock was consolidating in the last few sessions, but we've seen a decent buildup of volumes here, and the stock has now broken out on the upside. So I feel Eicher Motors could be bought with a stop loss of 4780 on the downside, with the targets of 5150 to 5200 on the upside.
Okay, all right. So that's on your frontline stocks. Mainly, just wanted a sense from you in terms of a couple of these stocks which are showing some amount of good traction today and follow-on buying. Case in point would be, say, Shilpa Medicare, which is up around 2% today, and it's rallied 172% this year. And RVNL, which is down around 2%, it's, rallied 200% this year. So your call on both these counters.
If you see Shilpa Medicare now, last several weeks, the stock has been in a massive uptrend from almost 650, 670 levels in July that we've seen around 900 levels right now. But from higher levels, I feel now the stock is reaching a point of exhaustion. The indicators are at an overbought zone. So I feel at these levels, the risk-reward ratio might not be that favorable like it was a couple of months ago. So from here on, I feel one should not be too aggressive in this space. Let the stock cool off, let it come near its 20-day exponential moving average, which is closer to 830, 840. And post that consolidation, the stock would be right for one more up move on the upside. But at least from the current levels, there could be some slight dip, slight consolidation. So one should just wait and watch for this. The second stock, RVNL, now here the stock in the month of, if we are not wrong, in the month of say between April to June, July, the stock had rallied from 300 to 650, and thereafter it is just in a period of consolidation. But looking at the larger trend, I feel 520, 515 zone, which is a gap area on the weekly charts. Now that zone is the key here. That zone is a very important support. We might still consolidate. The stock might still see some consolidation between 500 and 575, but above 575. The one more breakout could be witnessed, which could take the stock all the way back to its previous highs around 650 and maybe above that. So overall, if someone is holding this stock, then 510 should act as a trailing stop loss from a positional perspective.
All right, take that point. RVNL down 15% from the highs, but still up 200% this year itself. So Dev, thank you so much for joining in and giving us your views on the index and a lot of individual stocks. Just before we slip into a short break, pull up a couple of these metal stocks which are doing extremely well. JSW Steel has moved to the high point of trade. Alongside that, we have Vedanta as well, which now has moved well. It's closer to 466, a recovery of nearly 2.5% from the lows at the high point for that stock too. Take a short break, come back, get you more on the primary markets. We will connect with Ashish Mehrotra, who's the MD and CEO of Northern ARC Capital. IPO opens for subscription today. Stay tuned.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
Does the low-cost positioning then change as well as you move towards international travel, as you move towards adding things like business class and loyalty programs? Does that cost position at the back end start to change as well?
Well, it depends a bit, Shireen. What is your definition of low-cost position? We are determined to keep our cost leadership. And, you know, 2 days from now, flying to a city is still 3,000 rupees. So for that, we need to keep that cost leadership out there. And we're not making any changes on that product, on that setting. But on top of that, we start to build what we are doing. So if you see our business class, which we are going to introduce, we do that in what we call the nation's busiest and business routes. 20 a day between Delhi and Mumbai, 14 a day between Delhi and Bangalore, 13 a day between Delhi and Hyderabad.
You said that these decisions are taken when you believe that the revenue advantage outweighs the incremental costs that you will have to take. Can you give me a ballpark estimate of what, for instance, the business class introduction is going to mean as far as revenue impact is concerned when you see a full rollout across the 12 routes that you spoke of? What is the international expansion going to result in terms of a revenue bump up as well going forward?
So the business class will be introduced in November of this year. It will start on Delhi-Mumbai. Of course, we get one plane. It will start, as we fly 20 a day, one plane is not enough. So by the end of this calendar year, the entire Delhi-Mumbai operation will be fully.
Welcome back. Well, you're still tuned into Halftime Report on CNBC-TV18. Let's discuss the Northern Capital IPO now. It opened for subscription today and it will be available to bid till the 19th of September. The total IPO size is 777 crores and the fresh issue is around 500 crores and the OFS is around 277 crores. They did raise over 200, I think 229 crores from 15 anchor investors as well. We have with us the MD and CEO of the company, Ashish Mehrotra, to talk about the IPO. Ashish, welcome to the show and welcome to our studio. Well, you're raising around 500 crores via fresh issue. Can you just give us a sense in terms of how exactly is it going to be utilized?
Sure. Thank you very much. Delighted to be here and speaking to your audience. I want to take a fraction of seconds to try and explain what we do at Northern Arc. Northern Arc was established about 15 years ago with an objective to provide seamless access to the credit capital to the underserved markets. We operate in India's high growth markets, which are grossly underserved. So we bring a domain expertise across the 6 sectors where we operate, where we believe, and we operate both using a multi-channel approach. We lend both to the other lenders and also directly to the customers. That's about 50% of our balance sheet. We use that opportunity to create a sizable amount of credit solution to our lending partners. That creates a powerful ecosystem for us and builds a sticky fee income for us. We, for the last 9 years, also been running performing credit funds, which are predominantly AIF and PMS. Essentially, again, leveraging our domain expertise to deploy money in those sectors. And we are able to do all of that using our bespoke technology platform and our data science capabilities. We have about 35 million of time series of loan performance data, which is very unique to us, which comes as a function of the multi-channel approach we have. So the primary raise is essentially to augment the growth of the company. Company has been growing at about 30% plus year on year. The revenue has been growing at about 40%. The PAT growth has been phenomenal, upward of 50%. And the objective of the primary raise is to augment the growth of the company.
So if you get your business model so far, 50% of your revenues or 50% of your book is basically direct to customer loans. The other 50% is to people who will thereafter give it to people further, right?
Yeah.
What is the spread that you get on both of these and how is this mix likely to change going forward?
As the way to look at it, we make a fairly healthy NIM of about 830 basis points. It's a function, and the NIM then get grossed up on account of the fee income between the placement and the fund management. The fund management makes about 100 to 110 basis point of fee, and about the placement business makes about 25 to 30 basis point. So your gross NIM or the loaded NIM goes to 930, and you've got about 100 basis point of credit cost, 120 basis point of credit cost. And we invested a lot in our technology and branch network, so our OPEX went to about 4%, and you get a gross margin of about 410 basis point. Just for tax, you make about 310 basis point of return on assets, which is, to my mind, in this business is really great. As we look at, we think the growth will happen across the sectors. Since we are deeply sector focused, we bring all the multi-channels to ensure we are able to provide the right set of credit solutions to the end customers and the counterparty whom we work with. That creates a very powerful network effects for us between the originators and the investors. The unique part of our business, given the purpose that we impacted about 100 million lives, about 10 crore people, and have deployed life to date about 1.7 trillion INR, is that a lot of multilaterals comes and participate as an India impact story, and that creates a very powerful liability profile for us.
Okay, Ashish, I just wanted to get down to the numbers. FY24, you finished your NII with almost 1,000 crores, and that's a huge jump from FY23 and even FY22. The backdated information will come up for you in terms of the financials. FY22, 370 went all the way to almost 1,000 odd crores. So it's a huge leap. What led to that? And similarly, your net interest margins as well, 8.3% in FY24 versus 6.7% in FY23. What led to this jump? And what is sustainable? Is this rate sustainable for us?
I think the way to look at it, as you start leveraging your domain expertise to serve the need of the underserved, high growth in a very calibrated and a responsible manner, and as you build direct-to-customer business parallelly, your NIM will expand. The second reason for expansion of NIM is also the high quality of the liability franchise we have. Liability franchise is a function of the global multilaterals who wants to participate. Fair to say we are gateway for them in India. We also lever that opportunity to open doors to other counterparties, our originating partners who operate in a similar space. So that gives us a long-term borrowing profile. So i.e., fair to say, as the repo rate went up by about 250 basis point, our borrowing cost over the last 3 years is actually coming off. And last year, our borrowing cost only went up by 40 basis point. So gross expansion on account of the mix, coupled with the high-quality liability franchise. We are AA rated just basis pure quality of our performance.
Could you break up your liability franchise? How much of it comes in from the banks? How much it comes? Where do you get your funds from, basically?
So we leverage our capital. We get about 20% of our borrowing as of March 24 comes from DFIs, Development Financial Institution, both domestic and offshore. 65% comes from banks, largely PSU and the private sector, and balance between capital markets and other lenders. We lever that to provide the balance sheet growth. So that creates a very high quality franchise, ensures that you have positive ALM and not have negative ALM. And that creates the right set of tailwinds for us to grow our business in a responsible manner.
Okay. So just to break up your book, 40% comes from MSME lending. You have, I think, around 27% from consumer finance and MFI around 26%. We had a company which does MSME and MFI financing just a couple of days ago, and they said one of the biggest stress points for them probably in FY25 or FY26 would be asset quality stress in the MFI segment. You get 26% of your sales or your lending from there. Are you seeing any kind of chinks in the armor when it comes to MFI lending in terms of asset quality? What is the on-ground situation?
Okay, let me try and break this down slightly for you. So we have 35 million time series of loan performance data. Our knowledge comes not only from our lending, but also for the credit solution we provide to our originators and largely to our investors. If you look at my book is about 11, as of March 24, was about 11,800 crores. The equivalent amount was a placement we created with the credit solution we provided to the other originating partners. And then you have a fund management. We deployed about 10,000 crores on the fund management side. Given that you have a very evolved risk model, which is time tested over the last 15 years, we have about 30 plus risk model, which has been tested. And fair to say you've tested them in the last 10 years when we've seen both 1 in 100-year risk events and multiple 1 in 10-year risk events. That means your data quality, your understanding is very powerful. More importantly, our approach to credit is a nuance-based approach, which is function of touch and feel. Our portfolio is spread over 670 districts in India, fair to say about 80% of India's geography. About 35% of them, 200 plus districts, our independent risk team originally goes and visits and monitors what happens. Our core thesis is essentially lending to the end customer, whether we do it directly or we do through our partners. And we do 4 things, essentially how these loans are getting originated, how these loans are being underwritten, how these loans are being fulfilled, and how they are being serviced. But that gives you a touch and feel. So we do see that currently in some of these sectors there is a increase in indebtedness, and that is a function because of about 10 to 12% of the population have more than 4 to 5 loans. And I believe it's not a systemic piece. This is highly regulated as a sector. And I think over the next 2 quarters, this should begin to stabilize.
All right. Just a final question before we let you go, running out of time. We have data for the last 3 years. Because this is a cyclical business and you've been here for at least 3 business cycles, and with the kind of data, etc. that you have, over your history, if you could tell us what has been your highest and your lowest NIM, and what has been your worst and your best asset quality?
No, obviously, I think our asset quality, if you look at it on a 10-year basis, since our data is there on a public domain, it'll give you the quality of asset performance we have and probably the industry-leading credit cost. Obviously, 21 we saw during the pandemic, there was a stress, but we were still profitable. So we've been profitable quarter on quarter, year after year. But on a risk-adjusted basis, we are very confident of maintaining our return on assets and growing from there on.
Okay. All right, Ashish.
Thank you.
It's a pleasure.
Same here.
Thank you very much for joining in. I'm sure we'll touch base to discuss more of the forward-looking financials once you do this. Thanks very much.
Thank you very much.
We'll take a short break, but more on the markets once we're back. Stay tuned.
Business class equipped. So all our 20 flights a day, maybe one or two, but all the 20 flights is our ambition. The objective clearly is we start in November of 24, and by the end of 25, all these 12 routes, all these 40 plus planes which will operate this route are in operation.
I got asked right after the debate, you know, do you think we should do another one? And I said, hell, every day we should do another one. Of course. Well, it's not going to happen because Donald Trump confirmed today he's not doing another one. So give him a little break. That one left a mark. He said a lot of weird stuff too. So I'm just going to say that. And that was the. You tell me you had this on your bingo card, and they're eating cats, and they're eating cats. He refused to condemn the January 6 criminals who attacked the U.S. Capitals and our democracy. But in the anger that he got into as the poise and dignity and the sharp retorts from Vice President Harris, he lost some of that composure in there. And when he was referring to those rioters, and you go back and make sure you'll see this again, I'm sure, he said, we did nothing wrong. He didn't say they, he said we.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencers.
Welcome back. Let's talk about our special segment, Value Plus. And the stocks which are buzzing around today are some of these rice exporters, KRBL, LT Foods, all of them. Vamakshi joins in to add value to why exactly these stocks are abuzz. Vamakshi.
Well, Mangalam, these stocks are abuzz after the government has removed the MEP or the minimum export price on basmati rice, and this decision has come in light of adequate domestic rice availability as well as the ongoing trade concerns. Now, just to give you some perspective, under the restrictions that were set earlier, basmati rice could only be exported above a set floor price, that is the MEP. The government had earlier revised the MEP to $950 per ton from $1,200 per ton last year, and now the government has completely done away with this restriction. As far as the industry is concerned, of course, this bodes well. Exporters are seeing increased demand as well. It may also help the exporters stabilize the price of basmati rice, which had been falling on account of fewer global orders. But as far as these specific companies are concerned, it is only sentimentally positive. And I say sentimentally positive because in the past con calls as well, the companies have clarified that the average realization on basmati exports is much above the MEP that was in place, that is 1,200 as well as 950, and as such, when the MEP was in place, there was no such impact, and therefore with the removal of MEP, it's largely neutral for all of these listed players like LT Foods as well as KRBL. But overall, it is a sentimentally positive news, and as resultantly, the stocks are trading higher today.
Okay, all right. Thanks very much for that one, Makshi. So that's the update coming in on a couple of those rice stocks. We'll take a short break, but up next, Manisha Gupta will be with us. She has with her Sabyasachi Ray, the Executive Director, Gem and Jewelry Export Promotion Council. Stay tuned.
Celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
The market may have had a very topsy-turvy ride through this year en route to record high levels, but for the IPO market, it has been smooth as a highway. Now, that's because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57, but the differentiating factor as of today is the fact that the IPOs of 2024 have raised more money than all of 2023 put together. Now, according to this data from Prime Database, the IPOs of 2024 have so far raised almost 62,650 crore. That is well above the 49,400 crore that companies raised in the primary markets last year. Now, this list includes IPOs that were open for subscription but have not listed yet as well. Now, September traditionally has been a good month for IPOs, and the 7 issues so far have already raked in over 9,000 crore rupees. But August has been the best month of the year so far in terms of funds raised, as over 17,000 crore rupees have been raised by 10 IPOs that month. Now, how have these IPOs fared? Now, 5 of these issues have returned 100% and more from their IPO price. Now, 30 of them have gained anywhere between 25% to 99%, and only 7 such IPOs are currently trading below their IPO price. It shows you the kind of market that we have been in. Now, unlike 2021 and 2022, there have been no giant-sized IPOs this year. While 2021 had Paytm, which looked to raise over 18,000 crore, LIC surpassed that in 22 with a 21,000 crore issue. Now, Bajaj Housing Finance, which has now become the talk of the town for the bids it received, is the largest IPO of the year with around 6,500 crores, followed by names like Ola Electric, Bharti Hexacom, and of course Brainbees. Now, 45 IPOs this year have delivered positive returns to shareholders. Now, among them, Jyoti CNC is the top performer, with the stock more than tripling from its IPO price. The recent listings like Unicommerce and Premier Energies also find a mention, considering the strong moves they have seen just a few days after they listed. Now, among the few IPOs that have delivered negative returns so far include Capital Small Finance Bank, Popular Vehicles, among other such names. However, none of these names have any substantial downside from their IPO price, such as a 50% or more from their IPO price. It's been a big year already for IPOs, and we still have 3.5 months left. Now, at this pace, it will not be a surprise if by the end of the year, we end up doing a story saying IPOs have raised 1 lakh crore so far this year.
Welcome back, and joining us now is Sabyasachi Ray. He's Executive Director, Gem and Jewelry Export Promotion Council. Mr. Ray, hi, thank you so much for joining us. And yes, there is a lot to talk about, but I want to get to the gold prices first. And how is the industry looking at that? Because a new day and a new all-time high is how we seem to be living and dealing with it right now.
Yes, Manisha, I think it is tough time for the industry after a very good run after the duty went down, as you all know. Industry had a very good time. In the retail segment, the sale was good, all was going well, but suddenly this price increase and volatility, as we have told last week also, that the volatility is disturbing, and also the prices are going up. Why the prices are going up, all of us know. Of course, there's huge demand from different countries. That means the countries are lapping up gold. And the second thing we all know that Europe has now decreased the interest rate. It's the big news. And for gold, the price will go up, because what we understand that US is the next. Now, if the US comes out with a, let's say, 0.25% decrease, then it may be $50 to $60, and it is 0.5% decrease, then the market will go berserk.
Okay, that is the kind of calculation that the industry is doing right now. Also, Mr. Ray, how is it for the export as a number right now? I mean, we do understand that the last financial year wasn't so great. So was the case with last quarter as well. But now with the gold prices where they are, I mean, I'll of course wait for the GJPC data. But from where you see on a day-to-day basis, is exports picking up?
See, one of the things what we have seen is that, as we have told, the diamond prices are stabilizing. So the diamond, the fall in diamond exports have decreased, what we have seen. And also what we are seeing, but of course for gold it is not good news, because the gold exports for the first time for the long, I think for the past 6-7 months, it has gone down. So it has gone down because of this price increase, because the demand, of course, people are waiting and the purchase is low. Because of that, the gold, plain gold jewelry exports have gone down. However, in studded jewelry and etc., we are maintaining the levels, whatever is there. There is no decrease and then increase, but still the Chinese, data is not helping us. What we understand is that the Chinese markets and the Chinese economy and the data, whatever is coming out, is not that encouraging.
So tough times, but there have been some good news on the horizon as well. And the recent meeting that was held in Bombay, and you were all part of it as well, the Board of Trade, that is, the government has now extended incentives to various other sectors. What is it that the gems and jewelry is taken away from this meeting, and how does it work for you?
See, Manisha, for a long time, we are working with the government for e-commerce exports. What is the e-commerce exports is that, when we talk about B2B exports, you understand that business to business means the wholesale price. And when you talk about retail exports, is the retail price. Between wholesale and retail price, there's a difference. So e-commerce, if you export through e-commerce, you get the export figure in retail. So what we understand in the world, as it has been assessed, that there is a demand of $45.33 billion of e-commerce jewelry which is required in the market, and India was nowhere into that because of its policies and etc. Because of that, we are working with the government so that two things we are working. One is ease of doing business. You come out with procedures where the e-commerce exports are made easier. Second thing is that it has to happen through the couriers. It has to be given the similar kind of facilities like other products are there. That means risk-based checking at the point of exports. And the third thing, what we are calling is that, the benefits, because you do not export the rates and duties and taxes of India in exports. Any country, they do not do it. So we are talking about the benefits when you are doing exports, the duty-free benefits for those export raw materials. That was what we are demanding. So the first thing, the ease of doing business. In the recent times, you have seen that jewelry has been taken as a category which is permitted for e-commerce export. The second thing they have done is a risk-based assessment at the point of exports. And third thing, which is a very welcome announcement, is that they have, not for gems and jewelry, for all other sectors, they have now announced that all the benefits at the export level in terms of duty drawback, in terms of rod tape, in terms of ROSDTL, all these things will be given to the exporters, which is a very, very big news for us.
Oh, absolutely.
Mr. Ray, just a question on the industry. As of the data that you have, if you could give us a sense of what is the inventory that, the organized part of the industry is sitting on, and how much of that is unhedged?
See, I can tell you that, one thing is that on the diamond inventory, it is never hedged, of course, because we import the raw materials, and from raw materials, we, cut and polish the diamonds. And in most of the cases, between the rough diamond and the polished diamond prices, there's a lag in the price, increase and decrease and etc. So right now the lag has decreased, but still there's a lag. So that is not, that is totally unhedged. I can tell you that. However, in the gold, all the big firms, I do not want to name them, all big exporters are hedging their, gold forward cover. But in a sense, when you export something, the hedging happens to the sense that the bill, if you have, processed the rough diamond, the raw materials to cut and polish diamonds, and then you have exported it, and the value of the dollars, whatever is there, that is hedged. So in the end of the day, of course, the price hedging is not there, but dollar hedging is there. But in terms of gold also, whenever you are exporting, the export value, whatever has been quoted in the invoice in dollar terms, that is hedged to a level.
Fair point that. Thank you so much, Mr. Ray, for coming by and answering a whole host of questions. Really appreciate your time. And with that, it's wrap on Halftime Report. Business Lunch will take all the action ahead.
I want to draw you into what's happening on the technology side and link this to what we just saw with the CrowdStrike outage, and that basically brought the aviation industry globally to its knees on that particular day. And, 48 hours were mayhem, I would imagine, for you and your team. What's been the big learning from that experience, and how much is tech being prioritized now as you position yourself as a global airline?
Yeah. No, what happened here is indeed a global outage in one of the systems. Yeah, it's my first word I learned in Hindi. We have this beautiful jugaad in order to deal with some of these challenges.
What does jugaad mean to you, by the way?
No, in this case it meant that people moving from a check-in through machines to a manual check-in. I will make sure that out of the 3 lakh customers which were supposed to fly in the day, 240,000 people have been flying. And I was writing not precisely, but I was writing 240,000 manual.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
So Nazara is focusing on its for FY25 its growth primarily through gaming. So what are the plans for the next few months or next quarter?
As you know, core gaming has been an important focus for us. Recently we acquired 100% stake in Kidopia. We also acquired a studio in the UK called Fusebox. So I think we are very rapidly expanding our core gaming business, which should also be a high margin business for us, generate strong cash flows that we can keep redeploying in the years to come.
So talking about Fusebox, so Nazara recently.
Stocks see some broad-based gains ahead of the US Fed interest rate decision this week, but are off their opening highs. Power and realty stocks are the big gainers, even as IT and FMCG drag.
Bajaj Housing Finance lists at a price of rupees 150. That's a gain of near 115% over its offer price of rupees 70 per share. Chairman Sanjeev Bajaj says expects the industry to grow at a healthy 12 to 15% a year.
The government has removed the minimum export price for basmati rice, allowed sugar mills and distilleries to make ethanol from sugarcane juice and bee molasses, and upped the import duty on edible oils. Stocks swing to the cues.
SEBI has disposed of the NSE co-location matter on the grounds that there was not enough evidence to support collusion or fraud by the NSE officials, even though it notes failure on the part of the exchange on the co-location.
And gold prices are headed towards $2,600 an ounce, with the yellow metal already scaling to a high of $2,585. Experts believe high interest in the physical market should keep the precious metal well bid ahead of the all-important Fed meeting. Hello and welcome. You're watching Business Lunch here on CNBC TV18 in the Mumbai News Center. I am Hormis Patakia, and joining me on the show today is Vinny Motiwala. Vinny, good afternoon and welcome to the show as well.
Thank you so much for that, Hormas, and good afternoon to you as well. But not an exciting afternoon, right, for the markets?
It's not a very exciting afternoon, yes. But considering the kind of moves that we saw on Thursday, I guess it's almost par for the course, right? And you're expecting some bit of quiet moves ahead of the all-important.
Absolutely. I mean, given that we've seen that run-up, I don't think there's a case for much. We've seen all-time high levels just continuing for the Nifty. So it's going to be interesting to watch out for that.
Indeed. And let's take a look at how the benchmark indices are doing this afternoon ahead of this all-important US Fed meeting later this week. And absolutely at the flat line. We made a new high, mind you, in this morning, but could not sustain at those levels. So we are off the highs. At the flat line is the Nifty. The Nifty Bank, though, is also trading at the flat line as we speak. So it is both a quiet bit of a session. But the Nifty Bank, if you can say it's quiet because it's trading with gains of around 150 points. But more importantly, it's above the mark of 52,000. So that is an important level for the Nifty Bank to track, still almost around 1,300 points away from the all-time high levels, but continues to remain an outperformer. What's doing well in today's session are metals. Real estate is having a good day. So most of the sectoral indices are having a good day, barring FMCG and IT, but plenty of action in the broader markets, Vinny.
Absolutely plenty of action, and today the outperformance is coming in from that Nifty mid-cap side. You know, look at it, up 0.3% in trade as of now as well, Ormas. While small cap still a bit subdued, but interesting to watch out there. Now mid-cap, what are the names that are doing? Let's pull up Dixon Tech. That's buzzing in trade today. They signed an MOU with Asus to make notebooks. So that's something interesting to watch out for. 5-6% gain as of now in trade. We also have the rice stocks, or you look at a KRBL or an LT Foods. All of them are buzzing in trade today. And why is that so? The government has removed the MEP. So yes, though this is just a sentimental impact, but those two are buzzing in trade. We also have Lumax Auto. Now that has actually acquired a company which is an alternate fuel, so something like a CNG, hydrogen side, and that is something that works out well for Lumax Auto. So that is also something that will be buzzing in trade. We have the two new listings in the auto ang side, that is Cross as well as Tollens. Both of them managed to pick up pace after a subdued listing. So yes, Cross is holding on to gains of 7% as of now on its first day, as well as Tollens Tires, that's managing to hold on to gains of 5.93% as well. But what's interesting today is let's talk about Bajaj Housing Finance. That's what we're keeping an eye out on. And that's what we're going to begin with, because the new kid on the block, Bajaj Housing Finance, has made a stellar debut on other exchanges, listing at a whopping 114% premium to its issue price. Vamakshi is joining in with us to give us more of those details on the housing finance major. What is stacking up for his peers as well? Vamakshi, take it away.
Well, absolutely, Vinny. It's a stellar listing coming in for Bajaj Housing Finance, and no doubt there, and that is mainly on account of a strong franchise that the company holds, strong brand recognition as well, and also let's not forget that it is a AAA rated company. Even when you look at it in terms of its peers, the company has best-in-class asset quality, with the gross NPA at 0.28% and the net NPA at 0.11%. The coverage ratio too is best amongst peers, and in fact the company has the lowest credit cost in the entire sector. The company scores over peers like LIC Housing Finance, PNB Housing Finance and Canfin Homes over return ratios like net interest margin, which for the company stand at 3.9%, and return on asset, which stands at 2.3%. That said, the company's NIM, however, has been declining in the last few quarters, and that is mainly on account of rising cost of funds, despite having a higher share of higher yielding portfolio. The regional concentration is another bit of concern, because nearly 70% of the company's AUM actually comes in from the top 3 states. But that said, let's also look at how the company's valuation stacks up as compared to some of its peers. At the current market price, the company definitely trades at a significant premium to some of its peers, which actually trade between 1.7 times to 4.2 times. Bajaj Housing Finance, on the other hand, at the listing price of 150 rupees per share, the price to book stood at 6.84 times. The stock as of now is locked in the upper circuit of nearly 165 rupees per share, and with that the price to book has now increased to 7.52 times. So that being said, overall it is a very fundamentally strong company for sure, but the valuations are something that we will have to watch out for.
Well, those who received the allotment are surely laughing all the way to the bank without any need for financing at the moment. Vamakshi, thanks a lot for that. 135%. What more could you ask for a listing at a 70 rupee price? Now at 165 is Bajaj Housing Finance. In fact, let's listen into what Sanjeev Bajaj, the CMD of Bajaj Finserv, and Atul Jain, the Managing Director of Bajaj Housing Finance, had to say about the listing.
Relevant ones. We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry. And on the back of that, we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort.
We are a variable rate company. On our asset side, our assets are variable, which are largely linked to a floating rate, which is linked to our cost of funds, and the liabilities are also largely variable. So on a steady state basis, through the cycles, mortgage companies generally have a steady state margin. So we do not expect any impact on margins from the listing, whether positive or negative, because that was from a cost of fund perspective, because we had already been a highest rated domestic rated company, and our cost of funds are relatively quite competitive compared to the market. And with a variable rate asset size, the NIMs are likely to remain stable, like in case of all variable asset companies.
Okay, on that note, let's move on to our CNBC exclusive. The RBI Governor Shaktikant Das says that he doesn't see any downside risk to growth in India. Speaking to CNBC's Tanveer Gill, he added that one had to look at the long-term trajectory on inflation and India's growth to take the decisions for the economy. Take a listen.
All segments, all components of GDP growth are, the momentum is very strong. The only element, the only component which slowed down was government expenditure, both state, central government expenditure as well as expenditure of the state governments. Perhaps due to the fact that that was the election season in India. So going forward, I would expect the budgeted amounts will be spent by the central and the state governments, and then they will be able to catch up. So we are quite confident about the 7.2% growth which we have projected in our current year's assessment. And interestingly, international agencies like the IMF and the World Bank, which had earlier projected, they have upgraded. They are all at 7%. So we are reasonably confident that the 7.2% growth will be achieved this year. So it's not so much how the inflation is now. We have to look at, for the next 6 months, for the next 1 year, what is the outlook on inflation. So therefore, I would like to sort of step back and look at more carefully what is the future trajectory of inflation and growth, and based on that we will take a decision. The growth momentum continues to be good. India's growth story is intact. And so far as the inflation outlook is concerned, we have to look at the momentum, the month-on-month momentum, and what is the momentum of inflation, build up or moderation, either way. So what is the momentum of inflation trajectory in the coming months? So the outlook we have to look at. It has to be a forward-looking approach. So based on that, we will take a decision.
The RBI governor there in an exclusive conversation with CNBC. Now moving on to another important piece of news, the government has pushed the CPSE capital spend and aims for the dividend consistency as it works on finalizing new capital management guidelines for these public sector companies. Sapna Das is now joining us with more details. Sapna, tell us what sources are telling you on this.
Well, as far as the CPSE capex plan is concerned, well, the government has been very consistently reviewing their performance, and there is a very strong, kind of a strategy review that is ongoing, so to say. If you look at a couple of the companies, for example, NLC Limited and also Mazgaon Dock, apparently they have met over 100% of the capex aim that had been set out for FY25. Now, these are followed by some strong performers like NTPC, Power Grid, Hind Copper, and also a whole stack of OMCs, where the capex spend so far up to August has been around 40 to 60% of the aim that has been given. Now, overall, CPSEs have met around 32% of the overall target, which is around 3.41 lakh crore. But a quick word here, I would just like to add that if you look at the year-on-year capex outlay for the CPSEs, or how much they are expected to garner, that number is kind of tapered off. Maybe because the government itself has pushed up its central capex plan, over 11 lakh crore what they are sitting at, and plus this 3.41 lakh crore aim for the current financial year. So there could be a reason for that tapering off, so to say. Having said that, also in the overall context, it's important to now note that very soon the government will be coming out with its capital management restructuring norms for the CPSEs. The last major draft had come out way back in 2016. After that, there have been some additions to that. But basically, dividend consistency is what they're looking out for. If you know the basic norm, it's basically 30% of the PAT annually or 5% of the net worth. We'll have to wait and watch and see whether this rule is tweaked by the government going forward. But it's part of the 100-day agenda as well, so that's expected to be out very soon.
Absolutely, Sapna, we're watching out for that, and thank you so much for that update there. But on that note, let's take a very short break. When we return, we will focus on NSE as SEBI has disposed of the NSE collocation matter and more on the story on the other side.
Box and Paperboat apps. So what was the idea behind acquiring these two companies?
I think wherever there is core gaming IP, which we can kind of acquire and own, then we can evolve this IP over a long period of time. So Fusebox is building IP-based games. Kidopia is already a very well-established IP in the world of kids. I think our objective is to acquire assets which have gaming IPs and then keep building and monetizing them.
So the news came out that Nordwin has recently also acquired Comic Con. So with that, what can the comic fans in India expect from the next edition of the Comic Con now that Nordwin has acquired a complete?
Look, the attention of the youth is a very valuable commodity, and Nordwin's focus on esports and anything else that the youth is interested in becomes very relevant, which is why they acquired Comic Con. I think today Nordwin is focusing a lot on expanding Comic Con to many more cities and doing it on a much larger scale, and they will make announcements around that very soon.
It's a kind of a record year, so to speak, in terms of the stake sale that the promoters and PEs have done this year so far. Okay, this is the big number that we are talking about. 4.75 lakh crore is the total amount of stake sale which has been done. Promoters, PEs, as well as non-promoters. When I say non-promoters, someone like BAT gets included, where they sold 4% stake in ITC this year. So this has been the trend. In the last 3 years, it's been around 3.2 lakh crores. This year, Y2D, it's still 3 months are left, and we've already crossed 4.7 lakh crores. So maybe by end of the year, we'll be crossing 5 lakh crores in terms of the total stake sale which has been done by promoters, PEs, as well as institutional investors. So that's the kind of trend we've seen. Now, the big deals which have happened this year, of course, Interglobe Aviation tops the list. There were 2 large blocks by the Ganwal family. They've raised close to 17,000, almost 18,000 crores. Indus Tower was another large block. Vodafone sold a big stake and raised 9,000 crores in a single day. Emphasis, big block by the PE investor, and they raised close to 7,000 crores. And even in Bharti Airtel, the PE sold close to stake worth 5,800 crores. So these were the large deals which have happened this year. Vedanta, Ambuja Cements. Whirlpool was interesting. The parent sold a big chunk, 24% stake in Whirlpool India, and they rose close to 3,800 crores. So these were the top 10 deals in terms of size that I'm talking about, which has happened this year in terms of the promoters and PE stake sale. It's been a record year in terms of OFS and IPOs as well. I'll talk about the OFS first. In the OFS list, of course, the government, government companies top the list. Hindustan Zinc, there was a large OFS of 3,000 crores. NHPC and NNC India were the other two PSUs where the government sold via OFS, and they raised close to 2,400 crores. Aditya Birla Sun Life was another company where the promoters sold.
Welcome back. You're watching Business Lunch on CNBC-TV18. Let's move on to a CNBC-TV18 exclusive. And on the bitter boardroom battle between Religare and the Berman family, Executive Chairman of Religare, Rashmi Saluja, rejects allegations on illegal gains through ESOPs. Says employees who turned around the company have the right to get the incentives. Speaking to Ashmit Kumar in a rare media interview, Saluja defends the decision to delay clearance to open offer by the Berman family. Listen in.
How would you respond to some of the concerns raised, especially on the ESOP front, saying that what the ED is saying, the long and short, is that you as the executive chairperson of REL, you're giving yourself those ESOPs and therefore pointing at what the ED believes is an obvious case of conflict?
So what are the ESOPs? It is basically an incentivization to the employees. Is it the first ever any corporate people or the employees have got the ESOP? When and how the incentivization of the ESOPs take place? When I joined the company, the share price was close to 17 bucks, right? And as it is, did I get ESOP after the open offer? Did I get ESOP after September? Did any of the employee, did they get ESOP after in REL? No. Why are they here talking about my ESOPs today or my employees' ESOPs or our colleagues' ESOP today? In fact, nothing has happened after the open offer. It has all been done before the open offer, 6 years. And they have voted. REL is a listed company. Nothing can happen without an AGM. Nothing can happen. Every time the proposed acquirers voted for it, I'm very thankful about it because they realized our good work. Every shareholder realized the good work, and that good work was incentivized and rewarded.
Pending for a year now, why did we see a 12-month wait before we actually had an application going out to the regulators?
That's a question which you should be asking to the Committee of Independent Directors. And I am also part of the board, while I am also the executive chairperson of the board. That is because that it is the duty of any independent board or any responsible board to do the right thing. If that wasn't the importance of the board for scrutinizing all the things coming through the board was not important, RBI would not have actually made it a regulation that all the processes of the open offer would only and only come through the target company, so that the board can scrutinize. That is the first level of scrutiny.
Let me bring in the element here of, from a securities law standpoint, when we talk of SAST regulations, when we talk of open offer regulations, at least a few securities lawyers that we spoke to, they seem to suggest that as far as the takeover code is concerned, when you have a 25% threshold being breached, there is no filter for fit and proper candidate, that is an exercise that needs to happen, that 26% open offer needs to happen.
It's not an automatic situation,
That's the suggestion
Ashmit.
that fell.
No,
there is no provision for a fit and proper criteria.
So there are two things. Let me tell you one thing. Fit and proper has got nothing to do with that how much money do you have and whether that money can buy you the shares from the market. If that would have been there, then God save the countries. The only thing is the regulators of this country are very, very vigilant as the strong government it is. Committee of Independent Directors sent all those, whatever came to them, they sent it across to all the regulators, including RBI, and it is now with the RBI to take a call on it.
Moving on then, the SEBI has disposed the NSE co-location case against former executives including Ravi Narayan, Chitra Ramakrishnan and Ravindra Apte. The market regulator cites lack of evidence and has found no direct or indirect evidence of collusion or connivance. Yash is joining in with more details on this. Yash.
Well, big news came through for the National Stock Exchange of India. The market regulator SEBI saying that it has decided to close down its proceedings, close down its investigation in the co-location matter against the National Stock Exchange, as well as 7 of its former executives, including Chitra Ramakrishna, Anand Subramaniam, as well as Ravi Narayan. What was the co-location matter? Essentially, the matter arose in 2015 when a whistleblower complained to market regulator SEBI about certain brokers in NSE's co-location unit being given an early access and early entry into the servers of NSE, through which these certain brokers made big gains at the cost of other retail investors, at the cost of other brokers who were not in the co-location unit. As far as SEBI's investigation and its final order is concerned, why did it close this matter? What SEBI has said is that due to absence of sufficient material, the test of preponderance of probability failed to produce enough justification of any kind of connivance between the broker, that is OPG Securities, as well as the National Stock Exchange. Essentially, what that means is that SEBI's investigation did not get any evidence that there was an evident connivance between the brokers and the National Stock Exchange for this early access into the servers of National Stock Exchange. But this is one matter in the co-location investigation which has been closed by market regulator SEBI. There's another matter which is currently being fought at the Supreme Court of India between market regulator SEBI and the National Stock Exchange. We need to wait for an outcome or closure of that matter itself. But this matter closing today is very important since NSE is also filed for an NOC, a no objection certificate from market regulator SEBI for its much awaited IPO.
Okay, Yash, thank you so much for that. But let's take a short break. And up next, the former US President Donald Trump is safe after an assassination attempt. We get you more on the story after this break.
They raised close to 1,500 crores, and Glenmark was another deal. So these were the few large OFSs. Now let's come to the IPOs. It was a record year for IPOs as well. 15,000 crores plus, and we are still counting in for this year. Hexacom was the biggest IPO for this year. In April, they raised close to 4,200 crores. Aadhar Housing, Go Digit, MediAssist, eco-mobility. There were a lot of smaller companies as well, which have raised between 600 to 1,000 crores or 1,500 crores in this year. Gopal Snacks, Entero Health, Allied Blenders. The list just goes on. I've just picked up above 500 crore fundraising in the IPOs as well. So as I said, it's been a record year as far as the Ps and promoter stake sale. Almost at 5 lakh crores is what we've reached Y2D this year, and it's been a record year. So
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
At least currently is what's happening as far as crude prices are concerned. Now trading below $70 a barrel, and that's great news for airlines like yourself. And the ATF tailwind, I mean, how much do you factor in on account of that as far as margins are concerned now, given where we are?
The fuel prices, if you would have asked me the very same question 2 months ago, you
would have been
said,
different.
They jump up, what are you going to do and what's happening? So I think that's always the moment of the day, and today they're trending in this direction. That could change again tomorrow.
But what's your own expectation on where they could be?
I say that I'm in the aviation business now for the last 32 years. If I were to be able to predict the direction of the price of fuel, I would not be an airline CEO, but I would sit somewhere totally else. So that I would not be able to predict that. When it comes to ATF, I think we see some different dynamics. Some states have really reduced it. That has really had very positive effects.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
Welcome back. Now, former US President Donald Trump is safe after an apparent assassination attempt on him at his golf course in Palm Beach, Florida. Now, an armed man with an AK-style rifle was arrested by a Secret Service agent near the fence of the Trump International Golf Club. NBC News' Alice Barr has more details on this.
For the second time in 9 weeks, the FBI is investigating what it's calling an apparent assassination attempt against former President Trump. The former president was not hurt in the incident near where he was golfing at his course in West Palm Beach, Florida. One man is in custody. 3 senior law enforcement officials briefed on the matter tell NBC News that man is 58-year-old Ryan Wesley Ruth. This comes after authorities say a Secret Service agent spotted and fired at a suspect just outside the golf course fence line while the former president was golfing 300 to 500 yards away.
What they do is they have an agent that jumps one hole ahead of time to where the president was at. And he was able to spot this rifle barrel sticking out of the fence and immediately engage that individual, at which time the individual took off.
A witness reported seeing someone run out of the bushes and into a black Nissan and snapped a photo. Sheriff's deputies then tracked the license plate and quickly stopped this black Nissan, taking the suspect into custody.
In the bushes where this guy was is a AK-47 style rifle with a scope, 2 backpacks which were hung on the fence that had ceramic tile in them, and a GoPro.
The incident raising new questions about securing the former president and Republican nominee. The Secret Service faced sharp criticism after former President Trump survived an attempted assassination at a Pennsylvania rally in July. The former president saying he is safe and well and will never surrender. Vice President Harris saying she had been briefed on the situation, was glad he is safe, and, quote, violence has no place in America.
And with that, we'll wind down this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in to CNBC TV18. And we'll leave you with the visuals from the star-studded Emmy Awards. Historical drama series Shogun bagged 18 Emmys, while the comedy series Baby Reindeer and The Bear won 4 awards apiece.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for Phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars, or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier. But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. It's a green looking screen right now. Midcaps and Nifty Bank, they have made a comeback, and the Nifty, after recovering from the lows, has stayed at those levels of 25,400. Interesting times and a lot lined up on the show.
That's right. Markets near and flirting near all-time high levels once again. So nothing much to complain about. Quite a lot lined up on the show. Let's start off with the top headlines. Stocks see some broad-based gains ahead of the US Fed interest rate decision this week, but are off their opening highs. Metal and consumer durables are the big gainers, even as financials and FMCG drag. Mid-caps fare better.
Bajaj Housing Finance lists at a price of 150 a share, and that's a gain of near 115% over its offer price of 70 rupees. Chairman Sanjeev Bajaj says he expects the industry to grow at a healthy 12 to 15% a year. Peers Canfin Homes, Aavas Financiers see profit booking today.
KRBL and LT Foods surge over 6% after government removes the minimum export price for basmati rice. Decision taken in light of adequate domestic availability and trade concerns.
Lumax Autotech surges over 6% after it acquires 60% stake in Green Fuel Energy Solutions for 133 crore rupees, forays into green and alternate fuel segment. Okay, so it's a lot about the mid-caps today. It's a lot about new records again. So there was a peak that was touched, but again, we came off from the highs. We are attempting a recovery yet again. So the Nifty is up 40 points. And we have the mid-caps as well, which are up around 260 points as we speak. The Bank Nifty too is contributing to the gains that we are seeing right now. So it's an all-round improvement across the board on the markets. Nifty Metals, the top gainer, CPSE index doing well. So a lot of them have made a comeback right now. It's only the FMCG space which is seeing some profit booking, but that's understandable because of the run that those stocks have seen so far. But looking decent so far, Vivek.
That's right. So talking about FMCG, very good run. So seeing a bit of profit booking, also some slightly moderate, negative news, so you could call it, on the back of the fact that there has been a customs duty hike for one of the key, import materials as well. And that is also something that has taken a little bit of the sheen of the rally that we saw in the FMCG space. Quite a lot lined up in terms of what exactly is moving around in the session. And Hormaz is standing at the wall to take us through the top mid-caps that are moving in the session.
Well, if it's a day of record highs, the broader markets can't be left behind, and there are plenty of movers within the broader markets on the gaining side as well in today's session. And I can't not talk about BSE because that is growing from strength to strength, now 16% higher for BSE at the highest point of the day. A very sharp surge seen in the last few minutes of the trading session. Dixon Technologies as well moving towards 14,000 now, 6% higher there as well. And the two Adani Group companies, similar gains almost of around 6% each after the order that it won from Maharashtra. Moving on then, some other stocks in focus, and a slew of block deals took place earlier this morning. India Shelter Finance 7% down after that block deal. Edelweiss had a block deal on Friday. It had one today as well, off the highs of the day, but still 6.5% higher. And Easy Trip as well, off opening highs after a block deal that took place 0.5% lower currently. Some stocks that are reacting to some positive brokerage commentary, and Stovecraft is the one that stands out among them, 5% higher on the stock. Macrotech as well, Nomura initiating coverage there, 3% higher, and positive reaction seen in Shilpa Medicare as well. Stocks that are doing well on the back of heavy volumes in today's session, the rice-based stocks, KRBL now 6% higher. HEG and Graphite both are doing well in today's session, as is Triveni Engineering and Thermax after that order win, gaining on very strong volumes. And lastly, some underperformers, unsurprisingly, from the FMCG space, as Vivek was just highlighting. LIC Housing is one of them. Emami, Honasa and Varun Beverages almost at the lowest point of the day, seeing losses of anywhere between 4 to 5%. Back to you guys.
All right, so those are some interesting names that are moving around in the broader markets, a sector or a segment which is doing really well otherwise today. Thank you so much for that. Let's welcome Ashish Kyal from Wave Strategy Advisors for a technical check on the markets. Ashish, do you think Nifty will attempt that peak again, and we are going to see higher levels from here on today itself?
Hi, afternoon to you and all the viewers. If you look at Nifty, we saw a very sharp rise on the last Thursday expiry, which took majority by surprise. And then post that we are consolidating, and the consolidating range is very narrow. If you look at it, we have been moving hardly in a range of around 100 points. So overall outlook is bullish. I think it's a good consolidation. Any break above today's high around 25,450 will continue the uptrend, expecting a target of around 25,600 on the upside. And the support for Nifty comes around 25,200 odd level. So the overall outlook is bullish. We can clearly see sector rotation happening. We can see different stocks participating, and that's a very positive sign. What is good is also looking at Bank Nifty. Bank Nifty is taking the charge here. Bank Nifty is up by nearly 250 points already, and it's giving a very strong movement on the upside. Where Nifty has touched a lifetime high, I think Bank Nifty is still substantially away from that. So Bank Nifty is going to take a lead from here, and I think Bank Nifty should head towards the level of around 52,600 levels. And that's the overall view on the index. And if I have to talk about stock specific, HEG has shown a very strong bounce back in today's session after a lot of consolidation of past few months. And I think HEG is headed on the upside towards the target of 2310, and one can maintain a stop loss of 2075 on this stock. And the other stock is Vedanta. We can clearly see over past 3-4 days a constant bullish candle formation happening there. The stock is most probably going to break 480 levels, which is the resistance level. It looks like momentum is strong, and we will break par that and we might reach towards 520 on the upside for Vedanta, and one can maintain a stop loss of around 450 levels on the downside.
Thank you so much, Ashish, for giving us both your index views as well as your individual stock picks for the day. Let's now slip into a short break. The management of Pokerna joins us next to discuss their business outlook and the way forward for the company.
Been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
So does the low-cost positioning then change as well as you move towards international travel, as you move towards adding things like business class and loyalty programs? Does that cost position at the back end start to change as well?
Well, it depends a bit, Shireen. What is your definition of low-cost position? We are determined to keep our cost leadership. And, today, 2 days from now, flying to a city is still 3,000 rupees. So for that, we need to keep that cost leadership out there. And we're not making any changes on that product, on that setting. But on top of that, we start to build what we are doing. So if you see our business class, which we are going to introduce, we do that in what we call the nation's busiest and business routes. 20 a day between Delhi and Mumbai, 14 a day between Delhi and Bangalore, 13 a day between Delhi and Hyderabad.
You said that these decisions are taken when you believe that the revenue advantage outweighs the incremental cost that you will have to take. Can you give me a ballpark estimate of what, for instance, the business class introduction is going to mean as far as revenue impact is concerned when you see a full rollout across the 12 routes that you spoke of? What is the international expansion going to result in terms of a revenue bump up as well going forward?
So the business class will be introduced in November of this year. It will start on Delhi-Mumbai. Of course, we get one plane. It will start as we fly 20 a day. One plane is not enough. So by the end of this calendar year, the entire Delhi-Mumbai operation will be fully business class equipped. So all our 20 flights a day, maybe one or two, but all the 20 flights is our ambition. The objective clearly is we start in November of 24, and by the end of 25, all these 12 routes, all these 40 plus planes which will operate this route are in operation.
I got asked right after the debate, do you think we should do another one? And I said, hell, every day we should do another one.
Investing.
Welcome back to Mid-Cap Radar. Hormuz just a while ago highlighted about how exactly BSE today was surging in the session, seeing a very strong up move. The stock, Bombay Stock Exchange, that's listed. Along with that, if you also have a look at MCX, Multi-Commodity Exchange, that stock too is doing very well in the session today. So exchanges today are doing quite well. IEX is largely flat. But as promised, we have the management of Pokerna. Remember, the stock has surged more than 120% in 2024 so far. It has reported a decent set of Q1 FY21 earnings. For FY25, the management expects revenue growth of 15 to 25%, and margins is expected to be maintained at 30 to 35%. To discuss this and more, we are joined by Paras Kumar Jain, CEO of the company, who joins us now. Good afternoon, Mr. Jain. Thank you so much for joining us. First up, like you mentioned, could you reiterate your targets as far as FY25 is concerned? Could you break it up for us in terms of the two divisions? And also, when do you expect profitability to revive? We understand that the US business currently is undergoing a bit of pressure.
Thank you for having me on the show today. So coming to your question, quartz business, as I told on your previous show also, we expect 30 to 35% growth coming in. So we expect largely the growth coming in the bottom line. And also we expect a close matching growth coming on the top line as well. Granite business, which is another part of our company, we don't expect a larger growth. We expect the division to be muted. But we think that overall the consolidated would make up for whatever we are losing in the granite part, because we believe that the quartz business is poised for good growth in FY25.
Okay, so Mr. Jain, will the decline in granite be as much as you saw in Q1? It was a 64% decline that you saw. Are you seeing any sort of improvement in that particular segment?
We are not seeing much improvement in granite, so I don't think that the numbers would be better than what you saw in the last quarter. But overall, the business sentiment on the granite side has been very muted. But we believe that on the quartz side of it, the things are pretty strong. So we think that will make up on the quartz side.
Mr. Jain, in a recent analyst meet, you've actually highlighted two products, two systems. The first system is the Kreos system and the other system is the Chromia system. And you've also highlighted by the end of this month, you're expecting them to come on stream. Number one, can you tell us, what is the kind of capex you've incurred, to roll out these two new systems? Along with that, what is the visibility as far as the revenues are concerned, and when does the revenue actually kick in?
Okay. Kreos system is expected to be commercialized in Q3 of FY25, which is the next quarter. And Chromia system is expected to be commercialized in Q4 of FY25. So let me give you a little background on Kreos and Chromia. So Kreos is basically a new system of distribution of material which helps us to produce more exotic designs than compared to the existing distribution system what we have. And Chromia system is for making high digital printing on the slab. So both these technologies are expected to be ready by the end of this year, because in Kreos, after the commercialization, there's going to be some R&D phase as well. So we don't expect a larger revenues to start rolling out from these two in this financial year. We expect mostly the contributions to come in the next financial year. So we are expecting some incremental net value realization on this product. So I don't have the right numbers yet because the R&D is still in progress.
But is there a ballpark? I know if you can't give us the exact figure, some number that you have in mind that you'll be able to achieve next year. This year, as you said, you won't be able to get the full benefit, but in FY26, what kind of numbers are you looking at from these two systems?
So we expect that Kreos would give you a 10 to 15% incremental realization on the product side of it. Chromia is more of a digital printing, so we will have to see how because Chromia has also got to do with this producing thinner slab, which is again a different market. So Chromia would help, both Kreos and Chromia would help us to also get into a new product segment. So there the realizations are completely not yet anticipated. So it will take some time to give me some color on the Chromia side, but on Kreos, between 10 to 15%, we are expecting the realizations to improve on those product sides.
Okay. Mr. Jain, let's talk about EBITDA margins. You're expecting it to sustain in the range of 30 to 35%. And also you did mention that shipping and freight expenses continue to remain quite elevated. As of Q2, what is the kind of impact you're seeing from shipping as well as freight rates? Has there been any delays because of the supply chain situation? And do you expect Q2 to see an impact on margins because of these above mentioned developments?
See, the freight expenses continues to be challenging because of the situation both with the Red Sea and the container allotment, primarily coming because of the increased demand in China, which is taking most of the containers, and then there are shortage in the other market. So there has been delays in terms of recognizing some revenues because the materials are at ICD and we are not able to recognize those revenues in the last quarter. Situation has improved a little bit, but not completely, because the freight rate continued to be high. And the customers sometimes try to push out the deliveries because they think that the freight may come down in the next month or so. But overall, the situation on the freight side is continuing to be challenging as it was on Q1. And overall, we think that even on the import side, because we have a bit of imports also coming in for raw materials coming from different parts of the world, predominantly Europe. So we are also ending up paying a little more than what we usually pay on the freight side. I should say not little more, but much more. But overall, because we have the ability to pass on the freight on the export side, so we are able to pass on that to the customers. So we expect that the EBITDA margins will not be impacted. And in fact, with the product mix and the new designs what we have developed in the recent past, we expect the EBITDA margins to be better than what we are currently assuming in 30 to 35% range.
Mr. Jain, can you give us a sense of how much higher are those import costs? What percentage of your total raw materials are being imported? And in the export market, are customers delaying their decisions? If yes, how much of sales are getting impacted because of that, specifically in the US, because you had spoken about some demand concerns there earlier?
Yeah. So basically, see, if we were paying $500 for a container from Europe in the past, now we are paying over $2,000 and sometimes $3,000 also. So that's the amount of difference what is happening on the freight side of it. On the export side of it, we don't have most of our customers delaying, but there are very few customers who are delaying the deliveries. And I think we've been able to maneuver that also. So I don't see major challenges on the delivery side at this time.
Mr. Jain, one last quick question. Any update on the sale of the apparel business? Q1, you said you are looking to divest that business.
Yeah, so we have not yet got any offer which is to the management's acceptance. So we are continuing to look at that business to scale it down as much as possible. So in fact, since it's a discontinuing operation, there are hardly any expenses out there. So we have brought to a level where we don't really incur a huge amount of cost every month.
Okay. All right, Mr. Jain, thank you so much for joining in today with all those details and the outlook on the business going forward and what's happening with the export markets as well. That's Pokarna Limited. The stock is up 120% this year, though today we are seeing some red on the stock. Let's slip into a short break. When we come back, we'll get you more on the markets and we'll focus on Lumax Auto Tech in our mid-cap spotlight segment. Stay tuned for that.
Well, it's not going to happen because Donald Trump confirmed today he's not doing another one. So give him a little break. That one left a mark. He said a lot of weird stuff too, so I'm just going to say that. And that was you tell me you had this on your bingo card, and they're eating cats, He refused to condemn the January 6 criminals who attacked the U.S. Capitals and our democracy. But in the anger that he got into as the poise and dignity and the sharp retorts from Vice President Harris, he lost some of that composure in there. And when he was referring to those rioters, and you go back and make sure you'll see this again, I'm sure, he said, "We did nothing wrong." He didn't say they, he said we.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com.
The market may have had a very topsy-turvy ride through this year en route to record high levels, but for the IPO market it has been smooth as a highway. Now that's because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57, but the differentiating factor as of today is the fact that the IPOs of 2024 have raised more money than all of 2023 put together. Now according to this data from Prime Database, the IPOs of 2024 have so far raised almost 62,650 crore. That is well above the 49,400 crore that companies raised in the primary markets last year. Now this list includes IPOs that were
Welcome back. So the markets are picking up pace. Usually talk about mid caps on the show, but you have to look at Nifty. It's up almost 60 points right now. And some of these names, the likes of Reliance Industries, you have L&T, there's Infosys, HDFC Bank, these heavyweights are the ones which are supporting the Nifty from the lower level. So those names should come up for you on the screen. L&T is at the day's high. You'll get Infosys as well, and HDFC Bank is the other one, which is helping the gains on the Nifty that we are seeing right now. Mid-caps continue to outperform, up around 250 points on that index as we speak. But this is our special segment, Mid-Cap Spotlight. Winnie will focus on Lumax Autotech. It is buzzing in trade today. Companies forayed into green and alternate fuel segment. Winnie, tell us more.
Absolutely. The stock is buzzing in trade today, and it's trading at a one-month high level as well, up as 6.5% as of now as we are looking at it. Lumax Auto actually forays into this green and alternate fuel segment. They've acquired a company, 60% stake in a company that is Green Fuel Energy Solutions for 133 crore rupees. Now, this is almost a majority stake that they've acquired in this company. What does this indicate for Lumax Auto? One, opportunity to expand as well as diversify in the range of solutions that is provided in automotive OEMs. Green Fuel has a good clientele as well, a marquee clientele, whether you look at a Maruti Suzuki, that's there, Tata Motors, Volvo, Eicher, that's VECV, that is of Eicher as well, that is also one of the clients. That's a big clientele, they can leverage a lot of opportunities, both the companies together. And the CNG market itself, the vehicle market for alternative fuel, that has been growing at a very fast pace. The government is focusing on such things, and that is why this could see a good up move for Lumax Auto going forward as well. Green Fuel Energy Solutions has managed to see a revenue of around 214 crores. Will be interesting to watch out for the synergies that will come in for Lumax Auto going forward.
Thank you so much for that, Winnie. Stock high by almost 6.5% after that acquisition. But moving on, a whole host of pharma as well as healthcare stocks today are buzzing in the session on the back of brokerage notes. Ekta joins us to tell us more.
Well, I'll start with Shilpa Medicare. Antique has initiated coverage with a buy and a target price of 1,300 odd rupees. They expect key growth drivers to be new launches in API coupled with GLP-1 products, scale-up of existing non-oncology API with new market approvals, exclusive CDMO supply agreements for 4 years with a pharma company, Unicyve, and capacity building up in higher revenue generating businesses such as biosimilars and biocare. Their estimated revenue is expected to grow around 34% CAGR over FY25 to FY27 and drive EBITDA margins to 35% by FY27 according to Antique, and offer an EPS CAGR of over 100% on a low base. Max Health is in focus as well because they did announce an acquisition of 64% in JP Healthcare for an EV of around 1,600 crores. Now, Kotak has written on it. They have a reduced and a target price of 875. They view the deal positively. This is given the attractive Noida market, and they would closely monitor Max's plans to ramp up to 1,200 beds in Noida over the next few years. The stock, according to them, is trading at around 31 times FY26 EV to EBITDA. Lastly, Kotak has also written on Concord Biotech. They've downgraded the stock to reduce target price 1950. According to them, the top line growth over the past few quarters was driven by low margin formulation segment, and they do not expect any major delta on overall earnings.
Thank you so much for that, Ekta. A whole lot of stocks from the healthcare space in focus on the back of those brokerage notes. But with that, it's all the time we have on this edition of Midcap Radar. Having a look at the market, just before we wrap up, Nifty, higher by 0.2%. Like we mentioned, some of the exchange stocks today doing very well. So BSE, that is Bombay Stock Exchange, up almost 15%. Also have a look at MCX, that is another stock that we mentioned doing very well. On the other side, or on the flip side, after the listing of Bajaj Housing Finance, some of the other housing finance companies today are seeing quite a bit of profit booking. So if you look at names like Canfin Homes, LIC Housing Finance, some of these stocks today have taken it on the chin. Even a PNB Housing Finance, for that matter, on your screen, down over 5%. But with that, it's a wrap on this edition of Midcap Radar. More stock-specific action when we return.
Have not listed yet as well. Now, September traditionally has been a good month for IPOs, and the 7 issues so far have already raked in over 9,000 crore rupees. But August has been the best month of the year so far in terms of funds raised, as over 17,000 crore rupees have been raised by 10 IPOs that month. Now, how have these IPOs fared? Now, 5 of these issues have returned 100% and more from their IPO price. Now 30 of them have gained anywhere between 25% to 99%, and only 7 such IPOs are currently trading below their IPO price. It shows you the kind of market that we have been in. Now unlike 2021 and 2022, there have been no giant sized IPOs this year. While 2021 had Paytm, which looked to raise over 18,000 crore, LIC surpassed that in 22 with a 21,000 crore issue. Now Bajaj Housing Finance, which has now become the talk of the town for the bids it received, is the largest IPO of the year with around 6,500 crores, followed by names like Ola Electric, Bharti Hexacom, and of course Brainbees. Now 45 IPOs this year have delivered positive returns to shareholders. Now among them, Jyoti CNC is the top performer, with the stock more than tripling from its IPO price. The recent listings like Unicommerce and Premier Energies also find a mention, considering the strong moves they have seen just a few days after they listed. Now among the few IPOs that have delivered negative returns so far include Capital Small Finance Bank, Popular Vehicles, among other such names. However, none of these names have any substantial downside from their IPO price, such as a 50% or more from their IPO price. It's been a big year already for IPOs, and we still have 3.5 months left. Now at this pace, it will not be a surprise if by the end of the year we end up doing a story saying IPOs have raised 1 lakh crore so far this year.
I want to draw you into what's happening on the technology side and link this to what we just saw with the CrowdStrike outage, and that basically brought the aviation industry globally to its knees on that particular day. And 48 hours were mayhem, I would imagine, for you and your team. What's been the big learning from that experience, and how much is tech being prioritized now as you position yourself as a global airline?
Yeah. No, what happened here is indeed a global outage in one of the systems. Yeah, that's my first word I learned in Hindi. We have this beautiful jugaad in order to deal with some of these challenges.
What does jugaad mean to you, by the way?
No, in this case it meant that people moving from a check-in through machines to a manual check-in. I will make sure that out of the 3 lakh customers which were supposed to fly on the day,
Very good afternoon. You're watching Your Stocks in the Mumbai News Studio. I'm Ekta Batra, and with me today is Vinny Motiwala. Well, it's turning out to be a session which is seeing some amount of positive uptake at this point in time. So we've managed to see some amount of traction on the upside. 25,404 is currently where the Nifty is at, and we have the mid-cap index, which is up around 0.4%. It's a lively market now, so I'm sure we have a lot of queries considering that the markets are at record highs. Hi, Vinny.
Hi, and good afternoon to you as well, Ekta. So finally, at least some recovery that we're seeing coming in the markets, and that's going to be interesting to watch out for, because mid-cap, that's also performing well. Today, the Nifty mid-cap has seen a good run-up and picked up pace since the get-go. So keeping an eye out on that. Nifty mid-cap up almost 0.4% and trade near the day's highest point. But I think we'll get started with all the queries right now as well.
Yes, absolutely. In fact, joining us this afternoon, we have Asta Jain, who's here with us from HEM Securities on the fundamentals. Ruchit Jain, who's joining in from 5paisa.com to talk about all of the technicals that we have. Afternoon, Ruchit, as well as Asta. Well, before we kick off the show and the queries, Ruchit, just wanted your thoughts in terms of the technicals. We've seen a little bit of an uptake and recovery which has taken place. Would you buy into this?
Yeah, hi, very good afternoon. Well, the broader trend still remains positive. There is no doubt about that. The kind of upmove that we witnessed during last week, this upmove has been supported by a broad market participation. The only near-term hurdle is around 25,500 level, which is the retracement of the previous correction. And I think once the index manages to surpass that, then we could see this upmove continuing towards 25,700 to 800 zone in the near term. So yes, the outlook remains positive. So any kind of intraday dips that we are witnessing are getting bought into. So certainly one can look for buying opportunities even at current levels or on any kind of dip towards 25,350 to 300 range. So the stop losses would become the risk reward ratio would become favorable over there, and one can expect levels of 25,500 followed by 25,700.
Okay, all right. Well, let's get in our first query then. We have Prashant, who's on the line from Hyderabad with an investment question. He wants to invest in Tata Motors and NMDC. And Prashant, welcome to the show. Tell us.
Thank you. I'm actually looking to invest 1 lakh each into NMDC and Tata Motors. Basing on the charts, I thought they have corrected quite a bit. So is it a good time or should I still wait for more correction?
Okay, what's your investment horizon? How long can you hold on to these investments for?
6 months to 1 year.
Okay, all right, 6 months to 1 year. Let's get a fundamental as well as a technical view. Ruchit, let's head over to you for a technical call on NMDC as well as Tata Motors first.
Yeah, so I'll start with Tata Motors. I know in last few trading sessions, we have seen a decent price-wise correction from its high of 1180. And the stock has good support around 950 mark. So I think the price-wise downside seems to be very limited from here. There could be some time-wise correction once this price-wise correction is over. But if you're looking from 6 to 9 months perspective, then these are good prices to go long on Tata Motors. So I think, yes, you can use this dip as a buying opportunity over here. And NMDC also, if you see within the metals name, major support for the stock is around 200 to 190 range. So here I would advise a buy on dip approach. In case if you get that price of around 200 kind of range, 200 to 195, I think that would be a good price to create fresh longs in NMDC as well.
I'll come to you on the fundamentals. How is Tata Motors looking as well as NMDC? Recently, we did have, that note that came in from UBS as well on Tata Motors. We saw a bit of a decline. So what is your word on the fundamental side for both these stocks?
Hi, good afternoon to all of you. So talking about Tata Motors first, on the fundamental side, we are really excited by the new product launches from this counter. Although we have seen due to downgrades, sharp correction was there in the stock prices, but I think that is a real good opportunity to take entry into the counter. So we are expecting this counter to move back again because we believe that the company is well placed to cater the future opportunities present in the automobile sector. So we are positive on the Tata Motors in the longer term. Maybe in the shorter term, some dip can be expected. So that will be a better opportunity to buy. We are recommending buy on this counter with a price target of 1150 to 1200 at the initial levels. Now talking about the NMDC, what we have seen that rise in the steel prices was really helping the company in showing the strong surge in the volume. So the company is really showing its performance on the basis of the movement in the commodity prices. But now we need to see how these prices will going ahead affect the company's financial performance. So for NMDC, we are expecting some more dip to come. So we are recommending not to buy at the current level, let some more dip come, and in fact one can wait for the upcoming Q2 results also. After that one can make an entry into the counter, although we are expecting this counter to move again on the northward trajectory with a price target of 250, but making entry at this point is not advisable. Maybe some dips can be expected around the 200 level, and then one can make the entry.
Okay. Thanks so much for that, Asa. Prashant, I hope you got your answer over there, both on Tata Motors as well as NMDC.
Yes. Thank you. Thanks a lot.
Okay. Thanks so much for calling us, Prashant. But let's move on. And Shashank is writing to us from New Delhi. And this one is on Zomato. Now, Zomato obviously has seen a amazing up move in the last 1 year as well. Last 6 months, there's no stopping that. Shashank is holding 1,500 shares of Zomato at a price of 183 rupees per share. He wants to know whether he should continue to hold this or sell. Ruchit, what's your view on this one?
So there's no doubt that overall trend still remains quite strong. Any kind of intermediate declines that we are witnessing since last 2 or 3 quarters are getting bought into. And the important support for the stock is that recent higher bottom has now shifted to 240, which is much more above his buying price. So I would recommend to continue to hold on to the stock. We could see some further up moves going ahead. Any corrections, I think look out for support of 214. Only if that is breached, then you need to worry or you need to reassess to whether you should exit over there. But otherwise, continue to ride this trend.
Okay, all right. That's on the technicals. What about you? Asta, we've discussed Zomato ad nauseum on the show because everybody always has a query on Zomato. But nonetheless, what's your fundamental view on this particular stock?
So we are positive with this Paytm's acquisition of, the movie ticketing business, and we are positive on this counter. We expect this counter to move ahead in the northward trajectory because we believe that the stock can show the price targets of around 300 and 315 odd levels. Now talking about the fundamentals, because of the acquisition of this business, the company will be showing strong performance, maybe 2 quarters ahead in their margin we can see, and their going out business I think will definitely help the company in posting strong numbers because now company has plans to launch the app by the name of District. So I think all these efforts taken by the company will really help in showing strong financial performance. We are positive on the counter, recommending the price target of around 300 to 315 at the initial levels.
Okay, all right. So that's on Zomato. As you can see, that stock has just gone through the roof, 165% just in the past 12 months odd. But now let's get in another question. We have Manohar, who writes to us from Mumbai. He holds 600 shares of BHEL, which he's bought at an average cost of around 212.5. So he's a long-term investor, wants to know what to do, whether he can hold these shares for 2 to 3 years. He's currently sitting on a profit of around 34,000 odd. He's doing well on this particular counter. Asta, give us a sense in terms of what your call would be on this.
So we are really excited about the strong order book this company is having, and they are getting new orders. So we are believing that going ahead also the financial performance will continue to remain strong, and on that basis we are positive on this counter. We are recommending hold on this counter, as well as buying on dip strategy can also be applied. Initial price target can be set at around 305 odd levels.
Okay. Right. Okay, keeping an eye out on those levels over there for BHEL. But let's move on to the next query. And this one is coming in on Vedanta. Today we've seen all these metal names also buzzing in trade. Now, Uday Kumar is writing to us from Bangalore. He's holding 1,800 shares of Vedanta at a price of 473 rupees per share. He wants to know whether to hold or sell Vedanta. As of now, today, the stock is a bit subdued. At the current levels, what's your view on this one, Asta?
So we are positive on the Vedanta. We are positive because we are expecting the company to show the $10 billion in the EBITDA, and their upcoming capacities will really help the company in posting strong numbers. In fact, company has a plan and they are going on the trajectory of deleveraging themselves. So definitely a positive point from the financial front, and their cash flows will help the company in expanding capacity and future expansions because they have a strong cash flow. So we are positive on this counter, looking after all these points, recommending a hold. Initial price target which we are giving to this counter is a small, which is 505. So not much upside from here, but definitely we would like to see the results, and then we can also upgrade our price target. But for now, it's 505 price target which we are giving to this counter.
Okay, all right. And Ruchit, what about you, Vedanta?
So in last 3 months, the prices have oscillated within a broad range of 475 to 400 on the lower side. So this just seems to be a time-wise correction within a broader uptrend, because in this entire consolidation phase, the 100-day support has not been breached. So technically, it seems that the short-term trend for the stock is sideways, but the mid to long-term uptrend remains intact, because in this consolidation, we have not seen any kind of volume-based selling or supports getting breached. So if you can keep a patience of about 7 to 8 months or 9 months, so I think this is a good stock to be in. Continue holding this stock.
Okay, all right. So that's the call coming in on Vedanta. We have Ramchandran Ravi, who writes to us from Chennai. He holds 50 shares of Cyient, which he's bought at around 950. He's sitting on a fabulous profit there. And he's a long-term investor, wants to know what to do, whether he should hold on or sell this particular counter. Well, the current price is over 2,000 odd rupees, and the buy price was 950. It's a cool 60,000 rupees profit that one is sitting on this one. What would your recommendation be, Ruchit?
So he has a good margin of safety. Recently also, when the stock price corrected along with the broader correction in the IT names, we did not see the stock going below 1600 mark. So I think the support base has been shifted to 1600 for mid to long term, and that too is quite above the buy price. So I think there is a good margin of safety since the broader corrective phase has been done. The price-wise corrective phase has been done. I think the stock should gradually recover and move higher towards 2400, 2450 kind of range. So my advice would be to continue to hold the stock. Can review again once the stock comes around 2400 to 2450.
Okay, and what about you, Asta? Cyient?
We are recommending hold with a price target of 2360 to 2370 at the initial levels. So talking about this counter, the TCV is really very strong at $182.5 million. So I think that is good, and they are showing strong recovery on the back of good deal wins. So in the future, we are positive on this counter. The only caveat is that how the other economies, especially US and European economies, behave, that we really need to see. But meanwhile, one can hold the counter for the price target of 2360.
2360 is the target price, so keeping an eye out on that one. But on that note, let's take a quick break and we'll answer more of your stock-related queries on the other side. Stay tuned.
240,000 people have been flying. And I was writing 200, not precisely, but I was writing 240,000 manual.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
So Nazara is focusing on its for FY25 its growth primarily through gaming. So what are the plans for the next few months or next quarter?
As you know, core gaming has been an important focus for us. Recently, we acquired 100% stake in Kidopia. We also acquired a studio in the UK called Fusebox. So I think we are very rapidly expanding our core gaming business, which should also be a high margin business for us, generate strong cash flows that we can keep redeploying in the years to come.
So talking about Fusebox, so Nazara recently acquired Fusebox and Paperboat apps. So what was the idea behind acquiring these two companies?
I think wherever there is core gaming IP, which we can kind of acquire and own, then we can evolve this IP over a long period of time. So Fusebox is building IP-based games. Kidopia is already a very well-established IP in the world of kids. I think our objective is to acquire assets which have gaming IPs and then keep building and monetizing them.
So the news came out that Nodwin has recently also acquired Comic-Con. So with that, what can the comic fans in India expect from the next edition of the Comic-Con now that Nodwin has acquired a complete stake?
Look, the attention of the youth is a very valuable commodity, and Nodwin's focus on esports and anything else that the youth is interested in becomes very relevant, which is why they acquired Comic-Con. I think today Nodwin is focusing a lot on expanding Comic-Con to many more cities and doing it on a much larger scale, and they will make announcements around that very soon.
It's a kind of a record year, so to speak, in terms of the stake sale that the promoters and PEs have done this year so far. Okay, this is the big number that we are talking about. 4.75 lakh crore is the total amount of stake sale which has been done, promoters, PEs as well as non-promoters. When I say non-promoters, someone like BAT gets included, where they sold 4% stake in ITC this year. So.
Welcome back to Your Stock. Still with us, we have our experts for today, Asta as well as Ruchit, who will be answering all your stock queries. But let's move on to the next one. And Ramesh Rajgopalan is writing to us, and he's from New Delhi. He's holding 50 shares of Garware Technical Fibers. He's purchased them at a price of 100 rupees per share. So clearly, he's bought it a while ago, because right now the shares are trading at 3,951 rupees per share. He wants to know what should he be doing with this. Ruchit, first your view, and then we'll come to you as well, Asta. Should the viewer continue to hold this? Clearly, bought this, I believe, in the 90s sometime?
Yes, maybe quite a long time ago, and the kind of profit that is sitting and the kind of the buy price that he has, I think he did not worry much about the stock for mid to long term, even from current levels. The overall trend looks quite positive, even if I look at the recent last 3-4 years of data. So the support base for the stock for short to medium term has now shifted to 3,500, and I think the stock has potential to rally high towards 4,600, 4,500 kind of range going ahead. So still the broader trend continues to remain positive. So I think you can continue to hold on to this stock.
Okay, all right. And what about you, Asta? Have you looked at the fundamentals of this particular stock?
Yes, and fundamental seems to be very strong because they have posted strong numbers in Q1 FY25. The company being into the technical space, their bottom line was up by 8%. What is positive about this counter is their debt to equity ratio, because debt is really low and their debt to equity ratio is on the lower side. So we are positive on this counter because their margins are also very strong with a 19% operating profit margin. And in fact, valuation wise also, they are not highly priced. Although they are exceeding the industry PE multiple of 30, they are standing at 33 PE multiple, but still we believe there is a scope of more upside in the counter. So recommending a hold with the price target of around 5,000 something odd levels.
Okay, all right. The price target of over 5,000 odd rupees is what you're recommending.
I beg your pardon, it's not over 5,000, it is over 4,000. So apologies. 5,000 of over 4. Yes, price target of over 4,000 please. Yes.
Okay, all right. Okay, so not too far from those levels at this point. But anyway, let's get in another query now. We have Dheeraj, who writes to us from Hyderabad. He holds 30 shares of Phoenix Mills, which he's bought at around 3,352, sitting on a profit on this one as well. And he's asking what to do with this counter. He wants to know what to do, whether to hold or buy more shares of this. What's your recommendation, Astha? First, on the, on a counter such as this, it's within the real estate space. It has commercial real estate as well. What is your sense in terms of incremental upside?
So their Q1 performance was good because there was an increase in the rental income. And what we have seen that the more footfalls in the mall. So that is really helping the company in posting strong performance. Their ARR have improved significantly. And in fact, occupancies have also improved significantly. So I think this counter is looking positive to us. Going ahead also, we believe that it will continue to perform strongly. We are recommending hold on this counter. Initial price target can be set at around 3,900 to 3,950 odd levels.
Okay, keep an eye on those levels there. But Richard, what's your view also on Phoenix Mills? Is that something exciting? And given that the viewer at the purchase price versus the purchase price, the viewer has seen an increase, would you suggest that they continue to hold, buy or sell? What's your view here?
So I would recommend to hold, but I would also recommend to keep a strict stop loss below rupees 3,200, because if I am looking at the monthly chart setups, then they are quite overbought. Momentum readings are there because in last few months itself, the stock has seen a significant run up. So I think whenever we see such overbought setups, the stock either goes through some kind of price-wise correction or a time-wise corrective phase. Now, the recent correction, we have not seen any kind of volume-based sell-off, and hence the chances of time-wise correction is high. So that chance remains intact till it is above 3,200. So 3,200 remains a crucial support for the stock. If that is broken, then book the losses and exit from that. So we can hold on for now for a pullback move towards 3,800, but with a 6 stop loss below 3,200.
Okay, all right. Well, let's get in another query now. We have George, who writes to us from Chennai. He holds 800 shares of Morpen Labs, which he's purchased at an average price of around 29 odd rupees. Just look at the kind of profits people are making within the mid caps. That's really the power of compounding which stands out. He wants to know what to do, whether to hold or sell or add more at these current rates. Well, the stock is is close to the best levels that it's seen in the past 1 year odd. It's rallied significantly as well. From that perspective, Richard, do you think that it's time to probably take some profits off the table? As you can see, it's up around 60% plus in just 3 months.
Yes, I think no question of adding more over here, but I would suggest to book partial profits at least. And within the pharma name, if you want to stay invested, then that partial, the amount which you get from that partial profit can be shifted to large cap pharma names such as Sun Pharma, where I think the stability would be there even in case of some volatility in the market. So my recommendation would be to book partial profits over here in Morpen Lab and shift to Sun Pharma from the large cap space.
Okay, shift to Sun Pharma from the large cap space, from the profits you actually book in terms from Open Labs. That's the word coming in from Richard. But Astha, do you also have a similar view for this one? And, maybe large cap is something that you would look at in the pharma side.
So the reason behind such a strong movement in the stock prices is, I think, the financial performance, because more than 90% jump, if I remember it correctly, they have posted in the bottom line. So strong financial performance, their balance sheet is not at all leveraged. And the most important point is that as they are a category leader in the 6 APIs, and they are like into the medical devices also, like glucometers, blood pressure monitors. So all these segments are really working very strongly for the company, and they are exporting to 80 countries. So I think going ahead also, the market of all these medical devices is really expanding day by day, and posing a company a very strong opportunity to cater. So I think the company will going to perform strongly in the future also. My idea here is to stay invested. Initial price target can be kept at around 100 to 115 odd levels.
Okay, 100 to 115 levels. You're saying continue to hold this one. That's on Morpin Labs. Keep an eye out on this one. Today a bit subdued in trade. Let's move on, and we have Ashok Khanna who's writing to us from New Delhi. He's holding 1,000 shares of Linde India at a price of 592 rupees per share. Clearly, this is one of those other names as well, Ekta, again, where we're seeing a lot of compounding coming in and coming into play, because 8,000 rupees, 8,200 is what it's trading at right now. Now, he wants to know whether you should continue to hold this for further 3 to 5 years, or maybe look to sell. Asta, what's the word on this one?
So I think partial profit booking we are recommending on this counter just because of the valuation. Now, if we talk about the valuation, price to earning multiple is really surging high, much ahead of the industry multiple. So on that basis only, we are recommending to book partial profit and remain holding the partial stock with a price target of around 9,000 at the initial level, because the company has performed strongly. So around 16% growth they have posted in the bottom line for Q1 FY25. So positive on this counter, but just due to the valuation concerns, recommending to book partial profit.
Okay, valuation concerns, so book partial profits. That's the word coming in for Linde India. But that was the last query for today. So thank you so much, Asta, as well as Ruchit, for joining in with us on the show and solving all our viewers' stock-related queries. And do remember that you can always email us the queries, and we will address them with our experts every day, as well as stay tuned in for Closing Bell to take you through the last hour of trade. Goodbye from Ekta, myself, as well as the team who put this show together.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
Barely a few months ago, this spot was bustling with shoppers and your shopping experience was incomplete without being shoved, jostled around or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for Phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that
Almost 100 points down on the Hang Seng.
The US economy is not in a recession right now.
25,027 is the 20-day moving average for the Nifty.
ABFRL coming out of the FNO ban. That's normally a stock that you should keep on your radar.
You've got the Nifty, which is up about 35 points.
We are more or less on the cusp of the long-awaited rate cutting cycle.
This is the starting point for any future asset quality improvement that you will likely to see.
120% on top of what they sold stock at.
We expect double-digit contribution from our exports to our revenue.
Nifty's just about hovering around the 25,400 mark.
We expect steady credit growth at 12 to 15%.
Unfortunately, not here to talk good about myself or the work that the whole management has done.
As far as the CPSE capex plan is concerned, well, the government has been very consistently reviewing their performance. We are attempting a recovery yet again, so the Nifty is up 40 points.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it's a decent day once again. The day so far came up earlier, and we are going to cover the next 1 hour all the way into closing here this Monday afternoon. This is Closing Bell. The market's up 40 points, and there is a lot to talk about. It's mostly about individual stocks. At a broader macro market level, there isn't very much except, of course, the big Fed decision. I'm Prashant. With me, my colleagues Rima and Surabhi here, and Nigel is joining us from the newsroom. 4 guys, hi, good afternoon.
Hi, good afternoon. Prashant, you said it. I mean, if you go by the headline index, you'd imagine it's been a nothing kind of a day.
Yeah.
But then you start looking at the moves, whether it's Bajaj Housing Finance or the other housing finance stocks that are falling sharply, or BSE. Well, we've got fireworks on the street, I guess, in these individual names.
No, absolutely, and it's all about individual names, as you said, that's essentially going to be the focus over the next 60 minutes or so. But just 2 or 3 quick takes on what's happening. We are approaching very quickly to the upper band of. Essentially, it's an ending diagonal pattern. That gets us to a range of between 25,500 to 25,600. That base, and we're getting to it, right? We're almost about 25,400 now. Another 100 points, you get into that resistance zone. So that is point number 1. And by the way, this is happening even as we made a new high last week, and we are headed into the Fed decision that is on Wednesday. Look at what's happening on the Nifty Bank as well. It's, signs of life over the last many days. It took out its 61.8% retracement of the entire fall. And then the next level is the 78% retracement before you start to look at all-time highs for the Nifty Bank as well. At least try and project all-time highs for the Nifty Bank as well. So that number for the Nifty Bank is 52,565. Again, we're not very far away. We're at 52,150 here. Another 1%, and that's about it. Then you sort of look at, and there's room here, unlike the Nifty, which of course has been making newer highs, correcting and then sort of making newer highs. For the Nifty Bank, we've not made a new high for a while now. Sectors which are doing well, PSC stocks are doing well. Energy, the fair bit of overlap between government companies and lots of energy PSU companies. Metals as a sector is doing well. We'll talk more about this. Overall market breadth, despite all of this, is 1:1. At least on my last I checked on the NSE, on an overall basis, equal number of stocks which are higher and equal on the other side as well. There you go. It converged some time back after sort of a very positive advanced decline when we started, and it's sort of come together, both those lines. So lots to talk about, but more individual names rather than anything really top down. Rima.
Well, even banks are doing pretty okay. The Nifty Banking Index is up nearly about 0.5%, and maybe the comeback of the FIs in the cash market. So most of these, FI-dominated stocks in the banking names are doing well. Large cap private sector banks like HDFC Bank and ICICI Bank, you've got strength of close to about 0.5% in many of the individual banks. But on expected lines, it's Bajaj Housing Finance, right, which has captured everyone's imagination for the last 1 week. And what a bumper listing it's had, 135% higher now on that.
And I guess it's here where, because, no one's sort of denying the fundamentals, the pedigree, right, which is why those listing gains have been held absolutely intact. There's been no dithering, no selling at, on the immediate pop. The question obviously is what happens from here. Can the franchise keep building on the strength? We'll discuss this. We'll, of course, talk about what the management had to say after the listing as well. But look at the impact this listing is having on a lot of other spaces. Now, the promoter entities, first of all, Bajaj Finance and Finserv, both of them have seen some profit taking today now that the event is out of the way. In fact, Bajaj Finance and Finserv, they're down between 2 and 3%. Some of the biggest Nifty cuts are coming in on these stocks. And then you look at, excuse me, then you look at, that's the chart on Finance and Finserv. Now let's talk about a CanFin Homes or a PNB Housing or an LIC Housing, the related peers. And that's where a lot of money is interestingly coming off. You'd imagine a rub-off effect on the upside, but that's not what's happening. These stocks are under a lot of pressure. So that's one play to talk about. The other interesting facet in today's trade is actually rice. Because of this, all kind of sort of restrictions which were there, that price limit that was there on export of basmati rice, that's been done away with. And that's having a major impact on a lot of these rice manufacturers, KRB, LLT Foods. Look at Kohinoor is up in double digits and some of the other names as well. So enough to keep us busy over the next 1 hour. Nigel.
Well, that's right. Let's get a quick check, though, on the markets since we're holding well in the green. I think Mitesh is back with us. Hi, Mitesh. Good afternoon. And tell us, it's been that sort of a day where the dips are getting bought into. But what's the outlook? We're holding at this 25,400 odd mark.
So, I think, Nigel, the outlook isn't turned negative. In fact, it's a sideways market on the Nifty. But as I said, I think the strength could be coming in the Bank Nifty. And that should eventually propel Nifty higher. So I still maintain that we will possibly test 25,500 and then even get to about 25,650. But the focus should be more on financial, because that is where I think Surabhi was also highlighting at the beginning of the show. That is where the action is. Plus, that is where the underperformance of the last few months is getting covered. So, that's the space to look at from a trading point of view. Axis Bank is something on my buy list today. That's a buy with a stop at about 12.15 for targets of 12.65. And the other one which I like is a buy on City Union Bank, but that's a slightly conditional kind of a buy, because I want to see the stock price get past 172, 173. It's trading around 169, so want to wait for the breakout and then buy it. So buy about 173 with a stop at 167.5 for targets of 185.
Okay, thank you very much for that. We'll connect in just a while. But let's begin closing bell by talking about some of the new listings of the day. We've had 3 of them. So Bajaj Housing Finance has had a dream debut. The stock is still up 135%. Lots of FOMO. People who didn't get allocation are now, being up to, buy some stake. But other than that, you also had Cross and Tollin Tires make their debut today. We have Hormus joining in for more. Hormus.
You know, it's all about Bajaj Housing, isn't it? And it's almost felt like the other two listings just got left in the background because of the kind of listing that Bajaj Housing had. Now, at a 70 rupee IPO price, the stock listed at 150, currently in an upper circuit at 165. And it shows, it justifies the kind of bids that it received as well, right? You mentioned FOMO, 3.24 lakh crore worth of bids received in the IPO, which is around 6,500 crores. Shows you the kind of demand that it had. Now, at the IPO price, it was still slightly expensive compared to most of its peers at 3.19 times price to book. Now that has gone significantly higher considering the listing that it has had. At a listing price of 150, that valuation multiple goes up to 6.8 times price to book, and at the current price that goes up to around 7.5 times price to book, which when you compare to its second best peer, which is Aptus Value, comes to around 4.2 times price to book. So shows you the valuation gap as well now between these housing finance companies. The other one was Cross, that was also that had a subdued listing today, listed at its IPO price of 240, then saw some gains. At the highest point of the day was up 10% higher at around 270, 271 rupees. Now, it's a relatively smaller company compared to its peers when it comes to RK Forgings, Jamna Auto, Automotive Axles. There's a revenue of around 620 crores annually compared to its peers, which have the revenue ranging between 2,000 to 4,000 crore rupees. And even on the margin front, it's slightly lower compared to RK Forgings. Even Jamna Auto, only Automotive Axles has a lower margin compared to Cross. And the last one being subdued, another subdued listing was Tollens Tires, also listing at 227. The IPO price was 226, currently trading with gains of around 9 to 10%. It's a leading tire and tread industry manufacturer. It exports to around 40 countries is what the company has highlighted. And it has two verticals, which is a tire manufacturing and a tread rubber manufacturing vertical. So all in all, the subdued listing for the other two, they have some gains from the IPO price, but the day well and truly belongs to Bajaj Housing Finance.
Okay, thank you very much for that, Hormus. Let's straight away start the discussion with Bajaj Housing Finance then. Dipan Mehta is also joining in. Dipan, I remember you telling us that you had also applied for Bajaj Housing Finance. Did you get lucky?
Actually, my wife and my mother got an allotment.
Well, it's all in the family then.
Yes, all in the family. But I think it's been a good issue for us. And in fact, we got an allotment in the HNI category, which was one of the most heavily subscribed category. And over there, the allotment was 2,296 shares. So I mean, it's quite easy to have such a huge allotment in Bajaj Housing. And then to see the price at circuit, I think it's a great day. What can I say?
The smile, I think, says it all, right? It's quite palpable. That feeling of eureka, because I guess it's there were enough memes doing the rounds in the last 2-3 days on how to pray for an allotment. So I guess your prayers have been answered, Deepan. But I think jokes aside, I think the bigger question now is that here we have a stock which is probably already trading at what I think 6 times. I saw some forwards that were saying that okay, even if you look at 3-year out earnings, even then it's at about 3 times 3-year forward earnings. So the question is, what's now left on the table? No one's doubting the business, the pedigree, and the possible run rate here.
Yeah, that's right. I think right now, I think scarcity value is playing up, and a lot of investors may be averaging, or they may have bought to get a toehold in the company on listing. But I think give a few quarters, few months down the line, price may settle down, company may report earnings, you may see higher earnings, and that may compress the price to earning, price to book multiples as well. But look, I think, it's taken the space of HDFC, and it's the largest housing finance company, standalone housing finance company listed. And that's certainly going to attract a lot of investors who want exposure to that particular investment theme or segment within the NBFC. So it'll always trade at a premium. Its holding company, Bajaj Finance, has always traded at a premium. So I think that, you would have this outsized outperformance or outsized premium valuation going ahead as well. And management sounds very confident about the growth going forward. And end of the day, amongst all the segments of the NBFC, one has to realize that the housing finance companies are in fact the safest in terms of NPAs and those credit costs because of the way they lend and the security which they have. So it's always better to have some exposure to this segment. And being the fastest growing, the largest company, certainly I think it will merit a lot of attention and investor interest.
But would you chase the stock now? If someone's not got allotment, they want Bajaj Housing Finance, would you buy it at current levels? Because at some point of time in the next 3 years, supply is also going to come in the market. The promoters have about an 88-89% stake, so they will have to bring it down to 75%. So supply will come, which typically, sometimes at least, does put pressure on the stock. So would you buy it at current levels? Oh, wait.
No, I think it's very expensive to buy at these levels, and tomorrow the price may be even higher. So the risk return profile doesn't favor you. If you're an investor like we are, then remain invested at best. Look for opportunities at correction, and corrections do happen. I think look at what happened to Ola Electric. I mean, that was also another stellar listing. Stock went up significantly, and now I guess it's off. I think 15-20% from its high. So these things happen, and you may get an opportunity, a stock-wise correction, overall market correction. But these are good listings. These are great quality businesses. Steady secular momentum can be expected for several years down the line. So from that point of view, always have an eye on such businesses, such companies, and if they offer a good entry point on some occasion, then that's worth grabbing with both hands.
Deepan, hi, good afternoon. Exchanges are doing well. And we all, of course, there was a flutter of excitement on Friday evening, was it, right? When that SEBI news on NSE, that co-location matter came, and a lot of people who were holding NSE shares were kind of hopeful that, well, this clears the path for the IPO. But it's not as simple, because actually, why don't we sort of hear from Yash, who's spoken with people who've been sort of, tracking this closely, people in the exchange as well. Does the SEBI sort of clearing one matter clear the pathway for the IPO of the exchanges itself? Yash filed this report earlier.
Well, big news came through for the National Stock Exchange of India. The market regulator SEBI saying that it has decided to close down its proceedings, close down its investigation in the co-location matter against the National Stock Exchange, as well as 7 of its former executives, including Chitra Ramakrishna, Anand Subramaniam, as well as Ravi Narayan. What was the co-location matter? Essentially, the matter arose in 2015 when a whistleblower complained to market regulator SEBI about certain brokers in NSE's co-location unit being given an early access and early entry into the servers of NSE, through which these certain brokers made big gains at the cost of other retail investors, at the cost of other brokers who were not in the co-location unit. As far as SEBI's investigation and its final order is concerned, why did it close this matter? What SEBI has said is that due to absence of sufficient material, the test of preponderance of probability failed to produce enough justification of any kind of connivance between the broker, that is OPG Securities, as well as the National Stock Exchange. Essentially, what that means is that SEBI's investigation did not get any evidence that there was an evident connivance between the brokers and the National Stock Exchange for this early access into the servers of National Stock Exchange. But this is one matter in the co-location investigation which has been closed by market regulator SEBI. There's another matter which is currently being fought at the Supreme Court of India between market regulator SEBI and the National Stock Exchange. We need to wait for an outcome or closure of that matter itself. But this matter closing today is very important since NSE is also filed for an NOC, a no objection certificate from market regulator SEBI for its much awaited IPO.
Okay, one done, one to go, but I think the one which is yet to come, or which is yet to be cleared, is perhaps the sort of bigger matter. Look at the BSE stock, for example, right? BSE is jumping about 15-16%. Remember, whenever NSE makes a debut, it will be on the BSE, and like the BSE is listed on the NSE. So 17-18%. I'm not sure, if I don't see any other sort of reason why the stock should be up this much. But actually, MCX is the other commodity exchange that's up about 6-7% as well. This is a quick valuation comparison for these exchanges on a FY25 basis. Look at BSE, look at NSE. NSE's I think we've taken NSE price at 5,500 rupees per share. It's about 26 times FY25 earnings. BSE comes to you at about 46 times. If you jump 1 year forward, 38 for BSE and about just under 20 times for the NSE. So, I mean, there is, of course, a big difference in terms of valuations on between where BSE is trading at and where the NSE in the unlisted market is trading. Of course, when you make it to once it's listed, there is the liquidity premium, and it's much easier generally to monetize your holding, etc. So that is always there. But even then, there is a big difference out there. MCX 60 times this year and about 48 times next year forward earnings. Deepan, I don't know if you own sort of NSE shares or you have BSE in your portfolio, but just your thoughts here.
No, we don't have, as a disclosure, any investment in any of the exchanges, although I have been contemplating on MCX. MCX is in a unique position where I think the options trading in the commodities is just about picking up. And, that could be a big upside for MCX. Also, at some point of time, if the regulator and the clearing corporations permit, movement of capital from the capital market exchanges, BSE and NSE to MCX, then that could provide a big upside because MCX trades much longer hours than BSE, NSE, and those margins can be utilized to generate options volume on the MCX. So of all the exchanges listed, I'm most positive on MCX. The high price earning multiple notwithstanding, and they're going to save technology costs as well, now that the TCS platform is completely stabilized. But yes, I think, NSE's listing will be a big moment for all the exchanges, and they will take the valuation from NSE. Don't go by that picture which says 25 times on listing. I'm pretty certain, it'll go the Bajaj Housing or the Ola Electric way, even higher for that matter. It's a fabulous exchange, great wealth creator. And it's had its issues in the past, but that's the past. And now I think the future for NSE is phenomenal, given the kind of bull market which we are seeing. And a lot of the new products also have been very successful.
Okay, all right. Hi, Deepan. Good afternoon and good to see you in. What about Dixon Technologies? One would have said the stock is expensive at 10,000, then it went to 11, 12, and now it's at 13,000 plus. And today it's one of the top gainers, up close to 7%. View on the stock?
Yeah, as a matter of disclosure, we do own the stock, thankfully. That's at least something.
But right. What would you all do right now? Would you all build onto the position?
I'm just watching the screen. Nigel, I'm just watching the screen. I mean, all I can say is you can't explain these kind of moves. Yeah. I've seen bull markets in the past, and it's just my experience to remain invested. And, positive news keeps on coming into Dixon. So, what forecast will you make? If every now and then you're going to get new contracts for new manufacturing, so you're going to keep on upgrading your EPS. And look, it's a very narrow space, and investors wanted exposure to such electronic development, these ECD companies, what they call. And it's a unique position. Largest company benefits from PLI, and very widely owned and very widely covered as well. What I think is happening, my theory is that it's one of the stocks which a lot of mutual fund managers and portfolio managers also own. And incremental capital is just flowing into these companies. We also do some PMS schemes. Whenever we get fresh capital, you don't really have an idea immediately. So you just buy the stocks which you're already owning. And anyway, there's scarcity of liquidity in Dixon. So that's the reason why you're seeing the stock price move up the way it is. I think valuations, you just cannot justify these valuations.
Well, finally, all the names have come through, right, on the computer hardware PLI scheme and the manufacturing that the capacities they're putting up there, because now we know it's HP, it's Asus. So these are the kind of brands that Dixon is tying up with for that hardware scheme. Got that. Deepan, before we let you go, there's a fair amount of F&B play going on in the market. So there's sugar, there's alcohol, and there are rice. All these stocks are up on one or the other policy measures. Rice, of course, we've been discussing this because now that whole restriction on basmati exports with the minimum value being, $900 and something, that's been done away with. And, sugar is getting more and more favorable policy responses. The blending being allowed for ethanol, and now, also ENA is an area that they can tap into once again. So your thoughts, and, even some of the alcohol stocks for that matter, something like a Radico Khaitan, United Spirits, they're all up and about today. So your pick, sugar, alcohol, or rice, or stay away from all three?
Oh, no, it's party time. And the stock market also is rewarding companies, which have got some positive news flow. But, jokes apart, I think the prospects for sugar industry certainly improve with this new direction from the government. End of the day, sugar have always been highly cyclical, and we were hoping that ethanol production would stabilize the earnings. And there were some glitches, there were some exemptions which were taken away, but now they have been restored. and they have great flexibility when it comes to the feedstock. And this will get immediately reflected in the earnings of sugar companies. So very positive on the sugar space. I think, right from Balrampur Chini, a dark horse could be Bajaj Hindustan. I think all of these companies will report exceptional earnings 2-3 quarters down the line. And there's a scope for PE re-rating as well. On the Alco-Bev companies, I think all of them are pretty expensive, well-priced, well-discovered. I'll just wait for a correction over there.
Okay, Dipan, we'll leave the conversation here. Thank you very much for joining in. Lumax Autotech also continues to rise. It's now moved to the day's high, 10% gain. The company, remember, has forayed into green and alternate fuels segment. They've acquired a majority stake in a company called Green Fuel Energy Solutions for 133 crore. So it's got the street quite excited. We'll slip into a very short break on that note. We'll come back and continue conversation with on the markets on the other side with Nikhil Rungta from LIC Mutual Fund.
Up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
Does the low-cost positioning then change as well as you move towards international travel, as you move towards adding things like business class and loyalty programs? Does that cost position at the back end start to change as well?
Well, it depends a bit, Shireen. What is your definition of low-cost position? We are determined to keep our cost leadership. And, 2 days from now, flying to a city is still 3,000 rupees. So for that, we need to keep that cost leadership out there. And we're not making any changes on that product, on that setting. But on top of that, we start to build what we are doing. So if you see our business class, which we are going to introduce, we do that in what we call the nation's busiest and business routes. 20 a day between Delhi and Mumbai, 14 a day between Delhi and Bangalore, 13 a day between Delhi and Hyderabad.
You said that these decisions are taken when you believe that the revenue advantage outweighs the incremental costs that you will have to take. Can you give me a ballpark estimate of what, for instance, the business class introduction is going to mean as far as revenue impact is concerned when you see a full rollout across the 12 routes that you spoke of? What is the international expansion going to result in terms of a revenue bump up as well going forward?
So the business class will be introduced in November of this year. It will start on...
Okay, welcome back. So markets up 35 points, 25,400 nearly on the index. So not done anything since we started on this program from 2:30. Nikhil Rungta is Co-Chief Investment Officer at LIC Mutual Fund. Nikhil, good to have you with us here on Closing Bell. Thanks for your time. Prashant here. Could you, we were discussing Alco-Bev companies before we took that commercial break. I see that you own Allied Blenders, a fairly recent sort of addition to the listed space in that sector. Can you talk us through your kind of thesis without sort of talking about the company if you don't want to, and why do you think this is a good place to be in? Lots of stocks have re-rated here actually over the last 2-3 months or so. Go on.
Hi Prashant, thank you for having me again. So I won't talk about the company, but on the sector we are bullish, and we have added a few names in the sector across the board. We are bullish on this primarily because we believe that the demand scenario is changing. A lot of political interventions which were happening are improving in this particular segment, and also from the geopolitical angle, from the country-specific perspective as well, we believe a lot of things are improving in this particular sector. So we are hopeful and we are bullish on these sectors that demand scenario actually is very good. India now is coming out as a very big consumer rather than just the manufacturer. So we are actually looking inwards from various sector perspective.
Nikhil, afternoon. This is Rima here, and thanks so much for joining in. What are the other sectors that you like right now that you're bullish on? And particularly wanted to get your thoughts in on exchanges. Do you own any of the exchanges?
So, Rima, good afternoon. Last time when I was here last month, I told you that we like consumption, pharma, healthcare, hotels, power, and discretionary consumption specifically was a structural growth story. We continue to like those segments. They are giving good returns as well as are defensive in their own segments. In terms of exchanges, yes, we do like them, but given the valuations which are there in this particular sector, probably we will be slightly wary. Last month, if you see our holding, we have some holding in these exchanges.
Okay, so yeah, I guess some of them are really powering through, going up and away. So just to talk about your take on the automotive space, because I noticed specifically in some of the small cap strategies, there is a fair amount of exposure to auto ancillaries. So Nikhil, what's the strategy there? And there's so much of sort of buzz now with EV, ICE, etc., hybrids. So how are you playing the whole auto theme?
So on the auto side, we believe auto ancillary will give better returns over OEMs. If you see in the auto segment, in the OEM segment, we are more bullish on two-wheelers over passenger vehicle, and that is being reflected in our portfolio as well. On the ancillary, why we are more bullish? Because what we believe is the aftermarket which is there is primarily part of these ancillary companies, and also emerging themes which are coming out in the picture, be it electric vehicles or any other, the charging stations, everything comes out in the ancillary space. So we are more bullish on the ancillary. We believe that the opportunities available in auto ancillaries are significant. OEMs, what you have to play are, there are limited number of OEMs which you have to play, and everyone have those OEMs. So where can you differentiate as an asset manager? Auto ancillary is where we believe we will differentiate for our investors.
Okay, all right. Hi, Nikhil. Good afternoon and good to see you in. This is Nigel on this side. You know, at one point of time, when you talk about these ERW companies, these tubes makers, there was only one company everyone looked at, APL Apollo Tubes. And that stock did very, very well. But if you see from the recent peak, that's come off considerably. And the smaller players, JTL, High Tech, on a lower base, they are able to deliver growth. And they also have levers in terms of the EBITDA per ton. I've noticed that JTL is one of your investments in there as well. So your view on this space, and what kind of headroom does it have to re-rate from here on? Because barring APL Apollo, the other stocks, well, they're quite reasonably, in terms of valuations.
Correct. So, hi. What I would like to tell you without naming the companies, when these entities came into the market, the larger ones, the earlier ones, when they came, people were not ready to give them even a 20 multiple. And they were trading at 13, 14. Now they are trading at 40, 50 multiple or 35 to be precise. Similar is these smaller entities in this particular sector, which are trading in the range of 13 to 15 PE multiples. So there, what we believe is 20 should be minimum, which should be given to these guys. And if things pan out as they are expected, then they should also trade at a valuation of around 30, 35 like the larger players. What we believe is in these entities, given where the market is, given where the valuations are, the downside protection is significant in these smaller entities because the valuation at which these guys are trading at is very low compared to the larger ones. There you have significant amount of, the margin of error is very small in these larger entities compared to the smaller entities, and hence we are bullish on the smaller ones.
Okay, no, got that. The other one that I think we should talk about is Zomato. I think it's a sort of key name in your portfolio. Now, of course, in the large cap side of things, the Swiggy IPO is also going to come. I mean, I think the papers are being filed this week from what reports are telling us. Once that one comes in, what do you suspect happens? I mean, do you think already, I mean, off market, you're hearing all kinds of valuations and why that should trade at 30, 40 times higher because where Zomato is at? What would you do as a Zomato holder when Swiggy gets listed? Nothing at all, or you would diversify a little bit into that one as well?
So I won't talk about this individual script, but what I would like to tell you is like the valuation which is going on in the market is company specific, depending upon the business model. Like even for this entity, the priorities changed when it started buying Blinkit, and hence it's part of our portfolio as of now. Given that when Swiggy comes, what type of business model, what type of valuation they ask for specifically, that is when we'll take a call whether Swiggy can be part of our portfolio or not. I mean, right now what the valuation are going on is in the private market domain. When it comes to public market domain, the valuation is altogether different. I mean, in private market, you have just 3-4 buyers and couple of sellers. In public market is the entire stock market, which is the buyers. So you need to give the valuation which is required by the public rather than just 3-4 guys. So we'll have to wait and watch what type of valuation and business models we give presence to the investors.
Okay. Finally, Nikhil, before we let you go, we noticed quite a few of your portfolios. Obviously, I have HDFC Bank as one of the top holdings, and you also have some other players like Shriram, I believe, among the others, the bigger ones. So just leave us with your approach to BFSI. Today is a big day. It's all about Bajaj Housing Finance. And it tells us, right, the market is still willing to go out and pay top dollar for good BFSI franchise. So what part of it do you like?
So see, first is in terms of lenders, we like NBFCs over banks because of the rate cut cycle, which will creep in very soon. Second, in terms of lenders and non-lenders, we like more of non-lenders, specifically the insurers, the wealth managers. So that is where we are playing out as of now. In banks, we are waiting for some green shoots, which will come in picture very soon. So there we have an issue of deposits. Your deposit growth is struggling. You have an issue on your CD ratio, which is coming off. So those lot of things are playing out on the banking side. Your margins might be under pressure once this rate cut cycle starts. So NBFC is what we are bullish more on over banks, and on the banking side, we like to stick to just a few of the larger names where we see lower downside.
Okay, Nikhil, thank you very much for joining in. That's the view from our Alpha manager for the day. By the way, PVR is a stock which is moving up. It's otherwise had quite a dud year. Year to date, it's only given a return of about 2%, but this month it's moved up close to about 12%. Perhaps it's riding on the success of 3-2, but PVR, there you have it. In 1 month, 18% higher for PVR Inox. But there's another important story. Now, sources suggest that NTPC Green Energy is likely to file for an IPO soon. Vivek joins in with the detail. Vivek.
Well, that's right. This is going to be a very important development as far as NTPC is concerned. There could be significant, value unlocking that could be witnessed. What we understand from our sources and inputs from our Delhi bureau is that NTPC Green Energy, which is the renewable energy arm of NTPC, will most likely go in and file for an IPO soon. Remember, we've already gone out and reached to the management. So far, we are yet to receive a response. Remember, this is largely in line with what the management commitment has been. The management has said that they intend to go ahead and list the renewables business by the end of calendar year 2024. And remember, in FY24, NTPC parent or the standalone entity had transferred close to 2.9 gigawatt consisting of 15 assets of the renewable energy capacity for 340 crore to a subsidiary. Now, in the Q1 con call as well, Q1 FY25, management, actually refrained from taking specific questions on the renewable business. They said that they will answer all of the queries, once the listing process gets underway. Now, talking about the renewable energy business itself, what is the kind of capacity? Renewable capacity of NTPC is close in the range of 3.3 to 3.6 gigawatt, which is currently operational. So installed is 3.3 gigawatt, under construction close to 5.9 gigawatt, and under pipeline, which includes the bids one as well as bilateral tie-ups, are in the range of 10.8 gigawatts. What is the company's stated ambition as far as the NTPC green energy is concerned? And this will be important given the fact that the valuation will be based on these particular metrics. FY26 renewable capacity addition targeted at 11 gigawatt, FY27 20 gigawatt planned. By 2032, the company expects to go ahead and add renewable energy capacity addition of close to 60 gigawatt, and along with that 14 gigawatt of pumped hydro capacity to be commissioned. What is important to be seen is what will be the kind of dilution and what will be the eventual valuation of NTPC Green Energy, once it does go ahead and file for the IPO and the price band is announced.
Okay, all right, got it. Thanks very much. So big plans there. And a lot of projects lined up for commissioning as well over the next couple of years. Thank you for that, Vivek. We have to take a very quick break. But as we take the break, here's some good news for you, our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new Android app. You can get instant access to breaking news, in-depth articles, analysis, and financial updates at your fingertips. You can download the CNBC-TV18 Android app now from the Google Play Store. We'll take a break and come right back.
Of course, we get one plane. It will start. As we fly 20 a day, one plane is not enough. So by the end of this calendar year, the entire Delhi-Mumbai operation will be fully business class equipped. So all our 20 flights a day, maybe one or two, but all the 20 flights is our ambition. The objective clearly is we start in November of 24, and by the end of 25, all these 12 routes, all these 40 plus planes which will operate this route are in operation.
I got asked right after the debate, do you think we should do another one? And I said, hell, every day we should do another one. Of course. Well, it's not going to happen because Donald Trump confirmed today he's not doing another one. So give him a little break. That one left a mark. He said a lot of weird stuff too, so I'm just going to say that. And that was you tell me you had this on your bingo card, and they're eating cats, He refused to condemn the January 6 criminals who attacked the U.S. capitals and our democracy. But in the anger that he got into, as the poise and dignity and the sharp retorts from Vice President Harris, he lost some of that composure in there. And when he was referring to those rioters, and you go back and make it.
Welcome back. Well, a few individual counters have seen a huge open interest build up, and there's a possibility because it's crossed the MWPL, that those stocks could come into the FNO band. So the ones that you should be tracking is LIC Housing Finance, Birla Soft, as well as GNFC. All three of them should be on a radar. There's a possibility that it comes into the F&O band. So keep an eye out on those stocks. But let's get in Nimesh. Nimesh, what are you picking up on D-Street chatter? A bit of a phase of consolidation with a mild positive bias.
Well, extremely quiet day of trade, right? After the gap up, we've not seen any moves in the Nifty or for that matter in the Bank Nifty as well. Even from a flow perspective, it's been quite muted. I understand there is some buying interest, but that's largely limited to some private bank stocks. So from a flow perspective, not much participation, both from HNIs, both from FIs as well as from the DIs today. I guess the sector of the day is clearly housing finance companies. A stellar listing from Bajaj Housing Finance, more than double on the day one itself, but equally aggressive profit booking in the other housing finance stocks. We saw a big rally in anticipation of this, and now we are seeing an aggressive profit booking as well today. The other sector which has done well, except for Vedanta, is metal names, right? Big move on the metal stocks as well. There is a lot of chatter about some stimulus from China that can have a big leg up on the metal names, and they have relatively underperformed as well. So a bit of action there, but largely it's been a quiet day, and even the flow seems to be quite muted after what we saw last week in terms of aggressive buying from the FIs.
Well, that's right. On Vedanta, there's a fear that one of the alumina refineries could be facing some trouble. We are waiting for the management to clarify to us. So let's see how that goes. For the time being, the stock is at the low point of the day. But what about individual stocks? What are you picking up?
Right. So in terms of individual names, the first stock is India Shelter. There was a large block today. 6% equity got changed hands, and the stock is under pressure today, largely after that block deal. But in terms of disclaimers, I understand the venture capital was a seller in today's block. They still own more than 15% even after selling this 6% stake, and some insurance companies were buyers in today's block. So the disclosures could be quite interesting there. The second name is SpiceJet. Second, they're running big move on that name and on large volumes as well. There is a very strong anticipation that the QIP, which has been pending for a long, that can open in a day or two. And in terms of participation, I understand some large HNI investors and some family offices are likely to participate in the QIP. So that's a trigger for Spices to do well in the last couple of days. The third name is Samudra Motherson. We saw some downgrades last week, but the stock is holding up. Even today, while the stock is recovered from the day's low, there are limit sell orders at a higher level. And I think that's the reason why the stock is capped on the upper side as well. But I understand the company is likely to raise funds by QIP very soon. Maybe in a day or two, you'll hear a QIP from Samudra Motherson as well. So that's a third name. The last is IGL. I picked up largely because within the PSU names, this is one stock for second day running. I understand there are very strong buy flows. So expect high delivery volumes, and looks like some FI interest is back in IGL at these levels.
Okay, thank you very much for that. SpiceJet, a stock that Nimesh was earlier talking about, where fundraising is on the anvil, could be on the anvil. The stock has moved up 20% in the last 3 days, and it's rising on very large volumes. Pull up a one-week chart of SpiceJet. Mitesh is now back with us for a few BTST calls. Mitesh?
I have two metal names on my radar. In copper is a BTST with a stop at 319 for targets of 330, and Hindalco is the other one. That's a BTST, and keep a stop just below days or around days low of 676.5 and look for a 700 plus kind of a target.
Okay, thank you very much for that. Anand Tandon is now with us on the show. Anand, come in on SpiceJet. Now, Interglobe Aviation is the preferred way for most investors to play the travel theme if they have to. But, SpiceJet, if they do manage that fundraise, it will be handy capital for them.
Well, certainly if they are able to raise money, that seems to be the biggest concern for Spice at this point. There is more than enough demand right now for airline seats, and the supply is clearly constrained. So anyone who has the ability to put more seats up there will be able to make money on them, presumably. Also, we are getting into the season where you are likely to get a lot more holidays and so on. So travel will be something on the cards. So the outlook is quite positive. The major issue is how do you finance it, and that's been a problem for Spice.
Absolutely, and we'll see, as Nimesh said, a round of talks going on. Some amount of fundraising may happen pretty soon. Size, quantas, etc., yet to come through. We got what else? I mean, 30 points, by the way, on the Nifty, so that's not really changed very much at all. So quieter. Vivek was telling us, Anand, earlier, the NTPC Green IPO papers will be filed very, very soon, which means it's on track to IPO to the listed space. So it's NTPC has rallied quite a bit last year and a half, 2 years or so. Not just because of the renewable portfolio, but essentially because power and power shortages has been such a big thing. Between these two ones, the green is also in the listed space. Do you think, which one gets more interest? What would you be interested in looking at? And do you think that'll be the number one pick for people wanting exposure to the renewable space?
Well, I'm not sure it'll be the number one because there are other couple of players also which are already listed. But I mean, frankly, renewable is something where the valuations or the kind of size that companies have today compared to what they can deliver is a little bit of a gap there. Clearly you're looking at most of the renewable power being bid. The bid levels have been falling consistently. While the capital cost also has fallen somewhat, it has not been in line with the kind of price falls that we have seen. So the ROE is going to be a bit of a stretch. Most of these are companies which will generate cash flows in the latter half of the life cycle of a typical solar plant and so on. So while it's a fashion today to be talking about renewables, and it's a nice thing to do from the earth point of view. From a portfolio perspective, I still think that you're probably better off assuming that thermal will remain a very large part of the portfolio. We've been talking about renewables for, let's say, the last decade. The exact change in the composition of renewables versus non-renewables is exactly zero. The good old thermal, etc., still constitute 70% of the portfolio of the whole world as a whole. So there is no great chance that much will change in the near future. So you are better off with stronger cash flows coming through in the regular portfolio. But at this stage, I think more than industrials, you should be looking at consumer at all if you are looking to be investing. That's the season for the moment.
Okay, all right. Hi, Anand. Good afternoon and good to see you. And Anand, what do you make of this move that we're seeing in Stovecraft? TTK Prestige was way ahead of everyone else. Stovecraft, post-listing, I recall there was a lot of interest and then the management failed to deliver. But there are a couple of notes that have come in that now they've incurred their capex, valuations as well, trading at a sharp discount in comparison to TTK Prestige. Would you bet on this name from here on?
I haven't tracked that, so I won't be able to comment on that. When I was talking about consumers, I was talking more in terms of, so while it was in the similar space, I was talking about more traditional businesses like durables, or more importantly, discretionary spend, whether it is auto, transport, travel, and things like that. The specific company that you mentioned, I have not been tracking it.
Anand, do stay on. We need to slip into a very short break. We'll come back and about 10 minutes left for markets to close for the day.
I want to draw you into what's happening on the technology side and link this to what we just saw with the CrowdStrike outage, and that basically brought the aviation industry globally to its knees on that particular day. And 48 hours were mayhem, I would imagine, for you and your team. What's been the big learning from that experience, and how much is tech being prioritized now as you position yourself as a global airline?
Yeah. No, what happened here is indeed a global outage in one of the systems. Yeah, it's my first word I learned in Hindi. We have this beautiful jugaad in order to deal with some of these challenges.
What does jugaad mean to you, by the way?
No, in this case, it meant that people moving from a check-in through machines to a manual check-in. I will make sure that out of the 3 lakh customers which were supposed to fly in the day, 240,000 people have been flying. And I was writing not precisely, but I was writing 240,000 manual.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
So Nazara is focusing on its for FY25 its growth primarily through gaming. So what are the plans for the next few months or next quarter?
As you know, core gaming has been an important focus for us. Recently, we acquired 100% stake in Kiddopia.
Well, ahead of the crucial Fed policy decision, former Fed economist and creator of the economic rule of thumb, Sham, affirms that the US economy is not in a recession, despite some pockets of depression in the labor market. Let's hear out.
And the U.S. economy is not in a recession right now. Now, the SOM rule, using the increased unemployment rate, is picking up on a cooling, a weakening in the labor market, but that's not all that's there. We do have a still very disrupted labor market. We have a lot of labor supply coming in, new workers, whether it's immigrants or people coming off the sidelines, because we've had a great labor market. So that's a good thing, but it takes time for them to get work. And right now the hiring rate has fallen back, and so it starts showing up in unemployment, and that is a problem, but it's not a recession problem. The Fed typically does not wait until a recession to start cutting, right? They try to get ahead of it. So we've already seen that weakening. So the SOM rule is telling us something is happening. It's just maybe, dialed up a little too high, or telling us the wrong signal. Again, a higher unemployment rate is a problem. We have people who want to work, who are capable of working, who just don't have those jobs. Like, that's a problem in what we're losing out in output and productivity, so it's an issue. It's just, the flavor is a little different this time, but that shouldn't breed complacency.
Okay, the SARM rule perhaps corrected by the rise in illegal immigration or immigration in general. So therefore, the unemployment data that cannot, be used to forecast with accuracy or doesn't hold true. But Anand, we've been in conversation with Anand Tandon. Anand, looks like one by one the decks are getting cleared for NSE's eventual IPO. We keep comparing it to BSE and say that, well, NSE is trading at a discount to BSE, but BSE is only getting more and more expensive. So how do you trade the exchange back? Which one would you advise, say, someone buying NSE shares unlisted right now, but if they do have the access, would you buy it at price levels of 6,000, or is BSE a safer bet, or just avoid it all?
Well, the real question is the bet you're taking on how long it will take for NSE to get listed, because as you mentioned, it may be relatively cheaper. And if it does get listed, therefore, there is no reason why there should be a discount on NSE compared to the BSE. In fact, it should probably be the other way around. But that said, the risk has always been that, it has flattered to deceive. There has been promise of listing for many years, and some regulatory issue or the other keeps coming up. As again you mentioned, it's now getting more likely that you may actually get a listing. And from that perspective, I think the risk is perhaps now a little lower. So from that perspective, anyone who's got the access and is holding on to the shares, unless you are expecting a major correction in the market, should continue to hold on to it. Should you buy BSE as well? Well, given the fact that there will be a listing, there's bound to be more focused attention on that. But it could be what you're just seeing in housing finance companies, that as soon as the new guy comes into the market, the ones that are already listed take a little bit of a step back, simply because you have to create the space for that in the portfolio. So from that perspective, again, it's not necessarily the best time to be jumping in. Near-term traders should certainly keep an eye on it.
Okay, got that point. Anand, good to have you on. If memory serves me right, I think housing finance, Anand, was a space that you were relatively sort of more sanguine on in a market that was otherwise perhaps looking frothy in parts. But what's your sense of today's listing really puts that to test, right? Because you might be having a good franchise, but the asking rate is now a lot if someone has to take fresh exposure to a Bajaj housing. What did you make of the listing, and also the cool-off that's happened on some of the other housing finance players? How would you approach the space?
If you're looking for fresh money to be put in, it is a good time to perhaps enter into the other housing companies. As you mentioned, Bajaj has already set the bar really high. They do tend to be more expensive, are paid more in the market than some of the other players. But that doesn't mean that this is a space where there is that much competition. All said and done, this is perhaps the most secure lending area. And of course, it will all depend on your cost of funding. So companies which have the ability of having lower cost of fundings because of their parentage or the ability to raise public deposits in a manner which is relatively cheap will continue to face a market where they will be able to lend and grow the portfolio as quickly as they want to. So the only issue is what is the level at which you want to be pricing yourself, and more importantly, the kind of portfolio. Do you want to do LAP? Do you want to do unsecured or builder lending, or do you want to just do housing finance? So net, it's I mean, a regular housing finance company can actually have a very large part of its money or a significant portion as a regular NBFC. So, it's actually an NBFC plus. And from that perspective, I think it should trade, at some premium to an equivalent NBFC.
Talking about NBFCs, we had Muthoot Finance with us in the morning. Do you have exposure to any of the gold financiers?
I prefer the jewelry companies directly and, regular banking companies rather than specific single portfolio kind of exposures. To my mind, that's always a lot more risky.
Along with housing, I think it's actual realized NPLs are close to zero in gold. But anyway, amongst jewelers, what do you own, Anand?
Well, I don't like to talk about my portfolio, but it is a jewelry company in Tamil Nadu, relatively small, growing well.
Okay, all right. Maybe Tangamail, but I won't.
That's what I was thinking as well, but we won't get down to guesses, I suppose. Anand, a word on NTPC, perhaps. The story, of course, that we're tracking here is what our colleague just broke, that maybe finally the renewables arm could be listing. But, apart from NTPC, anything else in the power space, that you would look at?
Well, right now, power to my mind is very frothy because at least the generation part of it is being priced as if it's a growth area. It is a utility for the most part, and there are two parts to it. Either you are having a long-term PPA, which is what will give you a predictability in terms of growth, or you are in the commercial market. If you are in the market, just 4-5 years ago, you had companies selling power, which was more or less going free, and nobody was willing to sign a PPA. Today, the cycle is absolutely reversed. So today, you are looking for companies wanting to be able to price it higher. The reality is that in power cost, the issue is the ability of the consumer to pay. And that remains a bit of a problem throughout, has always been a problem because large parts of the power chain is actually given away free. And that's not changing anytime soon. So if you have to be in power, I think it's better to be in the equipment suppliers. Not that they are cheap. They are extremely expensive and continue to remain so. But that said, at least there you have a kind of surety that if the demand continues to grow, which it will, there will be, and you are selling to people who will actually pay you your money. That's probably a better place to be because at least you will have a tangible product which you can sell. Power by itself, if it's not consumed or it's not paid for, has no value.
Well, power is a big theme, not just here, in globally as well. In the US, for example, right? I mean, it's quite incredible what's happening, and the focus which is coming back in a big way on everything power, the entire value chain, starting from generation, transmission, distribution, everything. And of course, I mean, there are added sources of power demand. Data centers is a big one in the US. Here, of course, we're on our sort of infancy stage, and it will continue to grow. But in the US, I mean, it's expected to kind of be a very large source. I mean, I think sort of heating and cooling demand, of course, still will be top of the list, but it's coming up. I mean, at least projections are that it'll be a very large source of demand. 2 minutes out as far as market closing is concerned. Anna, let me just wrap out things here. Let me quickly look at how we will end. So it's going to be a flat kind of close. So 25,378 around is where we are trading at. The highest today was 25,445. So we did give back about 60-70 points from the day's high. Nifty Bank will end a little stronger. And I think that essentially was about 0.4% higher. So 200 plus points in the Nifty Bank. Mid-cap index ends higher. Small caps are flat. CPSEs did well. Metals did well. Energy as a space did well. But I think the only sort of down kind of sector was FMCG, which lost in terms of trade today. Otherwise, sectorally, lots of hotspots, both on the upside and on the downside.
Absolutely. Talking about the Nifty, some of the metal stocks, they've had a decent shine to them. JSW Steel, Hindalco are among the key gainers on the index. And then there's the stock that we were just discussing, NTPC, which is in a leadership position. L&T has had a good day. ICICI Bank, Axis Bank are the other ones that have had a good session. On the flip side, like you're saying, Prashant, a lot of profit taking on the FMCG side of the market. So whether it's Lever down 2% or a Britannia down 1%, Titan, ITC, consumer basically as a space cooled off. And Bajaj Finance and Finserv, both of those, which are, of course, the companies that own the blockbuster stock of the day, Bajaj Housing Finance. The owners actually sort of shaved off a bit, between 2 to 3%. But yeah, that's the one, 135% up. What a listing for Bajaj Housing. While Bajaj Housing moved up, some of its listed peers actually moved down. PNB Housing is ending with a cut of 6.5%. LIC Housing Finance down 6%. Canfin Homes is down about 3%. So interesting shakeout in the entire housing finance space today. Other sort of positive movers included the rice stocks that we've been discussing, the likes of LT Foods, KRBL, Kohinoor, all of them up on regulatory action. Dhampur, Radico Khaitan, EID, Parry, again Balrampur Chini, sugar stocks moving higher, again on the back of regulatory developments. And BSE, Bombay Stock Exchange, was such a star, an 18% up move on BSE today. But then the list for mid-cap winners is a long one. Dixon, Thermax, Godfrey Phillips, Triveni Engineering, could go on and on. Suffice to say that it was a really good day for the broader market with a decent, healthy advanced decline ratio. And of course, individual stock level action looking very, very good. So the bell has gone and we have ended the session, first day of the week, with a 21-point gain on the Nifty. Well, with that, we'll take your leave on this edition of Closing Bell. Thank you very much for watching, but don't go anywhere because all the action continues. We are coming right back after this break with Markets Forward.
In the UK called Fusebox. So I think we are very rapidly expanding our core gaming business, which should also be a high margin business for us, generate strong cash flows, and we can keep redeploying in the years to come.
Okay. So talking about Fusebox, so Nazara recently acquired Fusebox and Paperboat apps. So what was the idea behind acquiring these two companies?
I think wherever there is core gaming IP, which we can kind of acquire and own, then we can evolve this IP over a long period of time. So Fusebox is building IP-based games. Kidopia is already a very well-established IP in the world of kids. I think our objective is to acquire assets which have gaming IPs and then keep building and monetizing them.
So the news came out that Nodwin has recently also acquired Comic Con. So with that, what can the comic fans in India expect from the next edition of the Comic Con now that Nodwin has acquired a complete?
Look, the attention of the youth is a very valuable commodity, and Nodwin's focus on esports and anything else that the youth is interested in becomes very relevant, which is why they acquired Comic Con. I think today Nodwin is focusing a lot on expanding Comic Con to many more cities and doing it on a much larger scale, and they will make announcements around that very soon.
It's a kind of a record year, so to speak, in terms of the stake sale that the promoters and PEs have done this year so far. Okay, this is the big number that we're talking about. 4.75 lakh crore is the total amount of stake sale which has been done, promoters, PEs as well as non-promoters. When I say non-promoters, someone like BAT gets included, where they sold 4% stake in ITC this year. So this has been the trend. In the last 3 years, it's been around 3.2 lakh crores. This year, Y2D, it's still 3 months are left, and we've already crossed 4.7 lakh crores. So maybe by end of the year, we'll be crossing 5 lakh crores in terms of the total stake sale which has been done by promoters, PEs, as well as institutional investors. So that's the kind of trend we've seen. Now, the big deals which have happened this year, of course, Interglobe Aviation tops the list. There were 2 large blocks by the Ganwal family. They've raised close to 17,000, almost 18,000 crores. Indus Tower was another large block. Vodafone sold a big stake and raised 9,000 crores in a single day. Emphasis, big block by the PE investor, and they raised close to 7,000 crores. And even in Bharti Airtel, the PE sold close to stake worth 5,800 crores. So these were the large deals which have happened this year. Vedanta, Ambuja Cements. Whirlpool was interesting. The parent sold a big chunk, 24% stake in Whirlpool India, and they rose close to 3,800 crores. So these were the top 10 deals in terms of size that I'm talking about, which has happened this year in terms of the promoters and PE stake sale. It's been a record year in terms of OFS and IPOs as well. I'll talk about the OFS first. In the OFS list, of course, the government, government companies top the list. Hindustan Zinc, there was a large OFS of 3,000 crores. NHPC and NNC India were the other two PSUs where the government sold via OFS, and they raised close to 2,400 crores. Aditya Birla Sun Life was another company where the promoter sold via OFS. They raised close to 1,500 crores. And
Dalal Street ends higher on a range-bound session. Nifty Sensex and mid-cap scale new peaks in intraday trade. Metals and financials bat for the bulls, but FMCG plays spoil sport.
A bumper listing for Bajaj Housing Finance shares make their Dalal Street debut at a premium of over 115% over the offer price.
Gold is within touching distance of the $2,600 an ounce mark. The yellow metal already has scaled the high of $25.85 an ounce. Earlier, experts believe high interest in the physical market should keep the precious metal well bid ahead of the Fed meet. Well, a quieter day as compared to last week and last Thursday specifically, so maybe consolidating for day two. Friday was that kind of a day, and today again, not very much. You're with us here on a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as you prepare and look ahead to the next trading session. I'm Prashant. With me, my colleague Surabhi. Surabhi, hi.
Hi, Prashant. Well, not a bad start to the week, right? Yeah. Because the index level, small gains coming in, but individual stocks, so much flying around today.
Lots flying around and both up and down, and it was that kind of a day. So let me just quickly tell you, on the index it was 20-30 points higher. So like a Friday, it didn't look like at any point that the market's essentially going to take off in either direction. So more settled through the course of the day. Although, I mean, this slight recovery, repair and financials continues. So, you know, Shriram Finance, ICICI, Axis, Bank Nifty was up 0.4%. So much better than what the Nifty did in trade. So remember, Nifty Bank has not yet made a new high, but like the Nifty is already done. So that is still pending, and slowly it is coming back and taking out some important technical levels. Mid-caps were higher. Market breadth, though, was almost 1:1, and that kind of told you the story. So equal number of stocks up and equal number of stocks down as well, and on volumes on both sides. You know, so government companies were doing well today. CPSE, energy, a lot of overlap there. You had metals as a space which did well, and I think FMCG perhaps the only large sector which was down with a little bit of red by today's close. Surabhi.
Okay, well, absolutely not bad at all. And though the advanced decline line started merging, individually, I mean, stocks were really active, and we'll tell you a lot more about that as we go forward. While there was profit taking in the FMCG sector, housing finance was the dominating theme today because of the marquee listing that we had, and it played out as per script. Bajaj Housing made that stellar debut with a gain of over 130% versus the issue price of 70 rupees, and all the gains were absolutely intact. We'll just pull up Bajaj Housing. That was really in many ways the stock of the day, but the fallout on the rest of the housing finance stocks was actually pretty interesting. There was a sell down across the board, PNB Housing, Canfin Homes, and several other names, including some of the smaller names as well. And we'll talk about this as we go forward. But yeah, big day, and a lot of primary market action continuing today. Well, let's tell you what we are covering. Beyond, of course, housing finance, there's a lot more in store as well. We'll start off with the top movers and shakers. We'll have Vivek bringing us all the stock-specific action. And then, of course, it is Bajaj Housing that's going to be in focus. But it wasn't the only listing, remember. We had a cross list as well. There's also NTPC, which was in focus today. So we'll tell you more about all of these buzzing stocks as we go forward. Then we get to D Street Chatter with Nimesh. Today, he's focusing on India Shelter Finance and why that stock is in focus. And then, of course, towards the end, we'll get you all the key market events to watch tomorrow. But first up, all the stock-specific action with Vivek. Tell us more, Vivek.
Well, thank you so much. You did allude to, what you essentially call the stock of the day, and it has to be Bajaj Housing Finance. It earlier used to be Bajaj FinTwins. Now you have three stocks from the stable over there. So Bajaj Finance, Bajaj Finserv, while they saw a bit of profit booking, and like you mentioned, some of the other names, that were seeing a bit of a catch-up rally in the last couple of weeks, today saw quite a bit of a sell-off. But the one that stands out clearly is Bajaj Housing Finance. Now, amongst the other stocks, some of the stocks that did really well today were stocks that were exchanges. So BSE today ended higher on very strong volumes, up almost 18%. Along with that, you also saw some of the other listed exchanges doing quite well. Even MCX as well as IEX did quite well. Dixon Technologies, one of the other stocks, from the broad end of the market, did very well. Tie-up with ASUS stock up at almost 7%. NTPC, like we mentioned, value unlocking is something that the street likes. Stock ended high by almost 2.5%. All eyes will be on the NTPC Green Energy IPO as and when they file the DRHP. And amongst the broader end of the markets, some of the rise stocks today, names like KRBL, they did very well. Export curbs were lifted and stocks cheered that. But on the other hand, like you mentioned, FMCG stocks today, the entire basket saw quite a bit of a sell-off. We're talking about import prices of a key raw material being hiked. So when you're talking about the FMCG index saw quite a bit of sell-off. Goddess Consumer, HUL, Britannia, key input price, that saw inflation, and on the back of that, all of them down almost 2%. And housing finance companies, you alluded to some of them earlier, but have a look at the list. Even names like Saman Capital, Hudco, Canfin Homes, all of them today down in the dumps after the stellar listing of Bajaj Housing Finance.
All right, thank you very much for that. And by the way, we will talk a little bit more about these individual sort of listings. And of course, the big one which got all the attention was Bajaj Housing, but there were a few others which two others to be precise, which we will get to in just a bit. Anand Tandon is with us. Anand, thanks for waiting. Shilpa Rao, the Prabhudas leader, is now also joining in. Shilpa, thanks for joining in. Just a quick word on the price action, Shilpa. Nifty, Bank Nifty first.
Prashant, we have been talking about Nifty hitting 25,500. We were there almost today. And those levels protected, we will again see higher levels of 25,800 coming in very soon. Talking about Bank Nifty has given a decisive breakout today. And I believe the sustenance here will definitely see Bank Nifty heading towards 53,500 to 54,000. New all-time highs for Bank Nifty for sure now.
Anand, sort of a quick top-down view from you as well. We'll get rate cuts starting Wednesday. US growth, etc. We're not looking at a bad situation. So these cuts are not being demanded because of a weak economic situation. In that kind of a scenario, it should be net positive, isn't it? Especially emerging markets, etc.
Well, that's right. I mean, that's at least the theory. I've always maintained that the rate cuts any amount of data could have come through. Rate cuts would have come because we are in election season in the US. And you will have to cut rates before the elections. So that is definitely going to happen. The only question is 50 or 100. I would imagine, or 25. I would imagine 25 is where you're going to start. Will that improve the flows going out? Most likely, yes. However, India, unfortunately, is already priced to perfection. Therefore, we are likely to get less than our proportionate share. It doesn't mean we won't get our share, we'll get our share. But if you were to just look around the region, you will find that many of the countries just surrounding us are doing reasonably well and growing, more or less perhaps in line with what you should expect India to grow in the next 24 months. And they are trading at probably half the valuations. So I think they will probably attract a little more amount of money. But that said, India will continue to attract its share, plus the local market has been very supportive, likely to continue to be so.
Okay. All right. Stay on, Anand. We'll have some more questions for you in just a bit, but let's get started with the analysis on the show as well. So we've been talking about Bajaj Housing Finance all the way, but hey, that was not the only listing today. We had two other companies listed, and they also managed a little bit of green, nothing as close to Bajaj Housing, but some green nonetheless. Hormaz joins in with all the action. Hormaz, busy day.
Busy day indeed. And if you have three listings and you have a listing like Bajaj Housing, it is only obvious that the other two are only going to be relegated to the background. So we will start off with Bajaj Housing. The kind of listing that we saw, 135% higher on a listing price of 70 rupees and a day's high of 165 as well. And it kind of justifies the FOMO as well, right? Because it had bids worth almost close to 3.2 lakh crore, and it shows in the price action which we had in today's session. Now on the valuation front as well, at the listing price, the valuation for Bajaj Housing stands at around 6.84 times price to book, which is way above its other listed peers. And at the upper circuit price also, that goes up to 7.5 times price to book. So the gulf is even more when it comes to the other listed companies versus Bajaj Housing Finance, and it showed in the price action that you saw in the other housing finance companies today. Cross was the other listing. It listed exactly at its IPO price, managed to close in the green today, and even here, it's a relatively smaller company compared to its other peers when it comes to RK Forgings, Jamna Auto, annual revenue of around 600 crores compared to others which are between 2,000 to 4,000 crore. So a smaller company there. Even margins at 13%, lower than most of its peers, barring Automotive Axles, but still managing some gains from its listing price. And the other one being Tollens Tires, again IPO price of 226, listed at 227, managing to close just about 6% higher from its issue price. It's a leading tire and tread industry player, exporting to 40 countries is what is highlighted, and involved in tire manufacturing as well as tread rubber manufacturing. So subdued listings, both managing gains, but the day undoubtedly belonged to Bajaj Housing.
No, absolutely. No doubt about that, Ormas. But thank you very much for reminding us and keeping these new stocks on the radar as well. Let me take that to Anand. Anand, we've been discussing, of course, Bajaj Housing. Give us your views there. And in case you had a look at the other two new entrants, both of these companies relating to the automotive component space. So any thoughts on those as well, in case you've had a look?
Well, I don't actually look at IPOs because of the fact that I prefer to invest in companies where we have some track record. So the short answer is no. The only comment I have on these on this so-called book build is that it's a bit of a joke to find that companies after book building are opening at 130% higher. I've always wondered, in fact, written about it as to why we should have an upper band on the book build. If you can have a lower band because you don't want to sell below a price, why not just leave it open and let the book go at a level wherever it has to? You won't get this kind of funny gains.
That's definitely a thought perhaps worth keeping in mind for those who govern regulation around it. But, that's the view there on some of the major listings today. Okay, let's quickly move on then. The other stock in focus, SEBI has disposed the NSE co-location case against former executives including Ravi Narayan, Chitra Ramakrishnan and Ravindra Apte. The market regulator cites lack of evidence and has found no direct or indirect evidence of collusion or connivance. Yash has more details. Yash, fill us in.
Well, it would be big news coming in for the National Stock Exchange over the weekend. The market regulator SEBI coming out and saying that they've decided to close down the proceedings, close down its investigation against the National Stock Exchange and 7 of its executives, including Chitra Ramakrishna, Ravi Narayan, Anand Subramaniam, in the co-location matter. Now, what is the co-location matter? Back in 2015, of course, a whistleblower intimated the market regulator SEBI and informed them about certain brokers in its co-location unit getting preferential access and entry into the servers of the National Stock Exchange, resulting in big gains for these brokers. Of course, the matter broke out back then. The investigation in the matter has been going on. Various disgorgement notices have been issued so far, and now today SEBI has finally come out and said that they have closed down the matter. The reason which has been given is lack of evidence in establishing any sort of connivance between NSE officials and the broker, that was OPG Securities. But this is just one of the matter. Another matter of SEBI not looking actively at this matter and allowing it to happen is still being fought at the Supreme Court between SEBI and the National Stock Exchange. One matter being closed, the bigger matter still being pending. But this itself is a big development because, as we know, in the last few days, the National Stock Exchange has also filed for an NOC for its initial public offer, and this move would be viewed positively as a step towards that direction.
Okay. And a plate will come up which shows valuations, right? Yash, thank you for that. As Yash said, well, I think BSE jumped sharply, maybe excitement that it's one step closer, as Yash said, but there is still one big matter which is pending for the NSE before it hits the IPO road, like so many other large companies are doing. That's the valuation picture. The NSE price, the valuation has been computed with taking 5,500 rupees per share and earnings estimates from IIFL. So that's the picture. Sharp discount, naturally, to where BSE is now trading at. Shilpa, any thoughts? Either the listed ones is all we can talk about, MCX or BSE?
If you talk about MCX today had a very stellar run. Of course, BSE has also seen a very massive run. But talking about MCX, I believe there's a lot of scope. Again, here you was good to see that the stock will be testing 5,800 in a couple of sessions likely, as long as it is holding 5,500. So MCX is something I would keep my eyes on.
Okay, MCX is something that you would keep an eye on. Well, let's move on and talk about another one, right? This is a CNBC-TV18 exclusive. NTPC was up 2%. And we learned from sources that NTPC Green Energy is looking to file for an IPO soon. Vivek is here with what he's hearing from his sources. And, of course, a little bit about the company itself, the renewable portfolio. Vivek, over to you.
Well, that's right. So NTPC was in focus, like we reported earlier today. We understand from our sources and also inputs from our Delhi bureau that NTPC Green Energy most likely will be filing for an IPO very soon. Remember, we've reached out to the management of NTPC. We are yet to hear back from them regarding this particular query of ours. Now, just talking about this is largely along expected lines. The management has been guiding the street in past analyst calls. And also remember, in FY24, the company transferred 2.9 gigawatt, almost 15 assets of renewable energy capacity for 3,400 crore to its subsidiary in FY24. In the Q1 con call, the management did not take any questions regarding this particular portfolio of the company, stating that they would answer it separately as it was preparing for the IPO of the renewable business. Now, talking about the total capacity, remember, renewables currently has operational capacity in the range of 3.3 to 3.6 gigawatt. And the stated ambitions is what we have to look at. Number one, remember, FY26, the company says they are looking at a renewable capacity addition of close to 11 gigawatt. FY27, the target is 20 gigawatt. FY32 plans to commission close to 40 gigawatt. And also what they're saying is that by 2032, 60 gigawatt is the kind of renewable capacity addition that the company is looking at. Along with that, 14 gigawatt of pumped hydro capacity will also be commissioned. Now, what is it that the street would want? Number one, what is the kind of value unlocking that NTPC can see? Also, remember, we are still to get details regarding the kind of valuation, what is the kind of dilution. In earlier interviews, the management alluded to the fact that they will initially look to sell close to 10% via the IPO route and then maybe go in for an OFS. So some details still remaining, but we understand that the IPO is soon around the corner.
Okay, got it. Thanks very much for that, Vivek. So NTPC on the radar. And of course, the stock really perked up after Vivek put out that story. It ended at the day's high, the biggest gainer actually on the Nifty. Now, Anand, the market loves all things renewable, green, EV, and we saw that enthusiasm play out, whether it's an Ola IPO or, look at a stock like Suzlon as well. It's been a remarkable turnaround story, right? So how would you approach this space of green energy, and would something like an NTPC, renewable IPO be of interest? Though I know I take your point on overall not dealing with IPOs, but generally, renewable energy as a space.
Well, look, there is no question that one is looking for renewable energy overall, right? At the end of the day, if you want to remove global warming or get it somewhat under control, you need alternate sources of energy. Now, with that large caveat, the question is what? So theoretically, you should be able to go down a nuclear route. However, there is just recently a book out by one Professor Ramana, who points out that, M.V. Ramana, who points out that, it is not actually safe, even though there may be commercial interests which are pushing it. So you are back to saying that renewable comes down to solar, wind, and water. Now, of this, water is a major problem in terms of large projects. But that said, we are having NHPC actually stepping on the pedal. And I think that is probably doing well because of the simple fact that if they were able to get up the capacity there, you will get a very steady source of energy supply. Both other methods, solar and wind, suffer from the fact that they are erratic and not predictable, therefore not suitable for base load. So you are back to gas. Now, with all those caveats, the reality is that you need all sources of energy. So from that perspective, NTPC's move to renewable is certainly something that one should be looking at. Whether you'll make a lot of money on it or not from the underlying assets, I am not so sure. Whether you will make money in the stock market in the current context, absolutely. You will get valuations which are way in excess of what it takes to actually set up the facility. And therefore, it would be a wise move for NTPC to release some stock in the market for a subsidiary. That way, both you raise the money cheap as well as the valuation for NTPC itself goes up. As far as the world liking things, we are a little behind the curve. EVs are a disaster in the rest of the world. Today, people around the world are having trouble selling what they produce. You look at the commentary coming out of Volkswagen, Tesla. The Chinese are taking them to the cleaners. The pricing at which they are able to bring out stuff is way lower. And we now have a situation where battery costs are likely to, Toyota's CEO recently put out a statement saying that, electric vehicles are out because of the new engines that they've developed. So I think we are a little behind the curve in India, but that said, make hay while the sun shines.
Well, Anand, thank you for joining us. Rounded comments there on that space. Shilpa, thank you for joining us as well. Appreciate your time here on CNBC-TV18. Just sampling of views that we got from companies we spoke with. So Muthoot Finance is the first one I want to lay out for you. Now, gold prices, remember, have been sort of hitting new highs, right? And Muthoot Finance said that rising gold prices have actually enabled their customers to borrow more from the same amount of gold which customers gave as collateral to them. They said, well, demand for gold loans is picking up across their branches. So that was some commentary. In terms of specific numbers, their stated AUM growth guidance is 15% for FY25. They not changed that, but they said that they may look to revise this higher after the next quarter numbers. They also said that on the net interest margin guidance, they will be around the 10% mark where they've always been. So that is Muthoot Finance for you.
Okay, well, let's look at Route Mobile up next. The company expects the second quarter to be better than the first quarter and is on track to achieve revenue growth of 18 to 22% this financial year. The company is expecting new products like WhatsApp, RCS to contribute 15% to overall revenues over the next 3 years versus the current contribution of 7%. On the recently concluded OFS, the management said that with promoter stake down to about 75% and SBI Mutual Fund acquiring more than 5% out of the 6% OFS. So that is on Route Mobile.
Well, we also had the management of Pokarna, and they told us that the quads business will grow between 30 and 35% in FY25, while the granite business will see muted growth. The management told CNBC-TV18 that both Creos and Chromia will contribute to revenues from next year. Added that EBITDA margins may actually be higher than the projected range of between 30 and 35%. So that's a management commentary we had through the course of the day. We'll take a quick commercial break here. D-Street Chatter with Nimesh coming up next, and we'll tell you what events to watch out for when we return. Stay with us.
These were the few large OFSs. Now let's come to the IPOs. It was a record year for IPOs as well. 15,000 crores plus, and we are still counting in for this year. Hexacom was the biggest IPO for this year. In April, they raised close to 4,200 crores. Aadhar Housing, Go Digit, MediAssist, Eco Mobility. There were a lot of smaller companies as well, which have raised between 600 to 1,000 crores or 1,500 crores in this year. Gopal Snacks, Entero Health, Allied Blenders. The list just goes on. I've just picked up above 500 crore fundraising in the IPOs as well. So as I said, it's been a record year as far as the Ps and promoter stake sale. Almost at 5 lakh crores is what we've reached Y2D this year, and it's been a record year. So
how about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters?
Welcome back. You're with us on Markets Forward. Well, it's time now for D-Street Chatter, all the latest buzz from dealing rooms. Nimesh is joining in. Nimesh, not a bad day. Lots of stock-specific action. What all did you pick up?
Absolutely. It was a very stock-specific day. The Nifty was quite flat through the day, and even the flow seems to be quite muted in today's market. But in terms of individual names, the first stock is India Shelter. That stock was under pressure after a large block. 6% equity got changed hands. I understand a leading venture fund was a seller in today's block. They own close to 20%. And some domestic insurance companies were buyers. So disclosures could be quite interesting there. The second name is SpiceJet. That's been buzzing for the last couple of days. In fact, in the last 3 days, the stock is up 20%. The volumes are on the higher side. I understand the company is very close to raising funds via QIP, which can open this week. Some large HNIs and some family offices are likely to participate in the QIP issue. The third name is Samadhana Motherson. Even that stock is buzzing in trade, recovered from the day's low. I understand even in Samadhana, the company is very close to raising funds via QIP, which can happen in a day or two. So again, that's the trigger as far as Samadhana is concerned. And the last stock is IGL. Within the PSU names, IGL stands out for second day running. I understand there are very strong buy flows from larger HNI, so larger FI. So looks like some FI interest is back in IGL at current levels.
All right, lots of chatter. Nimesh, thank you very much for that. And keep an eye out on some of these names. Before we wrap, here's what's lined up in terms of events. Vamakshi is here with details. Vamakshi, over to you.
Well, absolutely. It's expected to be an action-packed day tomorrow. On the domestic front, as far as the economic cues are concerned, we will be watching out for India's WPI data. The FOMC meeting, that is the two-day meeting, starts tomorrow. The decision, of course, will be out on September 18th. So watch out for that as well. And apart from that, the US retail sales as well as industrial production data is also expected to come through tomorrow. But apart from that, lots happening on the stock front as well. There are lots of AGMs scheduled tomorrow. It includes Shilpa Medicare, Hikal, Sequent Scientific, Sirma, SGS. Ramkrishna Forgings will also be in focus, and that is because an investor day is scheduled for the company tomorrow. So we will be watching out for commentary that come through from all of these counters. But apart from that, keep an eye out on Easy Trip Planners because a board meeting is scheduled tomorrow. They will be considering multiple acquisitions in the board meeting scheduled tomorrow. So definitely that will be another counter that will be in focus. And lastly, a new kid on the block is expected. P.N. Gadgil Jewelers is expected to list tomorrow. So watch out for that as well.
Okay, well, that's a space which has seen a lot of action and will be eyed closely. Vamakshi, thank you very much for that. Well, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Stay tuned.
And Chart Wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
At least currently is what's happening as far as crude prices are concerned. Now trading below $70 a barrel, and that's great news for airlines like yourself. And the ATF tailwind, I mean, how much do you factor in on account of that as far as margins are concerned now, given where we are?
You know, the fuel prices, if you would have asked me the very same question 2 months ago, you
would have been
said,
different.
They jump up, what are you going to do and what's happening? So I think that's always the moment of the day, and today they're trending in this direction. That could change again tomorrow.
But what's your own expectation on where they could be?
You know, I say that I'm in the aviation business now for the last 32 years. If I were to be able to predict the direction of the price of fuel, I would not be an airline CEO, but I would sit somewhere totally else. So that I would not be able to predict that. When it comes to ATF, I think we see some different dynamics. Some states have really reduced it. That has really had very positive effects.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
Hello and welcome to Business 360. I am Ashmit Kumar, and here are the headlines that we're tracking this evening. Sensex and Nifty end with marginal gains after a range-bound session. Investors tread with caution across the world ahead of the Fed rate decision this week. Gold prices hit a fresh record high. RBI Governor Shaktikanta Das says that there needs to be a closer look at the future trajectory of inflation. This comes days after August retail inflation quickened marginally against projections that it would drop to a 5-year low. Das told CNBC that interest rate decision will be based on the future trajectory of inflation and growth. SEBI withdraws earlier statement blaming external elements for the recent protest by its own employees, alleging toxic work culture, promises to address the concerns of the employees amicably through internal channels. A bumper listing for Bajaj Housing Finance shares make Dalal Street's debut at a premium of 115% over its offer price. The Oberoi family feud escalates 10 months after the death of PRS Oberoi. Anastasia Oberoi cites that the will to stake claim alleges a conspiracy by step-siblings and cousins to corner the assets. Vikramjit Oberoi and Arjun Oberoi oppose Anastasia's claims before the Delhi High Court, which has ordered for a status quo for now. With state-run companies meeting 32% of the capex goal so far, government is strongly reviewing the strategy for financial year, aims for dividend consistency along with value creation. Government received nearly 64,000 crore rupees as dividend last year. Chennai police detain over 100 Samsung India workers, including union leaders, ahead of the planned protest march. Workers who have been seeking higher wages, among other demands, have boycotted work at the tech giant's Chennai plant for the last 7 days. The Aam Aadmi Party top brass likely to discuss who will become the next Chief Minister of Delhi today. After being released on bail, Arvind Kejriwal decided to step down tomorrow. Says he wants a certificate of honesty from the people of Delhi before sitting on the Chief Minister's chair. Former US President Donald Trump is unhurt after another apparent assassination attempt while he was playing golf. The 58-year-old suspect was detained while attempting to flee. The suspect has a lengthy police record and said he was willing to fight and die in Ukraine. Shogun hacks Baby Reindeer and The Bear win big at the Emmys. Hacks wins the Best Comedy Series. Shogun wins the Best Drama Series at the 76th edition of the awards. Well, let's start with a quick look at the day's market action. The Sensex and the Nifty ended with marginal gains. After a range-bound session, Sensex gained nearly 100 points and the Nifty gained about 30 points. The mid-cap index gained over 200 points, ending at a record closing level for the second straight day. Nifty Bank Index also gained over 200 points. And well, on to the commodity space now. Gold prices hit a record high of nearly $2,600 an ounce. Prices of the yellow metal have moved up 3% in the last week and have increased 23% in 2024 so far. Most brokerages have set gold prices in the range of $2,600 to $3,000 per ounce as their 2025 forecast. The price movement in gold comes ahead of anticipated U.S. interest rate cuts. Well, speaking of commodities in the crude oil space, prices rose in trade as investors have their eyes fixed on the U.S. Fed. However, the gains remain capped by persistent demand worries following a hurricane in the U.S. and weaker China data. Brent crude continues to hover around $72 a barrel. Well, before we bring you more big news, a big exclusive interview coming up later this evening. Tune in at 5:45 p.m. when Finance Minister Nirmala Sitharaman speaks to Rahul Joshi on the state of the economy, growth, inflation, GST and much more. Well, time now for a CNBC exclusive. RBI Governor Shaktikanta Das has said that any future decision on a likely rate cut will depend on the trajectory of inflation and growth. Das's comments come days after CPI data highlighted that inflation had inched up marginally in the month of August against projections that it would drop to a 5-year low. In an interview with CNBC's Tanveer Gill, Das also expressed optimism about achieving the 7.2% GDP growth target laid out by the RBI.
All segments, all components of GDP growth are, the momentum is very strong. The only element, the only component which slowed down was government expenditure, both state, central government expenditure as well as expenditure of the state governments. Perhaps due to the fact that that was the election season in India. So going forward, I would expect the budgeted amounts will be spent by the central and the state governments, and then they will be able to catch up. So we are quite confident about the 7.2% growth which we have projected in our current year's assessment. And interestingly, international agencies like the IMF and the World Bank, which had earlier projected, they have upgraded. They are all at 7%. So we are reasonably confident that the 7.2% growth will be achieved this year. So it's not so much how the inflation is now. We have to look at for the next 6 months, for the next 1 year, what is the outlook on inflation. So therefore, I would like to sort of step back and look at more carefully what is the future trajectory of inflation and growth, and based on that we will take a decision. The growth momentum continues to be good. India's growth story is intact, and so far as the inflation outlook is concerned, we have to look at the momentum, the month-on-month momentum, and what is the momentum of inflation, build up or moderation either way. So what is the momentum of inflation trajectory in the coming months? So the outlook we have to look at. It has to be a forward-looking approach. So based on that, we will take a decision.
Well, you can catch that entire conversation with RBI Governor Shaktikanta Das at 5 and 7:30 p.m. right here on CNBC TV18. Well, from the banking to the markets regulator, SEBI has withdrawn its earlier statement blaming external elements for the recent employee protests against an alleged toxic work culture. In a statement, SEBI has also promised to address the concerns of the employees amicably through internal channels. They added that this will be managed in accordance with high governance standards and within a time-bound framework. Remember, SEBI employees held a silent protest and wrote to the finance minister expressing their concerns on toxic work culture in the organization. In a response to this, SEBI issued a clarification on the 4th of September, rebutting the allegations of employee mistreatment. They added that the junior employees were misinformed about automatic promotions and their compensation structures. And well, it was a bumper listing for Bajaj Housing Finance. The company's stock listed at 114% premium over the issue price on the bourses. The stock ended the day more than 130% in the green. The 6,560 crore rupee public offer, the largest of the year so far, was subscribed nearly 67 times. Speaking at the listing event, Sanjeev Bajaj, Chairman and Managing Director at the Bajaj Finserv, said that they are expecting 12 to 15% credit growth in the housing industry.
Relevant ones. We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry. And on the back of that, we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort.
Well, over 100 protesting workers at the Samsung India factory in Tamil Nadu were detained by the police. As per a Reuters report, officials have said that the protesting workers were planning a protest march without the requisite police permission. Workers at the plant have been boycotting work for over a week now, demanding higher wages and better working hours, among others. The government has pushed for a review of capital expenditure of central public sector enterprises. Sources have told CNBC TV18 that the government is aiming for dividend consistency. This move comes as the centre is working on finalising new capital management guidelines for the sector. Sapna Das joining us now with more details. Sapna.
Well, what we are given to clearly understand is the government is strongly reviewing the capex strategy of various CPSEs. And if you look at some of the names that we are talking about, NLC India, Mazgaon Dock, both have met over 100% of their capex aim for FY25. These are followed by a number of strong performers like NTPC, Power Grid, Hindustan Copper, and a stack of OMCs, which have met actually 40 to 60% of their budget outlay in terms of capex for the current financial year. Now, having said that, the overall target for this year set out for CPSEs in terms of capex is around 3.41 lakh odd crore, and up to August, what we are given to understand is that 32% of this aim has been met. Now, we also need to keep in mind a small a fact over here, which is basically that year on year, the capex outlay, or rather the capex aim to be met by CPSEs, has kind of come down slightly, and maybe because the government itself has a very strong capex plan over 11 lakh odd crores for the current financial year. So if you put both the numbers together, you have a hefty aim to look at, so to speak. Now, within the same context, it's also important to note that the government is actually working on the new capital management guidelines for CPSEs. A lot of work has already happened on this front. We're given to understand stakeholder consultations over, and soon these guidelines are going to be announced. Having said that, what the government basically looking at is basically value creation along with dividend consistency. Now, the basic norm so far has been that 30% of the PAT or 5% of the net worth of CPSEs has to go in as annual dividends. We'll have to wait and watch and see whether that rule changes or there are some other things that come out in the new guidelines which are expected shortly. Last but not the least, the new capital management guidelines that the government will come out with are part of their 100 days agenda. So that's on the annual pretty soon.
Right, Sapna, thanks a lot for that. Now, the Department for Promotion of Industry and Internal Trade has launched a digital platform called Bhaskar. The platform will be aimed at strengthening India's startup ecosystem and will go live on the 16th of September. The government's initiative will be designed to centralize and enhance collaboration among key stakeholders within the entrepreneurial ecosystem. And Mercedes-Benz India has unveiled the new EQS 580 SUV at 1.41 crore rupees. This will be the 6th EV in the company's lineup and comes 10 days after the launch of the Maybach EQS 680. Assembled entirely at Mercedes facility in Pune, this makes India's the first market outside of the US to produce this model.
Any car line, forget EVs, has to be also localized to get the cost efficiencies, because customers are not ready to pay a premium, and therefore we need to bring the price point at a level where the acceptance is. I think that's the same direction for the EQS SUV also. We have 11 cars now in India which are localized. 95% of the portfolio that we sell in India are all from locally produced cars. So that clearly shows the advantages of localization, trying to get these car lines. Last year our EV was 2.5% of our total portfolio was EV. This year, first half, we are already at 5% of the portfolio is EV. So we can see definitely EV sales growing.
Well, with that, time now for a short break. But coming up, the Aam Aadmi Party top brass likely to discuss who will become the next Chief Minister of Delhi today. More details when we come back on the other side.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for Phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their business.
Welcome back. Now, the Delhi Chief Minister Arvind Kejriwal has announced that he will be resigning from his post tomorrow. This comes days after being released from Tihar jail. Addressing his party workers, Kejriwal said that he wanted a certificate of honesty from the people of Delhi before sitting on the Chief Minister's chair. Meanwhile, the top brass of the Aam Aadmi Party will likely discuss who will become the next Chief Minister of Delhi today. Among the frontrunners are Minister Atishi. She spoke at the News 18 India Chaupal earlier today.
क्या मैं भावी मुख्यमंत्री से बात कर रहा हूं क्या? हंसिए मत, बता दीजिए।
देखिए कल हमारी विधायक दल की बैठक है तो फैसला वहां पर होगा।
इतनी सारी मिनिस्ट्रीज आप संभाल रही हैं।
देखिए फैसला तो विधायक दल करेगा। दूसरा मैं एक बात आपको जरूर बता सकती हूँ, आम आदमी पार्टी की सरकार जो दिल्ली में है उसका मुख्यमंत्री कल कोई भी बने, आम आदमी पार्टी की सरकार दिल्ली की जनता के लिए काम करती आई है, काम करती रहेगी। हम कभी भी काम करने में पीछे नहीं हटेंगे।
Well, the fourth edition of the Renewables Energy Summit kicked off in Gujarat's Gandhinagar. This is the first time that the summit is being held outside the national capital. Prime Minister Modi called on top investors to invest in India. Abhimanyu Sharma reports on the green energy push.
The fourth Global Renewable Energy Investors Meet and Expo is being held in Gandhinagar to highlight the work which has been undertaken in India's green energy sector and to attract domestic and foreign private investment. Inaugurating the summit earlier today, Prime Minister Narendra Modi said that India is the only G20 country which has achieved its climate goals in advance on the back of an unprecedented work which has already been undertaken in the renewable energy space.
ये रूफटॉप सोलर की एक यूनिक स्कीम है। इसके तहत हम रूफटॉप सोलर सेटअप के लिए हर फैमिली को फंड कर रहे हैं, इंस्टॉलेशन में मदद कर रहे हैं। इस एक योजना से भारत का हर घर एक पावर प्रोड्यूसर बनने जा रहा है।
States are working on policies to promote renewable energy, not just to attract investment, but also to generate jobs and help overall development due to green energy.
Asking the investor to invest in the state of Goa, especially in the renewable energy, in the solar energy, wind energy. We have already done much more reforms in the renewable energy. Now we have already floated a tender for the wind energy. So future, some policies or subsidies if we want to give for the renewable energy also, that we are ready to give in the renewable energies.
Offshore wind, that is one area we have to work it out because of east coast. We are having largest coastal line. Not only that, other areas also we are working in a big way. It's a matter of time, you will know. Now, in technology age and also green energy and green hydrogen, lot of opportunities.
State of Telangana is going very aggressively in renewable energy production and all. We have a lot of scope in solar power, wind power, and even pump storage and the floating solar also.
देखिए, हमारे देश के यशस्वी प्रधानमंत्री जी का संकल्प है कि 2030 तक रिन्यूएबल एनर्जी 500 गीगावाट करना है और छत्तीसगढ़ राज्य भी उसमें अपना भागीदारी निभाएगा, क्योंकि छत्तीसगढ़ में वन ज़्यादा है, 40% से ज़्यादा भूभाग वनों से आच्छादित है, इसलिए वहाँ सौर ऊर्जा की ज़्यादा गुंजाइश नहीं है। फिर भी हम लोग सौर ऊर्जा पर ही ज़्यादा ध्यान दे रहे हैं और वहाँ के जो डैम है वहाँ पर फ्लोटर पैनल भी करने का हम लोगों का प्रयास है।
मुझे संतोष है कि हमने भी लक्ष्य लिया कि 2030 के बजाय 2028 तक ही हमको जो बिजली नवकरणीय ऊर्जा का जो टारगेट दिया हम उस पर काम करेंगे और निश्चित सफलता की तरफ बढ़ेंगे। अभी तक मध्य प्रदेश का ट्रैक रिकॉर्ड भी है कि तीनों फॉर्मेट में हम बराबरी से काम कर रहे हैं। हम सोलर एनर्जी में भी करने वाले, विंड में भी करने वाले, हाइडल पावर में भी बराबरी से बढ़ेंगे।
Apart from a continuous focus on solar power, hydropower and offshore wind are emerging areas in which states are looking to boost their renewable energy capacity, with subsidies also on cards in several states. In Gandhinagar with video journalist H.K. Patra, this is Abhimanyu Sharma for CNBC-TV18.
Now, the Maharashtra government has completed its 90-kilometer-long Panvel-Padghar transmission line. The state government says that the transmission line will bring an additional 2,000 megawatts of power to Mumbai and other areas in the Mumbai metropolitan region. CNBC-TV18 Santiagora reports that the state government is confident that this additional power will mean that the Mumbai metropolitan region never sees a power cut again.
This power line runs for 90 kilometers and carries power from the central integrated grid to feed the substations that power the Mumbai metropolitan region. It's taken Sterlite Power over 4 years to complete and has cost the state exchequer 900 crore rupees. The administration and the company say this power line will go a long way in ensuring Mumbai never again sees a blackout like the one it saw on the 12th of October 2020 when a day-long outage brought the city to its knees.
Mumbai consumes about 4,500 megawatts of power, and it produces very little of that. This project will bring 2,000 megawatts of power into the heart of Mumbai. One, it brings continuous supply of power and ends load shedding and trippings. Second, it should reduce the cost of power supply in Mumbai. The cost of power in Mumbai is significantly higher than other metro cities in India and around the world. That's number two. And perhaps the most important, bring green power to Mumbai, which is now available in different parts of the country like Gujarat, Karnataka, Rajasthan. Bring all of that at really low cost for the residents of Mumbai.
As the initial deadline was December 2023 and you guys have missed it. What's, if you can help us understand the reason, responsible for this delay of almost 9 months?
See, the biggest reason is COVID. As you can understand, for 9 months in that period, we had zero work, right? Complete standstill of work. So I would say if you don't count that period, actually we have commissioned ahead of schedule. And projects in this part of the country have sometimes taken 4 years, 5 years, 7 years, 8 years to complete. So compared to that benchmark, I'm really proud of my team. I think we've done a really good job.
Right, but the construction actually started after COVID.
Right. So all of the planning that happens, route surveys, all of the things we require to mobilize on field. And once if there's a complete curfew on the field, you can't straight away start construction on the day one. You require 9 to 12 months of preparation, clearing rights of way, getting approvals. It requires hundreds of our people to be able to move freely. So without that, we were unable to finish this. But I think net, a fantastic achievement.
Mumbai's average power demand is 3,500 megawatts through the year, but during summers and in October, demand touches 4,500 megawatts. The administration says the new line will cover the spike in demand and simultaneously help ensure that no household in the Mumbai metropolitan region has to suffer long drawn-out power outages. In Mumbai, Santiagora.
Well, at the 76th Emmy Awards, the 4 big winners were Shogun, Hacks, Baby Reindeer and The Bear. Hacks was the best comedy series of the season, while historical epic Shogun was named Best Drama Series. Meanwhile, Anna Shawai, who featured in Shogun, won the title of the Best Actress in the Drama Series, and Best Actor title was awarded to Hiroyuki Sanada, who also featured in historical drama Shogun. Series Baby Reindeer, Shogun and The Bear took home 4 awards across different categories. With that, it's a wrap on this edition of Business 360. More news and updates on the other side.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June, and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars, or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
Does the low-cost positioning then change as well as you move towards international travel, as you move towards adding things like business class and loyalty programs? Does that cost position at the back end start to change as well?
Welcome to Indianomics. Bank and NBFC fixed deposit rates continue to climb. Shriram Finance has just opened a scheme offering 9.4% for 4-year FDs. Small finance banks have been hawking their FDs at 8% plus. And banks have announced almost 7.5% rates on their FDs all through August. Is this the peak of deposit rates, or is there a structural issue which is going to keep rates high? Is there a CRR cut needed or some other regulatory intervention to make things easier for banks? I have an elite panel to explain to us. Professor T.T. Ramohan of IIM Ahmedabad, the veteran banking economist and part-time member of the PMEAC. Ashish Gupta, CIO of Axis Mutual Fund, one of the best banking analysts I know. B. Prasanna, the head of global treasury at ICICI Bank, and Samiran Chakraborty, chief economist at Citibank India. Gentlemen, thank you very much indeed for your time. Prasanna, let me start with you. Is the worst over? Are you getting a sense that liquidity has improved and therefore we are not going to see even higher rates?
So, Lata, I think you have to look at this question in two aspects. What's happening to the systemic liquidity and the banking system liquidity that RBI controls at the aggregate level. And from that perspective, I would pretty much say that two things are happening. One is the government is actually building down the WMA balances. So to that extent, that's a release of money back into the system. And the second thing is, as you all know, there is a likelihood of a gradual change in the monetary policy cycle over the next 2 to 3 months. And that is kind of likely to, bring a little bit of liquidity back into the system as we go ahead. But the real issue is on the banking system deposits. And from that perspective, I would say that because of a lot of things we have discussed about how mutual funds are garnering money and so on and so forth. Bear in mind that while they don't affect the aggregate deposits in the banking system, they do affect the color of money that comes to the banks in terms of both the duration and in terms of the type of entity which deposits. It actually shifts from households into wholesale, which all requires a higher runoff factor. And you know about the new LCR guidelines. So all in all, I think from a deposit rate perspective, I think the pressure on mobilizing new deposits are likely to continue. And while the general rates in the system and the general liquidity is likely to ease.
Okay. Well, on that point, Professor Ramohan's latest article in the Business Standard kind of clarifies things. Professor Ramohan, if you can just explain, the common chatter is that people are putting money in mutual funds because that's more attractive, giving more returns, and therefore bank FDs are likely to remain neglected and therefore expensive. I mean, money doesn't go out of the banking system. Can you explain the relation? If banks keep on collecting money only in savings deposit, is that a problem?
Well, yeah. So, this whole debate is not just about aggregate deposit growth. It's also about the composition of deposits. That is material from the standpoint of the bank. How you fund your asset side, what composition, what mix of deposits or what mix of funds you're using is absolutely vital for the stability of the bank. And now, so, you can access deposits through wholesale deposits or retail deposits. You can access deposits as current account or saving account or fixed deposits. And so how exactly you manage this mix has various implications for both the profitability and the stability of the bank. Now, the argument is often made that it doesn't matter if savers choose alternative investments to saving deposit or bank deposit and put their money in mutual funds and insurance products, because the money is going to come back into the banking system anyway as deposits. Well, it does come back as deposits, but it doesn't come back as saving deposits or long maturity fixed deposit. So when you give the money to the mutual fund will keep it in the current account, or they will invest in money market instruments. And so this money will return as deposits in the banking system, but it will return as current account deposit or fixed deposit of relatively short maturity. Now, from the point of view of managing liquidity risk and also interest rate risk, this is a material difference. It's not a small thing. And so if it's going to come back as a current account or as a short maturity fixed deposit, then the bank is constrained in what sort of assets you can take exposure to. You can invest only in relatively liquid assets, either government securities or short duration loans, short-term loans. And so if you can invest only in government securities and short-term loans, it's going to impact your profitability. And so you have to understand. So this is.
I take your point. I take your point that and the RBI is also increasing the liquidity coverage ratio on what they call unstable deposits. So they are, although they are raising the money at savings rate of 3% or 0% current account, they are getting much less because they put it in T-bills. But on that point, Ashish, see, I take the point that time deposits have got, an FD has 1 year, 3 years, so some kind of security for the bank. But that is still coming at 7-8%, whereas savings and current is coming at 0 and 3%. So why is it that banks' margins are getting impacted? Technically, cost of money is less. So even if they earn less, margins should not be affected. But we saw that in the Q1, margins were affected. Why?
Okay. So, Lata, before I answer that, I think I'll also like to address this composition issue a bit. Right? So, it is absolutely right that based on the type of deposits, there's a different runoff factor, and therefore lendability of a bank does change basis whether it's a retail deposit versus a wholesale deposit. Okay. But I think there is some clarification that is needed. So, for example, if a household invests in a SIP or invests in a mutual fund, right? The mutual fund does not go and keep money in a current account, right? The mutual fund does not go open a short-term FD. Mutual funds, insurance companies are also intermediaries. They go and buy stock, right? And deposit therefore moves from one household who's the buyer of the mutual fund to it could be retail, it could be some promoter. No, it's not a brokerage. The person who's selling the stock.
Okay,
right?
It could go to a company.
So basically, so and we have seen that even in IPOs, most of the companies have not been raising money. It has been offer for sales, right? So it is a person selling the stock. So potentially it is going to another retail investor who's now selling the stock, or it is going to a promoter. So it's not necessarily sitting in a financial entity, right? And therefore, the composition may not be changing as dramatically as we are presupposing.
Okay.
If we look at the data, and we have data till March 24, in terms of composition of deposits, and you'll see the share of deposits is largely unchanged. So household deposit share for the last 10 years has averaged between 63 and 61%. Okay. So that has not changed at all. There has been an increase in corporate share of deposits, but really that's primarily driven by the fact that it has come out of improving corporate profitability. So corporate profitability has moved from 2% of GDP to 5% of GDP. So it is natural to assume that corporate share of deposits has gone up. If we look even in terms of CASA versus total deposits, yes, compared to 2021-22, today CASA share has come down to, so from a peak of 43% for the system, it's down to 38-39%. But you are really comparing from COVID period, and if you look at the 10-year average, CASA ratio of the system was around 38% only, right? So it is not too different from what we have seen in the long term.
Yeah. Yeah. No, the point I want is that for the bank, is this going to be very margin dilutive? Because anyway, savings and current account or CASA is cheaper for them. So why are we bemoaning that, oh, it is not coming to FDs, it is coming to CASA? It should not make a big difference to deposit, to margins, or does it?
No, it does, because whether you deploy money in credit or whether you deploy money in investment, the margin profile is fairly different. Okay. So it does make a difference. But I think the bigger impact that banks are seeing is that over the last 4 years, increasing amount of their loans have been linked to external benchmark, right? So these are either the repo rate or the T-bill rate. And what you are seeing is in the past 2 years, when RBI hiked rate, their loan book saw the pricing upward, but the deposit cost did not go up at the same pace. Now you are seeing the deposit cost going up when the loan yields are not going up. And in fact, as Prasanna mentioned, if there is a change in monetary stance, if the benchmark rates come down, their actually loan book will see repricing down, while deposit costs may not ease. So that will certainly be on bank margin.
But yeah, I take your point. Liquidity has improved. But Samiran, I want to bring in an altogether different point. See, we have seen many periods, and in fact, we have been running the credit and deposit percentages from 2014 onwards, or even 2010 onwards. There are many periods when credit growth is a little faster than deposit growth, and periods when deposit growth is faster than credit growth. But is this period more sticky because there is one second largest bank, HDFC, which is hungry for deposits? 2, the 2,000 rupee notes were withdrawn last year. And 3, RBI went on a fairly serious tightening spree last year, same time, in August, September, October. You know, they were not creating enough money because they were worried about inflation. So do you think this period is likely to be more sticky and will remain sticky till all this HDFC Bank issue is sorted out?
So, Lata, if you look at the last 25 years credit deposit growth profile, this is the 4th instance where there's been substantial gap between credit and deposit growth. The main hypothesis out here is that credit creates its own deposits and not vice versa, where the traditional thought process has been that deposits create credit. Now, if you believe in this credit creates its own deposits and try to test it with Indian data, you actually find that to be true. The causality runs from credit growth to deposit growth and not vice versa. And if you take that analysis farther forward, and just an econometric exercise shows that it takes about 40 odd months for the credit deposit growth to converge. That has been the traditional pattern. So from that perspective, this cycle is halfway through. We are about 2 years into this credit deposit growth divergence. And that's why I don't think it's necessarily very different from the earlier cycles that we have seen. Yes, the HDFC issue might be creating a bit of a short-term problem, but that's not the critical challenge. And it's also true that when this credit deposit growth diverges, there are options available to banks to fill this gap, as we are seeing that the short-term borrowing through CDs, etc., of the banks have significantly gone up. There's been some equity dilution also to bridge this gap. So in my view, it's possible that if we are patient enough, we will automatically see this getting converged. And I would agree with the other panelists here that the composition of the deposit matter. Our econometric analysis shows that as well, that if the proportion of term deposits are relatively higher, then in the subsequent years, the credit growth also picks up. So in this cycle, what we are seeing is actually now the term deposits have started moving up a bit, and that probably should lead to a convergence. And the last point is that if you look at deposit growth in isolation, it's still running ahead of nominal GDP growth. So we can't really say that deposit growth is too low in the country.
Oh, that's a very important point. And I take heart of your numbers as well. The deposits were lower than incremental credit last year. It was, I think, 17 trillion loan and 15 trillion deposit growth. But year to date, if you look from April to now, then deposit growth is about 8 lakh crore and credit growth is about 5.3 lakh crore. So already, I think deposits are more than credit. Dr. Ramohan, would you agree that therefore the problem is going to get resolved on its own? You know, there is a point that the markets are doing exceptionally well, and therefore we will continue to see a greater preference to invest not in FDs but in some other instrument. So do you think the Reserve Bank needs to intervene in some fashion, say a CRR cut or even some other regulatory instrument? Harshvardhan of Bain was suggesting that a one-time effort be allow banks to issue, bonds for funding, which can be tradable. Is there some regulatory intervention needed? So I think you're on mute.
Sorry. Well, I do want to address the misconception that this problem is entirely to do with overall liquidity. And the moment liquidity in the system improves, the problem will go away. I'm afraid it won't, because it has to do again with the composition of deposits. So just because aggregate deposit growth goes up doesn't mean that deposits will grow in a fashion that is suitable to banks. Because you can have aggregate deposits going up and banks will be able to access deposits as CDs, wholesale deposits. But that's not going to help the banks at all. The problem is in saving account proportion. Okay. Now, somebody mentioned the figure of CASA and said that it hasn't changed much, 41%. Earlier, it used to be around 42%. But there's a point that I made in my article, which is I said, there is an issue about how we are categorizing savings account today, because there are many private banks which are offering FD-like interest rates on saving accounts. So you keep 50,000 rupees, you get the saving bank interest.
Yes.
Above 50,000 rupees, you'll get 6%, 7%. But the point is, if you're offering FD-like interest rates on a saving account, then the saving account loses the interest rate and liquidity risk characteristic of a saving account, and it approximates the liquidity and interest rate risks of a fixed deposit. And it makes a world of difference to the management of liquidity and interest rate risk in a bank. Okay. Now, this has been, I'm sorry to say, this is not adequately appreciated. Okay. But let me just hasten to add, if you give me a minute, that you need to broaden the discussion beyond deposits and go to the aggregate funds. There are many ways in which banks can today source low-cost funds. I mean, if the exchange rate is steady, you can access funds through NRI deposits. You can access funds through ECBs. Yeah. So there are various ways. There are various ways in which, there's also line of credit and refinance available from multilateral and domestic institutions for particular assets. So if you've got microfinance loans or if you've got renewable energy, you get access to long-term concessional finance.
That's right.
So, so if you're asking me how can banks address this problem, I think they need to look beyond deposits.
No, sir, in the interest of time, the short point you're making is that you don't need regulatory changes at this point in time. Banks have other instruments. I have to take a quick break, and I want more advice from all of you, both on when do you see the problem ebbing? Will it take a year from now, 18 months from now? As well, whether other regulatory things like tax, the very different tax treatment of the two instruments, FDs and non-FDs, needs to be rethought? All those questions after a break.
A bit, Shireen, what is your definition of low-cost position? We are determined to keep our cost leadership. And, you know, 2 days from now, flying to a city is still 3,000 rupees. So for that, we need to keep that cost leadership out there. And we're not making any changes on that product, on that setting. But on top of that, we start to build what we are doing. So if you see our business class, which we are going to introduce, we do that in what we call the nation's busiest and business routes. 20 a day between Delhi and Mumbai, 14 a day between Delhi and Bangalore, 13 a day between Delhi and Hyderabad.
You said that these decisions are taken when you believe that the revenue advantage outweighs the incremental cost that you will have to take. Can you give me a ballpark estimate of what, for instance, the business class introduction is going to mean as far as revenue impact is concerned when you see a full rollout across the 12 routes that you spoke of? What is the international expansion going to result in terms of a revenue bump up as well going forward?
So the business class will be introduced in November of this year. It will start on Delhi-Mumbai. Of course, we get one plane. It will start as we fly 20 a day. One plane is not enough. So by the end of this calendar year, the entire Delhi-Mumbai operation will be fully business class equipped. So all our 20 flights a day, maybe one or two, but all the 20 flights is our ambition. The objective clearly is we start in November of 24, and by the end of 25, all these 12 routes, all these 40 plus planes which will operate this route are in operation.
I got asked right after the debate, you know, do you think we should do another one? And I said, hell, every day we should do another one. Of course. Well, it's not going to happen because Donald Trump confirmed today he's not doing another one. So give him a little break. That one left a mark. He said a lot of weird stuff too, so I'm just going to say that. And that was you tell me you had this on your bingo card, and they're eating cats, and they're eating cats.
Why are deposits hard to come by for banks, and how long will this high FD rates persist? I've been speaking to Professor T.T. Rammohan, economist Samiran Chakrabarti, Ashish Gupta of Axis MF, and B. Prasanna of ICICI Bank. Gentlemen, thank you for your patience and thank you for waiting on. Well, speaking about how long the problem will persist, Samiran, are you confident that it will get over quickly? Because there is a structural attraction of equity markets and it doesn't look like going away. Plus, you know, the RBI's LCR rule also kicks in. So do you think this once, it may take longer for deposit rates to come down or the deposit growth to bridge the gap with credit growth?
In theory, let's understand why we are here, because if you believe that credit creates its own deposit, then the role of money supply is very limited. Money supply essentially becomes endogenous in this. It just has to track whatever the reserve requirement of the banking system is. In practice, what something like a CRR cut might do is that it can increase the funds available with the banks to lend. So to that extent, it can reduce this stress on creating deposits. But we have to understand that at this moment, the durable liquidity in the system is exceptionally high at close to 4 trillion rupees. So any additional durable liquidity creation through CRR cut, etc., would be difficult. So I suspect that we will go back to this discussion, not about just the deposit growth and credit growth mechanically matching with each other, but also the fact that whether the composition of the deposits over time is changing in a meaningful way or not. So to me, while I'm more confident on the former, that the credit and deposit growth gap will normalize, there is still some uncertainty over whether in the long term the composition would be in favor of the banks with more retail deposits, etc.
Okay, Ashish, what is your sense? Any regulatory intervention needed? I mean, a time for giving such huge tax sops to equities was there. But now equities is a roaring asset class. Isn't the difference in taxation too large? Or is there any other regulatory intervention, if not legal?
So, Lata, as I mentioned earlier, I don't believe the deposit challenge is because of money moving into equities at all. So, as I said, these are really transfer payments. And actually, seller buyers are both what is classified as retail, right? The change in composition that we have seen is actually share of government deposits come down. This has been both on account of government moving to a just-in-time payment system, keeping larger balances with RBI, and of course, pre-election some slowdown in spending. I think Prasanna mentioned that, or Samiran mentioned that government balances are coming down and with RBI. So I think that will feed into better liquidity into the system. So in that sense, I don't think there is much regulatory intervention needed. I think, of course, what we don't need is further tightening of the LCR guidelines because that will just compound the problem.
Okay. Well, quickly, Prasanna, your take again. The question I began with you. Do you think this once it's going to take even longer for the deposit rates to fall? For exactly the reasons, government is in just-in-time spending mode. They are spending only after the states show that they have spent, and other reasons, HDFC Bank and other reasons.
So, Lata, there are actually two problems very quickly. One is the aggregate deposit problem, which RBI keeps referring to at multiple times. I think that will sort out over a normal time frame that Samiran and others were talking about. But the problem of the composition of the deposits, that unfortunately are not going to change too soon if this kind of incentivizing financial savings into other type of products are going to continue. And hence, what our view has been is that there should be some kind of a parity in terms of tax structure for deposit rates between other fixed income products and deposits. There should be reduction in small savings rate in line with the movement in G6 rates. And we also hope and believe that RBI will not increase HQLA requirement beyond what is already there, which we feel is on the higher.
I guess answers can be sought on several quarters, but let's see what the authorities do. Thank you very much. Out of time, but very interesting discussion. Thank you, Professor Ram Mohan, Prasanna, Samiran, and Ashish for a very interesting conversation.
Damn the January 6 criminals who attacked the U.S. capitals in our democracy. But in the anger that he got into as the poise and dignity and the sharp retorts from Vice President Harris, he lost some of that composure in there. And when he was referring to those rioters, and you go back and make sure you'll see this again, I'm sure, he said we did nothing wrong. He didn't say they, he said we.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. from chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
The market may have had a very topsy-turvy ride through this year en route to record high levels, but for the IPO market it has been smooth as a highway. Now that's because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57, but the differentiating factor as of today is the fact that the IPOs of 2024 have raised more money than all of 2023 put together. Now according to this data from Prime Database, the IPOs of 2024 have so far raised almost 62,650 crore. That is well above the 49,400 crore that companies raised in the primary markets last year. Now this list includes IPOs that were open for subscription but have not listed yet as well. Now September traditionally has been a good month for IPOs, and the
Hello, welcome to News Center. I'm Parikshit Luthra. RBI Governor Shaktikanta Das said any decision on interest rates will depend on how inflation behaves in the long term and not just on a monthly basis. Speaking to CNBC's Tanveer Gill, Governor Das explained why the Reserve Bank doesn't give forward guidance on rates. He also said that the Indian currency is one of the least volatile currencies and that stability helps markets, importers and exporters. Listen in.
At the moment, obviously, we have maintained status quo in our rate cycle so far. After our rates, we increased it up to 6.5. After that, for the last 2 years or so, we have maintained status quo with regard to the rates and with regard to the monetary policy stance. The latest inflation print for August has come out yesterday. So next monetary policy meeting will be held in first week of October. So the Monetary Policy Committee will take a decision. But having said that, let me say that, we have to really see how the outlook is. It's not a question of that in the, in the current context, in the, like in July, the inflation came to about 3.6. That is the revised number now. Yeah, 3.6. And August has come at 3.7. So it's not so much how the inflation is now. We have to look at for the next 6 months, for the next 1 year, what is the outlook on inflation. So therefore, I would like to sort of step back and look at more carefully what is the future trajectory of inflation and growth, and based on that we will take a decision.
And we'll talk about inflation outlook and growth outlook for the long term, but I do want to understand from you, as we speak, is the MPC at the RBI actively considering a rate cut, and will that happen in the October meeting?
No, I can't say that. First, in October, we have a new MPC in the sense that the external members will be new, because the current external members, their tenure, 4 years tenure has ended. So there will be new members, external members, 3 members who will be inducted into the MPC. So we will discuss and decide in the MPC. But so far as growth inflation dynamics is concerned, 2 things I would like to say. One, the growth momentum continues to be good. India's growth story is intact. And so far as the inflation outlook is concerned, we have to look at the momentum, the month-on-month momentum, and what is the momentum of inflation, build up or moderation, either way. So what is the momentum of inflation trajectory in the coming months? So the outlook we have to look at. It has to be a forward-looking approach. So based on that, we will take a decision.
Many analysts and economists believe that the RBI doesn't give forward guidance on rate cuts or policy direction, decisions. And so I wonder, why does the RBI not do that? So why don't you prepare the markets ahead of time on a policy pivot?
It can be very risky because it applies both ways. So if you give forward guidance, sometimes, given the uncertainty that surrounds us in the world, and today it's a fast changing world. The day before the Ukraine war started, nobody thought that a war of this magnitude and this length will happen. The conflict in the Middle East came suddenly. The IT outage which confronted all of us some 2 or 3 months ago on a global scale, that also came suddenly. Geopolitical events are happening with suddenness which we have not seen before. climate-related developments, weather-related developments are also coming with the kind of suddenness which we have not seen before. So with so much uncertainty, and the monetary policy between the countries are now also diverging. Growth scenarios are also diverging. So it's so much of uncertainty around us. If you give a forward guidance, you will be sort of leading the market in one direction. And if something happens the other way, something goes wrong, and you will not be able to keep up to your forward guidance, then you would have unnecessarily, without any outcome, without any consequence, without any positive impact for anyone, you would have probably encouraged the market to board the wrong bus or the wrong train. So you would have directed the market in one particular direction. So therefore, we do not give forward guidance in terms of when I am going to increase the rate, how much we will increase. We don't give forward guidance in that manner. But we do give forward guidance because we always give our inflation projections, our growth projections for the current year, and as we move forward to begin with the first quarter of the next financial year and then take it to the next quarter. So in terms of growth numbers, quarter to quarter, and in terms of inflation numbers, we are giving the figures. So to that extent, RBI gives forward guidance. But yes, we have our reasons, as I explained, not to give, not to be so explicit to say that we are going to increase or not increase, that we will go for this, 25 or 50. I think that can sometimes be counterproductive. I think things have worked out in India quite well. The exchange rate of the rupee has been one of the least volatile in the recent 2 years or so. In fact, if I should say from beginning of 2023 till now, I think rupee has been very stable vis-a-vis the US dollar. The volatility index, if you look at the volatility index, rupee is the least volatile.
So some forex traders, in fact, have asked me to ask you this question on their behalf, in saying, why hasn't the RBI allowed the currency to be volatile? Why hasn't the RBI allowed currency volatility?
No, if you allow volatility, whom does it benefit? It doesn't benefit the economy. So why would we allow volatility? And you see, it's like this. We do not like excess volatility, but fluctuations in the exchange rate does happen. What our stated policy, and this we have said time and again, our stated policy is to prevent excessive volatility of the rupee, of our exchange rate. And that is something which is, our policy. The situation in India today, which many people miss out, is with regard to the Indian rupee and its exchange rate. A point which is missed out quite often is that Indian economy, our macroeconomic conditions, our financial stability conditions, India is, are much more, the fundamentals are much stronger than they were a few years ago. So when the economy is, the macroeconomic fundamentals are so strong, when the financial sector fundamentals are so strong, naturally the rupee will gain, the rupee will gain strength. That is the function of the market. We are not artificially keeping it strong. People probably expect rupee should depreciate more. But the point is, you are not looking at how, that you are not looking at the fact that Indian economy has become much stronger today. So and second thing is, I'll just complete. Second thing is, today India is attracting also a lot of foreign forex inflows, especially after the bond index, inclusion of India in the bond indices, and India turning out to be a, very sound and safe investment destination. The inflows are quite strong. So therefore, what we try to do is to prevent excessive volatility and maintain an orderly depreciation or a orderly appreciation. So overall stability of the currency gives a lot of confidence to the markets, give a lot of confidence to the importers, to the exporters, to the investors. Because as frequent volatility will means that everybody will be sitting on the fence and watching when to step in. That cannot be an accepted situation for a large economy like India.
One of RBI's aspirational goals, sir, is capital account liberalization of the currency and internationalization of the Indian rupee. And I wonder how you're thinking about it from a timeline perspective. When can we see the Indian rupee getting internationalized?
You see, the capital account convertibility, it's a process. We don't have a target that by this date we want to make our currency fully convertible.
Doesn't it seem like the need of the hour at a time when there's so much talk about non-dollar trade?
No, we are not ready for capital account convertibility at the moment. It's a process. We have done considerable amount of liberalization. Only one or two big things which are pending is that we have not yet allowed, our Indian citizens to open accounts in foreign banks, and like that some 2-3 things are pending. Other than that, it is already all elements of convertibility are there. Now, with regard to the other aspect of your question, that is internationalization of the Indian rupee, yes, we have come out with a strategy for internationalization of the Indian rupee. We have opened this facility of creating a rupee Vostro account, whereby rupee denominated international trade between India and other countries can happen, rupee denominated. We have also signed local currency trade agreements with UAE. That is the first country with which we have signed this agreement. That means all imports and exports between India and the United Arab Emirates will be settled either in the rupees or in the dirham. So we are already in discussion with a few other countries in our region, in Southeast Asia, in the Middle East Asia, and to sort of promote more of local currency settlement, to promote more of rupee denominated trade settlements, so that the whole idea is to reduce the risk involved in all the trade being dependent on only one currency. When you have more than one currency used for settling payments for international trade, to that extent you are de-risking your trade.
Time for a short break, but coming up, after being released on bail, Arvind Kejriwal decides to step down tomorrow, says he wants a certificate of honesty from the people of Delhi before sitting on the Chief Minister's chair. A special discussion when we return.
So far have already raked in over 9,000 crore rupees. But August has been the best month of the year so far in terms of funds raised, as over 17,000 crore rupees have been raised by 10 IPOs that month. Now, how have these IPOs fared? Now, 5 of these issues have returned 100% and more from their IPO price. Now, 30 of them have gained anywhere between 25% to 99%, and only 7 such IPOs are currently trading below their IPO price. It shows you the kind of market that we have been in. Now, unlike 2021 and 2022, there have been no giant-sized IPOs this year. While 2021 had Paytm, which looked to raise over 18,000 crore, LIC surpassed that in 22 with a 21,000 crore issue. Now, Bajaj Housing Finance, which has now become the talk of the town for the bids it received, is the largest IPO of the year with around 6,500 crores, followed by names like Ola Electric, Bharti Hexacom, and of course Brainbees. Now, 45 IPOs this year have delivered positive returns to shareholders. Now, among them, Jyoti CNC is the top performer, with the stock more than tripling from its IPO price. The recent listings like Unicommerce and Premier Energies also find a mention, considering the strong moves they have seen just a few days after they listed. Now, among the few IPOs that have delivered negative returns so far include Capital Small Finance Bank, Popular Vehicles, among other such names. However, none of these names have any substantial downside from their IPO price, such as a 50% or more from their IPO price. It's been a big year already for IPOs, and we still have 3.5 months left. Now, at this pace, it will not be a surprise if by the end of the year, we end up doing a story saying IPOs have raised 1 lakh crore so far this year.
I want to draw you into what's happening on the technology side and link this to what we just saw with the CrowdStrike outage, and that basically brought the aviation industry globally to its knees on that particular day. And 48 hours were mayhem, I would imagine, for you and your team. What's been the big learning from that experience, and how much is tech being prioritized now as you...
Welcome back. You are watching News Center. Delhi Chief Minister Arvind Kejriwal has announced that he will be resigning from his post tomorrow. This comes days after being released from Tihar jail after the Supreme Court granted him bail in the Delhi excise policy case. Addressing his party workers, Kejriwal said he wanted a certificate of honesty from the people of Delhi before sitting on the Chief Minister's chair. Meanwhile, the top brass of the Aam Aadmi Party will likely discuss who will become the next Chief Minister of Delhi today. Among the frontrunners is Minister Atishi. She spoke at the News 18 India Chowpal earlier today. Let's listen in.
क्या मैं भावी मुख्यमंत्री से बात कर रहा हूँ क्या? हंसिए मत, बता दीजिए।
देखिए कल हमारी विधायक दल की बैठक है तो फैसला वहां पर
इतनी सारी
होगा।
मिनिस्ट्रीज आप संभाल रही हैं।
देखिए फैसला तो विधायक दल करेगा। दूसरा मैं एक बात आपको जरूर बता सकती हूँ, आम आदमी पार्टी की सरकार जो दिल्ली में है उसका मुख्यमंत्री कल कोई भी बने, आम आदमी पार्टी की सरकार दिल्ली की जनता के लिए काम करती आई है, काम करती रहेगी। हम कभी भी काम करने में पीछे नहीं हटेंगे।
We're now joined by Jasmine Shah, spokesperson of the Aam Aadmi Party, and Rashid Kidwai, author and senior journalist. Thank you for joining us on the program. Jasmine Shah, if I can begin with you. The first question which a lot of people are asking today, why not dissolve the assembly? Why seek preponement of elections instead to November? How would you answer that?
See, the entire matter of resignation of Mr. Kejriwal as well as Mr. Sisodia deciding not to come into the cabinet again has arisen because out of a personal vendetta campaign that has been launched by the BJP over the last 2 years, where almost all the investigative agencies in India were unleashed upon them. ED, CBI, IT, everybody was behind Kejriwal, and you have framed a case under the PMLA, a money laundering act which was designed for terrorists and drug dealers. You put that on an elected chief minister. You allege that some major corruption has taken place. But after 2 years of investigation, when no recovery has been made, no evidence was found, the Supreme Court finally gave bail to Mr. Kejriwal. So whatever relief Mr. Kejriwal could get from the Supreme Court, he has gotten it. But what BJP has done in the process is that they have tried to assault the image of the Delhi CM. And what is his image? He has come, he's defined a new, he's created a new definition for honesty and integrity in Indian politics. And therefore, it was his personal decision that unless and until the court of the country, the courts of the country have given him whatever relief is possible. Mind you, as on date, the trial has not even begun. BJP or ED or CBI is not even saying that when will we begin trial, because there is no case, there is no evidence. But he said that until the court of the people doesn't give him the blessing, doesn't tell him that no, Kejriwal ji, you are honest, we believe you are honest, only then I will sit in the chair of the CM. But there is no fault of the AAP government. People have voted the Aam Aadmi Party government because we made promises to the people. People love us for our schemes, be it world-class education in our government schools, our hospitals, clinics, free electricity, water, bus rides for women. So why should those works continue? If the government is dismissed, then these works may stop. And therefore, our intention is not that people should suffer, but by setting a new benchmark of integrity and honesty, Mr. Kejriwal has decided that I will go to the court of the people, let them decide, because courts have given me whatever relief, but that is not enough. No politician in Indian history has said or set this kind of a standard for integrity, that he's saying कि मैं ईमानदारी पे वोट मांगूंगा, not on some caste or some religion. I will seek vote on the name of honesty. And I think that is what separates Mr. Kejriwal from all other politicians.
All right. Rashid Kidwai, do you feel this helps Arvind Kejriwal, considering the whole of the BJP's attack was against him in the Delhi excise policy case?
I think, Rashid, Mr. Kejriwal is being very, kind of smart. From an activist, he's become a seasoned politician. He's using mandate theory to, get himself vindicated, because remember, he was in a very messy kind of situation. There was a case, and as Jasmine says, there was no trial. Trial is yet to open, so it's going to be a long drawn thing. So what he's going to do is to go for elections, get himself elected. Remember, in the eyes of law, the two things are very different: getting elected and getting acquitted or getting convicted. But our politicians, and Mr. Kejriwal is no exception, have tried this. That if you win, first past the post system, get 40%, 45%, any number of votes, and you win, then you feel vindicated, and you take that high moral ground. So it's a very interesting situation. I think that it has put Kejriwal's gesture has put BJP in a bit of a spot, because BJP was very confident that Mr. Kejriwal will not be able to function and he will have to dissolve the house. But this is a new situation. If there is a new chief minister, then our constitutional scheme of things demand that that particular chief minister will become a caretaker chief minister till elections are held. So the BJP cannot delay Delhi elections. And remember, Kejriwal has roots in society. He's politically strong. So therefore, it will be very difficult for BJP to get him defeated in state assembly elections. So this is an interesting thing. I think in the sort of very difficult circumstances, Kejriwal has found a way to sort of, put himself, his prestige at stake and retrieve some lost ground.
All right. So even the court order had put some very strong conditions which should have impacted his functioning as a chief minister as well. Jasmine Shah, if I were to ask you, how soon can we expect a decision from the Aam Aadmi Party on the chief ministerial face or the caretaker chief minister for the next few months? A few names have been doing the rounds, but how soon can we expect clarity on that? And what do you think will be the criteria?
First, let me correct you. There is no concept of a caretaker CM in India, right? I mean, whoever is going to be the chief minister will be the chief minister of Delhi from the Aam Aadmi Party for the next whatever term is remaining of the government. Now, in terms of the duration, tomorrow morning there is a meeting of all the MLAs. Just as we are speaking now, the Political Affairs Committee of the Aam Aadmi Party has all the senior most leaders of the party. They are meeting together on this matter. Tomorrow the legislators will be meeting. Tomorrow the CM Arvind Kejriwal ji will be going to meet the Lieutenant Governor. So my sense is in the next 24 hours, as early as in the next 24 hours, you should have the next face of the Chief Minister of Delhi. And obviously Mr. Kejriwal understands. You said what will be the criteria? Mr. Kejriwal understands that Delhi is not your typical state. Delhi is the only place where the central government does not let the elected CM to function as per the constitution. Every single day there are obstacles put in the pathway. The control of the bureaucracy has been taken away from the Delhi government. Never ever in the history of India has any chief minister worked under such few powers. And mind you, last year the Supreme Court actually gave a constitutional bench verdict giving all the powers back to the chief minister. The BJP could not digest it. Within a week, they passed an ordinance and took those powers away. The challenge of that ordinance is still pending. So it's a difficult state, and I'm sure it will be an experienced and somebody who will manage to run Delhi effectively and ensure that people do not suffer. You know, in this entire phase, we still have many months left before the elections, that the works of the government, the promises of the Aam Aadmi Party will continue to be delivered on the ground.
All right. Somebody who can make sure that all the agenda, the work of the Delhi government continues and continues well. Rashid Kidwai, if I were to ask you about Atishi, this is a name that has been doing the rounds. A lot of the work had been delegated to her by Arvind Kejriwal, by Manish Sisodiya. Do you think, considering the importance of women voters in our electorate, it might be a good idea for Arvind Kejriwal and the Aam Aadmi Party to take the call?
I think, Prakshit, you have raised a very pertinent issue. This is a litmus test for Mr. Kejriwal and Aam Aadmi Party. In our country, we have several models. Very time, Jayalalitha, whenever she was jailed, she had a Paneer Selvam who would come in and go when she, when she was back, when she could become chief minister. We have Champai Soren, who became chief minister in place of Hemant Soren, but made a face when he was asked to go. So will Atishi do that, or will Mr. Kejriwal have a sort of national role and say goodbye to Delhi politics? All these things are there. If Mr. Kejriwal, MLAs, decide like what used to happen in Congress party, authorize Mr. Arvind Kejriwal to nominate, that would set another, precedence and a culture. So I am very curious and I'm very, keen to see how they negotiate. Atishi is a very good choice to my mind. It offers continuity and a lot of other things like women votes, etc. But how would you dislodge her after, sort of fresh elections are held? So is she going to be Champai Soren? Is she going to be, Paneer Selvam? Only time will tell.
Right. Let me go back to Jasmine Shah at this point. Jasmine Shah, if elections were to be held in November, there are other state elections also taking place. So does this mean that the Aam Aadmi Party and cases filed by the ED, the CBI against opposition leaders, will this become a major or the #1 poll plank of the opposition in other poll-bound states too? And will Arvind Kejriwal, as Mr. Rashid Kidwai was asking, will he play a larger role and campaign beyond Delhi as well?
Well, we actually saw this happening already in the Lok Sabha elections. The reason that the entire narrative of the India alliance was that in the Lok Sabha elections was that India is turning the page from a functional democracy towards a dictatorship, an authoritarian regime which has weaponized investigative agencies like ED and CBI. And this is data to show that 95% of all ED and CBI cases under Prime Minister Modi have only been on opposition leaders. I do not think any democratic country in the world has such a poor track record of using investigative agencies only and only to punish opposition leaders. So ED and CBI being used politically is already an agenda in the minds of people, not just in Delhi, across the country. And after the comments of the Supreme Court last week, when bail was given in the CBI case to Mr. Kejriwal, where the Supreme Court has said that in 11 years, when we last said that CBI was a caged parrot, nothing has changed. In fact, now ED has also become a caged parrot. So in effect, in the last 10 years, the country has only moved backward. Instead of ridding CBI from political interference, you have now made CBI and ED both as caged parrots. And I think it's a shameful track record. The Home Minister of the country should have actually taken responsibility for the Supreme Court's castigation and should have resigned. But unfortunately, we know that these things don't happen in the BJP. But that is the reality of the country. The voters know it. And I would say not just Delhi elections, in Maharashtra, we have seen opposition parties being targeted by CBI and ED. So this will be an agenda, I believe, in all elections.
All right. My final question to Rashid Kidwai. Rashid Kidwai, we've discussed what's at stake at the Aam Aadmi Party in Delhi. But what about the BJP in all upcoming state elections, especially Delhi? What's at stake for the party here, especially after what happens and the loss of seat share in the Lok Sabha elections?
Absolutely. I think, it's a litmus test for Mr. Modi and BJP, because every time, suppose the BJP loses in Haryana to begin with, now that will have a huge impact. It's a North Indian state, very close to Delhi, and it will set a sort of process in motion that BJP is losing its mojo, it's losing its momentum. Then comes Maharashtra again, financial capital, high stakes, lot of uthal-puthal, lot of defection, lot of maneuvering the BJP has done. In spite of that, if they fail to retain Maharashtra, I think there's going to be no stopping. So that India alliance will gain momentum, and that's where I feel Mr. Kejriwal, whose ratings have been ahead of, I would say, M.K. Stalin and Mamata Banerjee and several other state chief ministers, would want to be a player in national politics and see his chances. He may not be a prime ministerial candidate, but if there is a kind of India alliance government by 2029 or so, Mr. Kejriwal would want to eye some kind of big portfolio like finance or something like that. So Mr. Kejriwal is a very ambitious person, and I think that's where these elections in 4 states, I would say Jammu Kashmir, Haryana, Maharashtra, Jharkhand, and of course Delhi, would have huge bearing on Mr. Narendra Modi's government and the continuation. There is no threat to Mr. Modi's government, but each sort of pulled vehicle will dig a sort of big hole, and it will question the stability of Narendra Modi government.
All right. Okay, we've run out of time, but thank you very much, Mr. Rashid Kidwai and Jasmine Shah, for joining us on the program. Next 24 hours, crucial for the Aam Aadmi Party and the politics of Delhi. We'll keep an eye out for all the developments. Thank you for watching. Goodbye.
Yourself as a global airline.
Yeah. No, what happened here is indeed a global outage in one of the systems. Yeah, it's my first word I learned in Hindi. We have this beautiful jugaad in order to deal with some of these challenges.
What does jugaad mean to you, by the way?
No, in this case, it meant that people moving from a check-in through machines to a manual check-in. I will make sure that out of the 3 lakh customers which were supposed to fly in the day, 240,000 people have been flying. And I was writing not precisely, but I was writing 240,000 manual.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions. On the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
So Nazara is focusing on its for FY25 its growth primarily through gaming. So what are the plans for the next few months or next quarter?
As you know, core gaming has been an important focus for us. Recently, we acquired 100% stake in Kidopia. We also acquired a studio in the UK called Fusebox. So I think we are very rapidly expanding.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me as always is Arundhati Ramanan. And today is a special day as we complete 5 years of putting the spotlight on India's dynamic startup landscape.
Absolutely, you know, Shruti, and you and I have been a part of it from its inception, which was like 5 years ago, you in front of the camera, me behind it initially, right? We've covered it all from the big boost, a big COVID boost, to the funding winter, to the focus on profitability. It's been everything, right? Ups and downs.
Absolutely. And Arundhati, let's not forget the beeline for Dalal Street. You know, we've seen it all. And here's thanking all our viewers for their continued support. And on that note, let's take a look at what made news in the startup world today. DPIIT launches a digital platform called Bhaskar designed to centralize and enhance collaboration among key stakeholders within the startup ecosystem. That goes live today.
Mama-Earth parent Honasa Consumer is expecting to complete its transition to direct distribution by the end of FY25 as it looks to ramp up its offline distribution to double down in its house of brands strategy. Honasa is also confident of delivering a 20% growth and 150 basis points margin expansion for the full year. That's an exclusive. SoftBank-backed Swiggy is looking to file its initial public offering this week. As per a Bloomberg report, this company is looking to raise over $1 billion and is waiting to get approval from the SEBI to go ahead with the IPO. Swiggy refused to comment on the report. On surety, an SME-focused InsurTech has raised $45 million in a Series B round led by private equity fund Creages. Now, the fresh capital will be used to launch new digital offerings and product lines.
Lawyers for TikTok and parent company ByteDance will square off with the Justice Department in a Washington courtroom over the fate of a law that could ban the short video app used by 170 million Americans as soon as January 19th. TikTok and ByteDance argue the law is unconstitutional and violates Americans' free speech rights.
Meta Platforms will begin training its AI models using public content shared by adults on Facebook and Instagram in the UK over the coming months. The company said after it had paused the training in the region following a regulatory backlash. The company will use public posts, including photos, captions, and comments to train its Gen AI models. Those were the headlines that we're tracking for you this evening. But on What's Brewing, the Department for Promotion of Industrial and Internal Trade has launched a digital platform called Bhaskar. The platform will be aimed at strengthening India's startup ecosystem and will go live on the 16th of September. Now, the government's initiative will be designed to centralize and enhance collaboration among key stakeholders within the entrepreneurial ecosystem. Commerce Minister Piyush Goyal believes Bhaskar will allow Indian startups to unite. Take a look.
Bhaskar, we hope, will help the startup players, the people who are involved in the startup ecosystem, connect with each other, collaborate with each other, cooperate with each other, also compete with each other to see what else is your competition in similar areas. What the competition is doing smarter and better. Why should there not be this healthy spirit in our ecosystem? Our young or any startup anywhere in the country, tier 2 cities, tier 3 cities, they will not feel left behind when it comes to knowledge. Let's create a Section 8 company. Today, Startup India is housed in Invest India, if I'm not mistaken. I think now Startup India, which is such a powerful ecosystem by itself, should have a house of its own. SIDBI can, since you are handling a lot of our funds and all, you can also be actively involved in the Section 8 company.
Moving on, also on What's Brewing,
Recent reports project the proportion of women in tech roles within global capability centers to rise from 25 to 35% by 2027, driven by government efforts and women-centric programs. This is crucial as India's push for an 8% GDP growth by 2030 will rely heavily on making women up over make half of the new workforce. So the conversations around women in tech is more urgent than ever. And to do just that, joining me now are the GC members of Tech Entrepreneurs Association of Mumbai, Naya Saggi, also the group co-founder of the Good Glam Group, and Akanksha Hazari, the founder of Love Local. Ladies, welcome back to Startup Street. Naya, let me quickly start with you. Mumbai is home to over 1,400 women-led startups. India's tech industry is evolving, embracing women with about 30% in the workforce. But despite progress, women face leadership gaps. Naya, throw some light on the rise of women in tech and what kind of conversations you're having with women founders.
Shruti, first of all, thank you very much for having us and having team on Startup Street. It's always a pleasure. Thank you again. You know, the three, I think, threads of conversation that I'm seeing play out when we talk to fellow women in tech. One, of course, remains the endemic funding conversation. It is getting better, but not fast enough. You still see less than 2% of funding go to women-led startups. And, you know, you kind of see that also across the table, right? When you look at the LP and GP profile, you're sort of seeing still men on the other side. You're not seeing enough women. So that's the first sort of thread of conversation and the problem statement we're looking to solve. The second one is role modeling. I think what's really interesting is when you look at, you know, STEM and STEM education in India, India actually has the highest number of women engineering graduates in the world. And in fact, even if you look at IIT Bombay, which is, you know, part of the ecosystem that team operates in, 25% of engineering students are actually women. But when you actually go and talk to these engineering schools and colleges and you ask them to name 5, 10 CEOs or founders who are women, they draw a blank. And it goes back to this whole emphasis and the problem statement that we need to solve for as women founders on role modeling and setting the right role models in place. The third thing I want to talk about is, you know, this whole tech X women narrative that's playing out today, which is where, you know, women and tech have a very unique, I would say, interaction, where if you don't have enough women creating and being part of the creation of tech, then tech is basically biased against women. We see this play out systematically in health tech, in fintech. You're looking at generative AI models, you know, reliant on data inputs that are not inclusive of women's voices and perspectives, right? So you see a very biased spew out from, therefore, these LLMs that is not in favor of women, in fact, biased against us.
Okay.
So this is the third narrative we see play out, you know, and that's what women founders in tech talk about all the time.
All right, let me quickly go across to Akanksha. Akanksha, welcome to the show. And let me now shift focus to the role of women leadership in the Tech Entrepreneurs Association of Mumbai. Tell us how you're working towards team's vision of putting Mumbai tech on the map to galvanize the existing community of unicorn and soonicorn founders.
Thank you. Thank you so much for having me. And I think Naya captured everything really well. But let me just take one moment to give a line of what TEAM is, in case some of your viewers are not aware yet. TEAM is basically the Tech Entrepreneurs Association of Mumbai. And it's actually the coming together of all the soonicorns and unicorns in Mumbai that are Mumbai-based tech companies. One of the things we realized about a year and a half ago was that there's this perception that there's not tech happening in Mumbai. And actually, when we looked at it, we found that there are nearly 60, 70 companies that are soonicorns, meaning they're valued at over 100 million, all the way to unicorns that are all Mumbai-based tech companies. And we said, hey, why isn't Mumbai being spoken about as a tech hub? So this is what TEAM is about. We've come together, the founders of these companies have come together to actually make it known that Mumbai is actually doing a lot in tech. The highest proportion of profitable companies in tech are actually Mumbai-based. The second is, if you look at the composition of those founders, a high proportion of the founders are actually female founders. If you look at the governing council, of which both Naya and I are on the TEAM governing council, you have 2 female tech founders. And if you look at the team membership, while it is still a small percentage, there's an active effort to bring in far more female founders. And I can speak personally, you know, I've grown up in India, but I've also grown up overseas. And I decided to come back to India because I wanted to pursue the Indian dream. And why did I choose Mumbai? Because Mumbai is a city of dreams. And as a woman, I do think Mumbai has a massive edge over any other city in India and most other cities in the world in terms of its safety levels and this progressiveness to actually grow tech at a national level and eventually at an international level, because for women to first be successful in any profession, including tech, they have to feel free, there has to be safety of movement, and there has to be a sense of equality and progressiveness. And Mumbai encompasses all of these things.
All right. So clearly empowering women leaders in tech is clear.